On the upside. The problem with this morning, and let's show you some European futures, is that basically what we've got is a few earnings, a few heavyweight earnings that may actually just take enough out of the European markets this morning to kind of compensate for that upside that we got out of the States yesterday. So Eurostoxx 50 futures are down. ASML is a big chunk of that. CAC futures are down. The luxury sector is a big chunk of that. The Amsterdam market is down. ASML is a big chunk of that. So basically you're seeing the earnings story out, sort of balancing out maybe a little bit of the upside we had to price in out of the United States. US futures are also fairly flat. But at the moment, what we have is a market that's going to drift a little bit softer after a strong day yesterday here in Europe, Anna.
Yeah, absolutely. Let's get a bit more on some of those stocks and sectors in focus then. The luxury space, certainly. Kering could be weaker. We got a Gucci comparable sales drop of 8%. That was worse than the 4% anticipated. Watching Hermes in that sector as well. Really interesting detail on the Middle East and the extent to which that has taken a chunk out of tourism sales. ASML also very much in focus, raising its full year sales guidance, but will the market focus a little on the Q2 guidance? Insurers also in focus. Aegon is selling its UK arm to Standard Life for £2 billion. Helvetia, also some news there. Others within that sector as well. Guy.
Okay. Here we go. Let's show you some markets. Let's give you an idea of what is going on. We think we're going to be a little bit softer. The FTSE may do a little bit better, but certainly some of the continental markets, like the AEX and the CAC, could be under a little bit of pressure. So the FTSE's out of the gate fairly flat. We are up by 0.1%. I expect the CAC maybe to open a little bit softer. We put the AEX on the board this morning just to get an ASML early read. The expectation there is it's going to go down, but just be aware of the context. Get the one-year board up and just look at the rally that we've seen, particularly in that stock over the last few weeks, months, but particularly over the last few days as well. So at the moment, we're not getting clear indications. Clearly, nothing is happening in Germany. It is out early. The AEX is flat. We're expecting it to go a little bit softer. The IBEX is doing absolutely nothing. So basically, what we are doing this morning is holding the gains of yesterday. Where does the next catalyst come from? We've had this huge move from one side of the boat to the other side of the boat, from risk off to risk on. Is that now satisfied? Have the CTAs bought enough? Have the shorts been squeezed enough? Is that move over? And if so, what comes next, Anna, I think is going to be critical. And will that be the earnings season?
Yes, and we're not getting a huge amount of direction as the market asks itself all those important questions. So Stock 600, as you say, really very flat this morning, not seeing a move there. The CAC 40 is not yet open, and I see that we're halted on Hermes, so we're certainly keeping an eye on that one. Kering has opened and it's down by 5.6%. So there's a negative take on the Kering numbers. That's not a surprise given what the ADRs did in the States yesterday. Looking for the move in Hermes at the start of trade then. No surprise that even without the Hermes move, consumer products and services, which includes the luxury sector, is the worst performing across Europe. We see some of the Swiss names going lower on the back of that. So even though we've had LVMH already, it seems that there's further downside for that sector. We are seeing about a third of sectors in negative territory, 2/3 to the upside. There's still room for autos and parts to gain and be the best performer. There's no earnings there, and they maybe are part of that other theme, which is about markets trying to move on from being completely obsessed with what's going on in the Middle East. Oil prices are incredibly stable this morning, Guy.
Incredible, yeah. ASML is also incredibly stable. Can I just point that one out?
Yes.
ASML is not doing anything at the moment.
Yeah.
It is in and out of positive and negative territory. We were expecting a much more negative read on that. This is a stock that's rallied really quite significantly. Is the market ignoring the Q2 kind of outlook shortfall and focusing therefore maybe on the full year story and seeing that as a better sort of metric going forward. In terms of the kind of the bigger, you're seeing a move into pharma this morning, which I think is interesting. Bit of safety maybe coming through there. Luxury, as you say, like Richemont, LVMH, Kering, all under pressure this morning.
I thought it was interesting in the ASML numbers that they did say that they thought that they could handle any changes in the restrictions on the business they can do in China within the guidance that they have now put out. So I don't know whether that gives the market any comfort. But yeah, ASML flat to negative right now, still waiting on Hermes, and we will get an opening price on that one as soon as it is no longer halted. Let us get some analysis now of these markets. Louise Dudley, Global Equities Portfolio Manager over at Federated Hermes, is with us. And Louise, I wait for Hermes to open up so that we can talk about the earnings stories. So let's focus on the wider markets and what's happening here. The attempts to move on from thinking about only what's going on in the Middle East from a markets perspective. European stocks haven't caught up with where they were pre-war, but other regions seem to be doing a better job of that. Are we right to try and look through what is still a blockade in the Strait of Hormuz?
I think we've been a bit surprised with the US move that things have gone so risk-on so rapidly. It does seem a bit extreme, particularly ahead of earnings. I think we were kind of going into earnings thinking, valuations are off, therefore the potential for upside where companies do deliver and maybe do confirm their kind of positive forward guidance. Now, particularly in the US, where things have moved up again, now we're saying, okay, well, could they deliver into that valuations where things were before, whereas things actually are a bit weaker generally, and particularly in terms of kind of interest rates. That's a kind of a binary indicator that has changed. That's something that's going to impact a lot of companies. That said, in Europe, what we have seen from some of the industrials that have already reported, they've actually reported quite well, and in particular, some strength out of China. So maybe looking towards ASML and their China move, maybe it's not as bad as we thought, and actually China actually has been getting on, and actually from a kind of a conflict perspective, China, relative to some of the other economies, particularly in Europe, is able to overcome some of those kind of near-term price impacts on energy.
So that sort of weaves together the impact of the war and what we're starting to hear from corporates. So let's think about that, because we do have an opening price on Hermes now, down by 11%, nearly 12%, in fact, this morning. So real negativity around that company, and this is a sector that's already been beaten up. We kind of saw this coming. We knew that there would be an impact of the war on the luxury sector, and yet it's still under pressure. What do we read into that earnings story?
Yeah, I think it's a case that, people will react to the negative numbers. And I think, there's always some optimism around LVMH in terms of Asia that offset. Certainly for the larger businesses that are more diversified globally, generally they are looking to other regions to offset if there is particular weakness from Middle East. Obviously, for the luxury segment, Middle East is so significant that then it's obviously come through pretty negatively and expected to maybe persist as well, I guess.
That is the biggest downside move in Hermes since 2010.
That is a long time ago.
So we haven't seen a move like this in this particular stock, which has been the one with the halo in the luxury sector. It hasn't had the volatility. It's had the long the long waiting list. 2010, October 2010.
And when we talked about LVMH earlier this week, we talked to Andrea Felsted, and she was already seeing chinks in the armour of Hermes, talking about how this had been a business that you could almost not compete with because the waiting list was so long. But now she was sensing that maybe there was some more competition coming through. I mean, maybe it's too early to tell that story, but maybe that's in the back of the market's mind this morning.
There's a lot of unwinding potential, therefore. You could argue around that stock. Yelena was talking about this being the sort of the anti-AI trade. So that gives me the segue to talk about the AI trade. Can I just go back? Can I ignore the war and just go back to trading AI? Because that's what the market seems to be doing right now. We're back to the semiconductor indexes are absolutely rocketing higher in the United States. Everybody just wants to get back to that narrative.
Yeah, I think certainly it's an area of the market that's showing some of the best, most kind of consistent growth. And that is a story that is continuing, and obviously a lot of that is US centric. So to a certain extent, it is somewhat isolated from the crisis.
And Asia centric as well. Like you look at what's happening in Korea, Taiwan, etc. Those stocks have been again rocketing. Europe feels like it's being left out right now.
Yeah, definitely. And I think we're kind of seeing, Korea, Taiwan, those numbers have been quite solid and people are feeling more optimistic again. I think that's also part of the kind of risk on, particularly for Korea. type trade. And, you know, I think our expectation actually, so we do have an overweight in terms of Korea, and we do expect that that is a region that is going to continue to do well off the back of, you know, the constrained supply that we have at the moment within that kind of AI trade.
Let's think about the AI opportunities a little more then. And infrastructure is a very associated opportunity, and you talk about that in your notes, Louise, as being an area of focus. Data centers, grids, materials, the wider AI supply chain. Where in that supply chain do you find most exciting at this point?
To be honest, we are quite diversified. I think that's one of the things that's quite important, is that we don't really know who are going to be the key winners in terms of individual models and things like that. And so at the moment, it is a case of like build for whoever, yes. To a certain extent. There's certainly obviously lots of money yet to be spent. So, yeah, we would kind of err on the side of diversification within that bucket. It's also part of the broadening trend as well. At the point that obviously you've got the concentration at the top end of the market. At the start of the year, everyone wants to talk about broadening. I think that is coming back into focus, and certainly that's where we're positioned as well.
How do you feel about rate hikes?
So at the moment, obviously, things have maybe come down to flat, as it were. And I think, you know,
the ECB's priced for hikes, potentially, maybe in June, but not April. But do I avoid Europe if the ECB hikes rates? Do I buy the US if the Fed doesn't?
I think that's an underlying story in the sense that there's obviously differentials there, but I think because there's difference in terms of growth rates and valuations as well, I think the interest rate story is different. I think the dynamics within the US in terms of the change of the chair and things like that, I think is going to play into a lot more of the concern around what's going to happen there, and whether things get pressured, and that will upset the market if that does happen. I think in Europe things feel a bit more stable, and there'll be more rational, you know, outlook around what will need to happen, and therefore be less of a surprise, perhaps.
Yeah, I wonder how the AI, spending on the AI and the cybersecurity spaces are linked, because at one point it seemed as if companies were maybe prioritizing AI R&D development spend and not maybe cyber. But then since we've had recent releases and a lot of warnings about cyber risks created by the power of some of these AI tools, how much do we need to focus on cybersecurity then, Louise? Is that a sector that we could see a step change in demand for?
Yeah, certainly that's what we think, and that's where we're seeing actually opportunities, that those are areas that are potentially vulnerable, and that is a kind of a necessary spend for businesses at the point that companies can slow down some of their AI innovation potentially if they need to. Cyber is not an area that they can do that, and they have ongoing contracts, and there'll be ongoing kind of price increases that come with that. There's also a huge backlog in terms of demand for people wanting those services. And now with the geopolitical space as it is, there is even more risk. And I think different businesses being targeted and being aware of how important that is going to continue to persist as a trend.
Louise, nice to see you. Thank you very much for coming to see us. Louise Dudley, Global Equities Portfolio Manager, joining us from Federated Hermes. Let's take a look at what the market's doing this morning. What is LVMH doing on the back of Hermes? What is ASML doing? ASML is now up by 0.5%. Choppy start. It's been down a bit, been up a bit, but we are now up. We're looking through maybe Q2. You are seeing the luxury space under a little bit of pressure. So let's get some more detail on what is happening with those luxury names. Chloe's here with just that.
Good morning, Guy. Indeed, as you just mentioned, this luxury sector is red across the board this morning. We had some disappointing results from both Hermes and Kering that flagged really the impact of the war in the Middle East on those sales. And so this is really dragging down, those disappointing results, dragging down the rest of that luxury sector this morning, with LVMH and Christian Dior also in the red. And it's really dimming the hopes of a luxury rebound anytime soon. And now that recovery definitely looks a little bit further away. Moving on to Stellantis, which is up. It's in the green this morning after reporting shipments of significant rise in shipments in the first quarter, and that was led in particular by a good performance in North America. So that'll be really taken as a sign that the turnaround, the ongoing turnaround for Stellantis is working, and the refocus on the US market is definitely taking shape. And so we are up about 3.5% for Stellantis this morning. It's also a good day today for the house builder Barratt Redrow. It said that we could expect some construction cost inflation inflation from those higher energy costs to come in a little bit later, around 2027, but that the impact will actually be quite limited in 2026. So that is seen as quite reassuring. It maintained its guidance, and therefore we're up about 2.5%. And finally, Extron, which is a supplier of chip-making equipment, is also up this morning after raising its sales forecast. Quite interesting in the context of its much bigger peer, ASML, also raising its full-year sales forecast, but not getting as strong of a reaction from the market. But for Extron, we are up more than 10% this morning.
Chloe, thank you. Chloe Melly, with the important detail that I missed around the auto sector. So I was thinking there was no news, and there was news. And that is part of the reason why we're seeing strength coming through then, as Chloe was saying, in the Stellantis story, and that may be lifting the rest of the market. So Stellantis up by more than 3%. But we are still trading these two themes, aren't we? Trying to move on from the war, but also the earnings story front and centre.
Yeah, and energy is reasonably mixed this morning. Brent is actually just a little tick higher, but not by much. We're kind of flat there, but we're still up by circa 40%. Sorry, up by nearly 55% year to date. So kind of that story is there. Metals are up a little bit. So that inflation story is not going away. Yeah. But the market just doesn't want to think about it.
It's a weird day when you've got healthcare and autos as the best performing sectors. That's quite the pair. Coming up on the programme, we'll get more details on ASML, which faces a major blow in China as new US legislation threatens to block tool sales and servicing existing equipment in its top market. We'll get the context there. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. 17 minutes into a European earnings session that is trying hard to move past a focus on war in the Middle East, but finding the earnings story is standing somewhat in its way of going higher. So European equity markets are pretty flat this morning. US equity market futures are flat to negative right now. This is a look then at a fairly flat market overall. The Dutch market, though, is not flat. The Dutch market is negative, and we have a negative picture for ASML and the shares there.
Do we? It's up.
Oh, that happened quick.
Well, it was negative, then it went up by around 0.5%. Now we're back to being up around, let's call it 1/10%.
Okay, there you go. It's on the screen now.
Flat. Let's call it flat. We are neither up nor down in terms of what we're seeing with ASML this morning. It's raised its full-year sales forecast. That's, of course, on surging AI spending. Q2, maybe a more cautious approach. Charlotte Hughes-Morgan joins us from Amsterdam. What's the market can't make up its mind on what the takeaway is here, but we're kind of flat after a decent rally over the last few days. So what is the takeaway from these numbers?
It's a good question. Yeah, we're seeing quite a muted response from the share price in Amsterdam this morning, which is quite extraordinary, I think, when you think actually that, they upped their full year net sales guidance. They now expect 36 billion euros to 40 billion euros. I think it really speaks to how much optimism was already baked in. I mean, ASML share price has already risen around 40% since the beginning of this year. We've had customers like TSMC, SK Hynix, Samsung all commit to these huge capex spending pledges. They're pouring money into this AI infrastructure. There's so much money going into data centers. We've had all these commitments already. So perhaps there is an element of, ASML shares have already risen so much. So actually, even raising their full year guidance has not had as much of an impact as we'd expect. I mean, the message from ASML is very clear. They're saying AI demand for these AI chips is outstripping supply. They say we are working with customers to ramp up our own assembly capacity, but really, this is the story about the AI boom. It continues unabated.
Okay, and what about the China story as part of this then, Charlotte? Good morning, because we've heard from the company a little bit about that, but not a huge amount. And I think that the Dutch Prime Minister has a meeting planned with the US government to talk about export curbs, US export curbs that are affecting the ASML business.
Yeah, I mean, this is really interesting for ASML. And as you said, there's not a huge amount from management in the statement alongside results. No doubt analysts will be asking questions later on in the day. What they do say is that this updated full-year guidance, the 36 billion to 40 billion euros, kind of accounts for any potential outcomes of these, potential further export controls. So obviously, the US legislation is in its early stages. There's a lot of conversations to happen before we see implementation. I mean, something to note from this set of results is that actually net system sales to China were 19% of ASML's total net system sales. That's down from 36% in the last quarter. So actually, we're seeing the number of systems sold to the country falling in this quarter. And I think it's also important to reiterate that actually ASML is already under quite tight export restrictions to China. They've never been able to sell their most advanced lithography machines to the country. And so, further tightening these controls will certainly have an impact on revenue for their older generation of machines. It's definitely something that is important and that ASML will be working on. And as you said, Dutch Prime Minister went to the US and said he'd spoken to the Trump administration about these export controls this week. So it's definitely something the market is watching, but we did see a drop-off in those, in the number of systems ASML sold to China this quarter.
What else is management saying? It all seems to be on track at the moment. China's a bit of a kind of sort of difficult one to read. They're not giving us some of the key KPIs that we used to get. So what are we learning from management this morning? What are they telling us other than the kind of the big picture story?
I think something that is important, and I expect we'll see this later, is that can supply meet demand? I expect we'll see analysts digging into this later. ASML saying we expect to be able to deliver enough capacity in 2026 and next year. But actually, I think with the demand kind of at the rate that it's going, I think there'll be some questions, that management will likely expand on. How are they going to ramp up capacity in time? I mean, ASML machines take years to make. They're extremely expensive. How are they going to match that demand story? And management have said, we're working with clients. We're comfortable. We won't be a bottleneck. But I think that will be something the market will watch. And obviously, we'll also be looking out for, their comments on macro events as well. There was no mention of Iran and of the shipping constraints. So that'll be something we'll dig into later. But I think, as I said, the main message here is that AI infrastructure story is kind of still booming. It's still going through the roof, and ASML is reaping the rewards of that.
Yeah, a lot of the commentary was pretty positive, wasn't it, from the management around that bigger picture. Charlotte, thank you. Bloomberg's Charlotte Hughes-Morgan joining us there from Amsterdam. Now, Bloomberg has learned that PIMCO bought $400 million of bonds issued by a Blue Owl Capital private credit fund. The purchase is a vote of confidence, then, perhaps, for the industry that's recently been battered by record redemption requests and deepening concerns over valuations, liquidity and transparency. For more, let's bring in Sinead Cruz, senior editor of Bloomberg's Going Private newsletter. She's had a busy time of it recently. Sinead, good to speak to you. So what's been happening in private credit then? As we focus on this Blue Owl story, is that the right way to view this, a vote of confidence?
Well, yeah, let's look at it as a vote of confidence. These are two, we've seen two examples of private credit funds that have been under severe strain in recent months, getting some love out of the public debt market. So we saw, obviously, Blue Owl selling this chunk of bonds to PIMCO, demonstrating continued sustained institutional appetite in the asset class. We still have a lot of retail money trapped behind the gates. That could still lead to some problems for some of these credit funds. But maybe, just maybe, we might be seeing a change in sentiment towards these vehicles.
Some people are pretty positive still about what is happening. I was listening to all of the Wall Street CEOs talking about it yesterday. Jamie Dimon's comments really stood out. Let's take a listen to what he had to say.
There will be a credit cycle one day, and I think when there's a credit cycle, losses will be worse than people expect relative to the scenario. I don't think it's systemic. It almost can't be systemic at that size relative to anything else. But, when recessions happen and values go down and people refi at higher rates, there'll be stress and strain in the system.
There will be a credit cycle at some point. But for now, I have to say, Jamie sounds quite positive. Not worried.
Yeah, most of Wall Street, in fact, are pretty sanguine about their private credit exposures. They do represent, let's remember, tiny percentages of their overall lending. Yep. Wells Fargo yesterday said that they had just over $36 billion out of a $210 billion portfolio of lending to non-bank financials. So private credit is tiny. However, it is still causing some concern among some major watchdogs and authorities out there. Earlier this week, we saw Andrew Bailey, chair of the Financial Stability Board, and obviously Bank of England governor, saying that he's worried still about how the opacity in this marketplace could infect and inflame sentiment. And if that happens, all we need is another macro shock to knock the confidence and again trigger a doom loop of concern about these assets.
Just briefly then, Sinead, I mean, is more transparency what we need? I mean, there's private in the title for a reason.
Yeah. Look, disclosures, transparency will always help to calm and reassure investors. Just whether or not we'll get that and at what kind of standard is still to be seen.
Okay, Sinead, thank you very much. Sinead Cruz, editor of Bloomberg's Going Private newsletter, which is published twice a week. You can head to bloomberg.com/newsletters to subscribe. There you go. Information on your screen about that. I mean, maybe we get to go back to talking about private credit now, and we get to talk about AI and all the other things we talked about in January and February. I'm finding it difficult to remember what we talked about in January and February.
I think you just nailed it. AI and private credit.
Gold, a lot.
There was a lot of gold. Gold seems to have definitely faded off the agenda, but AI seems to be back.
And the dollar has rethought recent gains, so that's in keeping with a move back to January, February, isn't it? 8:26 here in London. When we come back, we will focus back in on the energy markets. Is it too early to sound the all clear? We still have closure of the Strait of Hormuz. Well, almost. I mean, Strait. Some vessels are now getting through, but blockades on both sides still in place. We'll be joined by Emily Ashford, Head of Energy Research at Standard Chartered Bank, to discuss the latest on the Middle East. That's next. This is Bloomberg.
We've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back, everybody. This is the opening trade, the middle of the week, and this is where we are, 30 minutes into today's session. We are entirely flat on the Stock 600, but that really does hide some really interesting developments. There's a couple of themes that we're trading around here. One is trying to move on from what's been a huge focus on the Middle East, rightly, over the last 6 weeks or so. The other is factoring in some earnings stories, and you see both of these demonstrated here on this board. The FTSE and the DAX trying their best to move on. Not a huge amount of earnings stories coming out of those markets today. The CAC 40, though, weighed down by certainly what we're hearing out of the luxury sector, and that does link back to Iran. But the CAC 40 down by 0.6%. Hermes, in particular, one of the big fallers there. Guy, that's the overall picture on markets. Not really telling the interesting stories beneath, but there are some.
There are. This is a market that's fairly balanced this morning. So 319 up, 258 sort of down. Reasonably balanced, let's call it that. But what is interesting once again is the volume picture. Very focused volume in terms of the buying over the last few days, which tells you a lot about what is maybe happening here in terms of the repositioning this market is doing and who is doing it. Is it the CTAs? Is it these short squeeze that we've been talking about? Is that what has been driving this repositioning? Is fundamental money actually convinced that this rally has legs? And I question that, judging by some of the notes that I'm reading at the moment. Let's talk about what we're seeing in terms of some of the leaders and the laggards. What we are getting this morning is a positive picture out of Rio. The metals market still looks fairly solid at the moment. Novo, the farmers are really on the front foot this morning, which again I think is really interesting in terms of where markets are repositioning to. Extron out with numbers, and that stock is definitely being rewarded very strongly, up by 13.1%. The downside, Anna's already mentioned it, the luxury space is under significant pressure. You can see it from Burberry down 3% to Kering, which is down by 8.5%, to Hermes, which is down by 12%. That you haven't seen a move like this for nearly 20 years in Hermes. You haven't seen this for such a long time. Hermes feels like maybe the incredible run that it's had is beginning to run out of steam, Anna.
Guy, let's get up to date with some of the other stories that we are covering then this morning. Vice President J.D. Vance has pushed back on the Pope's criticism of the war in Iran. Last week, Pope Leo said anyone who is a disciple of Christ, the Prince of Peace, is never on the side of those who once wielded the sword and today drop bombs. Vance, who himself is a Catholic, said that the pontiff should be, quote, careful with his words. Bloomberg understands Anthropic has received several offers from investors for a new funding round that could value it at more than $800 billion or higher. The offers would more than double the $350 billion pre-money valuation that Anthropic had attached to it, to its $30 billion fundraising in February. Bloomberg previously reported the company has discussed a public listing as soon as October. And U.S. Treasury Secretary Scott Bessent says President Trump's tariffs may be restored by July to the levels in place before the Supreme Court struck down many of his levies. Speaking at a Wall Street Journal event in Washington, Bessent said the administration is seeking to implement or conduct Section 301 investigations, including probes into other nations' industrial overcapacity and forced labor practice. These, he indicated, could give the U.S. cause to implement new tariffs.
Okay. Let's get back and talk about what is happening in reaction to all of this and oil prices. Let's take a look at what is happening here. So oil prices currently are up a little bit. You've got the US contract up a little bit more. Brent is on the move this morning. But relative to recent moves, we are seeing something that is reasonably stable. Elsewhere, markets are definitely trying to move on. Can the oil market move on? And what is happening, particularly at the front end and at prompt delivery? The US and Iran apparently seeking further ceasefire talks, though I haven't actually heard much from Iran on that front over the last few days. The blockage in the Strait of Hormuz is continuing and continues to impede energy supplies. Emily Ashford, head of energy research at Standard Chartered, joining us now to discuss. Emily, the rest of the financial markets seem to want to move on from this war. Is the oil market moving on from this war and this blockade?
Not quite yet, Guy. We've seen a slight lull in bombardment from both sides, and we have this cautious and fragile ceasefire that's remaining in place. And I think despite the failure of the first round of talks to generate a notable shift in position for either side, even just getting those two parties in the same room is an achievement. We're taking a bit of comfort from the idea that we could see further talks in the coming days before this 2-week ceasefire expires. There are still several negotiating points, which I think both sides are at odds. The most critical to the energy market, as you mentioned, is the opening of the Strait of Hormuz. And that means opening with no tariffs, no naval escorts, no mines, and no risks to vessels. And I think the market is still a little confused over the logistics of this new secondary US blockade and really its strategic motive, because tightening energy supplies even further, well, that will mean higher prices for both crude and refined products. And that correlation between US gasoline prices and then the domestic backlash that we've seen to the conflict has been clear for the past several weeks. But in terms of the Strait of Hormuz, at the moment, what the market is doing is we are all watching individual vessels on marine tracking apps. One yesterday that appeared to transit and then turned back. And then we had a headline that Iran was said to be considering a pause in its own transits, which would then remove the transit of Iranian crude as well, and an extra 1.5 to 1.8 million barrels a day from global supply. And then this morning, we've had another news story that a tanker has entered the strait and made it to Iranian waters. But I would say, on balance, it's a slight optimism about further talks that is really keeping the market sitting around $95 for Brent at the moment.
Emily, if I want a barrel of oil now, How much is it going to cost me?
Well, it's a very good question. We have seen a disconnect between the physical market for barrels, if we look at, say, dated Brent, for example, and then the financial market. And I think that might be one of the reasons why the physical market is still in panic, but the financial market shows a little bit more caution, I think, cautious optimism. If we're looking at barrels, if you wanted to obtain a barrel in the market, and one of the questions that I've been asked a lot recently has been about alternate sources of supply. And we saw a headline yesterday from President Trump talking about increasing UK oil production and the North Sea. There seems to be a little bit of confusion as to where barrels can be brought online very quickly. Most of that is really just from strategic reserves, and where we will see a gradual increase over time, because obviously higher prices does tend to lead to higher production outside the Gulf. But if you really want to obtain a barrel of oil at the moment, your best bet is probably going and looking from a barrel coming from a strategic reserve.
Emily, good morning. Can we say that we won't see shortages of anything in Europe related to the Strait of Hormuz in the energy arena? Will we see any shortages going into the summer, even if we do see gradual reopening of the Strait?
Yeah, the only balance that we have to tighter supply is to reduce demand. So that is becoming increasingly evident. The IEA published a report yesterday suggesting that the Q2 demand drop will need to be on the scale of the COVID-related drop that we had in 2020. So we have tight crude supplies, tight feedstock supplies, and that means that we're seeing refiners, petrochemical producers curtailing their operating rates, particularly in Asia. And then on the other side, we're seeing flight cancellations, reducing jet demand. And remember that it was jet that saw the most acute price rises. And then governments have two ways that they can then reduce demand, either policies to reduce consumption or mechanisms to shield consumers from those wholesale prices. And to date, at least 43 countries have announced those measures. But really, only the opening of the Strait is going to prevent the most acute effects of energy supply loss and price escalation from spreading globally and then impacting the global economy.
I mean, that sounds like a huge ask, Emily, to reduce demand on the scale that we saw in COVID. Is that really what anybody is expecting? Or do we end up in a place where we just see some increase in exports from the Strait of Hormuz and then demand does not need to fall that far? Because that sounds pretty devastating.
Well, we've got a huge logistical lag that will be associated with this as well. When we finally have the Strait opening, vessels will be in the wrong locations. We've had shut-in supply from Gulf producers as well, so even getting that back on stream is going to take a long time. The idea that once the conflict ends, we will see a rapid return to normality, I think is wrong. And also, I think we're going to see a change in market behavior as well. There will be two key themes, in my view, energy security and optionality. So a longer term pivot in focus towards resource nationalism, maybe even hoarding. And that isn't just the replenishment of strategic reserves, but a new wave of stock building of both crude and refined products. And I think the conflict has also exposed the absence of optionality from both the upstream to the downstream. So I think we're going to see alternate offtake routes being explored. Most Gulf producers are unlikely to ever want to give Iran this much control over both global supply and the price of energy ever again, or to be exposed so significantly to just one single choke point.
Yeah, it's going to take a while to fix that, maybe, though. Just on the strategic reserve front, how much is left? Like, if I want a barrel now, you said earlier I have to go to a strategic reserve. How much more can those reserves be drawn down without causing structural problems to the storage facilities, particularly in the United States? Yeah. If I want to rebuild them, presumably there's going to be extra demand afterwards as well. Just talk me through the kind of the process that is underway at the moment, and when that process kind of runs out of road.
Yeah, gradual withdrawals from strategic reserves. So we're not going to see 400 million barrels just put on the market on one day. And different reserves have different drawdown rates, the most rapid being the Strategic Petroleum Reserve. But other countries have more constrained rates there. And as you said, there are structural issues. So you can only withdraw a certain amount, particularly from the SPR, before you have to maintain an operational minimum level, or get an act of Congress as well to reduce volumes. And I think once the US removes its 172 million barrels, which is what it promised for those reserves, it is at that point. So I think removing any further from the SPR, once we see that drawn down, is limited. The one big reserve, which is opaque and we're not entirely sure how much is in it or how much is being drawn down, is China's reserves, estimated about 1.2 to 1.4 million barrels there. So China itself has been relatively well insulated from this whole situation with its strategic reserves. But that is I guess the best repository of spare barrels in the market at the moment.
Yes, and so there's then some doubt as to whether the effect of this will be that China puts pressure on Iran or not. We will watch that one. I wonder, you mentioned earlier, Emily, that everybody in the industry is watching these various vessels and how much progress they make. We heard from the Americans yesterday that they said they successfully turned back 6 who'd been trying to leave the Strait. We're today watching the Agios Fanorios, the first, which is not sanctioned. It's not Iran bound. It's heading to Basra, we understand. Is this the kind of thing that we should be watching to see the Iranian reaction function? Because if the Iranians don't seem to take any action against these vessels, and they can get in through Iranian waters, as they seem to be attempting to do, and crucially out again, that has to be a good positive sign, I suppose.
Yeah, I agree. I think there are a couple of risks to obviously this escalation with the blockade, and two critical ones for this. The deployment of more military vessels in the Strait, I think, obviously increases the operational risk of an incident that could even broaden maritime tensions outside the Gulf. And the second is whether or not vessels can transit. We still have potentially inspections or associated rise in freight and insurance costs. So watching this one vessel this morning that has gone into the Gulf, perhaps the US blockade doesn't see that as an export of Iranian crude, and so that is maybe why it's been allowed through. I doubt it's been able to get through covertly. The amount of focus on that area will be extreme at the moment. So yes, you're right. Maybe this is another thing that's giving the market a little bit of optimism that is not quite every single vessel being stopped, and that increased risk that we could see some sort of incident escalating again.
Yes, so the Agios seems to be Iraq-bound, and you referenced there, Emily, another vessel that the Iranians have said managed to get into their waters, but we will, yes, watch how it behaves and whether it manages to get out again. Emily Ashford, Head of Energy Research at Standard Chartered, thank you very much for your time this morning. 8:44 here in London. Coming up, a mixed bag for Wall Street banks as JP Morgan and Citi post record quarterly results. But Wells Fargo misses. We will look back and then forwards when it comes to the US banking story. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up
and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
The Wells CFO speaking to us yesterday. We're in the midst now, firmly in the midst of US bank reporting. Wells, a little bit of a wobble, you could argue, maybe yesterday. What is happening with the consumer? They're probably much more exposed than maybe some of the other banks. But the basic picture coming out of the US banking sector continues to be fairly solid. In some ways, kind of quarter on quarter, there's a bit of volatility in there. JPM, there's bits of that business that look kind of okay. There's bits that look fantastic. Look at trading. Look at what is happening there. Bella Farr, who leads our finance coverage here in London, joins us now. So it's pretty positive for JPM, pretty positive for Citi. We'll come on to Wells in just a moment. But trading's really good.
Yeah.
And really good.
It's kind of ridiculously good. I mean, you saw... I think JP Morgan had record equities trading. They had, their second best FICC trading quarter, and they had record trading across the board. So clearly, I don't need to remind you that a lot has happened over the last 3 months through the end of March. Yeah. But that volatility definitely worked in their favor, right? They were able to reap the rewards from it for sure.
Yes, and we certainly saw that at some of those banks that did pretty well. Even the ones whose share prices maybe didn't reward that, we saw some incredible trading figures. What happened to Wells Fargo then? Something different, a different story entirely, it seemed, for the markets.
Yeah, so Wells Fargo missed estimates on both net interest income and non-interest income, right? So two key metrics that obviously analysts are always looking at, and especially for Wells Fargo that had kind of a key restriction from the U.S. lifted last year. So analysts are eyeing growth, right? And I think the question for Wells is, can they prolong this in the long, can they prolong this if volatility continues? If the U.S. consumer, starts to feel more pain at the gas pump, like you heard from the CFO earlier, will they be able to, sustain net interest income, or are they going to, be hurt by the fact that they are just not spending as much?
Yeah, it was interesting. The loan story coming out of JPM I thought was quite interesting as well, but we'll come back to that maybe a little bit later. B of A's out later, Morgan Stanley's out a little bit later. Does the theme continue?
Yeah, so I'll start with Morgan Stanley. Definitely expecting at least equities trading to be in line with the rest of the banks. I think it would be kind of a shock if something went awry there. But I think there will definitely be questions around private credit, which is something that all of the banks were asked about. I think, I was blogging JP Morgan's earnings yesterday. I think they were asked 3 or 4 times, maybe 5. Yep. So I think, but in terms of trading revenue, I don't think that they're expecting records on Morgan Stanley too. With Bank of America, they are expected a 6.5% rise in net interest income, which will be a big kind of boon for the bank. Again, I think all the questions will be around the consumer in the long term and whether, they start pulling back on spending or, they start to, their other parts of their businesses start to feel some of the hurt.
The doom and gloom that's coming out of things like you mentioned, things like that, kind of actually become a reality. Actually, I think we're getting retail sales coming up, so maybe we'll get a better read on the consumer out of the US over the next few days. Aside from the banks, Bella, nice to see you. Thanks for stopping by to see us. Bella Farr, who leads our finance coverage here in London. Let's talk about some of the European banks. The CEO of Commerzbank says she has had talks with UniCredit about a deal. This after the Italian bank announced the takeover bid, of course, for the German lender. But Bettina Orlop says the companies are still at odds over what the right valuation actually is.
We have constructive dialogues, at least from our perspective, since the beginning of the journey, so since September 2024, because UniCredit is an investor, an important investor, now the largest investor also, and we take that into account. So we had every quarter, we had bilaterals between the two institutions where we actually answered all questions UniCredit had, and we did not take up any feedback when it comes to our own strategy or to potential collaboration or something like that. And we always stated that we would be open for a dialogue when we see potential terms, potential ideas of a business combination agreement. And what happened after the announcement of the takeover offer is that we had some talks, some interactions about a potential business combination agreement, but for the time being, it's very clear that our opinions differ quite a lot, starting with the valuation of the two companies to the banks and the exchange ratio. And there are also some disagreement, I would say, about the potential future business model.
That was Bettina Orlop, CEO of Commerzbank, of course, talking about the different views on the value of that business provided by her management and that of UniCredit. Let's look at some of the events that are on the horizon for today's trading day. The IMF meetings carry on over in Washington. We had the bank earnings story out of the US that we've already discussed. The Bank of England's Bailey, the ECB's Schnabel, and other ECB voices will be speaking. There's basically a lot of focus in Washington of, I don't know what the collective noun for all of those finance professionals is, but there's lots of them in Washington this week.
I could have thoughts on that.
Yes, central bankers and finance ministers. We'll also hear from the Fed, of course, and it's the Fed's beige book. Let us think about what comes up next.
Tax day, apparently, in America, which apparently is generally quite a negative day for equities, but yesterday was amazingly strong. Apparently, we've moved past the war, back to AI. That's fantastic. Can it last? Well, let's try and find out. Skylar's here. Can it last?
I mean, today, as you say, is a more negative day. This is work done by my colleague Simon White, and he looked at returns across every day, and today is, on average, the worst day of the year for the S&P. Now, generally, I wouldn't put a lot of weight behind seasonality unless there's a reason, but there's a very good reason for it in the fact that it's U.S. tax day. So people take out of the money out of the market to pay their taxes off. So that's more of a negative signal, but I think sentiment on average is quite positive still.
Well, yeah, and sentiment is quite positive because the market seems to be trying, the European story this morning seems to be, we're trying on the one hand to look past what's going on in Iran. We have Brent almost entirely flat at 94.75. And yet the earnings story isn't helping us make move to the upside because of some of the luxury names. I mean, how are you summing up where we are in markets right now then, Skylar?
Yeah, it's really interesting because I think the market is just kind of pushing out negativity in terms of, yes, some of the earnings haven't been great today. And I think, markets can definitely look through into optimism if they're meant to be a resolution. And so the earnings aren't as bad maybe 2 quarters out. But if you actually look at first quarter and second quarter earnings, you might not see the negativity from higher energy prices in the first quarter. So first quarter Euro stocks EPS expectations are pretty flat, and 2Q's actually been revised up. And there are two things when you look at a sector level happening kind of under the surface. The first is there's definitely more optimism priced into energy than negativity that's been priced elsewhere. So energy is meant to be very strong EPS upgrades and since the Iran war began. And then the second impact is much of the impact that's actually being priced, even if not to the levels that I think is necessary, is in the second quarter, not the first quarter. So travel, for example, you've seen strong upgrades for first quarter EPS, but second quarter EPS is where you've seen the downgrade. So it may be that we have to wait till the second quarter earnings season to see that stagflationary impact.
Skylar, thank you very much. Skylar Montgomery-Coney from the Bloomberg Markets Live team. And that said, Guy, US futures flat to negative. So looking for another driver for the markets conversation, it would seem, over in the States.
Yeah, we've got to pay the tax bill first. So maybe that's
it.
Why.
Nobody wants to do anything today.
No, just pay the taxes, move on, and kind of... Then we'll figure out what happens next.
Listen to what some bank bosses have to say later, which will certainly be part of the conversation. And there'll be plenty of messaging coming from those IMF spring meetings as well. Kristalina Georgieva will be joining, of course, from the IMF. We'll also be hearing from Joachim Nagel over at the Bundesbank. So, of course, lots of conversations to come from the IMF events over in Washington. That is it for the opening trade. I'll be back with the Pulse shortly. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
European stocks and US futures tread water as investors downplay tensions in the Strait of Hormuz, turning their focus to a potential second round of US-Iran talks. Hermes plunges the most on record after disappointing first quarter sales, while Kering slides on weaker than expected performance at Gucci. And ASML lifts its full-year sales outlook as booming AI demand drives orders at Europe's most valuable company. Welcome to the Pulse, everybody. Let's have a look at what's happening on these markets then. We've got a host of assets for you. The Stocks Europe 600, as we said in the headlines, almost entirely flat as we try to move on what's happening in the Middle East. But focus on earnings doesn't help because Hermes is down by nearly 13% as a result of the earnings story. S&P futures also, as we mentioned in the headlines, looking pretty flat, looking for a new narrative. We've got the ongoing bank earnings story coming through in the United States. Maybe that will provide it. Brent crude 94.85, but pretty flat actually, underscoring the fact that the markets are trying to move through what is happening in the Middle East right now. now. Let's see if that makes sense to our guests this morning. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, in for Francine Lacroix this morning. Now, Bloomberg has learned that the US and Iran are looking to arrange a second round of peace talks in the coming days, with one proposal to return to Pakistan. In a Fox Business interview, President Trump reiterated he sees the war nearing its end.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Meanwhile, in Washington, Israel and Lebanon began negotiations to halt a war with Hezbollah. Secretary of State Marco Rubio hoping the talks would set them on the path towards lasting security.
All of the complexities of this matter are not going to be resolved in the next 6 hours, but we can begin to move forward to create the framework where something can happen, something very positive, something very permanent, so that the people of Lebanon can have the kind of future they deserve, and so that the people of Israel can live without fear of being struck by rocket attacks.
Let's bring into the conversation Bloomberg Horizons anchor Jumana Basechi, who is, of course, in Dubai for us. Jumana, so another day where we're talking about talks and looking ahead with expectation and hope that there will be another round of these peace talks before the ceasefire expires. How optimistic should we be?
Yeah, that's right. And President Trump himself is talking up the prospect of those talks occurring at some point. And he said in the next couple of days, in multiple interviews that he's given to journalists and phone calls over the last 24 hours, he also told ABC that something amazing, quote unquote, could happen in the next 2 days. And in that little bit of the interview from Fox Business, he also suggested that the war is ready to be wound down, or the beginning the process, the wind down process of the war. So hinting that perhaps the U.S. are very keen to move forward with the second round of negotiations. Now, I will just say that there has been a lot of speculation as to where and who would host these talks. Islamabad would have been the obvious choice, though we've just got notice now from the Pakistani Foreign Ministry saying that the Prime Minister, alongside the Foreign Minister, will be making a 3-day trip around the region the next couple of days, from April 15th to April 18th. They'll be touring Qatar, Turkey, and Saudi Arabia. So if indeed Islamabad is planning on hosting the next round of discussions, unlikely that it's going to happen before April the 18th. That's the new information that we have. But of course, other countries have put their hands up and said that they're ready to mediate as well, including the likes of Switzerland, which in the past has held multiple rounds of discussions. Now, the important thing here that I need to mention is we have not yet heard from the Iranian side, Anna. They've been very quiet, very low-key. The latest we've heard is from the president, Pezeshkian, yesterday, saying that they would be inclined to continue with negotiations so long as they are conducted under the quote-unquote international framework of law. So read that as you will. And some people are saying that perhaps because they're being less hostile than usual, at least on social media, and some of the messaging that's coming through could be construed to be constructive and laying the foundation for that next round of talks.
And Jumana, we began this week with 2 overlapping blockades, it seemed, in the Strait of Hormuz, one by the Iranians and one by the Americans. What is the latest on how the U.S. naval blockade is playing out? We've seen reports, that from the Iranians that they say that one Iranian-backed ship has actually made it into the Gulf. We're seeing other reports that a ship bound for Iraq has made it in, and that maybe is less surprising. What are we hearing then as to how open or otherwise the strait is?
Yeah. All of us are moonlighting as sort of shipping tracking experts now, but it is a valid point. And let me just say that CENTCOM put out an update this morning saying that their blockade so far has been successful, and this was about 36 hours since it came into effect. They say that 6 merchant vessels had to turn away on back of their instructions, but there has been minimal activity overnight. And remember, yesterday we were tracking the movements of this vessel, the ship, the Rich Starry, which made it through the Strait of Hormuz. But it appears to be the case now that it stopped and it turned off its signaling
unclear really where its final destination is. And Iranian state media just a couple of hours ago are suggesting that one of their own ships is defying the blockade and attempting to make their way through the Strait of Hormuz. From our own analysis, we believe that this is a vessel called the Alicia that is sailing very close to the Rich Starry vessel that I just mentioned now. So we're going to keep an eye on that and to see whether or not it actually does make it through the Strait. And then reportedly, unrelated to Iran, but there is an Iraqi vessel making the way westward, coming through. So this would be the first of westward type movement that we've seen in a couple of days that is heading towards Iraq to load up. And they've said that their final destination is Vietnam. So there is a little bit of activity, I would say. But ultimately, we are very, very far away from the level of activity that we saw before the war started, when 100 to 120 ships would pass through a day. Now we're micromanaging and watching 1 to 2 vessels to see really how effective this blockade actually is.
Yeah, and many of them seem to be hugging, as requested by Iran, to the Iranian side to avoid what might be mined waters. Still a lack of clarity on that around Oman. Thank you very much, Jumana. Bloomberg Horizons anchor Jumana Baseji. On to matters central banking, and the ECB President Christine Lagarde says reaching a settlement to the war is in the best interest of the global economy. In an exclusive interview with Bloomberg, Christine Lagarde also discussed how the prolonged conflict has weighed on her outlook for growth and inflation.
I have seen successful program being completely wiped out by war. So war is, in any circumstances, the worst outcome. If you talk in strict economic terms and the movement of goods and all that, it's the Strait of Hormuz not being open for shipping and transportation, because you have 20% of gas and oil going through that, as well as the like of ingredients necessary for fertilizers, ingredients necessary for microchips, and what have you, not going through the strait.
So what's the pain threshold for the euro area economy that the ECB would have to act on? Is it inflation at 3-4%, or is it?
Look, we have forecasts for inflation that vary between 2.6, which is the baseline that we have, and a little north of 4%. Based on what I told you earlier, which is see-through, strong, decisive reaction, or somewhere in between, depending on the factors that we see, we will adjust, because we will be agile. But one thing for sure is that we will keep our 2%.
Madame Lagarde, how worried are you about the discrepancy between spot and future oil prices, and so potentially tighter markets that we're pricing in?
I think it's the whole dilemma that we have about short-term and medium-term. And the more anxious and worried economic actors are about the resolution of this crisis, the more pressure there will be on the spot market.
How much do you blame the U.S. administration for what's happening to the European economy?
It's not my job to do, blame, to point finger or to associate this or that with blame. I'm more in the hope section myself, and I very much hope that people can sit at the table, can come to their sense, and understand that it will be in the best interest of the global economy, of the people, that a war settlement is reached, and that not just a ceasefire, and that we can navigate through the straits of the world.
That was the ECB President Christine Lagarde, of course, speaking exclusively with Bloomberg's Francine Lacroix in Washington. Now, European markets are broadly flat this morning as earnings have been rolling in. Geopolitics remains in focus as the US and Iran aim to hold more discussions. Let's bring in a voice from the markets. Then Laurent Ramsey, who's managing partner at the Pictet Group and chairman of Pictet Asset Management. And very nice it is to see you this morning, Laurent. Thank you for joining us. I wonder then, when you talk to clients and you engage with them in conversation about markets, how much is everything still about war in the Middle East, or is there space for other investment narratives to be expressed?
I think we see our job as managing long-term savings on behalf of our clients, whether it is for a pension plan or for a high net worth. So our job at the moment is to try to look far, to look ahead, to try to weather the storm. Rather than try to anticipate what markets are going to do tomorrow. I think these markets are extremely difficult to trade day in, day out. So you don't know what's the next news is going to be, what the next surprise is going to be. So we try to talk to them about and remind them about what their objectives are, and try to stick to those.
Yes.
So at the moment we're sitting tight. We've cut risks. We went more defensive, and we'll weather that storm like we've weathered storms in the past.
Yes, and we see markets then trying to move past the Iran narrative, trying to put this behind us, even though the Strait of Hormuz is largely still blocked. You've reduced risk. Is it now time to put that risk back on, or is it too early for that conversation?
I think it's too early. I think the volatility and uncertainty, which is in the markets, is bound to make you make wrong decisions. So again, we're sitting it out for the moment.
You're sitting it out. I mean, we've seen a lot of markets around the world actually reclaim the highs they were at before the war started. So that's the case with some of the Asian markets in Taiwan, Singapore, and China. It's also the case with the S&P. It's not the case in Europe. So how much do you lean into Europe or away from Europe at this point?
But at the moment, we're neutral equities. We're neutral regionally speaking as well. We're slightly overweight in healthcare, in utilities. We like tech, so we don't have any marked, regional bets at the moment.
I wonder what you think's at stake for the global economy then. We were listening to the Citadel founder and CEO, Ken Griffin, who was speaking at the Semaphore World Economy 2026 Summit. He's been giving his view on what this means for the global economy. Let's listen.
We have a classic energy price shock unfolding across the world as we speak. That, of course, will create demand destruction. It will cause economies across the world to decelerate. The risk of a recession has increased, and central banks are making some really difficult decisions. This really is a very, very treacherous moment for the world economy.
So Ken Griffin there saying this is a treacherous moment then for the world economy. And I wonder if we've seen the full extent of that, Laurent, or whether that is still to come. Because it seems tempting looking at markets trying to move on to conclude, oh, well, the worst didn't happen. But maybe, aside from the humanitarian story, of course, I'm thinking for markets. But maybe the tightness or supply constraints or shortages for Europe, particularly, maybe they're still ahead of us. Where are we through this story, do you think?
Yeah, we think that the risk is more on the growth side than it is on the inflationary side. And the longer the Strait of Hormuz stays closed, the more this risk, increases. If you consider there are 4.2 billion barrels of reserves, and that 25% of those reserves are accessible, and that we lack 12 million barrels a day, more or less, out of 20. 8 can be redirected through the East-West pipeline and other means. That gives us until the end of May before we really have a severe shortage. So I think the faster we can resolve the crisis, the faster we can reopen the strait, the better. But there's definitely a risk of recession looming ahead. There is a risk of recession then.
That's not your base case though, I assume?
So our base case, we give it a 40% probability that will be there.
So if the big risk is growth, not inflation, does that mean the bond markets are front and center? Is that an important part of portfolios at this point?
It is. Again, as I said, at the moment we are neutral on bonds. We've cut our exposure to credits. We're neutral on treasuries. So yeah.
Yeah. What about when you talk to wealthy clients and thinking about wealth management for those in the Middle East? Has there been a lot of? Is it your experience that money in the Middle East has been trying to find homes elsewhere, or what's the story there?
Yeah, I think it's a good question. I think in general, wealth is mobile, and we've moved from a world where clients were trying to diversify their investments to now a world where they're also trying to diversify their booking centers. So our job is to provide optionality to those clients, and obviously Switzerland is an interesting hub because we are in the business of trust, and trust is a function of a few things: expertise, for one; second, intimacy, and how well you understand your clients' needs. And I think the long tradition of Switzerland in wealth management, in dealing with successions, in dealing with family governance, provides that level of discussion that we can have with ultra high net worth clients. And last but not least, trust is about reliability. And therefore, you want a home to custody your assets where you have a stable government, a strong currency, a strong regulatory framework, and that's what Switzerland can provide.
If Laurent, there had been a temptation for some wealth management business to gravitate toward the Middle East before this happened, do you think some of that comes back to Europe now?
It might. It might come back to Europe. It might go to Asia. But we're going to see wealth being mobile again.
And I mean, in an increasingly fragmented world, is there also? I mean, I guess wealth is mobile, but it's also aware, I suppose, of the dangers of putting money in places where it might become out of reach at any point. Is that something? Because we talk to businesses about supply chain resilience. I wonder if those with wealth are thinking about the resilience of the supply chain of that money, being able to keep getting their hands on it.
Yeah, exactly. And this is exactly my point about diversifying your booking centers. You don't want to put all your eggs in the same basket. So we see a lot of clients, wherever they are serviced, trying to book their assets in different places.
And different currencies, I suppose, it flows from that. De-dollarization was a theme we talked about a lot in January, February. Yeah. That really went away when we saw that the dollar, it is still a haven in the month of March. But where do we stand on that conversation?
Well, long term, we might see a bit of de-dollarization coming back in. We think that, if you're sitting outside of the US and you believe that structurally the dollar is going to be eventually weaker for different sets of reasons, then you might want to diversify away from the US. The imbalance between foreign investors in the US and US investors investing abroad is around $26 trillion. So you just need a little bit of rebalancing for that to have an impact on the market. And when we talk to our clients who have been for a long time now overweight US assets, and rightly so, they're starting to consider rebalancing out of the US towards emerging markets, towards Europe. Obviously, the recent crisis have put that a bit on hold, but they're still considering it, whether we're talking about public markets or whether we're talking about private markets.
Okay. Laurent, thank you very much. Thank you for joining us. Laurent Ramsey, a managing partner at Pictet Group and chairman of Pictet Asset Management. Coming up on the programme, the US and Iran explore the prospect of further talks as Israel and Lebanon meet at the negotiating table. We'll be hearing from RUSI Senior Research Fellow on this subject. That's coming up next. This is Bloomberg.
Geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
I think Iran has learned through this war that while the nuclear card that they had, that was their leverage against the world, right? If you don't do what I say, I may be crazy enough to go to nuclear weapons, right? That was always the threat. When I was in the White House and I was in the State Department, I think they realized that cost billions of dollars. one $20,000 drone hits one tanker, and we control the whole straits. So I think this is a card they don't want to give up. They're going to control it, even if they open the straits.
That was the TWG Global Managing Partner, Amos Hochstein, speaking to Bloomberg at the HSBC Global Investment Summit in Hong Kong, reflecting on his backstory in US politics, of course. Let's get more on the situation in the Middle East. The US and Iran are looking to arrange a second round of peace talks before the ceasefire deadline expires next week. This as Israel and Lebanon hold their first direct negotiations in more than 3 decades. Joining us now is Bershu Ozshilik, who is a RUSI Senior Research Fellow for Middle East security. Bershu, thank you very much for coming to talk to us. What prospect then for a deal? We did not see success at the peace talks that took place over the weekend. The ceasefire has still held, but it's rapidly coming to an end. So what kind of optimism do you have about the ability of the US and Iran to find a peace agreement over the next few days?
Well, I think the clock is running out, and there's a great amount of pressure on both sides to arrive at some type of agreement, whether that is one that we can call a durable peace settlement. I think that would be rather far-fetched. What's more likely is a conditional or phased approach that might emerge over the next few days during talks that take place in Islamabad or another venue. I think there is also some speculation about where the talks might take place. But overall, it is positive that diplomacy has been ongoing. There's been great momentum by regional actors in the Middle East. We had the Quad previously meet in Islamabad and elsewhere and discuss the possibilities of what a diplomatic pathway might look like. That, of course, is Saudi Arabia, Egypt, and Turkey and Pakistan. So there is still a door that's been left open. We do not yet know how Tehran might respond to the offer that J.D. Vance said they left on the table. But there are still points of great disagreement between both sides, as well as points that now appear to be bridgeable.
Okay, and yes, one of the areas of disagreement that's been much cited by the Americans has been around the development of nuclear weapons. That seems to be the focus for the US president, Bershu. Do we see common ground there? Because sometimes we hear talk about weapons themselves, other times about uranium enrichment and what's going to be allowed. I mean, is there going to be any kind of agreement on that front?
Well, it's difficult to say. It's largely because President Trump's, the goalposts have moved repeatedly since the start of the operation on the 28th of February. But the main sticking point now appears to be the issue of suspension of Iran's nuclear enrichment program. It's been reported that J.D. Vance, the negotiating team, suggested a period of 20 years, whereas the Iranian negotiating team was able to offer a timeline in single digits. That could be up to 9 years. Again, these are still issues that are being floated publicly. We don't know precisely what the posturing positions have been behind closed doors. The other issue, of course, in addition to the nuclear program, is what happens next with the Strait of Hormuz. The one issue that is, I think, fundamental, but may be left out of negotiations as far as we know through open source reporting, is what Iran might be willing to concede on its ballistic missile program, as well as its support for armed groups or proxies across the region. And bearing in mind, these latter points are those that matter significantly for Gulf states as well.
Yes, and thinking about the proxies, could this whole thing be thrown off course by the conversations between Israel and Lebanon? Those are ongoing, but on a slightly separate track.
Again, I think overall it's positive that the government of Lebanon and Israel are in direct negotiations. This is a landmark moment. It hasn't, direct talks haven't happened in decades, so it's significant. I think from a strategic diplomatic point of view, it's also the United States and Israel trying to extract that card, that leverage from the Iranian government, the card that they have, the influence that they have over Hezbollah, and engage in direct interaction with the Lebanese government to work on a pathway of disarming Hezbollah, potential normalization in the future. But we're very far from the possibility of that reality where things are now with Israel's ongoing military operation south of the Litani River, which has been hugely destructive. But there are simultaneous tracks being pursued at the moment. We're seeing what typical of President Trump's practice. I think the military option, the blockade of Iranian ports in the Strait of Hormuz, alongside diplomatic pathways or attempts, Israel, Lebanon, as well as potentially the next round of talks in Pakistan.
Okay, Bershu, thank you very much. Thanks for joining us. Bershu Oshalik, RUSI Senior Research Fellow for Middle East Security. Really good to get your perspective on the developing situation. Still ongoing, of course, in the Middle East, even as markets try to look to other areas. Coming up then, we'll talk about bank earnings. JP Morgan and Citi post record revenue numbers, while Wells Fargo misses. We had quite divergent share price reactions to the US bank earnings season so far. We'll hear from another couple of banks in today's session over in the United States. So perhaps that part of the earnings story serving its purpose, allowing the markets maybe to move forward a little bit with a focus on what's happening to the American consumer, private credit, deals within the US banking space. All of that coming up shortly. We'll dig into the US banking results on this program. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. Good morning. This is The Pulse. I'm Anna Edwards, live in London, and these are your top stories. European stocks and US futures tread water as investors downplay tensions in the Strait of Hormuz, turning their focus to a potential second round of US-Iran talks. Hermes plunges the most on record after disappointing first quarter sales, while Kering slides on weaker than expected Gucci performance. And ASML lifts its full year sales outlook as booming AI demand drives orders at Europe's most valuable company. Let's just get to some breaking news coming through in the shape of UBS over in Switzerland. Just getting some news lines coming through from UBS this morning, and it seems quite a few of those. So Sergio Ermotti over at UBS saying they're finalising the Credit Suisse integration. Swiss capital reform, the UBS chairman then also saying that Swiss capital reforms would weaken the bank, and this has been a point of contention between regulators and the bank for some time. The UBS CEO Sergio Ermotti then giving us a few other lines saying that Credit Suisse deal wasn't a bargain. So interesting narrative there around the price and the consolidation costs there perhaps. And the chairman also giving us some other lines. Basically all of this coming through in AGM speeches, I think. That seems to be the gist of it. The UBS chair saying that the CEO is to lead the bank through regulatory uncertainty. And a bit more detail on their thoughts about reforms. Sergio will see the integration through to completion and then focus on driving growth and sustainability of higher returns. So some lines from both of those in line with, well, on the subject of consolidation within that sector. Let's stick with the banking sector. The CEO of Commerzbank says she's had some talks with UniCredit about a deal after the Italian bank announced a takeover bid for the German lender. But Bettina Orlopp says the companies are still at odds over the valuation. UniCredit made a €35 billion offer last month. Orlopp has since said that she is sticking with her standalone strategy.
We have constructive dialogues, at least from our perspective, since the beginning of the journey, so since September 2024. Because UniCredit is an investor, an important investor, now the largest investor also, and we take that into account. So we had every quarter, we had bilaterals between the two institutions where we actually answered all questions UniCredit had, and we did not take up any feedback when it comes to our own strategy or to potential collaboration or something like that. And we always stated that we would be open for a dialogue when we see potential terms, potential ideas of a business combination agreement. And what happened after the announcement of the takeover offer is that we had some talks, some interactions about a potential business combination agreement. But for the time being, it's very clear that our opinions differ quite a lot, starting with the valuation of the two companies and to the banks and the exchange ratio. And there are also some disagreement, I would say, about the potential future business model.
That was Bettina Orlopp, the CEO of Commerzbank. So views not aligned between the management of Commerzbank and UniCredit about the value of that German business. Let's pivot to the US banking story. US banks have reported at least $100 billion of private credit exposure as they revealed some record revenue numbers. Traders at JP Morgan Chase posted their highest ever quarterly revenue in the first 3 months of the year with record stock trading results. Chairman and CEO Jamie Dimon was cautious, though, about what lies ahead.
There will be a credit cycle one day, and I think when there's a credit cycle, losses will be worse than people expect relative to the scenario. I don't think it's systemic. It almost can't be systemic at that size relative to anything else. But, you know, when recessions happen and values go down and people refi at higher rates, there'll be stress and strain in the system.
Bloomberg's Tom Metcalf joins us now, leading finance coverage here in Europe, but lending his ear to what's going on stateside right now. Tom, good morning to you. So let's start with JP Morgan. We just heard there from Jamie Dimon, slightly different complexion maybe to the commentary coming out, but in terms of the numbers, some great trading results. What else stands out to you?
Yeah, it's interesting. Great numbers, and then you've got Jamie Dimon coming out and actually, in many ways, pushing the stock down with a pretty bearish kind of outlook. Which, you know, to be fair to him, he's definitely one of the more sort of bears out there, the bigger bears. So I think people are taking that guidance kind of into account. But when you look at the kind of what the traders did, across the board at JP Morgan, they just did a really strong quarter, and it really puts Goldman's results the day before in a different complexion where, you know, their bond traders basically missed estimates. JP Morgan came through very strongly.
And a pretty strong story coming out from Citi then. Yeah. There's been a long-running turnaround story taking place over at Citi, and some of the fruits of that coming to the fore, it would appear.
Yeah, they arguably came out yesterday best. Their shares were up a couple of percent, and yeah, it does look like that long sort of push under Fraser is starting to bear fruit, and again, broadly speaking, very strong in the markets, all the banks benefiting from the volatility there, but you're seeing, you know, that kind of cost control taking shape, so it does feel like Citigroup, as they were saying yesterday, is kind of coming out of the restructuring mode and then now starting to look more at opportunities and growth, which is obviously a great news for their stock.
Wells Fargo, on the other hand, not such a great day for them. Their share price stands out for the wrong reasons, I suppose. But is it just as simple as the numbers just missed?
Yeah, I think so. I mean, I think very disappointing when you look at that. I mean, obviously it's a difficult macro backdrop, but a lot of their peers sort of managed to come through that and at least hit those targets. But yeah, Wells Fargo shares down 5-6%, I think, by the end. So a real spectrum over these Q1 results. And then today, of course, we got Bank of America and Morgan Stanley.
Yes, and so what's the focus going to be there? Because I don't know if we've... I mean, strong trading revenue has been something of a theme already. Whether the markets have rewarded it, and it hasn't been across the board, actually. There's been some, I think, Goldman FIC team that was punished a bit by the markets, wasn't it? The underperformance or the not meeting estimates there. But elsewhere, the trading story has been quite strong because there's been such volatility in markets. So as we look ahead to the corporates that are going to report today, what are we expecting to be the themes? Yeah, look, I think equities for me. I'll look at Morgan Stanley and see how that team there done. Long time they were top of the street. Right now, Goldman is sort of expected to hold number one for this quarter. And yeah, you're absolutely right. At Goldman, the sort of fixed side disappointed, but the equities blew past like this massive expectation. So it'll be interesting to see if Morgan Stanley can kind of do the same, or is Goldman's performance sort of, you know, taking share from Morgan Stanley. But that'll be the big thing for me on that bank. And then Bank of America, you know, a bit of a, you know, much more of a universal bank. I'll be particularly interested what the guidance is coming out of the CEO in terms of, are they seeing distress in any of the American consumer? For quarter after quarter, the message has been things seem pretty rosy no matter what is happening in the wider world. Tom, I was just blundering through, breaking some headlines coming through from UBS moments ago. I mean, this has been an ongoing standoff, hasn't it, between the government and the management at UBS, because the management doesn't like the regulatory push that is coming from the government. Kelleher over there saying, this is the chairman of UBS, saying they have a fiduciary duty to lobby against the reforms. So I guess the standoff continues. Yeah, the sort of lines of the sand are drawn. I mean, we're expecting kind of the final shape of at least what the Swiss government wants to do in the coming weeks. And yeah, for me, I think those headlines are really interesting. Probably the biggest shift there on the UBS side was Kelleher saying he expects Amoti, and this could be widely interpreted, to stay through the regulatory uncertainty. So we knew for sure Amoti was staying through for the integration, which is expected to finish sort of this year, maybe early next. But, you know, it's a bit of an open question for me, at least. What does, you know, when does regulatory uncertainty end? You know, this Swiss capital reform is many years. Yeah, so maybe Amoti is going to stay around for longer than at least has been messaged, which I would think will be very positively taken by UBS shareholders. Okay, well, there we have it. There's the share price reaction, a little bit of a drift higher through the morning, but not a huge amount of reaction actually to those lines coming through. But I think this is for the AGM, so we'll see if there's more commentary comes through on that particular front. Tom, thank you very much for the analysis of the US banking landscape and a little bit of reflection on the UBS story as well. Now, US stocks are holding firm near all-time highs after a rally powered by optimism around a potential peace deal in the Middle East. Joining us now to reflect on where we are on this market story, Greg Fleming, President and CEO of Rockefeller Capital Management, a regular guest on this program. Greg, really nice to speak to you. Thanks for joining us once again. So we're at an interesting time actually for markets because, as you pointed out to me in the break a moment ago, the S&P has recouped its losses from the period of the war. Incidentally, so have some of the markets over in Asia. Europe has yet to do that. It seems as if markets are trying to move past this narrative and go back to other narratives. Do you think that's wise? Is that premature, or is that about right?
Well, it's a complicated time, and I'd say a few things in response to this. Number one, coming into the year, we were coming off of 3 years of strong equity returns, over 50% over 3 years. That hasn't happened very much in history, and typically the fourth year has more challenges. You're later in the cycle, you're later in the credit cycle. So coming into the year, we knew there would be more volatility. So you add on to that, the second thing I'd say here is an oil shock, which has obvious implications for inflation, but it also has implications for demand, particularly in parts of the world. You just mentioned Asia. There are certainly economies there that are really going to struggle if this holds in there longer. But the third point I'd make, which I think is the countervailing point, particularly in the American markets, but maybe more broadly, is AI, which remains a major theme, and for good reason, because the speed with which the technology is being deployed and the breadth of companies that are now either directly or working in partnership with some of the big providers like Anthropic and OpenAI to implement the tools and begin to show productivity improvements is quite high.
Yes.
So I think, when you piece all of those things together, there's a lot of uncertainty. Nobody, in fact, really knows where it's going to go because of the interplay of the different parts of this. But it's not as clear-cut as people might have thought when the war started, that you're going to have an oil shock, markets will be down, and down for an extended period of time. That's clearly not the way the market's reacting.
And I wonder, Greg, so are you finding space then in conversations with clients to talk about AI? Are clients wanting to discuss this as a theme that they really want to get back to investing behind?
100%. Now, remember, Anna, our clients are high net worth and ultra high net worth, so we have long-term plans in place with them. They typically stick with these plans even through times like what we're dealing with now. We're not looking to make major shifts with them. Our private advisors work with them on these plans, and they stick to them. You might make pivots and adjustments based upon what happens in markets, but clients are pretty steady in our client base. But they are very focused on AI. They're very focused on AI in many ways. From an investment standpoint, there's obviously shifts there. I mean, you look at what's happened in the software industry over the last 12 or 18 months, and that was significant and rapid. What are other industries that are going to be affected by AI in a way that you need to think about investments there, from an investment standpoint, but also industries that are going to be able to create a lot more productivity. And then our clients are focused on AI and how we're implementing it at Rockefeller Capital Management. How are we going to use the tools to make our interface with them more efficient and better for the client?
Okay, you mentioned there that high net worth individuals is the focus, and they make adjustments based on the news flow, but broadly they follow the plans. I mean, I wonder if for some clients, depending on their geography, whether the events in the Middle East have been a time for a big rethink about where the money is and in how many locations and in what currency and all of those associated conversations. What do those conversations look like?
Well, for most of our clients are American clients, and I think for them, not major pivots, but it does highlight the need for a diversified strategy and a long-term strategy. So I think that that just reminds people that it is a volatile world, that things that people think aren't going to happen or shouldn't happen do happen. So I think that does affect investors in the United States, but around the world clearly. I mean, there are many companies, a lot of them in Asia, that were performing quite well. That the shock from oil prices creates an immediate issue there. So that highlights the fact that things can change quickly, and it comes back to the long-term plan and the diversification.
Yes, and I wonder how much the thinking around private credit is evolving. So in those long-term plans that those high net worth individuals have, I mean, we've seen some high net worth individuals wanting to get reduced exposure to private credit as a result of some things that have happened, and software and AI threats to software is part of that conversation, of course. How is that evolving, the private credit narrative? Well,
more broadly, alternatives in private markets is such a big slice of the investing pie. $20 trillion of assets in not just private credit, but infrastructure, private equity across the landscape. And our clients, because they're high net worth and ultra high net worth, they can withstand the illiquidity of those investments. So our clients are still broadly invested across alternatives and across private markets, including in private credit. When we look at private credit, from most of the major players there, and from what we see, there isn't something fundamental and secular. Clearly, there are industries that are being impacted by AI that affect the private credit business. And one of the things that the private credit providers need to focus on is software changed quickly. Literally in 12 to 24 months, it went from an industry that everybody wanted to lend to an industry where there's dramatic change. What are the industries that AI is going to affect from here that the private credit providers need to focus on ahead of the game so that they're diversified against that possible change, which again could be quite quick. Yeah. But for our clients, we keep them invested in alternatives. They have exposure in private credit. We're careful with the different firms that we work with. We don't see something fundamental in the space. The other thing, Anna, I would say is, we are later in the credit cycle. And private credit, as you know, grew out of the credit crisis, which you and I were part of, when the banks, because of regulation, pulled back, and the private credit providers really were born during that time. And those investments are into smaller companies. The returns on those funds are typically higher yield with higher defaults. Defaults have been very low over recent years. We're later in the cycle. So some of what's happening there was, again, inevitably going to happen as the cycle went on. Software reinforced that, driven by AI. There will be other industries that AI impacts that the private credit providers need to be aware of. But for us, it's still an asset class that we're comfortable with clients being exposed to with the right providers.
Okay. And so when you explain to clients, or maybe they see it for themselves, around gating and around, do high net worth clients, do they see gating in private credit and private markets more broadly, and the lack of transparency that's maybe attached relatively to those kind of products? Do they see that as a feature and a positive, actually, because it protects their investments from sort of panic fire sales, or do they see it as a negative to try and overcome?
I think they mostly see it for what it is, the positive to protect against fire sales. We're quite clear with our clients when they go into a fund with a potential gate, that the gate's there. There's some history in this. As you know, Blackstone with BREIT had a gate several years ago, so there are a lot of clients in the wealth space that saw that gate and saw what happened from there. So I think the sophisticated clients, the high net worth and ultra high net worth, they're aware of it. They don't react, immediately in a negative fashion. They watch the returns from there that the providers are providing. They watch how the firm is responding to the environment. There's not a sense of the gate goes up and there's panic. We don't see that with our clients, and I don't think you typically see that across the broader high net worth and ultra high net worth spectrum. I will say that I think broader retail, maybe mass affluent, will be more cautious on some of these alternative products like private credit going forward because of all the media attention. There is no interview that anybody like me does now. Not that you hit a lot of topics, not just the ones that are out there, but this is a topic that everybody wants to talk to on a recurring basis.
Yes, absolutely. It is newsworthy. Greg, thank you very much.
Great to see you
so much for joining us. Greg Fleming, President and CEO of Rockefeller Capital Management. Coming up on the program, ASML faces a major blow in China as new U.S. legislation threatens to block sales in its top market. How resilient are the forecasts that we've got from this business this morning on that front? We'll get more details. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is The Pulse. I'm Anna Edwards, live in London. Now, Europe's most valuable company, that is, of course, ASML, has raised its full-year sales forecast after a surge in global AI spending. Bloomberg's Charlotte Hughes-Morgan joins us now from Amsterdam with some details. Charlotte, good morning to you. So what do these results then tell us about the state of AI rollout? Because they matter for this business, but they also matter more broadly for the markets.
Yes, thanks, Hannah. I mean, as you mentioned, we saw ASML up its full-year forecast and now expects between 36 billion euros this year to 40 billion euros. I mean, this is really the continuation of a story we've been seeing since the start of this year and even before. AI demand continues to boom. You've got ASML management actually saying, the demand for AI chips continues to outstrip supply. ASML is saying, its customers are ramping up capacity. You've got TSMC, ASML's largest customer, Samsung, SK Hynix. So, these companies across the AI ecosystem in memory chips, in logic chips, they're all pouring money into ramping up their assembly capacity. And ASML says, it's working with customers to make sure that it can also meet this demand. But the bottom line is, this AI infrastructure spending, this AI demand just continues at pace, and ASML is saying that we're well positioned this year and beyond to capitalize off that.
Yes, a really positive commentary around demand for chips more broadly, wasn't there, from ASML today, Charlotte? But what about the Chinese dimension here? The company's largest market last year was China, but of course there are restrictions and talk always of restrictions and what they can do in China. So what's the latest there?
Yeah, this is a really important story for ASML, and we saw net system sales to China fall to around 19% of ASML's total system sales. I mean, that's down from 36% last quarter, and this is something that ASML had guided for. They said you'd see this stabilization, this drop-off in sales to China, and as you mentioned, ASML is actually already under significant export restrictions to the country. It's never been able to sell its most advanced chip machines, so the systems it sells are a few generations older. And then, of course, we saw recently in the US draft legislation put forward to further tighten those export restrictions to China. And that would, obviously it's in its early stages, but that would potentially curtail ASML's revenue from China, which is still a significant market for the company, despite the kind of drop-off we've seen this quarter.
Charlotte, thank you very much. Thanks for the analysis. Bloomberg's Charlotte Hughes-Morgan joining us there from Amsterdam. Let's go from Amsterdam to markets or companies listed in Paris. Hermès plunging this morning as sales missed analyst estimates. The Birkin bag maker has been hit by the disruption caused by the conflict in the Middle East. For more, we're joined by Bloomberg opinion columnist Andrea Felsted with thoughts on Hermès and beyond. Good morning to you, Andrea. So what are your takeaways then from Hermès in a Birkin bag or any style you like?
I think this has fed into a broader concern about Hermès. The shares have really, fallen around 25% over the past year. They've really derated. They're on a forward earnings of about 33 times. Their 5-year average is 48 times. You can see how much they've fallen back because there's a real worry is other designer labels we've had this incredible reset of designers, lots of new creative directors. Hermès is still doing the same as it did. Yeah. We've seen the resale values of the Birkin and Kelly bags actually moderate from the peak in 2022. That's sort of in line with the luxury boom and bust and in line with the values of Rolex and other, highly traded, coveted assets. So there's questions about is Hermès really as immune as and really untouchable, exactly as we thought, and this has fed into that really.
Because and maybe that's the backstory in people's minds going into these numbers today. Then, because you mentioned this a couple of days ago, there could finally be some competition.
Exactly.
Where do we look for that?
Well, where we look for it is Chanel, and obviously they're not listed, so it's quite difficult. But we've seen all the pictures of people, the frenzy for the bags. Dior, LVMH had just said Dior was selling well. They're probably the two places, and that are the competition.
Okay, and then let's talk about Kering, because there the focus is on Gucci, and I think the share price reaction. Well, in fact, it's yeah, still negative, down by 8.8% over at Kering. I mean, this is under new design control, right?
Exactly.
The Gucci brand, and yet we're not seeing it deliver just yet.
Exactly. There's two things. They had the new CEO, Luca De Maio, in September, and the shares had an incredible run. You know, investors thought he's going to, come in and transform Kering. He's done a lot of the early obvious things to do, renegotiating the Valentino deal, real estate deals, selling the beauty business. So I think investors got a bit ahead of themselves. Then we had all the frenzy over Demna, and he was going to turn it around. I was always very sceptical. I think he's the wrong designer. Clearly, they said they're selling well, good reception, but there hasn't been the frenzy over Demna from consumers that there has been over Chanel. There's not the buzz. So I think it's going to be quite tricky with Gucci still to turn things around.
Still difficult to turn things around. And I mean, are you surprised at how negative the share price reaction is, Andrea, given we kind of saw the Middle East drama coming for these businesses?
Yes, I thought actually LVMH was pretty solid. LVMH was, yes, it was disrupted. Fashion and leather goods wasn't great, but China going in the right direction, the US going in the right direction. US still good for Hermes, but perhaps China not as strong as for the others, because Hermes was quite resilient in the downturn, so it might not have as much of a bounce, but still it feeds into these broader worries about the brand.
Okay, Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted. Coming up on the programme then, let me tell you about some of the interviews that you can catch here on Bloomberg TV. Francine Lacroix will be speaking with Megan Green from the Bank of England's Monetary Policy Committee. You can catch that interview at 3:15 p.m. London time. Of course, big gathering of all of these central banking professionals over in Washington. Also later today, we'll be speaking to the Bundesbank president and ECB Governing Council member, that is Joachim Nagel, about the ECB's outlook. You can catch that interview at 4:30 p.m. London time. Up next, it'll be Bloomberg Brief. This is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Good morning. It's 5 a.m. in New York, 10 a.m. in London. I'm Matt Miller in for Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks hold at an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand. And the last stretch of big bank earnings, Bank of America and Morgan Stanley are on deck today. Let's take a look at futures. They're higher again after a big rally yesterday pushed us all the way to 69.67. So 1 point shy of an all-time closing high yesterday in the cash session. Today in futures, we're looking at slight gains here on S&P, slight gains for the NASDAQ as well. The small caps looking at a red arrow, but really everything's pretty much unchanged here. The focus, well, here you can see Treasuries 375, 425, and 485. You can see the 10-year coming up just far less than 1 basis point. The focus of the world, though, obviously remains on oil, as Iran reports that a ship has got through the blockade, although that hasn't been verified by the U.S., and we haven't verified it independently either. Brent crude right now trading at $95.38. NYMEX crude down to $91.37. A little bit of a green arrow there, but we had such a drop yesterday that this makes sense. Gold at $48.19 a troy ounce. For some of the single stock stories that we're watching this morning, let's get out to London and Chloe Melee. Chloe?
Good morning, Matt. Let's start with a couple of tech companies in the green today off the back of some AI collaboration. So Broadcom expanded its partnership with Meta to deploy AI infrastructure, and GitLab expanded its partnership with Google Cloud for AI agents. And so those two expanded partnerships are being welcomed quite warmly by the market, and we have got both Broadcom and GitLab move higher in pre-market trading today, especially GitLab up almost 8%. Moving on to Robinhood, which is also in the green today. It is reacting to the SEC approving plans to remove these restrictions on day trading activity by smaller investors. And we are up more than 6% this morning in pre-market trading for Robinhood. We had the head of brokerage at Robinhood saying this was a significant step towards opening up this for retail investors and empowering retail investors. And of course, that is very good news for Robinhood as a retail trading platform, and therefore we are up there. And finally, Hermes over in Paris is down quite significantly this morning after sales disappointed investors. The magnitude of that share price reaction can also be explained by the fact that Hermes is traditionally quite a resilient company within that luxury sector, and so we are down more than 8% today.
Chloe, what is going on with the luxury houses? I mean, Hermes, Kering with Gucci, LVMH, have they all disappointed?
Yeah, they're all disappointed. We had LVMH on Monday and then Kering last night, and all of them have said really that they've been badly affected by the war in the Middle East. So that has led to lower demand in the kind of key Middle Eastern shopping hubs like Dubai, but then also there's been weaker consumer confidence, travel disruption that's really reverberated across those different markets. So for example, fewer Middle Eastern shoppers going to those Paris Hermes stores or LVMH stores, and so they've been really affected by that conflict, and that's really had an impact across growth for all of those luxury groups.
All right, we'll keep an eye on the bag makers. I know Ferrari, often talked about in the same breath with those companies, is out with earnings in the beginning of May. Chloe Melee there with a look at your stocks. Coming up this hour, more on this equity market with JP Morgan's Jack Caffrey, and Stephen Bigger of Argus Research joins us on bank earnings later this hour. But first off, President Trump once again saying he sees the end of the war with Iran in sight.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. But we'll see what happens. I think they want to make a deal very badly.
U.S. CENTCOM Commander Brad Cooper posting on X earlier, quote, a blockade of Iranian ports has been fully implemented as U.S. forces maintain maritime superiority in the Middle East. Joining us now is Jumana Bersetchi in Dubai. And Jumana, it's not hard to believe that the greatest military on earth retains superiority, but the Iranians are reporting that they've got one ship through the blockade. What do we know?
Yeah, so we've sort of been micro-analyzing various shipping movements through the Strait of Hormuz since the U.S. introduced their own version of the naval blockade. That was just over, I'd say, 40 hours ago now. We did get that update from CENTCOM. You just showed it there. They say that the blockade has been very successful and that 6 merchant vessels actually turned away and went back to these Iranian ports on back of U.S. instructions. And I should just add that there are no hostilities, okay? There hasn't been any military escalation around the Straits, which of course is what some people were fearing when it went to effect on Monday afternoon. But in terms of the ships going through, remember yesterday we were keeping a close eye on one of them, the Rich Starry. It seemed to have made it through the Strait, but then it stopped and seems to be returning back now. So again, unclear where its final destination is. And earlier, a couple of hours ago, the Iranian state media is saying that one of their own vessels actually managed to successfully transit through. That, again, has not been verified by our own shipping colleagues and also by other satellite imagery. But what we have detected is there is a sanctioned vessel that is sailing alongside that Rich Starry vessel that could potentially be the one that Iran is referencing. But again, at this point, it is a bit of conjecture, and we don't fundamentally understand whether it had some link to an Iranian port before making the transit through the Strait. The bottom line is that the U.S. are exerting this pressure politically, but then also economically on Iran as well. And the reason they're doing this, Matt, is to lay the foundation for the second round of discussions. They want to wrest this leverage point away from Iran with the hope that if they do meet again in the next coming days, Iran will be more open to making some of those concessions that the U.S. have been pushing for, especially because the target here is to cut off a key economic lifeline for Iran, given 90% of their economy relies on oil exports that pass through the Strait.
Right. Although, I mean, we had lifted sanctions on Iranian oil. So for the first 40 days of the war, Javier Blas estimates they were making $175 million a day, as opposed to the $100 million a day they were making before the war at lower prices under sanctions. So they have made a windfall at the beginning in terms of economics. But as President Trump says, and obviously you've seen very clearly, the U.S. and Israeli bombing campaigns have really decimated their military forces. Jumana Bersetchi in Dubai, really appreciate your reporting on this. Let's get over to Washington, where Treasury Secretary Scott Bessent remains optimistic that President Trump's original tariff rates could be reinforced this summer.
We had a setback at the Supreme Court in terms of the tariff policy, but we will be implementing or conducting Section 301 studies so that the tariffs could be back in place at the previous level by beginning of July.
Joining us now is Washington Deputy Bureau Chief Laura Davison. The tariffs have been one of the key pillars for President Trump, obviously, in his campaign and in the beginning of his presidency to raise revenue. And he did raise a significant amount of revenue in the first year of those tariffs. How does it look right now, Laura?
So that Supreme Court decision that knocked down a lot of those tariff policies really, put a big hole in this tariff wall that Trump was trying to build. Average tariff rates on imports into the U.S. fell from about 16% down to about 9%. So Bessent there was mentioning that the U.S. is looking to rebuild that brick by brick. The fact of the matter is though Trump previously was able to just sort of unilaterally go out and say that he was imposing tariffs on a certain country or a certain type of good, effective essentially immediately. Now the White House has a much more arduous process to implement some of those tariffs. They need to show that there's a national security concern or a labor practice concern or some other reason that they need to implement this tariff. They have to go through and do a study. They have to then go through and implement. So the fact of the matter is that they just have both fewer tools as well as much more arduous, slower to implement. So beginning of July, is technically possible, but as the administration has been distracted with Iran and other issues, seeming less and less likely as the weeks go by.
American consumers and corporate shareholders have been paying for these tariffs, and there was always kind of the light at the end of the tunnel that President Trump might be cutting stimulus checks with the revenue. That's something he talked about a lot in his first year in office. He hasn't said much about it lately. In fact, he actually has said that we can't even afford now to pay for childcare, Medicare, and Medicaid because of the war that he went into in Iran. What can we hope for now, Laura, in terms of stimmies?
The stimulus from the tariff revenue is, I would put it at 0 to not likely at all. This is one thing that Congress would have to implement, and Congress has said that they're not going to do that. The other fact of the matter is the U.S. still runs massive budget deficits, and this tariff revenue only addresses a small piece of that. So there's a lot of concern, both from Republicans as well as Democrats, who say, look, if we're going to be, putting this money, we should be addressing debt and deficits, not putting it back out to the people. But this is, sort of one of those ideas that sounds great on a campaign trail, sounds great at a rally. It's a way to get voters energized. But when it comes to the actual practicalities of this, the math also shows that with the amount of tariff revenue raised, we're talking, tens of dollars per household, not much to really even make a difference.
Laura, thanks very much. Laura Davison there, Deputy Bureau Chief in Washington, but currently, as you can see, in Hong Kong. Turning now to tech, shares of ASML climbing in Amsterdam after boosting sales forecasts. Surging global AI spending helped fuel demand for its chip-making machines. Bloomberg's Neil Campling joins us now for more. So the AI story helping ASML, and they're not hurt by the higher memory costs that we're seeing hurting other people in tech today.
That's right, Matt. ASML creating the machines that are required to create the chips. So actually where the memory crunches will lead to higher ASML orders. So ASML raised their guidance for the fiscal year to basically as much as 40 billion euros for the year. Now, the midpoint is in line with where the street's at. So the stock isn't moving much on a one-off basis, but the demand trends are there. The CEO spoke early on this morning about how demand continues to outstrip supply. And how many times have we heard that in the AI and the chip race in recent months? So ASML stock is up 120% over the last year. As a European basket of AI winners is up 40% over the same period. So ASML has already been massively outperforming the sector for AI stocks.
So people still buying those chip-making machines. What about the cell phones on which we all use AI? For the first time in years, we actually saw a drop across industry shipments, didn't we?
We did. IDC data out this overnight suggesting that we've got a mid-single-digit decline in the first quarter of this year, primarily because of the component cost increases. Now, IDC are saying actually that the risk is this is going to get a whole lot worse this year. And of course, Q1 is a lower number in terms of the appetite for smartphones than we see traditionally into the holiday season, particularly in the US. Now, the worry is that they have said that in some components and in some markets, the component costs have increased by as much as 50% already, that the risk is this is going to get a whole lot worse. So we're going to need some massive new devices, perhaps, to help stimulate demand. So let's hope that that new iPhone flip phone makes it to fruition this year, as many hope.
Hey, as we get closer to the U.S. Open, we're still over 4 hours away, but I'm looking at Avgo, Broadcom, one of the biggest companies in America, making another chip deal on the AI front. What do we know?
So this deal is an extension of an existing relationship that they have to create these computing units called TPUs, and it's really to help Meta to reduce the reliance on the NVIDIA ecosystem. Now, whilst they use NVIDIA and they also use AMD, the relationship with Broadcom is going to accelerate further, and clearly what they've seen through testing suggests that they like the results, so they're going to look to create their own custom silicon solutions to be much more deeply embedded in their solution systems for the next few years. So it's another tick in the box, if you like, for these technology developments, these AI compute powers, and we're seeing lots of, whether it's in compute or whether it's in quantum whether it's in TPUs and GPUs, we all love an acronym, of course. There's just huge amounts of developments every single day in the tech space.
All right, Neil, great to get some time with you. Thanks so much for joining us, Neil. Campling runs our tech coverage for us out of London. Let's get to some of the other top trending stories on the terminal this morning. PIMCO buys all of the $400 million of bonds issued by a Blue Owl private credit fund. The bonds were priced to yield 6.5%, were rated Baa2 by Moody's and BBB- by S&P, the lowest investment grade rating. It is unclear if PIMCO will hold on to them. Representatives for PIMCO, Blue Owl, and Morgan Stanley, which was the book runner for the offering, declined to comment. A New Jersey congressman is looking to roughly double the cap on state and local deductions to $80,800 for married couples. Democrat Josh Gottheimer unveiled his plan that would lift the cap from its current level of $40,000, the ceiling for both single and married filers. Gottheimer is a co-chair of the bipartisan SALT caucus, which capitulated last year, and that's why we still have a cap and a limit on who can take those caps. Global shipments of Stellantis surged by 12% in the first quarter, led by high demand in North America for new Jeep and Ram models. Shares of the company are gaining after an otherwise disappointing quarter. The stock has been this year's worst performer among its peers after a massive record-breaking write-down. Coming up, the last two major U.S. banks set to report earnings this morning. What to expect next? This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
On the consumer side, spending's been very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
Two more big banks have earnings due today. Morgan Stanley and Bank America will report in a couple of hours. Let's bring in Tom Metcalf to see how the week has gone and what to expect today. Tom, first off, on the earnings that we have seen, Goldman Sachs, J.P. Morgan, Citi, Wells Fargo. How does the report card look so far?
Yeah, look, broad brush, pretty reassuring. No sort of really awful skeletons in the closet. I mean, the interesting thing for me yesterday was JP Morgan. My gosh, those traders really blew it out of the park. And yet you still had Jamie Dimon, you know, putting his bearish hat on and giving a bit of kind of downbeat guidance about, you know, potential risks out there. But if you just look at the hard numbers of JP Morgan, you know, all seems rosy in the world of Wall Street. At least now they've managed to navigate, you know, the crazy volatility, all these big macro points. And then it was really interesting to just hear then the Wells Fargo CFO talking about, again, even for a Wells Fargo whose results were a little bit more disappointing, they missed estimates, basically just saying, look, the consumer right now in the US is pretty resilient. So today, Bank of America, Morgan Stanley, and I think they'll sort of tell tales of the tape on either side, right? Morgan Stanley will be looking at how the capital markets business is doing. Bank of America, I always look for that, for again, that sort of picture of the US consumer and if there is any signs of distress there.
The trading business is going to be one that we watch closely after Goldman Sachs had a record in equity trading. As you mentioned, JP Morgan traders pulled in, I think, over $11 billion in the quarter for a record as well. There have been, though, some worrying signs. Goldman Sachs missed by a lot on FICC trading. What do we expect from Morgan Stanley and Bank of America?
Yeah, that miss is looking more and more unusual when you compare it to what JP Morgan and Citi were able to do yesterday. So, look, I think for Morgan Stanley, that's the question is you know, which camp are they going to be in? Kind of interesting if they're in the Goldman camp, because then you start to think, oh, okay, is it JP Morgan and say a Citi taking share? And also with Morgan Stanley, I always look very closely at those equity traders. You know, traditionally a real big area of strength for Morgan Stanley, so it'll be interesting to see how close they can come to the Goldman equities traders, who, unlike their FICC brethren, did a very good job there, really smashed through their estimates.
Tom, thanks very much for the update. Bloomberg's Tom Metcalf covers banks for us out of London. Don't miss our exclusive interview, by the way, with Morgan Stanley's CEO, Ted Pick. That's on my television program, Open Interest, at 10:30 a.m. New York time. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for your front page news. First up on the New York Times, Vice President J.D. Vance taking issue with Pope Leo's comments and invoking World War II to defend the U.S. bombing of Iran. Vance, who is Catholic, spoke at the University of Georgia.
I think that it's important, in the same way that it's important for the Vice President of the United States to be careful when I talk about matters of public policy, I think it's very, very important for the Pope to be careful when he talks about matters of theology.
Next up, the Washington Post reporting that U.S. Attorney Jeanine Pirro has asked federal prosecutors to wipe out the seditious conspiracy convictions of 12 members of the Proud Boys and Oath Keepers who helped plan the January 6th riots. The request is likely to be granted, would wipe out the last remaining convictions related to January 6th. Coming up, J.P. Morgan's Jack Caffrey seeing earnings further accelerating this year. He joins us next. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he did. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning, 5:30 a.m. in New York City, 10:30 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks holding near an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand. And the last stretch of big bank earnings, Bank America and Morgan Stanley on deck today. Let's take a look at what's going on with futures this morning after gains yesterday. Really little change on S&P and NASDAQ futures. The small caps moving down a little bit more significantly. But as I say, yesterday we closed the cash session at 69.67, which is 1 point off of an all-time closing high. Treasuries also doing a whole lot of nothing this morning. The 2-year yield actually moving up 1.5 basis points, 376. The 10-year yield at 426 and the 30 at 486. Let's take a look at oil. The global focus today moving up a little bit more, but we have come down so sharply from NYMEX crude at one point hit, I think like a little over a week ago, $117 a barrel, and today we're looking at $92.60. Brent at $96.04. You can see gold there at $4,800 a troy ounce. For some of the single stock stories that we're following for you this morning, let's get over to Chloe Melee. She's in London. Chloe?
Good morning, Matt. Quantum computing stocks are on the rise this morning after NVIDIA unveiled new AI models that are aimed at accelerating progress within quantum computing, essentially helping researchers build and develop new quantum models and processes to develop across a range of applications. And so this is really driving gains across that sector this morning. And in particular, D-Wave Quantum is up almost 9% in pre-market this morning. Moving on to Robinhood, which is reacting very positively to the SEC going ahead with removing restrictions on day trading activities by smaller investors. And so we have the head of brokerage at Robinhood saying that this really is a significant step towards empowering those retail investors, and therefore we are up about 6% for Robinhood. And finally, Hermes is not doing so well this morning in Paris, really taking a hit after really disappointing sales following in the footsteps of LVMH and Kering. So the luxury sector as a whole really struggling because of the war in the Middle East and the impact on sales. And now this really raises questions about when we will get that luxury rebound, that luxury recovery after those disappointing updates from all 3 major luxury companies.
All right, Chloe, thanks very much. Chloe Melee looking at some of the single stock stories for you this morning. Let's get back to tech. One of the single stock movers that we're seeing rise again today is ASML after the chip-making equipment manufacturer boosted its full-year sales forecast. Surging global AI spending obviously helps fuel demand for those machines. Joining us now is Bloomberg's Shona Ghosh. Shona, what do we know about ASML? I mean, it seems that demand is always more than supply in this AI chip-making game.
Good morning, and yes, it is, as we're in this current big AI infrastructure boom. You have that demand flowing through to chips that power the AI data centers and AI models, and then in turn, sort of lower down the chain, you have the demand for ASML's tools, which are integral for manufacturing chips such as NVIDIA's Blackwell structure, for example, and all the other cutting-edge AI chips that are all surging into these data centers. And ASML is the only company that makes the machines that can make the most cutting edge chips. So it has the stranglehold on the market. And the longer the AI boom goes on, the better position that ASML will be in.
By the way, Avgo, Broadcom shares up in the pre-market here after a deal with Meta, another deal with Meta. What do we know about that contender?
I think it's, overall, it's all about continued confidence, just because in the background, we have worries that at some point, that the music might stop and some of the spending will slow down. But at the moment, the sign is that, from the hyperscalers like Meta, there is renewed confidence, ongoing confidence in the amount of AI capacity that we need, compute capacity. And so tie-ups like Meta and Broadcom shows, it's diversifying the chip partners that it wants. And overall, that's really good for the ecosystem to show diversification in this way. And again, we see this sort of trickle-down effect for ASML, which, as I say, has the sort of stranglehold on some of the manufacturing equipment.
Those are the publicly traded AI stories. Of course, Anthropic has occupied a really strong place in the media lately. While it is still a private company, it's drawn more investor offers to put it at a value of about $800 billion.
That's right. I think it's important to note that doesn't mean that Anthropic is going to accept these offers. Ultimately, this is about investors piling in the months, probably, before the company considers listing, which means it will be open to everyone. At the moment, there is pent-up demand for a share of Anthropic in the strong belief that when it does go public, the share price will boom. So you have this rush of investors coming in saying, you know, we really want to get into Anthropic before it lists, and it's driving up that valuation, again, showing confidence in the company after a few questions about whether it's running into a bit of a kind of compute shortage because it hasn't sort of spent money on capacity in the same way as some of its competitors, but clearly that's not bothering investors.
Right, there's a certain mythos surrounding Anthropic. Shona, thanks so much for joining us. Shona Ghosh there covers tech for us. Let's get to JP Morgan's Jack Caffrey. He weighs in on earnings this earnings season, writing, quote, "We see earnings further accelerating this year, and with the more material earnings gains happening away from the concentrated AI-related equities." I'm pleased to say he joins us here on set, dark and early this morning, equity portfolio manager at JP Morgan. Jack, so I want to get to the rest of the market, but just because of this slew of AI news that we have again today, how do you see that juggernaut of spending going forward?
Well, right now it seems that despite the capital spending announcements going up 50%, 70%, you know, hundreds of billions of dollars, we still have shortages. And I think that enthusiasm feeds to investors, which gives them that willingness to continue funding, trying to resolve some of these shortages on a compute basis, which creates what's been sort of a virtuous cycle, but admittedly a very concentrated virtuous cycle. And I think when we start talking about companies spending $600 billion, $700 billion, I think we have to keep in mind that one company's spending is another company's revenues. And I think that's the lever to how we get away from just a focus on the Magnificent Seven towards the broader market. And hopefully we will stop talking about the forgotten 493 and talk just about the S&P 500.
I mean, some of these companies have had a bumpy ride, right? Microsoft at one point had lost a quarter of its value year to date. It's now coming back. NVIDIA had been down year to date. It's now up about 5%. Amazon had been down year to date. Now it's back up about 7 or 8%. Are these companies, I mean, at worst, are they a safe haven in times of trouble? When you see a war in the Middle East and a doubling of oil prices, do you think, like, that's a good place at least to hide?
Well, I think for the last, call it 3 years, really, we've had this ongoing battle between the cyclical and the secular. And it really hasn't been much of a battle because the secular have largely massacred the cyclical up until, call it really the summer of last year, when I think investors began asking about that second derivative. You know, how possible was it you would start seeing 50% growth turning into 100% growth? And I think that led to, you know, to borrow from a technical term, a consolidation in terms of time more so than price. And then coming into this year, you began hearing some wrinkles of inflation coming back to life. And I think that makes those companies that are too reliant on their earnings 5, 10 years from now becoming a little bit less valuable, out of war, and then suddenly energy becomes the hottest thing to own. Apparently no one told energy traders yesterday because they were aggressively selling that as we lean into the most recent sort of set of policy pivots that are coming out.
What do you think, by the way, will be the result of the jump that we've seen in you know, the underlying commodities? Crude, obviously, it's, you know, not $120 anymore, but $95.
Well, there's been some interesting talk if 85 is the new 65. And I think I mentioned that because about a year ago, you would have seen most oil company investments being underwritten about a belief that long-term oil prices might have been $65 a barrel for WTI. The U.S. is in a relatively insulated position, given that we more or less are not only the largest oil producer, but actually a bit of a modest oil exporter. But we wound up being a refined products importer, particularly here in the Northeast. And you know, when we start thinking about where our gasoline might go over the summer, if it's not clear if Europe isn't getting as much oil as they'd like, if we'll be getting as much gasoline as we want.
I mean, we hear all the time that we're in an insulated position, but we still have to pay for this oil, whether we produce it here or not, right? And especially if other countries come and start buying it all up, bidding up the price, yet it doesn't seem to be denting earnings expectations.
I think in the shorter term, it hasn't really dented earnings expectations. You are seeing companies, recognizing rhetoric matters. You're not talking about price increases, you're talking about surcharges. But I can think of one company 2 weeks ago, we're going to put through a 7-10% surcharge as we better understand what's going on. I think investors are looking at surcharges, that's a price hike. I think customers are hoping that surcharges are effectively temporary and that we're going to find some way to navigate through this. But you certainly see, the Cleveland Fed survey of inflation expectations nearer term pushing something closer to 5%. You put that with real GDP growth that seems to be slowing, certainly over the past quarter, the last 90 days. The Atlanta Fed survey has gone from 5% to call it 1.5% in terms of what real GDP is now. Oddly enough, that winds up giving us similar nominal GDP than we might have been thinking about this year, and financial assets are nominal. So if I can get 7% sort of top line, people might think that's pretty good. It just might not be the composition of the top line we wanted. It might be more price than volume.
So what do you see then in terms of actual corporate earnings? I mean, there are really some astounding numbers, especially considering that we've been going like this for a while.
I think an investor underestimates the U.S. corporate sector's ability to drive profitability at their peril, and certainly at their likelihood of losing out. I think what's even more impressive is we look back over the past year, companies have had to deal with the uncertainty around what tariffs might do to their supply chain, what their capital spending decisions might look like under the one big beautiful bill, and as a result of that sort of uncertainty, your bias is to sit on your hands. I don't have the luxury of being able to sit on my hands. I'm supposed to be mindful and thoughtful in responding to that uncertainty. Now we have an excursion in the Middle East, which may be over tomorrow or it may drag on. We'll certainly hear more policy pivots, I think, more likely than not as negotiations extend. But I'll come back to, and I have the luxury of having 35 analysts supporting me across large and mid-cap sort of securities. And when we look through their annual earnings forecast, it winds up being a high teens growth rate versus about 11.5% last year. So companies are finding a way. And I think that's ultimately what we have to lean into as an equity investor. I start as an optimist, and I want to come back to companies will find a way to make money.
All right, really smart analysis, Jack. I appreciate you joining us this morning. Jack Caffrey there of JP Morgan Asset Management. Now let's get to the other top stories trending on the terminal this morning. The Washington Post is reporting that the Pentagon is sending thousands of additional troops to the Middle East in the coming days. They would include troops aboard the aircraft carrier USS George H.W. Bush and several warships escorting it. The Pentagon and U.S. Central Command declined to comment on the troop movement. U.S. Treasury Secretary Scott Bessent tells British media that the Iran war is worth a small bit of economic pain. The statement comes ahead of his meeting today with his UK counterpart, Rachel Reeves. Earlier this week, Reeves told The Mirror she is very frustrated and angry the U.S. went into war without a clear exit plan. New York Governor Kathy Hochul is backing a New York City tax on second homes worth at least $5 million. It aims to raise $500 million a year by levying a yearly surcharge on the multi-million-dollar pied-à-terres. The tax plan, I should say, is a compromise between Hochul and New York City Mayor Zoran Mamdani, who has pushed for higher taxes on the wealthy and large corporations. Coming up, we'll catch up with Stephen Bigger of Argus Research as we count down to earnings from Morgan Stanley and Bank of America. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
On the consumer side, spending's been very resilient, you know, through the last month. It's still up year on year every week. You know, people are certainly spending more on gas than they were, you know, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
All right, we're 4 down, 2 to go in big bank earnings. Morgan Stanley and Bank America set to report before the bell. Let's get to Stephen Bigger, Director of Financial Institutions Research at Argus Research. Stephen, let me first get your take on what we've seen so far. I mean, Goldman Sachs had awesome equity trading, but a huge miss on the FICC side, and it looks like it may have been an outlier.
Yes, good morning. Certainly did seem to be. Goldman uncharacteristically weak in FICC trading relative to expectations, but as you said, the equity side certainly did, you know, very well. We're looking at, you know, record quarters for a couple of these banks in terms of because of the volatility, the trading volatility that we've seen, particularly in March. You know, we had volumes up something close to 30% from prior year, so very strong quarter there.
What do you expect from Morgan Stanley and Bank America today? I mean, are they going to be publishing these massive trading numbers, the likes of which we've seen from J.P. Morgan and others?
Well, I think so. Yeah, Morgan Stanley tends to do, you know, quite well there. But I think what's grabbing a lot of the attention as well is the investment banking side. So we've had so far 20 to close to 50% increases in the investment banking side, and, you know, in particular, we're just seeing a surge of M&A activity. IPO activity, for what it's worth, has been picking up, not quite to, you know, the level that we expected, and certainly some pause here maybe with the Iran conflict. But yeah, capital markets have really shown their ability to shine in this environment.
Yeah, we saw a big jump in investment bank advisory revenue at a couple of these banks. Goldman Sachs, top of the league table. J.P. Morgan, number 2. Morgan Stanley, number 3. Bank America's way down the list, I think at number 9. Do you expect any moves in that table this year?
Well, not particularly. These banks all are extremely competitive and you know, tend to get the best deals. You know, you look at SpaceX, for example, coming out this summer, likely to be the biggest IPO ever.
There's 20 investment banks that are working on that as underwriters, so that will get spread around. The one that very much intends to try to grab some market share is Wells Fargo. Now that the asset cap has been lifted, they are pretty far down beyond just outside the top 5 banks, but they do plan, because of now their ability to engage corporates with financing and grow the balance sheet, they expect to grow some market share there. Who they take it from is not particularly clear, and this is not a 6-month or 1-year type endeavor. They're looking out the next 3 to 5 years and trying to get a little bit more share. But I think they're in a good position to do that, coming from kind of an underdog position right now.
Yeah, I see Wells Fargo at number 12, right after UBS. Stephen, when we talk Wells Fargo, I think automatically of the private credit story. Not that it's, going to be a systemic issue, but it's one where we're starting to see investors question bank exposure. What do you make of the private credit story, and will we hear about it today again from Bank of America and Morgan Stanley?
Well, we heard a lot about private credit, obviously, coming into the quarter, and we heard a lot about it yesterday in the conference calls as well. And this is one area where bank managements have just not seen the signs that there's a lot of risk or exposure here. They have scoured their portfolios, their balance sheets, looking for exposure, particularly in the software space, which has been the one most highlighted, and they just don't see it. In many cases, they've actually broken it out, added some additional disclosure in their presentations about that. We're looking at senior lending being better than 98%. Here in some cases. We're looking at the defaults just not coming through. So I think we have, this is a case where we had a weaker player in the industry that took some risks, that being Blue Owl, and resulting in some defaults there and some worries by investors and redemption rates higher than the 5% allowed. So that's put a kind of a bad name to the group. But I'm encouraged to see some rebound in the names like Apollo, KKR, Blackstone, which I do cover, in the recent week, and after banks have come out and said, look, they don't think this exposure is that much to worry about. The headlines, are just a little bit more than what they're seeing live on the ground with these portfolios.
Stephen, great to get some time with you. Thanks so much for joining us. Stephen Bigger there of Argus Research, talking to us about big bank earnings. Tune in to our exclusive interview, by the way, with the CEO of Morgan Stanley. Ted Pick joins Open Interest at 10:30 a.m. New York time. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York City. Let's get a look at what's ahead today. First up, as we've been telling you, Morgan Stanley and Bank America are reporting earnings before the bell. Then we're going to get some Fed speak from Barr, Hammack, and Bowman throughout the day. By the way, I should mention on the subject still of Morgan Stanley that the CEO, Ted Pick, joins Bloomberg Television exclusively at 10:45 Eastern time, so tune in for that. And then in terms of the stocks that we're watching, Avgo, Broadcom is moving higher in the pre-market, as you can see, deepening its ties on chips with Meta. GitLab gains in an expanded Google Cloud partnership, so GitLab is up almost 8% in the pre-market, and D-Wave Quantum rising more than 8%. Quantum stocks are set to extend their rally after NVIDIA unveiled a suite of new open source AI models. In terms of the macro picture, S&P futures are unchanged right now after hitting almost an all-time high yesterday, 1 point away. Crude back up a little bit, 92.38 a barrel, and Brent trading at 96.27. That's it for the brief. Surveillance is up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The earnings story still looks very much on track.
You have a situation where the fundamentals actually got stronger.
There is still a lot of uncertainty out there.
This uncertainty can pass. I still think there's a very good road ahead.
The bull market that started in October of 2022 has further to go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday within striking distance of all-time highs. Equity markets bouncing back almost 10% from last month's lows as the White House is teeing up peace talks in the next few days. Attention turning to wrapping up quarterly bank earnings on Wall Street. Morgan Stanley and Bank of America up next.
The themes so far have been trading and banking on fire. Look, whatever you can say about what's going on geopolitically, volatility has been a good thing for these banks, and you see record quarters coming out. Morgan Stanley should benefit from that. Bank of America might be the more interesting aspect of this. A read on the consumer. So far, the look has been resilient in the face of higher oil prices. Do we hear the same tone coming from the leadership of Bank of America?
The market reset has been absolutely remarkable. A 10% move off the lows for equities, a 20% move off the highs for crude. The Strait of Hormuz still largely closed. This market has moved on.
The Strait of Hormuz is closed. That blockade, according to CENTCOM, is fully in effect. But the president indicating to a number of reporters yesterday that he is prepared to wind this down. And this comes ahead of reports that potentially we can get as soon as this weekend another round of peace talks. I thought it was interesting, though. The vice president yesterday, J.D. Vance, said the president wants a grand deal, a grand bargain. How long is that going to take? And at the same time, the market is completely ignoring this Washington Post report that more troops are headed to the region.
In the meantime, how much damage has been done? Check out the earnings. LVMH, MS. If you have got exposure to the Middle East consumer right now, you're getting hammered. Elsewhere, look to the US. To the banks, Citi, Wells Fargo, JP Morgan. Pick your bank right now. Ask for commentary on the consumer. Consumer still earning. The consumer is still spending.
And frankly, a lot of them point to the fact that earnings and inflation have increased much more than gasoline prices. So when you get a gasoline price that's close to what we're seeing now, or above $4 a barrel, $4 a gallon, a lot of the consumers can withstand that. Yesterday, the Bank of America consumer survey came out with respect to spending on cards. The same kind of tone that we've been getting all along, this idea that there is resilience. So at what point does it become painful? You know, you hear caution in these executives' tones simply because they have to, because it seems irresponsible if they don't, but it doesn't seem like they actually feel like the economy is turning over.
For the short term, though, for the luxury brands Jonathan mentioned, there is some serious pain. These Middle East shoppers are not showing up to some of these stores, and that's what we heard from Hermes when it comes to stores in France or Switzerland or the United Kingdom. And this idea of having that scarcity that Hermes is known for, well, it doesn't work if your shoppers can't even travel to get to the destination.
That is not a problem for the S&P 500. And that's the issue for this equity market. Semis have ripped 20% so far this month. You want to talk about a valuation? $800 billion possible valuation of Anthropic. So this market's going to be wide open potentially for an IPO later on this year as well. All of that's lining up to benefit the likes of Morgan Stanley, the likes of Bank of America when they report later this morning.
Yeah, the idea that Anthropic is getting the offer of a valuation of $800 billion, and they might know $800 billion, and they might turn it down because they might not want to raise this round of funding. The idea that they could IPO in October, this capital market is wide open. And say whatever you will, there has been a leadership shift. You talk about this with the semiconductors and how they're up almost 30% in the past 10 trading days. There's also ASML coming out and actually raising expectations because still the investment in big tech is ongoing at an existential risk.
What did Jim Zelter say over at Apollo? Take a walk. In 6 months, we'll be talking about that. We won't be talking about all of this.
I'm walking a lot. I'm getting really sweaty.
You're touching grass. You're feeling good.
Just out there touching grass in the park if you see me. Just know, Jim Zelter sent me.
Equity futures on the S&P this morning, just about unchanged. Coming up this hour, we'll catch up with Noel Dixon of State Street with stocks on the brink of record highs. Susan Bell of Rystad Energy as optimism grows over an end to the war. And David George of Baird with big bank earnings in full swing. We begin this hour with stocks sitting near record highs as a relief rally takes hold. Noel Dixon of State Street writing, despite heightened uncertainty in the Middle East, investor positioning and flow data clearly suggest positive risk appetite is still alive and well. Noel, good morning. It's good to see you. Is there good reason to get behind this rally?
I think so. I think there's, to be honest, there is an awful amount of good news already priced in. However, I do think it can continue. I think the question is, after this situation has occurred, do we go back to the trade we had on before, or is it going to be something a little bit different? And I think, what our perspective is that we're going to be left with a situation with higher commodity prices. And then the question is, does everyone lose, or are we going to have winners and losers? And we're more of the latter train of thought. And we think that there's going to be more opportunity to be more selective. And we think that, the U.S., for example, it's hard to argue that they're not going to be more insulated from a terms of trade perspective. And there'll be some more weakness in other regions like the U.K. and Eurozone. So I think you have to be a little more selective.
Well, let's stay within the United States and get selective there. Pre-war, semis were doing well, software was not. Post-war, for the month of April, semis have ripped, software has struggled. Do you expect that to continue?
I do expect it to continue. I think the hardware, the semi story is undeniable. There's a lot of demand. I think software, we're trying to sort through what are going to be the disruptions from places like Anthropic and different companies. But, our perspective is that, we think, it's still going to be more of the same. And we don't see any reason to really change that perspective.
It seems like the leadership has very much been big tech, has very much been the semiconductors, as John mentioned. When you look at the sigh of relief being breathed by the entirety of markets, how much do you need to see corporate executives talk about actual efficiencies, actual gains coming from some of the deployment of AI to justify the ongoing rally?
Yeah, so I don't know if we need to see immediate justification. I think it's a clear race, I think, between the U.S. and China, both, I think, militarily and I think from a commercial perspective. And I think the perspective is that that's going to be ongoing. I think earnings right now, 12 months forward, is about 30%. So it's really hard to get negative, especially after we had the correction that we did. So I think, right now, we do eventually need to see some revenue, but the demand is so significant, especially in the hardware space, that I think it still instills confidence in investors to move forward.
When I think about the demand coming from AI, and then you think about the fact that commodity prices, as you just said, will probably be higher, why has everyone moved on so quickly from this inflationary story that could potentially pressure yields higher and could create a really difficult situation for central bankers?
Well, when I think about the inflationary pressures, I think you also have to think about the growth side. So I think when we think about valuations, for example, and the support from an interest rate perspective, I think investors are skeptical that central banks will be able to hike as much as being priced in. So we would push back on that. So I think the growth aspect is going to keep central banks largely in check in the background. And again, we'll have to deal with inflationary pressures, but that was to my point earlier. There's going to be winners and losers, and that's where I think you have to be selective.
Is there also winners and losers when you look globally? Because the energy shock is really still hitting Asia and as well as Europe, and we're not feeling it as much in the United States.
Yeah, so I think it's definitely going to hit Asian countries. I think about South Korea. I think about Japan. They import 90% of their energy. But again, that actually brings some opportunity. So the baby will get thrown out with the bathwater. I think the Asia tech trade, there'll be some opportunities there, down the road as we get these corrections. But no question, I think Asia's very exposed. And as I mentioned, I think Europe is very exposed.
What would it take the market to care once again about the conflict? The Washington Post this morning is talking about sending thousands of additional troops. We always say, look at what Trump does also, not just what he says.
Sure.
But the market seems to be ignoring any sort of escalation.
Sure. So I think you need to separate two things: the nuclear agreement and I think opening of the Strait of Hormuz. From a market perspective, they're focused exclusively, I think, on the Strait of Hormuz. Keep in mind, you know, for example, the JCPOA agreement with Obama, that took about 2 years to sort. So that's not going to get, I think, resolved anytime soon. It'll take some time. But the Strait of Hormuz, there is incentive, I think, for all sides to try to find some resolution. And I think that's what the markets are sniffing out and looking forward to.
And that's the carrot for the market right now. The president recorded an interview earlier this week with Fox News, getting some headlines from that conversation just moments ago. Maybe the end result will come soon, Bramo. And on the blockade, no pushback from the Saudis. There was some suggestion that there might have been some pushback from the Saudis. Not seeing that in these comments this morning.
No, and talking about how he sees the end as being very close and ongoing sort of edification of what you're seeing in markets with respect to this sort of seamless effort toward a ceasefire. Look, I mean, Emery is not wrong when she raises skepticism. And I mean, I respect the Debbie Downer. I respect the fact that you can cast some cold water on this because, frankly, this conflict is not over. And you talk to any geopolitical strategist, they say the world has fundamentally changed. But the market has said, ultimately, to the degree that it's changed, we've moved on. President Trump seems to be leaning onto that, given the fact that higher markets seem to support him.
The world also has fundamentally changed, and so has Iran. I think the president always says there is a new regime, not regime change, just change within the regime. Actually, these are hardliners as well, and they're going to come with the same hard lines to the negotiating table that their predecessors have. Also, what's interesting is Trump says that China had no pushback on the Hormuz blockade. I think that is incredibly interesting because China is the one that, of course, buys all the Iranian oil that the U.S. is now trying to stop.
Crude this morning, Brent crude at 95.80 at the front end of the futures curve, WTI at 92. The president saying that oil will be down to the levels it was and maybe lower. Now, I know the presidential jawbone can be effective, but that is quite an effort to jawbone this market a little bit lower.
The only way that could actually transpire would be if there was serious demand destruction on a mass level. And that would require some sort of decline in economic growth. But right now, based on the fact that you've had more than 10 million barrels a day taken offline and not coming online anytime soon, it seems unlikely unless you get some sort of serious slowdown.
No, you get that one. Oil will be down to the levels it was and maybe lower. Noel Dixon, your response to that?
Yeah.
Don't fancy it?
No, I don't fancy it.
Noel Dixon, the State Street there. No, thank you, buddy.
Thank you.
Appreciate it. Let's get you an update on News Worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. The U.S. and Iran are looking to arrange a second round of peace talks in the coming days. Sources telling us here at Bloomberg the objective is to hold more discussions before a ceasefire expires next week. One proposal is to return to Pakistan, though other venues are being considered. Israel and Lebanese officials meeting for the first time in more than 30 years for high-level talks in Washington. The Israeli ambassador calling it, quote, a victory for sanity, even as officials play down hopes for an end to the war with Hezbollah. And prosecutors making a surprise visit to the Fed's offices this week amid the DOJ's investigation into Fed Chair Jay Powell. Sources telling us here at Bloomberg officials tried to enter the construction sites but were denied entry because of clearance protocols. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, the White House teeing up peace talks.
I think it's close to over here. I mean, I view it as very close to over. We'll see what happens. I think they want to make it deal very badly.
Up next on the program, we'll catch up with Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The rally stalling out just a little bit, unchanged so far this morning on the S&P 500, unchanged on the Nasdaq. But what a move we've seen so far this month. Only one down day so far for the month of April on the S&P 500, a rally off the low of about 10% and within striking distance of all-time highs on the S&P 500. Now that's at the index level. If you look at the energy sector has basically wiped out all of the gains on the S&P 500 that we saw through the month of March. That's amazing.
Especially given the fact that oil prices haven't come down to where we were before March. So ultimately, people are looking at this and saying it's pretty much a wash for them, given the fact that they've got destruction to some of their facilities in the Middle East, and they're not necessarily going to be profiting so much more from high prices. The market is treating this as though it's a blip, and we can all move on.
Brent crude at 96 right now, WTI at 92. Under surveillance this morning, the White House teeing up peace talks.
I think it's close to over here. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
So here's the latest this morning. The president signaling he's ready to wind down the war in Iran, saying peace talks could restart in the next 2 days. Bloomberg's Tyler Kendall has the latest from Washington. Good morning, Tyler.
Hey, John, good morning. Well, our reporting maintains that both sides are seeking another round of in-person negotiations ahead of next Tuesday's ceasefire deadline. But that means that things have to get going quickly because President Trump indicated earlier this week that the timetable for a deal has not changed and suggested in an interview yesterday that he may not offer any sort of extension. There are signs that Iran is potentially trying to avoid some escalation here, at least in the short term, as well as Bloomberg News reported yesterday that the country is considering a temporary halt on shipments and maritime activity that could violate the U.S. blockade. Though at the same time, Iranian state media did report last night that an Iranian supertanker made its way through the Strait of Hormuz, though that has yet to be confirmed by the U.S. Instead, we got a statement overnight from CENTCOM saying that all commercial traffic to and from Iranian ports has been halted. As we're getting more details, a U.S. official telling us that the military is stationing its vessels in the Gulf of Oman instead of directly near the strait in a bid to give the U.S. more flexibility. This blockade isn't the only means of pressure that the U.S. is looking to deploy ahead of potential dialogue, including the Washington Post now reporting that additional troops are being sent to the region, and the U.S. Treasury threatening additional secondary sanctions on any financial institutions that aid the country. John, as you all know, this comes after yesterday the Treasury announced it was not renewing that 30-day waiver for purchases of Iranian crude already at sea. But I will point out that Bloomberg News is reporting new this morning that nearly 4 million of those barrels just arrived in India ahead of that waiver expiring. This after just yesterday, Indian Prime Minister Modi called President Trump about the war in Iran as we get these more headlines that the president has been speaking to world leaders about this, including breaking in the last few minutes. President Trump saying that China hasn't taken issue with the strait being closed so far.
Tyler Kendall with the latest in Washington. Tyler, thank you. Tyler's right. According to the president, China hasn't pushed back. The Saudis haven't pushed back. Moments ago, it's starting to sound like the Iranian military is pushing back.
Right, the Iranian military saying that the United States needs to get out of the blockade, and potentially what they have continuously said is there will be escalation because of this. They had said that if you block our ports, we are going to go after your partners' ports in the region as well.
To discuss, joining us now, Colonel Wayne Sanders, the Senior Defence Research Analyst at Bloomberg Intelligence. Colonel, welcome back to the programme, sir. How fragile is this ceasefire?
It's pretty fragile. I think if you look at the next 24 to 48 hours, Iran's responses are going to be key here. The first 24 hours in the blockade, I'm sure it's just Iran trying to be able to figure out where they can position forces necessary if they need to respond. And so I think a lot of the tell there is going to be on whether or not any of those strikes actually take place over the next 24 to 48 hours against some of the Gulf states, as well as U.S. military bases in that region as well.
Would Iran do this within the Gulf of Oman and the Strait of Hormuz, or would they actually try to get the Houthis involved in the Red Sea?
I think they could do either one. I think that if they get the Houthis involved, obviously it gives them a little more plausible deniability in the region. But when they keep things localized, if they're trying to keep it U.S. focused, they're trying to keep it against what we're doing on the blockade, then they're going to want to have some type of show of force against either U.S. or anybody that they're trying to escort through.
What do you make of the fact that the Pentagon, according to the Washington Post this morning, is sending 1,000 more troops to the region?
So, I mean, I think that one is obviously it's a leverage that that the president can use, but also on the military side, it could be to shore up additional boarding and interdiction teams, which could be part of the blockade. Seizure and inspection of vessels actually takes quite a few people to do that. The 11th and 13th Marine Expeditionary Units are very good at that, but if these are reinforcing of that, it might also be hardening bases in the region. So I think the real tell there is going to be what type of logistics follows along. If it is a lot of Army logistics, you might be looking at more of hardening of the U.S. bases in the region. It might also just be something along the lines of military Sea Lift Command, which are the ones who actually provide kind of a conveyor belt of resources and fuel and all that to the ships in the region. That could also be a play in this as well.
Colonel, I've seen a lot of commentary from different officials talking about who holds the cards. It seems like everyone's talking about that. Is it the U.S. holding the cards? Is it Iran holding more cards? What's your sense of the points of leverage right now heading into further negotiations at a time where we still pretty much seem to be at a stalemate?
Yeah, so the military normally looks at it. There are four levers of national power. You have diplomatic, information, military, and economic. So on the diplomatic side, both sides are trying to apply that same level of pressure to be able to do it. On the information campaign, I would say Iran normally does pretty well on that because of the asymmetric threat. They don't have to strike a whole lot. They just have to have something on fire to be able to create some chaos in the market and create chaos around the world. Militarily, the U.S. is dominated in that region, but the IRGC does have capability. And then economic, you've seen a lot of these pieces play out over the last month as well.
How much do you really see China playing a part in this? We know that President Trump was saying that China did not push back regarding the blockade. There are questions, and there have been reports about China supplying weaponry to Iran, potentially even a new air missile defense system. What's your sense of what the reality is and what's fiction?
Yeah, I find that very, very hard to believe, especially if you're talking about exquisite air defense systems, because these things aren't small, and the U.S. has eyes in and out of Iran pretty much across the board. So you're not going to see some large, aircraft coming in that's dropping off these types of supplies that's not going to require a U.S. response. So I think that's probably one of the biggest ones. I've seen other reports that are dealing with a lot more of the smaller shoulder-fired weapons, while I still think that's very risky for China to do, because if it is attributed back to them and there is a lot of proof there, that obviously puts them in a worse position on the national stage. But if they are trying to smuggle those in, those smaller type weapons, those shoulder fire Stinger type missiles and things of that nature, those types of weapons are small enough to be able to get through onesies and twosies, but you're not going to be able to put it together at the level of the air defense systems that some of the reporting is putting out there.
It's not just weaponry, though. The Financial Times this morning saying Iran used Chinese spy satellite imagery in these companies to target U.S. bases. At the same time, the president seems to be striking a more friendly tone with what Beijing is saying to Washington. How concerned are you about how much China is really helping Iran in targeting U.S. service members?
So, when it comes to China, I know we had that talk earlier about Russian intelligence, supporting Iran as well. I think part of it we all need to remember, too, is that a lot of that is dual-use technology that could be tied to China's civilian side, as opposed to dealing with the Chinese People Liberation Army or the Ministry of State Security or anything like that from that perspective. So I think that it is definitely being leveraged. I think that Iran is going to use anything and everything they possibly can. And because of how good technology with satellites has become, even on the commercial or on the military side, it has allowed an advantage, a technological advantage for pretty much everyone to catch up somewhat to the technological advantage of the United States when it comes to satellite imagery.
Colonel, you're in a different seat to the seat that a lot of people on Wall Street are sitting in. They're focused on markets and the comments coming from the president. It's an anticipatory asset class. Basically, they're seeing the president looking for an off-ramp. This market's moved on. What guides you, away from presidential statements, what guides you and your thoughts about how things are progressing?
I would probably say when I look at the military strikes against some of the Gulf state neighbors, that is something that has started to wind down, obviously, during the ceasefire. It went from 149 strikes the day before the ceasefire down to 7. You saw a handful of upticks a little bit during each of the times, but not to the same level that it had been for the first 4 months. So I think, or excuse me, 4 weeks. But what I continue to look at right now is some of the logistics tail, where we're actually going, the transition of the U.S. military into the types of weapons that they're using, and then at that point in time, also the response for some of the other folks in the region, the Gulf states that are playing a part in this and starting to put additional pressure. I think all of those are good telltale signs that things are moving in the right direction. But Iran having an asymmetric threat is always that card that they can play at that last second.
And that threat certainly still lingers. 4 weeks felt like 4 months, without a doubt. Colonel, thank you. Colonel Wayne Sanders there of Bloomberg Intelligence. And what guides him and how he's thinking about this war?
Yeah, and right now it seems like it's less bad news also on the geopolitical front. Things are not escalating or getting worse. And that's the reason why Wall Street is moving on. There are frictions, though, that are going to be long-lasting. And this really is the ultimate question. The Strait of Hormuz may never be open again the way that it used to be. What does that look like? And the fact that people have kind of moved on is notable given the potential inflationary pressures.
People have moved on, but we should note the shock in Asia is really getting very, very dire. Right now you have Pakistan that is dealing with controlled blackouts in the evening because they want to make sure they're controlling the price of electricity. For the first time ever this morning, India received Iranian crude barrels. Well, guess up. That waiver's ending, and this blockade means no more oil's coming
We've seen
through.
that rationing across Asia. It's been brutal for them, I know. Coming up on the programme, we'll catch up with Susan Bell of Rystad Energy with crude trading back below 100. Plus, Yahira joins us. She's got your morning movers. Broadcom rising on a new chip partnership with Meta. That stock is up by 2.5%. Live from New York City, you're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1.
is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We are wrapping up quarterly bank earnings on Wall Street this morning. At about 15 minutes from now, we should hear from Bank of America, Brian Moynihan and the team. In the next hour, we should also hear from Morgan Stanley, Ted Pick and the team at 7:30 Eastern Time. Bramo catching up with Ted Pick later on this morning, so look out for that in the 10 o'clock hour, I believe, Lisa.
Yeah.
A little bit later this morning.
And really, the key questions that everyone has is how big is that pipeline? How much can capital markets remain open? The other interesting note is how much all of the executives have completely dismissed private credit concerns. They're all coming out and saying, ultimately, this is not systemic. We have it under control. I expect the same there. And then just going forward, how much are consumers really feeling the heat, given the fact that ultimately they had a lot of spending power going in and Americans like to spend?
Ted Pick catching up with Lisa later this morning. Don't miss that, 10:45 Eastern Time. Your equity market at the moment pulling back just a touch on the S&P 500, negative by a little more than 1/10% on the Nasdaq, down by 0.2. What a run on the Nasdaq. 10 consecutive days of gains, the longest run since November 2021. That little bit of weakness this morning, some headlines moments ago from Iran pushing back on the blockade and really exposing just how fragile this ceasefire might be.
The Iranian military spokesman, according to Iranian state TV, is basically saying that this constitutes a breakage of the ceasefire terms. They also say if it continues, Iranian's armed forces, the IRGC, will not permit any exports or imports to continue through the Persian Gulf, the Sea of Oman, or the Red Sea. Basically saying we are going to go after all of these other parts of our proxy regime that have been dormant for the past 6 weeks.
That's boosting crude this morning, up by 1.8% on Brent, on WTI. Both of those contracts, the front end of the futures curve, closing below 100 for 5 consecutive days now. That's bringing this market just a little bit of comfort, but a boost from the headlines we've seen in the past 15 minutes. They're the scores. Let's get you some single names, some morning movers. Yahira has more. Morning, Yahira.
Hi, John. We start with Broadcom. Those shares are rising 2.6% as the company expands its partnership with Meta, building custom AI chips. It's part of a multi-billion-dollar effort to build out more than a gigawatt of computing power. And it speaks to something larger that we've been hearing from guests, that the AI build-out is alive and well. Deals still getting done. We keep hearing about them, even as this market grapples with the Middle East. We are also seeing shares of Nike moving higher in the pre-market, up 2.3% on a show of confidence from the top. Board director Tim Cook and CEO Elliott Hill buying the stock, putting about $1 million to work. It's a show of support as Nike goes through this rough stretch, but we've seen this type of buying before, and the stock is still down some 30% year to date. And we end on shares of Robinhood rising 4.25% after a big shift from the SEC, the agency approving changes that remove key limits on day trading, including that $25,000 minimum balance. So it's now easier for retail traders, retail investors to trade more actively, and that is a boon for the likes of Robinhood, since retail makes up such a large portion of its users. John?
Yahira, thank you. Thanks for the update. More from Yahira in about 15 minutes' time. On our radar this morning, President Donald Trump suggesting talks with Iran could resume this week. A ceasefire between the two nations expires next Wednesday. The president did not say if Vice President J.D. Vance would continue to lead negotiations. Elsewhere, the Treasury Secretary, Scott Bessent, saying the global tariff struck down by the Supreme Court could be reinstated.
We will be implementing or conducting
Section 301 studies, so that the tariffs could be back in place at the previous level by beginning of July.
The president imposing a temporary 10% tariff following the High Court's decision, the levy set to expire July 24th. And finally, Anthropic, drawing investor offers that could value the company at more than $800 billion. It's not clear if the AI startup will accept investor terms. Anthropic previously discussing a listing as early as October.
Yeah, in the last round of funding, Anthropic was valued at $350 billion. That gives you a sense of more than the doubling that this $800 billion valuation comes into play. And it comes after the Mythos experience that we all had, which I just want to add, it's really notable that after Anthropic came out and said, we're going to release something only to a couple people because it's so dangerous should it fall into the wrong hands, guess who's doing the same thing? OpenAI. They're about to roll out something only to a few people because they too have something. Guess what? We too have something that could be dangerous, so watch out.
Right, so they come out with this thing that everyone wants their hands on, and now it's like, oh wow, their valuation is so much higher. I find the U.S. government relationship with Anthropic right now fascinating. On one hand, they're fighting intensely with the DOD, and we had the Undersecretary Emil Michael on after he basically said that Dario Amandi had a God complex. Then the Treasury Secretary last night hailed what Anthropic was doing and calling it a revolutionary step that'll keep America ahead of China.
This industry has such a huge branding problem right now that they need to address. And it's exacerbated by the leaders in the positions that they are at the companies that you talked about. And I'm not sure what they're going to do about it between now and the IPO. I'm sure the kind of comments they make at the moment help increase the valuations of their firms going into those IPOs that people expect later this year. But it certainly doesn't help consumer attitudes, and I would say attitudes of the electorate at large towards these companies. And that could expose them further down the line when the people that represent those electorates will be setting the regulation around those companies and the taxes they'll have to pay as well.
Yeah, and not to tie too many things together, but this is also related to the recent disruption that we're seeing in energy markets because energy bills are already going up. And then if you think about how much electricity costs are going to go up for any regions that are tied to some of these big hyperscalers, that's going to become increasingly a political issue.
Let's turn back to the energy story. Crude rising after Iran warned the U.S. against continuing its naval blockade, saying it would violate the terms of the ceasefire. Susan Bell of Rystad Energy writing Hormuz will reopen. But the question is how much pain the market absorbs in the meantime. Susan joins us now for more. Susan, good morning and welcome to the studio.
Thank you so much.
Let's get into how much pain we're experiencing right now. Just describe what's happening in physical markets.
Well, the physical markets are extremely stressed, and I think, a lot of focus is on the ICE Brent price, but the ICE Brent price is a cash-settled market, right? It's not a physically settled market, and really, if you want to see what the pain is, look at dated Brent. And dated Brent premiums to ICE Brent are in the order of 25. Yesterday, the market closed out with dated Brent at, I think, $30 higher than ICE Brent. So the true physical markets are extremely stressed.
Do you expect that to turn around anytime soon? Because this market, and when I say this market, this equity market has moved on really, really quickly.
Right. No, I don't. I mean, we really do need to see flows established out of the Strait of Hormuz before the physical markets can start to rebalance. I think the reason why the financial markets, the crude oil financial markets have been relatively stable over the past couple of days is that we have yet to see Iran retaliate. Now, the U.S., the Pentagon yesterday said that they successfully blocked four vessels, or at least 4 vessels turned around on their command. But then there's conflicting news coming out of some of the ship tracking agencies that are saying, well, actually, there was one vessel that was loaded at an Iranian port that was able to get through the blockade. So, there's a lot of really conflicting information out there, and so far Iran has not retaliated. But the news this morning that they do intend to retaliate if their trade does get blocked, that would amp markets up all over again.
Let's say there isn't a massive escalation, that things kind of stay where they are for a number of weeks and then slowly get a little bit better. Yeah. Does it make sense to you that December dated contracts for Brent are at $82.49?
It does. If there is not a massive escalation and if the Strait of Hormuz takes its time to reopen, it does make sense that dated Brent or that the Brent contract is so elevated in December, because what's happening right now is we're digging a hole in inventories. And when the supply recovers, a lot of that volume has to go back into restocking, right? So it's not that we're going to see the markets collapse the minute we start to see flows coming out of the Strait of Hormuz.
I thought you were going to say that it should be a lot higher. So that was where I was kind of heading. So that's sort of one of the questions that people have. We're focused very much on the oil and the energy space. Is that the real disruption that you think is going to be truly problematic for the global economy? Or do you think that some of the other disruptions, whether it's agriculture, whether it's the metals sector, could be potentially worse?
I think that, energy is it's almost a human right. And that is going to be the most painful impact of all of this. But I do believe that there is, if we don't start to see something happening in the ag space, the fact that fertilizers are so expensive and effectively unavailable for some nations because it's unaffordable, this could move into food scarcity. Which is very concerning.
Well, what about things like LPG, which India needs to cook every single meal?
Absolutely, and LPG is a significant issue, particularly for India. They had resolved their immediate concerns by negotiating transit for vessels through the Strait of Hormuz, and of course, the Trump administration is saying they are not going to block navigation for trade that is not tied to Iran. So India should still be able to get their LPG, but of course, if Iran retaliates, that upends everything. And if Iran retaliates and the Houthi get involved and start to impact that flow out of the Red Sea, that puts even more pressure on Asia because so much of their crude oil is coming from that direction now.
This morning, India actually got 4 million barrels from Iran from that general license that the Treasury had 3 weeks ago that they were unsanctioning Iranian oil at sea.
Yes.
How long does it take for a ship to go from the Strait of Hormuz to a port? Basically meaning if its blockade really started in earnest yesterday, when do you think we could see even more physical disruption?
So I think the average days of transit from the Strait of Hormuz into Asia is 15 to 20 days. It depends. I mean, if they're going all the way to China, it's longer. India, it would be shorter. Asia has already seen the fact that they're not getting any oil right now. There was oil on water through the first 25 days of March, but now there's no oil on water.
Susan, it's good to see you. Thanks for dropping by. It sounds like a doom and gloom conversation relative to the enthusiasm elsewhere in the stock market, but this is real. That's what's happening in physical markets right now.
Well, that's the reason why, as much as you feel doomy and gloomy, I think a lot of people are on the same page. It's just that markets are saying, what is the pain threshold in which the global economy can move on? And people are taking the most rosy scenario at face value.
Susan Bell there of Rystad Energy. Susan, thank you once again. This headline from AP just crossing that mediators are moving closer to extending the US-Iran ceasefire. That headline crossing just moments ago, that mediators are moving closer to extending the US-Iran ceasefire. Some conversation about that in the last week. We'll keep an eye on that. Crude still elevated, close to 97 on Brent. Earnings from Bank of America just around the corner. Before we get there, let's get you some top stories, some headlines with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump signaling he's ready to wind down the war with Iran. Trump telling U.S. news outlets that peace talks could resume in the next 2 days. The president saying Iran now has a different, less radical regime. A confirmation hearing has been set for President Donald Trump's nominee for Fed Chair. Kevin Warsh will face the Senate Banking Committee at 10 a.m. next Tuesday. Senator Tim Scott expects the DOJ to drop its investigation into the Fed's renovation project, clearing the way for Warsh to be confirmed. And Snap is laying off roughly 1,000 full-time employees, or 16% of its global workforce. In a memo to employees early this morning, the CEO said the cuts are necessary for Snap to boost efficiency and profitability. He also cited improvements in AI technology that let Snap employees move more quickly. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, mixed results from the big banks.
There is still a lot of uncertainty out there, but should the hostilities in the Middle East start to die down and we get this resolved sometime in the second quarter, that points to a very healthy second half of the year for the banks.
In just a moment, we'll break down the results from Bank of America with David George of Baird. Plus, we'll get you the latest on a US-Iran ceasefire. AP reporting that they agree in principle on extending that truce. More on that headline and the latest results from Bank of America in just a moment.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We've got two things to do here, the latest on Iran and the US, and then we'll break down the results from Bank of America as well. Let's start with the latest on the US and Iran. This from AP moments ago. They've given, in principle, an agreement to extend the truce. The latest from the US and Iran, according to AP just moments ago. So, in the equity market, there were some very small losses. We've erased them. We're just about unchanged on the S&P 500. In the commodity market, there was a boost to Brent and to WTI. We've erased some of those gains. Brent crude down to about 96. WTI at 92. The truce set to expire in the next week or so. And this looks like the US and Iran is getting closer, in principle at least, to agreeing to extend it.
It's supposed to end on April 22nd, so we'll see how long that they're willing to, in this idea, in principle, extend that truce. It also comes at the time where the Pakistani Prime Minister has announced he will be making a visit this weekend to some Gulf countries like Saudi Arabia, Qatar, as well as Turkey. So for him to then go back to Islamabad, have consultations with these other mediators that have been trying to bring an end to the hostilities, this actually tracks and makes sense. It's interesting, though, this comes after the Iranian military said if you are going to continue this blockade, we view that as essentially ending of the ceasefire, and we're going to go after some ports.
The market, I think it's fair to say, focusing on one of those headlines and not the other,
yes,
given the 10% move we've seen off the lows in the equity market. I mentioned the second piece of news we need to cover, results from Bank of America crossing just moments ago. That stock is up by 2% in the pre-market. With the latest, here's Danny for more. Hey, Danny.
Hey, John. It has a similar flavor, I must say, to Goldman Sachs. That is a big beat on equities and a really large number for equity trading, but a slight miss on FICC trading. So the numbers themselves, equities comes in at $2.83 billion. The expectation was just over $2.5 billion. That is a record quarter from Bank of America when it comes to equity trading, which means their overall trading numbers, a slight miss because of a miss on FICC, $6.3 billion. That still is a record quarter for trading. FICC comes in at $3.5 billion. The estimate was for $3.8 billion. So that is where we are seeing a miss in their trading numbers. But again, it reflects a really strong first quarter for all of Wall Street, given the volatility and the results on the trading desk. When it comes to their net interest income, that is a beat to $15.75 billion. The estimate was for $15.37 billion. It's something the company had been very optimistic about. Their co-president not that long ago was guiding towards at least 7% growth in net interest income. So we expected that to be a strong number. I would just flag what they're saying about credit. We've seen the banks, many of them for the first time, break out their private credit exposure. Bank of America, no exception in this regard, breaking out that they have $20 billion worth of exposure to private credit. That would actually put them in the smallest camp of all of the banks we've heard from so far. Just a reminder, Citi, $22 billion, Wells, $36 billion, JP Morgan, $50 billion. So Bank of America showing that they have less exposure to private credit than their banking peers. Finally, just some of the commentary we're getting from Brian Moynihan saying we remain watchful of evolving risks. However, we saw healthy client activity, including solid consumer spending and stable asset quality, indicating a resilient American economy. So something we've heard from other executives. Everything looks good for us, but there are evolving risks.
Danny, thank you. Thank you for the update. Hermes and LVMH have been beaten up in the last 24 hours, but if they've got a store near a Wall Street bank and this keeps up, I think they're going to be okay. The latest headline from Bank of America, record equity sales and trading revenue. Over at Goldman, we had a Wall Street record for equity trading revenue. Over at JP Morgan, traders posted their best ever quarterly revenue. At Citi, the highest quarterly trading haul since the financial crisis. So these guys have been busy over the past 3 months.
Yeah, the volatility has been a good thing when it comes to their returns. You did see, as Danny was saying, Bank of America missed slightly on the fixed income currencies and commodities trading. Nonetheless, still coming in with $3.5 billion of revenue versus the expected $3.78 billion. The takeaway also, very much the consumer is solid and the U.S. economy is chugging along. At what point does the volatility that's fueling trading and sales potentially stymie the pipeline that has been fueling also record banking fees? And that is maybe a tension and maybe not as people look to a brighter future for at least banks.
Let's get to David George of Baird. David, welcome to the program. You've seen the results from some of the big players. Can this keep up? And why aren't you as bullish as some on the street are on some of these names?
Good morning, John. Thanks for having me. Yeah, these numbers look pretty good. We're kind of just processing them as you are in real time here. But as you say, they look pretty good across the board. Capital markets was very strong. We had a lot of volatility in oil, gold, silver, and rates throughout the quarter. And obviously, B of A benefited from that, as did some of the other money centers. In terms of the stocks, there was a window to buy a couple of these maybe at the beginning of the war, and we upgraded a handful of the regional banks during that period of time. But we still think that the risk-reward trade-off is better in some of these regional banks, like a Huntington, Fifth Third, PNC, and Citizens, for example.
And we just did see PNC, for example, report earnings and raise their full year net interest income estimate. I'm just wondering, have we put to bed some of the concerns about private credit? Danny was talking about how all the banks are breaking out their exposure. Bank of America came out with a relatively low exposure. Their net charge-offs are lower than expected. Is there sort of a waning in interest and concern about this area?
Yeah, you know, it's really going to be headline dependent, but we've been of the view that market participants are maybe overly concerned Lisa, as it relates to private credit. And again, I think it's important, and we heard this throughout the quarter, that the big guys and even some of the regionals were going to kind of size this private credit exposure to make market participants maybe a little more comfortable around the exposures and actually the actual size. And as these companies report, these are 1 to 2% of total loans. And again, Wells is almost a $2 trillion balance sheet. Same with B of A, and these are $20 to $30 billion loans. And again, the structures of these are also very low risk. So from our perspective, those fears are overblown. The bigger fear around credit is a function of how long does oil stay here? If oil is elevated for an extended period of time, it's a concern around the consumer potentially, as well as just how it makes its way into inflation and the impact on corporate profit margins.
David, just based on the big banks, not necessarily the regionals, and we still have Morgan Stanley yet to report, who's been the winner so far in your eyes?
Honestly, I'd say JPM and B of A probably had the best quarters. Obviously, as you mentioned, Wells had a tougher quarter. They reaffirmed the outlook for the full year, but they missed our pre-provision, which is basically kind of your pre-credit earnings number, by 4 to 5%. And I think it's also important to note that the stocks came in relatively hot. We have erased all of the war fear and losses going into earnings. So we've seen almost a 10 to 15% move in these stocks. So they came in a little hot, but we think that JP so far has had the best quarter. Excellent capital, excellent core trends, and a great outlook as well.
David, always great to hear from you, and thanks for making time
John.
for us. I know how busy you are on a morning like this morning. David George there of Baird, breaking down the latest results. This is what we're seeing at Bank of America. I'm very interested in how the consumer's doing right now. We've heard from a range of banks that everything's okay. Just to break out the details from B of A, consumer banking up 21%, payments up 5%, consumer credit debit spend up 7%, deposits are up, loans have grown. When you look across the bank right now, that speaks to an economy that's still doing well, better than okay. And I'd say we've heard that on repeat from several banks across Wall Street over the last week.
And even when they've gotten pushback from analysts saying, what about higher gasoline prices that offset the one big beautiful bill and any kind of tax refund that people get? What they've all said, led by Jamie Dimon, is they can absorb this and then some. And what you just saw in the Citigroup consumer spending pulse, again, just really strong across the board, with an expectation that even retail will start to do better.
Yeah, Brian Moynihan saying he sees a resilient American economy. They all continue to say that. What's going on in gasoline prices, potentially trickle-down effects of diesel when it comes to other products like your food, is not hitting the consumer right now, or the consumer at least is able to make these decisions and weather the storm.
Stock is positive in the pre-market by some 0.6%. One more bank to go, Morgan Stanley, in the next hour. So far, so good, though, for Wall Street. Bank earnings are fine, based on what we've heard so far. On top of that, we're looking at extending a truce between the US and Iran, based on the headlines from AP just moments ago.
The more you can take the temperature down and put that in the rearview mirror, the more people will focus on how good earnings are, and so far so good, as you said, with respect to both the outlook as well as the read on the American consumer.
Up next on the program, we'll catch up with Beata Mathey of Citi, Ed Mills of Raymond James, Gerald Cassidy of RBC, and George Wonderlin of Schroders Capital from New York City this morning. Good morning. The second hour of Bloomberg Surveillance. Up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm
Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
There is scope for inflation to go higher.
Base case is that you'll stay around 3%.
We in the markets accept that a 2% inflation target is a myth.
There are cracks in this economy. There's some other kinds of tailwinds that are holding things up.
Longer term, things have been quite stable.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. The scores, the price action looks like this. Equity futures just about unchanged on the S&P 500, within 1% of all-time highs on the S&P 500, following a 10% rally off the lows on the S&P. 10 days of gains on the Nasdaq, a 10-day winning run, the longest since 2021. In the crude market, with 10% moves on equities off the lows, we've had 20% moves off the highs on crude. Brent this morning at 96, WTI at 92. A conversation, a report from AP that the US and Iran is close to extending this truce.
Yeah, which would be balm to the ears of so many people on Wall Street who already have declared mission accomplished. Ultimately, it would indicate that kicking the can down the road means no further escalation, at least not in the near term. And that's part of the reason why people have moved on and looked to earnings, which have been pretty good. Actually, they've been better than pretty good. And looking to the tech investments that, once again, seems to be the ballast to this economy.
This report signals that they want this, kicking the can down the road, keep the détente. Right now, living in almost purgatory, no fighting, but no true peace. If you look more into the AP report, though, there is one official speaking to the AP that says before the ceasefire ends on April 22nd, 3 main sticking points they want to get through. What are those 3 main sticking points? Oh, Iran's nuclear deal, the Strait of Hormuz, and wartime damages. None of that is going to happen before April 22nd.
Stop spoiling the stock party. That's how people feel this morning, just as you speak.
I'm getting a lot of panic and messages from people like Neil Dutta.
Look, in fairness to you, that is what's happening in the physical oil market. The Strait of Hormuz is still largely closed. Physical prices, there are shortages across Asia. We're seeing them build. The Europeans are worried because they've had their last deliveries of some oil products and they know that nothing is coming yet. And there is this hope that in the future it will. And this market continues to take comfort from the shape of the futures curve. and how depressed prices are looking further out.
I just find it challenging when Pakistan literally overnight is they're suspending electricity supply for about 2 hours every single day. In Asia, you have individuals who are not going out to work. The government is saying you need to stay home. What you described, what's happening in Europe, they know that they're on the edge of their last products being delivered, especially things like jet fuel. And they're having meetings because they need to do something because consumers are very angry. We're a little bit more insulated here, and I think the market also takes comfort that the President of the United States at least is signaling this is the direction of travel he wants. He wants an off-ramp.
Right now, we're looking at earnings as well. Bank of America in the pre-market higher by 0.9% in early trading. Every bank we've looked at, Goldman, record trading call. Trading records over at JP Morgan at Citi, more of the same from Bank of America. That name up 1%.
You can tie these stories together. Why is the market so sanguine at a time of some potential real pain in the physical commodities market? Because this market is awash with liquidity. Capital markets are wide open. People are getting deals done. And Bank of America, Citi, Goldman, JP Morgan, all minting money. And that is really the story. And frankly, that is the underpinning story of the strength in a U.S. economic story that's tied to artificial intelligence and consumers that still have jobs and still have money.
Morgan Stanley reporting later this hour. We should get those results around 7:30 Eastern time, so look out for that. Coming up this hour, we'll also catch up with Beata Manthe of Citi, with stocks within 1% of record highs. We'll speak to Ed Mills of Raymond James as the U.S. pushes for a grand bargain with Iran, and Gerald Cassidy of RBC as Morgan Stanley closes out big bank earnings on Wall Street. We begin this hour with stocks nearing all-time highs. Beata Manthe of Citi with a year-end S&P 500 target of 7,700, upgrading U.S. equities to overweight on a, quote, quality defensive tilt. Beata joins us now for more. Beata, good to see you. Welcome to New York. Welcome to the studios.
Thank
Fantastic
you
to have you with us.
Great to be here.
Let's get into this call. Overweight U.S. equities. What's underpinning that?
So we've been advocates of the diversification away from the US for over a year. And of course, that was based on the broadening of the EPS coming from broad set of sectors, more cyclically driven. And that's this assumption and what we've been seeing in the data was telling us this would continue into this year. And of course, the war has happened. And with markets almost at all-time highs, and it's not only S&P, it's more cyclical markets like Europe as well, you have to step back and ask yourself, has anything changed? Even if the war finishes today, which of course it won't, has there been other damage done to the economy, or is going to just trickle through damage to consumer? And your assumption right now should be for estimates for cyclical earnings are most likely too high. So we expect some downgrades there. And in the world where downgrades are coming through or will come through, you look to the parts of the market that are upgrading. And that's the US. But again, the US is upgrading through a very different set of sectors. And it's tech again. It's mega cap tech. So AI that was on the shaky ground at the start of the year is back because it's derated and earnings are getting upgraded. That's why.
I give you credit where it's due because you were quite early on the international call at the time, so credit to you and the team for doing that. US leadership appears to be reasserting itself because of the tech story, but we're seeing that in other places too. South Korea, the Kospi is absolutely flying again. Do you have less enthusiasm for the international tech trade? How are you thinking about that dimension?
So you could argue that the international tech trade is more cyclical. I get that, but they are all interconnected. And Korean market, it's something insane. I've never seen anything like that. Every single week, the upgrades to the earnings for Korea are amounting to like 20% extra in the EPS. The earnings expectations have tripled. They are up 300% over the past few months. So for me, again, coming back to the yes point, in the market where the outlook is uncertain for many parts now, you just follow the earnings, right?
What's fascinating is people are saying it's back to the U.S., and the U.S. seems to be the winner. You're not seeing a commensurate move in the dollar. And actually, now a lot of strategists are coming out and saying they expect a reassertion of the weakening in the dollar that we saw earlier this year. How does that play into a U.S. call when catering to European investors?
So our view is that in this current market environment, you have to be very nimble. So what is winning right now, in a few months' time, could be reversing as well. Because the drivers for the diversification trade are there underneath, right? But they are just overshadowed by other worries right now. And US dollar weakness, of course, that would be very helpful. US usually doesn't outperform in the dollar weakness environment. So that's something to watch out for, but that's really very dependent on the resolution of the war and the speed of that resolution.
I've heard a lot of people say this, stay nimble. What does that mean in terms of the liquidity profile of your portfolio, how much you have to stay in the names that are easiest to trade, the assets that are easiest to trade, given the fact that everyone is expecting potential shifts that could potentially require some pretty significant trade activity?
That's a very important question. And of course, at the start of the year or late last year, everybody was getting excited about mid-caps outperforming, growth prospects getting better. But for us right now, this type of environment, you just stay in large caps, you stay in liquidity.
You say follow the earnings. Commodity strategists I talk to will say follow the barrels, the physical barrels.
Yeah.
What is the tension like right now between, say, your team versus the commodities team?
So our views are pretty much aligned, I have to say. So at the very start of the conflict, what we've done, we've upgraded one of the biggest geopolitical hedges, the UK, to overweight. We've downgraded one region that was very bullish, and we've had it as an overweight to underweight Japan. So the difference this time around versus 2022 is back then it was only about Europe, the energy crisis. Right now it is much broader, and Europe, what there could be physical shortages, but Asia is much more exposed to that.
Do you think the president has also basically primed the market for this because of all the job bunning he's done and past episodes like Liberation Day?
Well, it's hard to say, right? What I can say is what I see in the data, and the fact that the situation is still very uncertain, and we do not have the edge on the outcome or the speed of the resolution to the conflict.
How different are the conversations with clients that you're having in Europe compared to the conversations you've had so far in New York?
So we get no pushback on the overweight of the US.
I'm not surprised.
Of course. Everybody is still quite bullish, the emerging markets tech-related part. And of course, about Europe, investors are worried about longer-term effects of this energy crisis. They should be more limited than last time around in 2022, but there will be some, right? And of course, right now, investors are more upbeat, but our view is that lots of the majority of the market moves over the last week, the squeeze higher, has been because of the short covering. So the market was very, very well hedged, but underneath the surface, most investors outside the hedging have been keeping the same winners as they've had selected for the start of the year. And that could be a problem once the positioning washes itself out.
Beata, it's good to see you. Thanks for the update. Thanks for being here. We should do it again soon. Thank you. Beata Matthew there at Citi. You're trying to start fights with the commodity team over at Citi. Max is joining us later.
Well, I'm just curious because the note leads in with, well, the commodity team says this, so, you know.
Max Layton of Citi joining us from the commodity team in about an hour from now.
Yeah, what I thought Beata said that was actually really interesting is that there is no disagreement, that you can have two things at once. You can walk and chew gum at the same time. I got that expression right. But this idea that going forward,
two for two.
I'm just absolutely crushing. I'm not going to say any more expressions. But going forward, there is a sense that even if oil prices remain elevated, you could still see strength coming from tech, coming from the consumer.
Let's give you an update on news elsewhere. With your Bloomberg brief, Yahara joins us with more. Hey, Yahara.
Hi, John. Mediators between the U.S. and Iran are moving closer to extending the ongoing ceasefire before it expires next week. The AP reporting Washington and Tehran had given a, quote, in principle agreement to extend the truce, allowing for more diplomacy. We are seeing shares of Bank of America rising more than 1% in the pre-market after exceeding estimates for the first quarter. The bank reporting record equity sales and trading revenue. CEO Brian Moynihan remains watchful of evolving risks, but saying the results are, quote, indicating a resilient American economy. And U.S. Treasury Secretary Scott Bessent warning that China's trade surplus threatens global economic stability. At an Institute of International Finance event in Washington, he said the world cannot take a China with a $1 trillion surplus. That's your Bloomberg Brief. John?
Hey, Yahara, thank you for the update. Up next on the program, pushing for a grand bargain.
What the president wants to make, he doesn't want to make like a small deal. He wants to make the grand bargain. He said, if you guys commit to not having a nuclear weapon, we are going to make Iran thrive.
Up next, Ed Mills of Raymond James, live from New York City this morning. Good morning.
breaks.
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity futures right now just turning positive on the S&P 500 following a close to record-breaking run. Very close, within 1% on the S&P 500 and getting even closer with the gains of yesterday. A 10-day run on the NASDAQ, just unreal. A 10% rally on the S&P 500. The NASDAQ 100 this morning, just about unchanged. More bank earnings just around the corner. We'll hear from Morgan Stanley in the next 15 minutes. Crude looks like this. WTI and Brent shaping up as follows. Brent crude at 96, WTI at 92. Slightly elevated this morning, up by a little more than 1%. But some encouraging headlines coming from AP suggesting we're getting closer to extending a truce between the U.S. and Iran.
And that's enough. At least it's less bad news, and it's not necessarily some sort of escalation. I love this idea that less bad news is good news for this market, and everyone would like to move on.
So we go back to old stories.
Please.
The old stories that we love to go back to. The future of the Federal Reserve. I almost don't want to do this because we've done this so many times, but this from the president just moments ago, that Chair Powell will be fired if he doesn't leave on time. So let's set the stage. What does on time actually mean? I think we need to talk about that. His term as chair expires in the next month or so. But if Kevin Walsh is not appointed and confirmed in time, there is reason to believe the chairman will hang around. Is that on time? If the DOJ investigation wraps up, the Federal Reserve Chair, Jay Powell, has talked about maybe walking away, but hasn't totally ruled out staying on the board as governor. So does that mean he's staying beyond his time? I'd like a slightly firmer definition of what the president is talking about here and just exactly what he's looking to pursue.
And maybe at a later date, he'll give us that time frame. He also said that President Trump said that he was not planning to drop the probe on Fed Chair Jay Powell, and going on to say that he'll be fired if he doesn't leave on time. This goes as the hearing is set for next week. Really key question, though, about whether it will actually go through, given the fact that Tom Tillis very much is digging in his heels and saying until this probe is completed, he's not going to allow this vote to go through.
I'm with Jonathan. I'm struggling with the timing of this, and you. Okay, his chairmanship ends basically in a month, May 15th, 2026. But his governorship ends January 31st, 2028. So the president says he needs to leave on time. Is he talking about his chair or his governorship? Because that's a big difference.
That's very odd, isn't it? Look, you've got Kevin Walsh ultimately lined up to have a hearing in the next week, I believe on Tuesday, on April 21. He's got pretty broad-based support in the Senate to get confirmed. He's got support from establishment figures like Jamie Dimon of JP Morgan. We talked about the support for Kevin Walsh elsewhere. So you've got your man, and he's ready to be confirmed, yet you want to go forward with something that could prevent his confirmation. I just find the whole thing a bit strange right now. The off-ramp was there for you, and it hasn't been taken.
And not only that, but we hear about investigators trying to raid the new Fed building to get more information and getting turned away by security. I mean, it is increasingly becoming an unnecessary drama, and I am editorializing, but a lot of people in markets have already looked on from this too because they want to look on from everything that is dramatic in any capacity and could potentially derail things. But right now, people are looking to a new Fed that we still don't understand the contours of, and we don't know when Kevin Walsh will actually get through because both sides seem to be digging in their heels.
Tyler Candill's down in Washington, D.C. Tyler, we were going to come to you on the war, of course, but this takes center stage now. Your thoughts on what the president is getting at here and what it means for Kevin Walsh's ultimate confirmation hearing we've been waiting for over the last several weeks?
Well, John, it's clear that President Trump is trying to ramp up the pressure, but we have to keep in mind there's sort of two parallel things happening here. President Trump, of course, no secret that he's unhappy with Chair Powell, but it comes on the heels of yesterday, Chair Tim Scott, saying that there is going to be this hearing in the Senate Banking Committee next week, but he also said that he is expecting that legal matter against Jerome Powell to be wrapped up quickly, and that's really what this all comes down to, because as you're discussing, at this point, Senator Tom Tillis has been digging in his heels to block this nomination, despite saying a few weeks ago that he met with Warsh, he likes him, he wants to vote for him, but he does hold that pivotal key swing vote on the Senate Banking Committee. Republicans only have that 13-11 majority, which means that at this point, he really can block it. And importantly, it had appeared that the administration was given a potential off-ramp after a few weeks ago. We saw this judge strike down the subpoenas that were issued against the Federal Reserve, saying that there weren't the correct grounds to actually issue them. However, at this point, the Department of Justice has been digging in its heels, saying that it's going to appeal that decision, and that is really what we have to look out for. As Tim Scott says, at least, he thinks that this could be wrapped up quickly.
Well, this could get very messy. So, Tana, thank you. The latest from the president then, speaking to Fox News. These headlines just been released. The Chairman Powell will be fired if he doesn't leave on time. Ed Mills of Raymond James, over to you, sir. Good morning.
Morning.
Good to see you. Your reaction to that headline. Where is this going with this Federal Reserve?
So there's a couple things that we have to watch. One, the Supreme Court's probably going to tell him pretty quickly that he does not have the authority to fire a Fed governor because he's already tried to fire someone, Dr. Elisa Cook. And I think if you take a step back, what he has done is ultimately going to make the Fed more independent. If he didn't do anything, these threats actually could have meant something. And now he can threaten, and it's probably going to make Powell stay longer. If he is going to be threatened to kind of get fired for leaving on time. And then we go to Tom Tillis. He's really important. It's 13-11 on the Banking Committee. It will be 12-12. But we also have to remember, you don't actually have to have an affirmative vote in committee to be considered on the floor of the Senate. All that's required is the Senate Majority Leader has to file a discharge petition. If you have 51 votes, or 50 plus the Vice President, you can confirm someone. So yes, he'll dig in his heels. This could add to the drama, but it doesn't stop Kevin Warsh from being confirmed if the Senate Majority Leader and 51 members of the Senate want him confirmed. So that's why the base case remains Kevin Warsh will be in the job sooner rather than later.
May 16th?
Around then. I mean, we still have a month here. We got all of the financial forms. All of the forms are now filed yesterday. Kind of the paperwork is done. Now it's time for a confirmation hearing. That goes well. You just bring it to the floor, prioritize this. He's confirmed.
Okay, so then what happens when the president says the Fed chair doesn't leave on time? He's going to be fired. Do you think the president means his chairmanship or his governorship, which ends in 2028?
Yeah, it's a good question because if you look at the Federal Reserve Act, there isn't anything related to firing the chair. There is about firing governors for cause. And so you could make the case that the chair could be fired and that role, but the individual governor is going to be decided by the Supreme Court. Ultimately, the other thing we'd look at, and this is what we've seen in the past, is that the FOMC actually chooses its own chair. So the president could fire him as chair of the Fed, but the FOMC would then pretty quickly reaffirm him as chair of the policy-making decisions related to monetary policy, which is what the market actually really cares about, Anne-Marie.
Is this an ego issue or is this an issue of trying to get interest rates lower?
I think it's a combination. I think this is just a pattern. You asked, like, why do we do this? He had an off-ramp. He didn't take it. How many times have we said it was right there, and then he did something that made it harder to actually happen? So this here is, I think, a pattern. I know that he wants this to be confirmed. I think that they could have confirmed him earlier than kind of the May 15th and maybe pushed him on. We've had the DOJ show up at the Fed as we saw. The Fed didn't let him in. And so anytime that there is a conflict between, like, you don't let my guys do what I want them to do, you don't get to dictate that. I get to dictate that. I think this is behind that. I think he's seeing some of these stories that the Federal Reserve Police Force didn't let his folks in, and he's going to kind of establish this as, I'm the one in charge.
From a market's perspective, it's popcorn, watch this in your free time, but it has no relevance to anything unless it starts to increase some of the pressure on Kevin Warsh, should he get confirmed, to lower rates in the face of inflation that is somewhat higher and a really resistant Fed board that has pushed back significantly. So at what point does it enter the market's frame in some sort of relevant point other than just popcorn?
Yeah, so two things I'd say. The market always tests the new Fed chair. And we're going to see kind of that in rates more than, kind of the equity markets, but obviously that spills over to the equity markets. The conversation is going to be about the Fed balance sheet. Is he going to force that to be, shrunk? Number two, I think that Scott Bessent provided Warsh with a huge amount of political cover this week, saying maybe it's not the time to cut rates. So next week in his confirmation hearing, as kind of Democratic senators are going to say, are you going to do the president's bidding, and are you going to cut rates even if inflation is higher, even in the face of this war? It's like, look, I'm going to look what the data is. There is a debate about this. Even the Treasury Secretary said maybe it's not the time just yet. So we will see. I think the market has taken out the price, kind of the cuts for this year, pushed it into next year. I think that is now the base case. Thankfully, he'll have that political cover as he's debating this in the Senate Banking Committee next week.
Ed, you mentioned the fact that U.S. prosecutors made this surprise visit to the Fed. The market doesn't seem to care about that at all. If that happened in a country like Turkey, it would be a massive deal. Why is it not a big deal here?
Because it's a continuation of a story that most have decided is not a story.
Doesn't matter.
No, I mean, we are talking about a renovation of a building. Anyone who walks by or drives by have seen a construction project there that is massive for years. We recognize that there are constraints on the way in which these are built. The actual Federal Reserve Act kind of dictates the number of buildings that the Fed is allowed to have, which drives up these construction costs. And so to the extent that this is about monetary policy, that would be a bigger deal. But if it's over a construction project,
some marble.
Yeah, it's very expensive marble.
I'll make it super, super simple. The biggest difference between Turkey and the United States. When Erdogan says you're fired, you're fired. In the United States, when you say you're fired, you're not. We have institutions. For all those no king protests that take place in this country, there aren't any. These institutions stand up and protect the laws that we have in this country. And that's why when the president says you're fired, they're not. It's different here.
And if anything, the independence, as Ed was just talking about, is only edified given the fact that Lisa Cook is still there, even after the attempts to fire her, and that is what people have been watching. So given all of that, is this a non-story increasingly for Wall Street, given the fact that ultimately Kevin Warsh will take over and he is completely acceptable, and this is all just popcorn?
Powell's stand around is not a non-story.
That's true.
I think that's a pretty interesting one.
Right.
That's the dimension of this that is intriguing. Ed, it's good to see you. Thank you, sir.
Likewise.
Thank you. Ed Mills there of Raymond James. Up next, Jared Cassidy of RBC. Earnings from Morgan Stanley just around the corner.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Stocks just about unchanged on the S&P 500, on the NASDAQ after a 10-day run of gains. Just stalling out, just a touch. We're going nowhere this morning. So far on the NASDAQ 100, the longest daily winning streak going back to 2021. More bank earnings on deck. Just heard from Morgan Stanley moments ago. It's fair to say they got it done. Morgan Stanley in the pre-market up by 1%. With the results, Danny Berger has more. Hey, Danny.
John, it is another monster quarter for another bank when it comes to equity trading. This is a huge number for Morgan Stanley. The estimate was at $4.78 billion. It comes in at $5.15 billion. Just to put it in context, they are just inches away from Goldman Sachs' equity trading business, which came in at $5.33 billion, which set a new high watermark for the entirety of Wall Street. So Morgan Stanley just behind them. When it comes to their FICC trading, also a beat, which again, Goldman Sachs was unable to do this time around. $3.36 billion is where they stand for FICC trading. The estimate was for just under $3 billion. Net interest income, that's a slight beat as well. And their investment bank, that also beating with the return of M&A in the first quarter. And then there's the crown jewel of Morgan Stanley, and that is their wealth management business. That net revenue also coming in at a beat, $8.5 billion. The estimate was for just over $8.4 billion. So clearly, there's still lots of appetite among high net worth individuals and wealth clients to invest in these volatile times. Just a few sore notes and maybe why you're not seeing shares up as much as others. Their compensation expenses were higher, $8.5 billion. That was higher than expected. The bank just noting that they had a lot of bonuses to pay out, and that led into those higher compensation expenses. The provisions for credit losses, this might get a few eyeballs. That's higher than expected, $98 million. The expectation was for $80 million. And again, their non-interest expenses, that also comes in a little bit higher. So higher credit provisions, higher expenses, but everything else, very strong beats, John.
Strong across the board. Beat, beat, beat. Said this a few times already this week across major banks. These individual trading records we've seen at Goldman, at Morgan Stanley, at Citi, JP Morgan, Bank of America, they continue. Bank of America, okay, earlier on this morning, record revenue for them in some cases over in the trading division. Morgan Stanley this morning doing better, up by 0.5% in the pre-market. Ted Pitt coming up later. Look out for this, 10:45 Eastern Time on Bloomberg TV. Catching up with Bramo on a solid set of results.
Yeah, I saw these results and I thought, no wonder he wants to talk. This is a pretty incredible quarter, and it talks to the strength that we've seen pretty much across Wall Street. A key question here is how much momentum is there heading into the rest of the year? Danny was talking about credit losses, the provisions for credit losses. How much is this tied to private credit? Have we put that completely to bed? It seems like everyone's just sort of casting some cold water over that. But otherwise, I mean, what Beata Manthe was talking about, the idea that they're all trying to stay in liquid assets to keep trading and keep trading, well, that is music to the ears of Wall Street, because that trading, ongoing volumes have really supported a lot of these bank books across the board.
Stock is up by 1.2%. To extend the conversation, Jared Cassidy of RBC joins us now for more. Jared, welcome back to the program. This line from Ted Pitt of Morgan Stanley. Strong execution resulted in net revenue of $20.6 billion. That word, execution. Jared, what's the difference between a great environment that benefits everyone and really fantastic execution? Are you seeing one or the other?
John, thank you for having me back. And you're right, execution is critical. As you know, all of these players are major players in trading, whether it's Goldman Sachs, Citigroup, JP Morgan, and of course, Morgan Stanley and Bank of America. However, you need to be able to execute for your clients, and Morgan Stanley, particularly in equities, has over the years done a very good job. And under the leadership of Ted Pick, they're continuing with that. Now, the market conditions were wonderful for all of these players, as you pointed out, and volatility helps trading, and we saw that in spades with Morgan Stanley as well as the others.
Jared, based on your calls, and I'm just basing this on your calls, and I'm going through them bank by bank, you've got outperform ratings on JP Morgan, Bank of America, and Citi. You've got sector perform on Goldman Sachs and Morgan Stanley. The numbers from Goldman and Morgan Stanley were great this quarter, great last quarter. Is there something about the backdrop for those two names that you don't think will be as supportive in the months to come?
Not somewhat, yeah, that's a good point. I would say that there's the volatility and the impact on the investment banking results that we're trying to assess. We also know that those names are trading at valuations that are far superior to a Bank of America or a Citigroup, of course. And there's maybe better upside, we think, in owning those names rather than the pure plays on investment banking. But if one believes that the volatility will continue, that's a positive, of course, for trading. So every investor has their best pick in this capital markets business. And I can understand why some people may want to own Morgan Stanley or Goldman. We just prefer to go with the universal banks as the play.
It seems like Morgan Stanley and Goldman Sachs are frequently lumped together. That's been how it has been classically. They are rivals. Who do you think's winning between them?
That's a good question, because both of them are really good in their different areas. Obviously, Goldman stands out in the advisory business. They're number one. They also are very strong in ECM. Morgan Stanley stands out in their wealth management business. One of the hallmarks of James Gorman, the former CEO of Morgan Stanley, was to move the revenues from the wealth management business from, if I recall correctly, during the financial crisis, less than 10% of total revenues to today over 50%. And that's really what's differentiated Morgan Stanley from Goldman Sachs, as well as their execution in equity trading as well.
Just curious, Gerard, we're hearing a lot from banks about potential risks going forward as they report these record hauls for the first quarter. I'm just wondering what you want to hear, what you have heard about the road ahead and the questions that remain to really assess whether this backdrop can really continue to persist.
Is a really good question, because the uncertainty created by the hostilities in the Middle East is really the number one question. When will they end? When will the price of oil come down to more reasonable levels? And when we can get our arms around that with some confidence, I think that's going to really propel the banks as a group to higher levels because of the health of the U.S. economy, and also would potentially help the wealth management business as well as investment banking. That's one thing we've heard, is that the IPO calendar is still very strong, but due to this volatility, it hasn't really taken off yet, and people are very anxious to start to see that happen.
One big cloud that's hung over the banking sector has been private credit. Have we put those fears to rest, given some of the commentary and the loan loss provisions from the big banks?
I don't know if we'll ever put them to rest, but have they certainly been kind of tamped down? The answer is yes. The banks were very good at disclosing how they structured these loans into the private credit sector. We are with what Jamie Dimon has said from JP Morgan, that during a credit cycle, you will see losses in private credit. It's not going to be systemic, in our opinion, which we agree with his view on that as well. But there will be losses, and there may be some spillover into the banks, but it will be manageable. The way they've structured their lending into the private credit sector gives them protection that enables them maybe not to have the losses that some people expect.
Gerald, before you go, and I know we've touched on this a few times already this year, but I think it's worth reflecting on once again. This year, we could see some of the biggest IPOs ever. that we've ever seen in the history of capital markets, financial markets in the US or anywhere for that matter. We just put out a story early on this morning about Anthropic being valued potentially at close to 800 billion, and maybe, who knows where we end the year, maybe north of that. Jed, that's just the IPOs. Then the M&A. We had a story out yesterday, the team here at Bloomberg, that American Airlines and United Airlines were exploring a get-together driven by Scott Kirby. Now, Jed, I don't expect you to comment on that directly, but I just wonder what on earth we're opening the door to in the back half of 26 for all this activity these banks might benefit from.
John, you said it very well. And I would say that if we could, again, have the Middle East situation in a rearview mirror, and maybe that'll never happen completely, but certainly die down from what we're seeing. With this administration, they are very supportive of consolidation, deregulation, not just in the banking industry, but in many industries. And people know that this administration effectively ends at the end of 28. So we have a 2 to 2.5 year window to get stuff done. And to your point, I think these markets are going to be very robust to have a lot of that activity take place in the second half of the year, which will benefit, of course, investors and shareholders of these companies.
How well priced do you think that story is already?
Boy, that's a tough one. It's a fair question. And I would say that it's definitely not fully priced in, but there is certainly some of it being priced in, and it's because of the uncertainty. I keep on coming back to this with the Middle East, but that is certainly what's weighing on it. Once that is removed or reduced dramatically, boy, oh boy, you could see stocks even move further to the upside.
Jared, it's good to see you. Thank you, sir. Jared Cassidy there of RBC, wrapping up the bank earnings on Wall Street. I remember a conversation that we had with Brian Moynihan under the Biden administration, where some clients weren't even having a conversation about putting a deal together because they didn't know what would get approved under that administration. We were talking about handbags. You mentioned that. Coach couldn't even get that deal done. It was ridiculous.
Middle luxury.
Crazy stuff. Now we're talking about the opposite end of crazy. The potential of United American Airlines getting together. That is unbelievable. And Jared's talking about a 2-year window here, and companies that are going to rush to get things done that might not be able to get things done in a few years' time.
Which is why pipelines have not really shrunk considerably at a lot of these banks. That's a commentary that we've heard from a lot of the executives at the big banks, and why people are still expecting a banner year. And just as long as we can get this Iran thing resolved, that people can all get going again. And that's kind of been the story from the C-suite.
Yeah, this little thing.
This little thing.
This tiny little thing. Danny's still with us. Danny, I wanted to give you the final words. Great work, by the way, over the past few days, breaking down these results. What have we learned looking at the results from Wall Street over the past 3 months?
I think we've just learned that when it's the right type of volatility, this is the type of numbers we get. Basically, every bank we heard from on their equity trading front hit a new record, setting new records for Wall Street. That will raise questions about where we go from here. This is something that Jamie Dimon addressed yesterday on both the investor and the media call, that you can't necessarily read forward this quarter in trading specifically in quarters to come. There's plenty of still volatility out there with a war ongoing, still questions over AI, so they could repeat this. But just this morning, a report came out from S&P saying that increasingly banks' trading exposure is fragile, given just how much they are dependent on some of the high-frequency traders. What happens if that pillar starts to collapse? So yes, the numbers are good, and it is worth celebrating, and you see Morgan Stanley stock up 2%, but again, between that and M&A, the questions will be asked, can they repeat such a banner quarter again this year?
Danny, thank you. Once again, looking forward to your coverage later on this morning. Looking forward to this as well, 10:45 Eastern Time. Lisa, catching up with Ted Pick, the Morgan Stanley CEO, a little bit later this morning. What are the questions for you now, after you've seen these results for this man right there?
Well, the main question, as we were just hearing, really is the outlook for the pipeline, given what is going on with that little thing over in Iran, right? There's this idea of how much is that really torpedoing people's plans, how quickly people will get back on board, what potentially rates staying at this level does to all of these deals, considering the fact that people had been expecting rates to continue to go down. And then, honestly, one of the key questions has been acquisitions, right? I mean, Morgan Stanley has been an acquirer and a disruptor. How much are they considering exploring the backdrop that seems to be an open door?
Like Goldman Sachs.
Exactly.
You know, like, why not? I'm not starting rumors. Don't run with that.
That would be similar, though, to the United American Airlines. You know, that would be a great flex.
Crazy.
Go ahead.
Morgan Stanley, no. I'm not starting anything.
You can.
Stock's up by 2%. Let's get you an update on stories. Ask him. on stories elsewhere. Your Bloomberg Brief with Yahira. Hey, Yahira.
Hi, John. Taking another look at those Morgan Stanley earnings, shares are rising 2%. The investment bank reporting equity sales and trading revenue for the first quarter well above estimates at $5.1 billion. Fixed sales also topping estimates, along with a beat on net interest income. Lisa will be sitting down with Morgan Stanley CEO Ted Pick exclusively at 10:45 a.m. this morning. The Pentagon reportedly sending thousands of additional troops into the Middle East over the coming days. According to the Washington Post, the reinforcements will include about 6,000 troops via aircraft carrier and over 4,000 Marines that are expected to arrive towards the end of the month. This coming as President Trump is suggesting the war is, quote, close to over. And President Trump warning Fed Chair Jay Powell that he will be fired should he not leave his position by May 15th. The president's adding that he has no plans on dropping the DOJ probe on Powell and the renovations on the Fed building. That's your Bloomberg Brief. John.
Yahira, thank you. Appreciate it. Next on the program, credit concerns.
We have this entire ecosystem of private credit that has made it possible, has financed companies that probably would have struggled otherwise. We see it through the rising defaults in the private credit sector. The way this plays out is the way it always plays out. People want liquidity.
In just a moment, we'll catch up with the Schroders Capital CEO, Georg Vanderlyn. He joins us next, live from New York City. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City, welcome back to the program. Your scores look like this. Equity futures on the S&P 500 just about unchanged, following a really fantastic run on the S&P, up off the lows by close to 10% and very, very close to all-time highs. Just think about that. We've shut down the Strait of Hormuz, hardly any traffic coming through, and yet we're this far away from record highs on the S&P 500.
Yeah, and everyone's just trying to get past this so that they can look at earnings and talk about all the underlying momentum. My big takeaway, one, you could say complacency, et cetera. The second one is that the U.S. economy in particular was poised for an outperformance in economic growth that was so much greater than what people expected that this takes that edge off. So you're still seeing gains, even though they might not be as much as they previously might have been thought to be.
And based on reports so far this morning, it looks like the U.S. and Iran close to extending a truce. The ceasefire set to expire in the next week or so. The report from the AP came about an hour ago.
So it looks like potentially we're going to have this extend past April 22nd. Although if you look at what one of the officials said to the AP, they want 3 things hit by April 22nd. Iran's nuclear program, something on reparations, and the reopening of the Strait of Hormuz. While that is signaling the top line, they want to extend the ceasefire, there's other headlines coming out with Iran saying if one side violates a deal, the other party can too. And Tehran views the U.S. blockade as a violation of the ceasefire deal.
Things are still very, very fragile. They're not at the banks right now. Let's put it that way. Morgan Stanley in the pre-market higher by 2.5%. Earnings a little bit earlier on this morning, and those earnings were better than good.
Beats across the board. Their equities trading revenue, $5.15 billion versus the estimate of $4.78 billion. The opening line of Ted Pick's commentary heading this particular earnings season is Morgan Stanley reported a record quarter. Mic drop. And that is what you're seeing right now in markets.
And some commentary on private markets, private credit from basically all of these players over the last few days. The Bank of America CFO, I believe, on the call right now, talking about the firm not changing their private credit strategy and haven't seen any losses in the private credit portfolio.
There's been huge pushback from all of the executives at big banks saying, look, there are going to be some problem children. We do see some potential lending behavior that isn't exactly wonderful. At the same time, this is not systemic, and we plan to plow ahead. And that has been a theme from big banks.
Under surveillance this morning, credit concerns.
There are a number of operators out there that probably should have gone under even back in 2020 that are still around. And today we have this entire ecosystem of private credit that has made it possible, has financed companies that probably would have struggled otherwise. We see that through the bad pick activity. We see it through the rising defaults in the private credit sector. The way this plays out is the way it always plays out. People want liquidity.
So here's the latest this morning. Wall Street banks reporting at least $100 billion of exposure to private credit firms as investors question the durability of the sector. Georg Vanderlin, the CEO of Schroders Capital, writing, weaker players are being exposed while stronger, disciplined investors stand out. Georg joins us now for more. Georg, welcome to the program. And welcome to New York. It's good to see you, sir.
Thank you. Thank you for having me.
Can you help us understand the difference between a liquidity-driven repricing and a structural credit event? Just explain to us one versus the other and what you think this is.
Very happy to, and it probably links nicely to some of the comments made earlier and other executives in the industry. Effectively, what the market isn't really differentiating right now is liquidity stress in semi-liquid vehicles, so linked to structures ultimately in funds, versus impairments of underlying assets. So what we have is liquidity stress in essentially retail orientated structures, so funds that have been sold to retail investors, in some cases where probably these investors haven't fully understood what they're investing in some cases maybe compounded by the fact that there is software exposure and the market is trying to price software and revalue ultimately software in the light of upcoming anticipated software disruption. Note, it hasn't happened yet. And essentially the real distress or impairment of underlying assets, which isn't happening. And so that effectively is the difference between the two.
What does it mean for you and the team and the dislocations you've seen so far and the money that you're looking to put to work?
So, I mean, for us, just first of all, to note, we're not a direct lender. We are focusing on sectors which we think is the sort of the boring, sexy part of the new, the boring part of the market, i.e. sort of lending against infrastructure assets, lending against real estate assets, lending against, on an asset-backed basis, for example, against hard assets, where we have better collateral, which is less cyclically exposed. And I think to us, that is a key opportunity also going forward for investors to build more resilience into their portfolios by embracing this next to the exposures they have in direct lending.
At a time of rapid change, a dislocation, the idea of AI and what that could potentially do in transforming business, Is there an advantage to being illiquid versus liquid with respect to your asset allocation?
I think it's, like broadly speaking, this gets to the advantages of private markets generally speaking. I think you want to be both, really. I think there is no way an investor can only be liquid or only be liquid. I mean, effectively, private markets roughly capture probably 80% of the economy, depending on how you count it. I mean, in terms of businesses in the United States, it's probably 99% of businesses are not listed. 80% of the workforce is working for non-listed companies. I mean, it's a bit hard to gauge, really. But it's such a big part of the economy. A lot of the innovation economy is actually happening in the unlisted space. A lot of effectively real assets, infrastructure, real estate is not really suitable for listings. And then there's obviously also bigger listed companies. And so in any portfolio, there will have to be both.
Do you think that illiquid assets need to have a higher bar for transparency, given that one of the big concerns is that a number of lenders are mismarking their books or marking aggressively and optimistically just how high some of the valuations could be?
I think the issue is much more how you deal with this in the context of semi-liquid structures or liquid structures where you can trade in and out of illiquid assets rather than effectively the time lag in valuations. And the approach to valuations in illiquids in general. So you don't have a problem in illiquid funds ultimately, or in CLOs, even in the private credit space, really, where there is no trading in and out. So, essentially the daily volatility and themes which are played through the stock market, like, should valuations for software companies be lower now because there will be disruption in the future, even though earnings are still very much unchanged and very much in a good territory. It isn't something that a private market fund would reflect on a daily basis. However, if you have investors that can trade in and out, either daily or on a quarterly basis, you all of a sudden have that issue translating into these types of structures. And I guess this is where ultimately the issue arises. And for me, the question is ultimately whether then investors fully understand what they've bought into, and the fact that the underlying asset is ultimately illiquid, and there are mechanisms that prevent single investors from trading out, and contagion to spread to a broader group of investors just because of sentiment.
Clearly, things haven't gone right for the industry over the last few months. With the minute we have left, what should the lessons be of the last few months for the industry?
So I guess, to say it maybe slightly provocatively, growing too quickly in certain areas, essentially, and selling too much of one thing, maybe with slightly too little diversification, too much sector exposure in certain areas, maybe also a degree of lack of discipline in terms of underwriting in the 2020s, pre the change in the rate environment, is something that has to feed through the system. Per se, that's not an issue, and it's also not leading to credit losses, to just say this again, and it's also not leading to losses in private equity, but probably a series of vintages that will have slightly lower performance.
Georg, thanks for making time for us this morning, and enjoy your time in New York. Georg Vanderlyn there of Schroders Capital. Up next on the program, we'll catch up with Phil Camporelli of JP Morgan Asset Management, Max Layton of Citi, Pooja Sriram of Barclays, and Brent Schutte of Northwestern Mutual. The third hour of Bloomberg Surveillance up next.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
The earnings story still looks very much on track.
You have a situation where the fundamentals actually got stronger.
There is still a lot of uncertainty out there.
This uncertainty can pass. I still think there's a very good road ahead.
The bull market that started in October of 2022 has further to go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, this far away from all-time highs on the S&P 500, adding to the rally just about close to 0.1% higher on the S&P and just about unchanged on the Nasdaq following a 10-day run of gains. In the commodity market this morning, Brent and WTI fairly well behaved. Brent crude at about 95, WTI around 91, a fifth straight consecutive close below $100 a barrel at the front end of the futures curve in yesterday's session. That's set to continue based on these moves and based on the reports so far that the US and Iran is close to extending a truce.
Yeah, and this really has been what's been the ballast behind the market performance so far, is that you haven't seen an escalation, that talks have been ongoing. Yes, Islamabad talks did break down with no agreement, but further talks are going to be held at some point. That's the reporting. So at this point, is not worse news good enough to keep this rally going, given the fact that we're getting earnings that are incredibly strong from U.S. companies?
And the president is signaling that, at least at this moment, Tehran has some distance right now from Beijing. In a Truth Social post, he said China's very happy that he's permanently opening the Strait of Hormuz. There's actually a blockade right now in the Strait of Hormuz, but maybe potentially down the road, the president is looking for a real opening of the Strait of Hormuz. And then this, they have not agreed to send weapons to Iran. This is obviously Iran's biggest backer because they buy the lion's share of their oil. And what he's saying is Beijing is maybe taking a step back. We will see. And the president will be obviously going to Beijing in May.
It's funny just to track how people's views on all of this has changed. At the start of March, if it goes on a few weeks, it'll be okay, just so long as it doesn't go into April. And now we're talking about the prospect of extending a truce without any real clarity on what that means for the Strait of Hormuz. And we could be talking about the strait still being closed by the time we get to May.
there's not really a clear pathway to get the strait reopened. That's the problem right now. And what you hear on the peripheries is that Iran rejected the UN proposal to open the strait to all commercial traffic without a toll. Remember the toll booth that's been set up? I mean, again, people are saying, yeah, stop it with the geopolitical noise. I just want to get back to my earnings. And right now, markets seem to be focused on that, even though you could come up with a pretty gloomy and doomy story about what's going on in the Middle East. And it's really not that far of a stretch. Talk to any commodity analysts, there they are.
No gloom in the bank earnings whatsoever so far this morning from Bank of America and Morgan Stanley. More trading records. Morgan Stanley in the pre-market higher by close to 3%. Bank of America up another 1 percentage point. Later on this morning, 10:45 Eastern Time, Bramo catching up with Ted Pick, the Morgan Stanley CEO, following some fantastic results earlier this morning.
The key issue is just how much is this potentially threatened by what's going on in the Middle East versus a big pipeline of deals that are slated to get done that a lot of banks have talked about. We talk about how the regulatory environment is more wide open for some of these tie-ups and how much capital markets can continue to boom to the extent that they did in the first quarter, even with some of the noise that people keep talking about in the background.
If United and American Airlines can get a deal done, anyone can.
Okay, go ahead. You're not spreading this rumor.
Imagine the pitches.
Okay, honestly, listen.
Think of the banks right now.
This is John this morning.
The pitches they're coming up with.
Okay, this is John this morning. I'm not saying it, but what if Morgan Stanley were to buy Goldman Sachs? If, United...
I'm sorry,
American...
but if United can buy American Airlines, anyone can buy anyone.
All right, I'll ask him. I'll ask Ted. I'll say that John has a question for you.
Ask him about the United American Airlines deal and the potential of getting that done and what that could mean for other sectors, other industries, and the kind of deals that have to rethink the possibilities around.
Alphabet and Microsoft?
Chevron, Exxon?
Who knows?
You know,
sky's the limit.
Crazy talk. Think outside. Anyway.
Coach and Michael Kors, never mind.
No, that's not allowed.
Let's move on.
Don't touch the handbags.
I won't.
Don't upset Biden. Hey? Bad news, though.
Okay, sorry.
Entry-level handbags.
I'm sorry.
Antitrust concerns.
All right, I'm leaving.
From one crazy to another. It's crazy. All right. Coming up on the programme, Phil Camporetti of JP Morgan with stocks trading near all-time highs. Max Layton of Citi on reports the US and Iran are close to extending their truce. And Pooja Sriram of Barclays as President Donald Trump ramps up the pressure on Fed Chair Jake Powell. We begin this hour with stocks hovering around fresh record highs. Phil Camporetti of JP Morgan Asset Management writing, the US in 26 is the most prepared to deal with a spike in oil prices than at any point in recent history. While we have reduced non-US equity, we have not adjusted our overweight to US equities. Phil joins us now for more. Phil, good morning.
Good morning.
Is this the return of US leadership?
So U.S. exceptionalism is not going away, right? However, I think that the U.S. is a clear winner here when it comes to the spike in oil prices, as I wrote. So let's kind of break this down a little bit. Obviously, 5 years ago, we went from an energy importer to an energy exporter. So lo and behold, we had our equity person talk to us earlier this week, and they've upped their earnings forecast from about 15% to 19% this year. Why? Because these energy companies are going to have a heck of a lot of earnings this quarter. Secondly, the One Big Beautiful Bill Act is coming at a one big beautiful time. Okay, so the estimate here is that gas prices would have to average $4.50 for the entire year just to break even with the fiscal policy that is being delivered in 2026 through the Big Beautiful Bill Act. And as we all know, tax refunds are hitting today. April 15th, happy tax day. 3 things that you can count on: death taxes in the 60-40.
Shots fired.
Which I want to get to. And then, like, forward-looking, I know that inflation expectations in the near term obviously are rising, particularly headline inflation that includes energy prices. But if you look further into the future, whether you look at the December 26 oil contract that's trading in the 70s, or if you're looking at five-year forward inflation expectations, which is something that the Fed loves to look at, those things really aren't moving, John. So, you add this all up, and the top 20% of earners, that basically determines success or failure for this economy. They care about every Thursday at 8:30 in the morning, which is initial jobless claims. Right. They don't really care about gas, energy, and oil prices. They only spend about 2.5% of their income on those things. So I think they're a little bit more insulated, and they're doing fine.
And claims have been super low. With regards to the war in Iran, there was a report earlier on this morning from AP that suggested the US and Iran was close, in principle, to agreeing an extension of the truce. This came from Axios just moments ago, that the US has not agreed to an extension of the ceasefire. That from Axios just moments ago. The US and Iran will continue to engage to reach a deal.
So it sounds like from the United States point, they want to keep talking, but they have not agreed to extend that April 22nd deadline. Maybe this will change, but right now it seems that the United States still wants to really squeeze and put the pressure on Iran to come to the table and almost capitulate before April 22nd.
We'll have our own fight around this table now and talk about something completely different. Do you want to take it away, 60-40?
Well, it's related. I'll tie it together. And
Okay.
it's this idea of, at a time when the commodity shock is the significant potential shock, does 60-40 work? You are going to die on this hill. I just wonder if you see right now an ongoing correlation, positive correlation between stocks and bonds, because the potential risk factor is inflation. How can you say this is still going to work?
Yeah, so Lisa, I did think of you when the 60-40 was hurting my feelings in March, as stocks were going down
be a good time.
and bonds were going down. But I thought it was something really important. Once we priced out the Federal Reserve from all of their easing this year, the two-year note stopped going up in rate, right? So I think there was a limit to that. Oil prices went up, had to price out that. I don't think the Federal Reserve should be easing policy over the next 6 months anyway. Every single one of their meetings is a cost-benefit analysis. Does the benefit of a hike, a cut, or staying on hold outweigh the cost of potential policy error? They shouldn't be easing. But the 10-year note's at 4.25 right now. We were at 4.1 in September of last year. Like, the MOVE index is really our guiding light, because I think that kind of controls everything. The MOVE index controls whether the 40 will protect the 60, and I think at this point we think it will, because we don't see tightening. Once you price out the easing, now you can start to get the benefit of diversification. But you had to go through those painful couple of weeks to get there. And then what the MOVE index, which is rate volatility, also does is it allows you to go buy equities. As I wrote, we never reduced our U.S. equity allocation. We still have an above-trend GDP forecast this year, even if oil prices average $88 for the whole year.
This is the contradiction, and we've talked about it a lot on this show, that if you expect growth to outperform, and you expect commodity prices to inherently be higher going forward than they would have otherwise been because of blockages and questions about the freedom of navigation on the seas, then why wouldn't the stronger growth be inflationary, given the fact that we're already at a higher than target inflation for the past more than 5 years?
Because it's not showing up on, I would say, kind of the supply side. So if you look at wages, if you look at shelter, right, the stuff that really drove up inflation in years like 2022, you're only seeing it on the commodity side. And I think it's okay for service sector to be sticky here, Lisa, because I think what that's saying is that you have a strong consumer. Right? So it's all kind of circular into a positive earnings growth story and an above-trend GDP growth story, along with the fact that you, again, have this One Big Beautiful Bill Act that's providing. Now, the Fed shouldn't be cutting rates. That's not in our forecast, and I think it's not in our forecast because we do have inflation probably closer to 3% than 2% for the remainder of the year. But to make these links back to 2022, which gives asset allocators like me a whole ton of PTSD, right? I don't want that. You have to then add in the other parts of inflation, the shelter. The owner's equivalent rent was a huge driver there, and we're not at that level right now.
I think the greatest counterpoint is just the lack of labour wage growth right now. This labour market's not as tight as it was back in 22. I'm not saying it's super loose either, around 4.5% unemployment, 4 to 4.5 at the moment, but you're not seeing the wage growth that would make most people worried about an inflationary spiral from here.
I love this. And that was March, I think John's right, but March of 2022, that wage price spiral risk was so prevalent, which is why the Federal Reserve eventually had to hike by 75 bips a meeting, 4 meetings in a row. And then just the other piece on equities, which I think is important. There's $22.7 trillion right now sitting in checking accounts, savings accounts, and money market funds. You know what that's yielding right now? Even at Chase, but you didn't hear it from me. It's yielding 52 basis points.
Yeah.
Like, investors are stuck in ZIRP, but these banks, right, can then charge a 6.5% mortgage rate. I mean, that's amazing.
I love it. I'm the embodiment of PTSD from 2022. That's great. You know, when they want to think of something, they think of my face. All I can say is, it's a good pitch.
Yeah,
I like
you look like wrong way correlation. That's right, exactly.
That's brutal. Stocks down 10% and people think of Bramo. Is that how this works, Lisa?
I think that's great. That'll be my Halloween costume.
Phil, you're a good sport. Appreciate your time as always, buddy.
Good to see you all.
Thanks for being here. Thank you. Phil Camprodi there of JP Morgan Asset Management. Let's give you an update on news worldwide with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. We're seeing shares of Bank of America rising 0.8% after reporting first quarter earnings that beat estimates. The bank reporting record equity sales and trading revenue. CEO Brian Moynihan saying the results indicates a resilient American economy. Morgan Stanley also moving higher, up 2.7%. The investment bank reporting a record first quarter with equity sales and trading revenue well above estimates. Lisa will be sitting down for an exclusive interview with Morgan Stanley CEO Ted Pick at 10:45 a.m. this morning. And New Jersey Transit is considering charging World Cup fans over $100 for round-trip train tickets between New York's Penn Station and MetLife Stadium. It's a pretty short ride. New York Governor Kathy Hochul called the fare awfully high. That's your Bloomberg Brief. John?
Yahara, thank you. I'm trying to work out if I should save you from this or not, but...
Ridiculous.
I think the answer is no.
We're going to have months of this conversation. I'm so disappointed with how this has been handled in this country over the last year or so. I'm so bullish this game in this country, and you see youth teams all around the Northeast taking up football, soccer, and I think that's absolutely fantastic. When we had the World Cup in the US in '94, it wasn't the right time. This was the right time. It was a massive opportunity for this sport. All the kids should have had fantastic access to get into the stadiums to watch these games for next to nothing. And the idea that we're talking about $100 just to get a rail ticket, that is so, so sad. I think it's really sad the way this has been handled.
And then you add on top of that the cost of the actual tickets. I mean, this is the reason why, you know, on one hand, this is what America does best, right? Everyone has their hand out if they can profit, if the demand is greater than the supply. At the same time, it's not really going to get my kids to the game because I ain't paying that.
Right?
And Italy didn't even make it, John.
Oh, Phil, what are you doing?
Oh, no. Now you're...
What are you doing?
He's
now
tweak us all.
shots fired.
How dare you, with that last name as well?
I'm half Irish.
Up next, we're not doing that. The morning calls, plus Max Layton of Citi with oil rising on mixed messaging out of the Middle East. That conversation and not football from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
In terms of the stocks, there was a window to buy a couple of these maybe at the beginning of the war, and we upgraded a handful of the regional banks during that period of time, but we still think that the risk-reward trade-off is better in some of these regional banks. JPM and B of A probably had the best quarters. The stocks came in relatively hot. We have erased all of the war fear and losses going into earnings.
That was David George of Baird weighing in on the bank earnings this morning. We heard from Morgan Stanley and from Bank of America. Those numbers better than good. Equity futures just about unchanged on the S&P 500 following a stellar rally in this equity market. We've heard repeatedly from the banks on Wall Street, this consumer and this economy is resilient. We heard that from Brian Moynihan at Bank of America. From Jamie Dimon, consumers are still earning and they're still spending. From Wells Fargo, spending has been very resilient through the last month. We've heard it repeatedly over the last week.
And they go on to say that just because oil prices are high doesn't mean that they're going to stop spending, because ultimately, as Jamie Dimon came out and said, it really depends on the labor market, and the labor market is strong. Until you see unemployment really creep higher, you're going to see this ongoing resilience that can continue to power the U.S. economy.
Futures just about unchanged on the S&P. That's the price action. Let's get you some morning calls. First up, Piper Sandler lowering its price target on Wells Fargo, the firm cutting its EPS estimate for this year and for next. Your second call from Barclays raising its price target on Citi, saying earnings are proof of a strong start to the year. And finally, Goldman lowering its price target on JP Morgan, noting increased competition and market volatility. The name is up in the pre-market by 0.4%. That's the bank earnings. Let's turn to energy. Crude rising as Iran pushes back on the US blockade of Hormuz, warning if it continues, it will violate the terms of the ceasefire. Max Layton of Citi writing, in a scenario of lasting disruption of the strait without major escalation, we could see oil prices relatively stable at higher levels with lower realized volatility. Max joins us now for more. Max, welcome back to the show, sir, and thanks for making time for us. I know you're looking at a range of scenarios. I believe there's 3. So could you detail the 3 and just tell me which one you think is most likely and why?
Sure. Yeah, so I think because this problem is so big, the baseline view that we've taken, that I think the equity markets certainly seems to be taken, is that this is so big it has to be solved, either militarily or diplomatically. And we had kind of penciled in around now and over the next couple of weeks, so second half of April, as a time where that was our baseline view, that's when it's going to happen. And look, it's still possible. Still possible. We put a 50% indicative probability on that scenario. In that scenario, we still think the baseline view that we still think it gets worse before it gets better. The two sides, or at least on nuclear, are pretty far apart. And, there's also talk about Iran saying how much, I've seen numbers out there of up to $270 billion of damages that they want. And look, they want kind of reparations for. So I would say that things look pretty far apart. A lot can happen within a couple of weeks. I mean, a couple of weeks is a very long time. But in any case, we see the price kind of grinding up over the next couple of weeks to $120 is our 0 to 3 month point price target. That's a central scenario. And then it getting resolved diplomatically, most likely. But, we also put a 30%, we're certainly not out of the woods, I would say. We put a 30% probability on the bull case scenario for oil, which is that this drags on for quite a bit longer, or that it involves mutual energy infrastructure destruction. And I actually think that mutual energy infrastructure destruction is much less likely now. I think the bull case is really about the Strait of Hormuz flows being disrupted for, let's say, for example, if they were disrupted to the similar magnitude to what we're seeing today for the next 10 weeks, then oil and product inventories would fall to their lowest levels in over 25 years of data that we have, and most likely to the lowest levels in terms of days of consumption since the 70s. So, with that, you would see in this bull scenario, Brent up at 150, product premiums at 50, and all-in prices at $200 plus. So we're 10 weeks away from that, and it's entirely plausible that happens. And then the bear case scenario. The bear case is just really quick. It's just super quick resolution. You get a reopening of the strait almost immediately.
Isn't the market kind of pricing that in right now? Even though Iran is talking about retaliation, the market is weighing more heavily on the fact that it looks like they want an off-ramp between these two sides.
Yeah, I think in many ways. I mean, look, even the back end of oil at $80 odd, 12 months forward is, it's telling you that, it's telling you, A, that the market's super tight right now with spot trading at 130 to 150, depending on the oil, the crude barrel you're looking at. But it also does tell you that the market, at least in oil and probably also in equities, that it it is assuming that this is solved pretty quickly.
What does solved mean, Max, given the fact that we're hearing a ceasefire, but it's unlikely, as pretty much every analyst says, that the Strait of Hormuz will actually reopen to the degree that it was before the conflict?
Yeah, I think solved is, it is a path to returning those flows. Probably it will be some kind of phased trust building return of flows in that baseline view. But, look, there is that entirely plausible other scenario that I think, arguably the market is complacent about, is that this drags on for a lot longer and or that the conflict restarts in a couple of weeks' time.
Are you sick of thinking about this? And I ask this because I think that the rest of the market is. I mean, I think that really that's part of the issue, is that people are exhausted by the headline roulette, and so they're just discounting it altogether and moving on. I mean, is that sort of your sentiment too?
Yeah, I mean, look, it has been exhausting. I'm spending half a day on X and on Bloomberg trying to figure out what's going on. But yeah, I think people in general are kind of hoping for the best and getting on with their daily lives. And, I have been, and I think that's reflected in our base case scenario. But, wow, it's I think when I look at the risk skew, I think it's entirely plausible that this regime, that the ceasefire works for them in the sense that if they can just hold out for, let's say, 10 weeks in that scenario, you're going to drive oil inventories down to the lowest level in decades, and you're going to drive up the oil price, and you're going to be able to probably maximize your ability to extract something from the negotiations.
Max, can I just finish on this question? And it's an important one, I think, in the 45 seconds we have left with you. There's a lot of people in other asset classes taking comfort from how the futures curve is positioned, how it looks, the deep backwardation, that prices looking out further in the future are a lot lower. They look at that almost as an implied market forecast. Do you see it the same way as a commodity expert? Do you look at the curve and see that as a market bet, or does it reflect something else?
Oh, wow. This is a big debate. And in my career in commodities, I've worked with different PhDs who have different views on it. I think your traditional commodity expert would say the forward price 12 months forward, 12 months forward is not a forecast. It reflects the convenience yield and the tightness today. So the fact we're trading at 150 reflects the tightness today, and the backwardation is not a forecast. But, everybody also knows that, just logic tells you that the market is trading at that price. And if it was so far from people's expectations, then it wouldn't be trading there 12 months forward. Yeah. So I think the further out on the curve you go, the more it becomes, the less tied to the front and to the tightness it is, and the more it is an expected value. There's a big debate in the literature about whether that's 12 months out or 5 years out, depending on who you work with, yeah.
We'll get into the books another time. Max, it's good to see you. Thank you, sir. Appreciate your time. Max Layton there of Citi. Up next, Pooja Sriram of Barclays, as President Donald Trump is ramping up the pressure once again on Fed Chair Jay Powell. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Only one down day so far this month on the S&P 500, and it was tiny. It's like this small. Equity futures just about unchanged on the S&P, following a fantastic run on the S&P 500. Energy stocks on the S&P so far this month, down 9%. The Nasdaq so far this month, up 9%. The Nasdaq 100 on a 10-day winning run, the longest since November 2021.
All you can really count on in this moment, where even Max Layton is saying, I don't know what's going to happen, we're all sick of talking about what's going on in Iran, and yet we're just sort of headline chasing, is that people keep investing in tech. And tech keeps outperforming. And ASML actually upgraded their forecast. So for all of the noise elsewhere, that is one constant and is viewed as an existential threat, which is the reason why people are piling in. This is the new haven.
Semi's up by more than 20%, I think.
Bonkers.
This month. The Kospi is up by something like 20%, I think, this month.
When you take a look at the 10-day gain, going back for the stocks, for the semiconductor index, it is the biggest 10-day gain going back to 2002. That gives you a sense of just how much of a rip it has been.
Absolute rip. Super impressive rally. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We're wrapping up bank earnings with more of the same. A trading bonanza on Wall Street. We start with Bank of America. Shares up 1%. Traders there pulled in the unit's highest revenue in more than a decade, and Morgan Stanley right there with it. Shares are up 2.6%. Equity trading jumping 25% to a record of more than $5 billion. So to sum it up, volatility fueled activity across Wall Street, turning into a windfall for these banks. Turning to another name in the green, and that is Snap. Shares are up 6.4% in the pre-market. The social media company announcing it's cutting 16% of its workforce as it tries to achieve profitability. And notably, CEO Evan Spiegel pointing to AI as one of the reasons the company is able to do more with less people. So that's what investors are reacting to, the idea that AI can drive efficiency. And we are also seeing shares of Broadcom rising nearly 2% in the pre-market after expanding its partnership with Meta to build custom AI chips. This is part of a multi-billion-dollar push to build out more than a gigawatt of computing power. John.
Yahira, thank you. Thank you for that, Broadcom, with a fantastic run as well. Let's turn back to the Federal Reserve. President Donald Trump saying he'll fire Chair Jay Powell if he doesn't leave his position on time. Mike McKee has more on that. Good morning, Mike.
Good morning, John. Yeah, another threat from the president. But before we get to the Fed, I just want to mention that we did get some economic data that will make the markets happy again today. Import prices rose 0.8% in March. The forecast was for a 2.3% rise. So like PPI yesterday, better news. And almost all of that was oil prices, ex-petroleum. Import prices were up just 0.1%. Empire manufacturing, also big jump up to 11 from minus 0.2. So some good news on the economy this morning, and it might keep the Fed sidelined. Whether the president can sideline Jay Powell or not is another question. He, once again, speaking with Maria Bartiromo, said that if Powell doesn't leave on time, he would have to fire him. But that's not up to him. That's up to the Supreme Court. The Lisa Cook case still hanging out there. We hope to get a decision sometime soon on whether the president can fire somebody on the Federal Reserve Board without specific cause. So that's kind of off the table until we do. There are legal questions about what happens if Powell's term ends as chair of the Board of Governors, and that might be fought out in the courts. But he would stay on as FOMC chair, the interest rate setting panel, because they've already decided that he would do that, and that's not subject to the president's decisions. Of course, we get Kevin Warsh's confirmation hearing next week after he finally got his paperwork in. Part of the reason for the delay is he's got a lot of money and he had a very complicated financial disclosure form. But there's no vote scheduled yet because Senator Thom Tillis is still holding out, saying the probe has to end before the Justice Department probe has to end before he would vote in favor of Kevin Warsh. And we heard just last night that the Justice Department showed up at the Federal Reserve and tried to go into the buildings to do an exploration, and the Fed's lawyers told him, no, you can't do that. You have to have a subpoena, and the subpoena was quashed by the judge. So the battle on that still goes on. There will be some interesting questions for Powell, for Kevin Warsh next week, of course. The biggest one is he going to work for Donald Trump, or is he going to work for the Fed? In other words, is his priority cutting interest rates over everything else? And if he's going to wait and see what the data tell him, when would rate cuts be appropriate? He wants to change the Fed's balance sheet, so I'm sure there'll be questions on that. And then, of course, his own $190 million plus balance sheet, and that only is his money. His wife is a billionaire, so there is quite a bit of questions about whether that will influence any of his decisions. So it's going to be a big week next week, and we're still waiting on the Lisa Cook case to see where that takes us.
Mike, just what are you implying? Just that last line. That last line, what are you implying? That somehow he would set policy to benefit himself because he has $200 million?
Well, it's not so much that. It's that policy could inadvertently help him or his wife because the holdings are so vast. Now, he has said, as part of his disclosure, that he will recuse himself from anything that could possibly affect his portfolio, which he would, for the most part, sell off, but affect the Estee Lauder companies, which is where his wife gets her money from. So it's a question about, how do you manage something that is so big in your own portfolio and stay out of trouble?
Interesting. Mike, thank you. Thanks for breaking that down. Appreciate it, as always. Fair to say you married well, right?
Yes, exactly.
Kevin Warsh doing okay.
As Mike's talking, and it's like his paperwork was so delayed because there's so much money, because he married well.
I don't think that's a man who needs to work for anyone, right? Never mind the president.
Well, and this is the reason why I think some people would say, okay, he's fine. He's going to be the Fed chair, and he'll be relatively independent. I feel like this is sort of a normal pathway. You get enough to be independently wealthy before you take the salary of a Fed chair.
Chairman Powell also independently wealthy.
I mean, pretty much that's a nice pathway.
Yes.
My son said to me the other night, he's like, what about me? And I'm like, yeah, go to.
Oh, he wants to be the Fed chair?
I think more Treasury Secretary.
Right, he's got big plans.
I was like, yeah, good luck to you.
I've met him.
Maybe just graduate from high school first.
I imagine that's possible for him.
All right, well,
who knows?
Please,
we'll
I hope he's not listening.
All right.
Please don't inflate your ego.
I imagine he is. So you go for it. You go for it. Pooja Sriram of Barclays writing this. We think there is likely enough support in the Senate for Warsh's nomination to proceed. The path for a timely confirmation, however, seems narrow. Pooja joins us now for more. Pooja, good morning. Good to see you.
Good morning.
Let's get into this. So we've had all these attacks on the Federal Reserve. Have you seen any real credible effect on the operational autonomy of the Federal Reserve that's really harmed them, actually taken place? Never mind the risk of it happening. Have you actually seen it happening?
Not at all. I think so far it just seems that this is background noise, unnecessary noise that Chairman Powell is having to deal with. But we listen to the FOMC members closely. We read the minutes. It doesn't seem to have affected how they're functioning. I think what this does is this constant attack, and like we said that. The path for, Warsh's nomination was already quite narrow in the first place, and then you have this attack, and, as Michael McKee just pointed out, it sort of creates a potential roadblock for that happening in time. And so, it's political, no doubt, and it could get messy.
Has it changed how you think about leadership at the Federal Reserve and what a Chairman Powell Fed looks like compared to a Chairman Kevin Warsh Fed?
Well, yeah, I mean, we do know, how Warsh thinks in terms of, he's more hawkish on the balance sheet, but there is an inclination for him to cut rates. So, he is perhaps, one more dovish member to come on board. But we've we've always held the view that, irrespective of who's Fed chair, one person cannot entirely influence monetary policy. And so I think that the big job of a Fed chair is to build consensus, and you need to have credibility to do that.
One of the most amazing aspects of all of this, whether it's Fed independence, whether it's a commodity shock, whether it's the fact that inflation has not been at the 2% target or below the 2% target for more than 5 years, is that inflation expectations are incredibly anchored. They are. If you take a look at five-year break-even rates, they've creeped higher to 2.2%. Oh, horror. Like this question of what are we looking at right now? Do you think that this is stable and that this is faith in the Fed, or do you think that this is just simply complacency?
No, I think this, to a large extent, reflects Fed credibility. And, forget the markets. You look at consumer surveys, right? And you think about the average consumer and what inflation expectations they're pricing in. We're not seeing the longer run expectations move up there either. So I think so far there seems to be a belief that this energy price shock is going to be, to use that word, transitory. And then, hopefully things pass over. But I think the longer this continues is when consumers, the average consumer, starts getting worried.
To preserve the Fed's credibility, do they have to move to more of a range, a 2 to 3% inflation range, rather than the 2% target that they haven't met in more than half a decade?
No, I think they're going to be extremely hesitant to make any changes on that front. I think the idea would be for them to perhaps, keep rates more restrictive if they're seeing signs of inflation, remaining sticky or elevated. One thing that sort of worked in favor of their current policy stance is, like you said, inflation expectations. The other thing is, sure, you look at the annual numbers, they're elevated, but you look at the monthly prints. Core CPI has been surprising, to the downside for, I want to say at least 10 out of the last 11 months. And so those outcomes are something that they will likely sort of take signal from. The other thing I would say is, if you sort of break down inflation into core goods and shelter, and then the core services ex shelter, the sort of framework the Fed likes to follow, core goods surely has moved up in 2025. You can say that's a tariff story. And, by our estimates, we think that's about to wind down. Much of the tariff pass-through has come through, and we don't expect any incremental inflation on that front. Shelter is, in fact, in disinflation. It's a good, chunky part of CPI, so that's, doing a lot of the heavy lifting. And then core services ex shelter, a bit sticky, but it's still sort of moving in the right direction. So, if you're the Fed, and you're watching that, you could be hopeful that things are moving in the right direction.
Under Kevin Warsh, do you think there could be a real conversation about changing how they target inflation, maybe to target a range instead? Because this is something the Treasury Secretary has spoken about prior.
Yeah, we don't have a view on what, whether he intends to do that, whether he, can do it so quickly. I think when he comes in as Fed chair, I think it's likely to be status quo initially before he can sort of build consensus, get more people on board. We think that the thing that he might want to do first is something on the balance sheet front rather than, we've been asked about Fed communications. We don't think that that's on his priority list.
Get rid of the dots. Get rid of the dot plot. I think people have been talking about that for ages, haven't they? Why not just take the opportunity? Just dump the thing.
That would be sad for me. Because I remember
you want to keep them?
Because when the dots came out, I remember the newsroom had dot cupcakes. And people would come out with different cupcakes with different dots in different places.
I find that sad.
Yeah. I'll get you a cupcake.
I think it's lovely. I think it's really sweet.
Cakes,
they were blue dots.
Is that the only time anyone brought in cakes? We'll talk about this another time, all right?
On the couch.
Have a little session.
Exactly.
All right. Pooja, good to see you. Thank you. Pooja Sriram there of Barclays. Let's give you an update on stories elsewhere. That's sad. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Mediators between the U.S. and Iran are moving closer to extending the ongoing ceasefire before it expires next week. The AP reporting Washington and Tehran had given a, quote, in-principle agreement to extend the truce, allowing for more diplomacy. President Donald Trump warning Fed Chair Jay Powell that he will be fired should he not leave his position by May 15th. The president adding that he has no plans on dropping the DOJ probe on Powell and the renovations on the Fed building. And Starbucks and OpenAI are teaming up. The coffee giant launching a new beta app in ChatGPT today. Customers can type at Starbucks in ChatGPT to discover and customize their drink before finishing checkout on the company's app or website, or just go in store. That's your Bloomberg Brief, John.
It would be easier. Yahara, thank you. Appreciate it. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Brent Schutte of Northwestern Mutual Wealth Management, with stocks hovering very close to record highs.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I think that the U.S. is a clear winner here when it comes to the spike in oil prices. Inflation expectations in the near term obviously are rising. But if you look further into the future, whether you look at the December 26 oil contract that's trading in the 70s, or if you're looking at five-year forward inflation expectations, those things really aren't moving.
Inflation expectations are super anchored. That was Phil Camporelli of JP Morgan Asset Management. Lisa, you said it earlier. We've said it repeatedly on this program. Despite everything that's been thrown at this institution, the Federal Reserve, the criticism from the White House, the oil price shock in the Middle East, somehow inflation expectations are super anchored.
Which is the reason why Phil Camporelli is going to die on the hill of 60-40, continuing to reassert itself, because ultimately that downside protection still is in the bond market. And that's ultimately one of the key questions, given the positive correlation so far this year, that I've been noticing.
It wasn't much fun in March. Let's put it that way. Well, it really wasn't.
It's the 2022 playbook that burned so many people, and that PTSD. I still kind of feel it, but I guess other people have moved on.
Moved on quickly. This equity market's moved on very fast. Prematurely, we'll find out, but moved on very quickly. Equities up again this morning by 0.1%, and going into the cash open about 42 minutes from now, very close to all-time highs. As we count you down to the opening bell, your trading day for the week ahead and into next week looks like this. At 1 p.m. Eastern Time, a White House press briefing. At 2 p.m., the Fed's page book. Thursday, we'll have another round of jobless claims and earnings from Netflix. Looking ahead to next week, Senate confirmation hearing for Fed Chair nominee Kevin Warsh taking place on Tuesday, or at least set to take place on Tuesday next week.
Yeah, I was thinking maybe, because ultimately Tom Tillis really does hold the keys over a lot of these machinations about the hearing, because he has said he is going to oppose this hearing. He is going to prevent Kevin Warsh, who he supports, from getting even confirmed because of the ongoing probe into the Fed's construction.
The president wants to see Kevin Warsh confirmed. He appointed him, of course he does. Wants to see that happen. He also wants the DOJ probe to continue and the Fed chair, the current one, to get off the board. Those three things don't line up right now because of the player you mentioned, Senator Tom Tillis of North Carolina, and the chairman of the Federal Reserve, the current one right now, who said himself that if the investigation is ongoing, he's not going anywhere.
Yeah, so at the moment, basically, you're going to have a standstill until someone blinks. Is it going to be Senator Tillis, or potentially is there a way you can get it through the floor with a number of senators voting, basically via discharge position, or the DOJ drops that probe? I don't see that happening. But this could just live in the hearing. Senator Tillis, I think, will be happy to have the hearing. It's just whether or not there will be a vote to get Kevin Warsh out of the hearing onto the Senate floor.
It's a story for next week in the here and now, very close to all-time highs on the S&P 500. Brent Shitty of Northwestern Mutual writing the following. Investors have taken comfort in strong earnings forecasts for 26. Commentary in the coming weeks will be crucial in validating how businesses are truly navigating higher inflation and higher energy costs. Brent joins us now for more. Brent, welcome. Are you convinced that will be validated, we'll get that validation from the C-suite in the coming weeks?
I am not yet convinced. I think the reality is that investors have focused more on those strong earnings kind of as a security blanket, so kind of a tiebreaker because the economic data has been a bit mixed. But in the interim, they focus more on the fact that the ceasefire is held, and there's this belief that President Trump values the equity markets and that if he has the opportunity, he will pull back, plus those earnings expectations, which analysts are usually slow to mark them down. And so that's where I think they focus on the strong earnings that are out there right now and the expectations. But let's hear what company executives have to say about how they're navigating the future. And I think that will set the tone, certainly for the next few days and weeks as we look ahead.
So, Brent, we know what the calendar looks like for earnings. Which sectors, which pockets of this equity market are you not comfortable with at the moment and you're waiting to hear from management teams?
You know, I think investors have bid back up the markets and they've gone back to their old favorites. They've gone back to the things that had worked for much of the past 3 years. They've gone back to non-profitable tech, ironically. They've gone back to the Mag 7. If you do believe that the economy is going to continue to push along and that the conflict will pull back and that will be just fine, you want to go back to what was in place prior to that, where you saw this broadening that was occurring into small and mid-cap stocks. Which started basically back in October of last year when 5 of the Mag 7 names actually announced earnings, the Fed cut rates, and investors started thinking about a broadening economy pushing forward. That's where I focused more on the long term because I think the shorter term is a bit uncertain, but certainly with the chance of a pullback overall, just given the fact that the economy is still showing signs of weakness despite the comments about resilience.
How much are you seeing a change, though, in overall backdrop based on what's happened in Iran, what's ongoing in Iran, and the expectation that commodity prices are going to remain higher for longer? Do you think that nothing materially has changed?
I like having valuation on my side in a trade because it can bail me out. I don't have to think about the next 3 or 4 months. I think a little bit longer term. And that's where I like to set up there just a bit more from the standpoint of where I think value is and where I think we're going in the longer term.
You talked about rates commentary, so let's go there. There's a question about what the direction of the Federal Reserve is going to look like under new leadership potentially, and the brouhaha that's brewing in the latest soap opera down in Washington, D.C. over the new Fed chair. How closely are you paying attention to this and whether the president's going to drop the probe into the Fed's construction or renovations, and whether we could get Kevin Warsh in the seat by May?
I think it's one of those things that's still out there that beyond the conflict, you still have the questions over what happens with Kevin Warsh when and if he does become Fed president, and what happens with the president's wishes versus what the market is pricing in right now. You have the midterm elections coming up, and you have tariffs, which quietly have come down the past few months as the IEEPA came off, but they're, I think, going to go back up in the future. And so I think there are still plenty of things to worry about. I think the biggest commentary that people are missing just a bit, which I heard the conversation that you just had about inflation expectations in the Federal Reserve. Look, we haven't been, as you mentioned, at the Fed's 2% target for 5 years. And it's been a series of excuses. It was COVID, then it was tariffs, then it was oil, and it was transitory. At what point do people start believing this is more of a permanent thing? And at what point does that begin being priced into the market? And that's where I think you see that risk. On the opposite side, you still have a labor market, which has recovered the past 2 months or 3 months. But if you look at the hiring the last year, since the beginning of 2025, it's all been and more in health services, one narrow segment. And so I think there are still risks out there, but I do think if you look intermediate to longer term and start thinking about that, that's where, regardless of these risks, I like things that are cheaper. I like things that are underinvested. And that's where I would still focus more on those small and mid-cap stocks. And I also think that investors need to think about the 60-40. You need to own some commodities, something that we have owned for much of the past 5, 6, 7 years. That's where I think there are two-sided risks going forward, not one-sided like existed for the past 15, 20 years, where it was just hedged by using long treasuries. Now I think you need to think about inflation being more permanent, maybe tied back to that Kevin Warsh commentary and where the president would like monetary policy to go.
Interesting. Brent, you're a class act. We appreciate your time. Brent Shitty there of Northwestern Mutual Wealth Management. One of the last lines there on inflation being above target for the last 5 years, I think is really important. The chairman was asked about the supply side shocks that we've seen And I would have to say in the news conference, they were almost dismissed as just something that was happening out there that we couldn't control. Some of these supply-side shocks have been choices. They've been more frequent, and some of them have been choices, which is why some people think they're going to see more to come in the future. And this is something you've got to adapt to as an institution, not just sit here and say it's come out of nowhere. We can't do anything about it.
And frankly, there is a structural incentive for nations and for companies to build up their concept of security and independence. And what that requires is investment and more commodities, more of the industrial renaissance that some people were talking about, which leads to higher prices, higher costs that are embedded in the system because of all of these choices, as you say. So this does change the backdrop a bit.
The Fed has also decided to make a choice to basically accept inflation at 3% and not 2%. They made that choice. That's been the story of the last 5 years for sure, and has certainly not been the objective of this Fed to damage this economy, to get inflation down to 2%. We've certainly not seen that with Chairman Powell. Programming note for you, coming up a little bit later this morning, 10:45 Eastern Time. Bramo catching up with Ted Picker, Morgan Stanley. Look out for that. Tomorrow, ramping up coverage from Washington, D.C. We'll catch up with Max Kentner of HSBC, the Barclays CEO, CS Venkatakrishnan, the former New York Fed President, Bill Dudley, and the Franklin Templeton CEO, Jenny Johnson.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
No, Wissam, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The problem we've got as an industry is when the government's overtaxed, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
All right, we are pretty much at record highs on stocks. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Remember this time yesterday, I predicted that we would hit a record high, and we were so far away.
Wait, to be clear, we haven't done it yet.
We're 1 point away from a closing high.
Yes, so you're 1 point away from seeing into the future.
Right. It'll happen today if we get the right Trump truths. Stocks are at 69.67 on the cash trade. Rising hopes for peace. The U.S. and Iran agreed in principle to extend their ceasefire.
And meanwhile, earnings are in full swing. Morgan Stanley and Bank of America traders join Wall Street's record windfall.
And PIMCO bought all $400 million of the bonds sold by Blue Owl. Investment-grade debt, just a big vote of confidence in a battered private credit market.
And that one I'm excited to talk about because we spoke with Christian Strack not that long ago who said everything that's being sold out there does not look good.
None of it's good. But we'll take it at 6.5%. We'll take it.
All of it.
Yeah.
Meanwhile, Matt, I am looking at the banking stocks after they reported earnings this morning. Bank of America and Morgan Stanley rounding out the big bank earnings. It was the same story. Record equity trading revenue for the first quarter. A lot of market volatility that they capitalize on. The consumer is still healthy and spending. Bank of America also announced that they had a $20 billion exposure in private credit. That is the smallest of all the banks that reported that. Bank of America up 1.7%, Morgan Stanley 2.7%.
All right, so big banks are done. We don't have to talk about bank earnings.
No, I mean, we're obviously going to have to talk about
for
the rest of the
next
week, but yeah, they're
couple
done.
of hours. In tech news, Snapchat is cutting about 1,000 jobs as it struggles to reach profitability. That's about 16% of its staff. Meanwhile, Meta and Broadcom expanded their multi-billion-dollar partnership for custom AI chips that will help Meta reduce dependence on suppliers like NVIDIA and AMD. You can see that tech stocks are up across the board, and Snapchat, which, yes, Snapchat still exists, up 7.7%.
Matt, it doesn't only exist, but the kids use it. To be clear, it's popular still.
Really?
Yes. I mean, I'm not one of them because I'm not a kid, but it is popular. Let's get back to our top story, though. The bank earnings. Bloomberg finance reporter Paige Smith joins us. So, Paige, we wrapped all of them up. What's been the big takeaway this quarter?
Thanks for having me. I think it would be very fair to say that all week we've been monitoring the bank earnings basically since Monday when Goldman kicked off this sort of crazy news of reporting equities desks in particular that have been just on a tear. It's been a very, very busy, it was a very busy first quarter for the equities desks across the Wall Street banks, I would say. But to zero in specifically on Bank of America and Morgan Stanley that reported today, both of those firms also reported very strong earnings on equities desks. But just to kind of change tack a bit, since I'm a consumer finance reporter, I would like to focus in a bit on the consumer spending trends that Bank of America reported today because they were also quite strong. And that was certainly a question given all of the volatility and other, questions about the geopolitical uncertainties that we are all sort of considering and talking about at any given moment. So I would say that those were sort of the 2 points to focus on at the moment.
Private credit is something that they're giving a lot more transparency on, and we're going to talk about in a little bit all the debt that private credit and Goldman Sachs also selling debt to support its private credit fund. Does it look like everything's cool? Nothing to see here? We can move on?
I think that there is still runway ahead. I think that we should certainly still be watching it closely and asking questions about private credit at this moment in time. But certainly, I think it would be fair to say that a number of the banks were much more forthcoming and transparent about their exposures to private credit. Bank of America broke out a specific slide in its presentation, sort of explaining, as you said just now, Matt, of, hey, listen, there's nothing really to see here. But certainly a question, and I think it's one that folks will continue to ask about.
All right, Paige, thanks very much for joining us. Paige Smith, they're talking to us about the banks. We are going to continue to talk about banks. Herman Chan coming on from BI, and Morgan Stanley's CEO, Ted Pick, joins us right here on Open Interest. That is at 10:30. Is it at 10:30? Is it going to be at 10:30?
It sounds right to me.
Not at 10:45. It's at 10:30. Okay, 10:30.
I'm nervous to say 100% because what if he's late? What if
That's fair.
Yeah.
I just want to make sure it's exactly at that time because sometimes producers give me times that are not true, and I want to make sure that we value our clients' time.
Yes,
right? So
I think that
10:30 is
yes.
when that is going to happen. Elsewhere in markets, Snap is laying off around 16% of its workforce to reduce costs and reach profitability. Bloomberg Tech's Caroline Hyde joins us to explain this and other big tech news of the day. Caroline?
I'll try and be truthful with you.
Do you use Snap?
No, I'm not one of the almost billion people that use this on a monthly basis. There's a lot of people using this. It's just, it's my au pair, not me.
Right.
That's the generational divide.
It's still not profitable, though, for all of the people who use it.
In our editorial meeting, we were looking at Snapchat's, we were using the MODL function to look at their profitability, or rather lack thereof, because they have never posted a profit.
And that is the focus of activist investors that have recently got involved in the stock, and why we're seeing the executives realize that they need to save almost $1 billion, half of $1 billion, every single year. $500 million is what they're promising to save. But yes, it comes with people. So once again, we've got this sad fact of the matter that we're going to see enormous amount, 16% of the workforce, about 1,000 people go, but also the 300 people that have been actively looking to hire are also going to be stopped as well. Those open positions are not going to be filled. People are backfilling using AI. That is what I'm hearing time and time again from CEOs. If you're going to see someone depart, try and do it with artificial intelligence before you create yet more headcount. That's kind of what they're hinting at a little bit here, but this is a drive for profitability and a drive for a company that is focused on AI glasses, AR glasses, when they're just up against huge competitive threats here who are deploying massive amounts of money into the future of AI and into the beefing up of their capital expenditure. This is a company that is now worth just $9 billion. It used to be worth $130 billion.
Well, so a company that is much bigger that's moving this morning is Broadcom.
Yes.
And they've signed this partnership with Meta. I thought these two were already had ties together.
They do.
So what now?
Meta has already been saying, I want to build my own chips. I want to design them, and I want to have Broadcom help me do that. But remember, they're also deploying some 6 gigawatts of energy compute coming from AMD. They have an awful lot of chips coming from NVIDIA, but most of these large language model makers, providers, labs want to have a little bit more control on their own destiny. They want to not have to sacrifice so much margins going out to the GPUs, the CPUs, so they're going to design them themselves. Look, Hock Tan has actually been on the Meta board for years. He's now going to be stepping down, but the initial deal is for 1 gigawatt amount. That's like 1 nuclear reactor's worth of energy to deploy and compute. So that's the amount of chips that are going to come from Hock Tan's Broadcom to begin with, but it's going to expand. And this is going to be a significant relationship going forward, but it still remains a significant relationship with Meta, with AMD, with NVIDIA. These companies need more. So the broadening is just going to continue.
All right, Caroline, thank you very much. Bloomberg Tech's Caroline Hyde. In other tech news, I feel like I've just got to mention this, Matt. A news update from Allbirds, the shoe company, which famously has dropped a lot in valuation. That got back.
It's literally the worst offender in terms of office fashion in the history of offices.
I'd actually be interested if you've seen this story, Caroline. Let me read you some quick headlines.
Inexcusable.
Allbirds announces expansion into AI compute infrastructure.
Of course they are.
And that they're changing their name to Newbird AI. They're not a shoe company. They're an AI company.
Do they own data centers? Is this why? What is the infrastructure that they already have that they can easily deploy? Because remember, a lot of crypto miners suddenly became compute providers, but is it space that they're offering? Do they have manufacturing warehouses that they can suddenly shove a load of chips into?
It's a great question.
Ask you all those questions,
they're going to have
Caroline.
a $50 million convertible financing facility, and that will allow it to pivot.
$50 million?
Yes, and apparently that's enough to pivot into AI infrastructure, and that's the world we live in.
It's shocking.
Yay.
But not.
I'm an AI company. I don't know about you guys.
I can only hope I can become one. Caroline, thank you so much, Caroline Hyde. Of course, check out Bloomberg Tech every day at 11 a.m. Elsewhere, on the war, the AP reporting that the U.S. and Iran agreed in principle on extending the ceasefire to allow for more time for President Trump, for diplomacy. President Trump spoke on Fox Business.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Joining us now is Tyler Kendall, Bloomberg Washington correspondent. The president also saying to the New York Post yesterday, Tyler, that talks could be happening over the next 2 days in Pakistan. Where do we understand about where these negotiations stand?
Hey, Danny. Well, at this point, our main reporting remains the same, which is that it appears that both the U.S. and Iran are working towards another round of in-person talks. Now, as you mentioned, this headline from the Associated Press that the sides have agreed in principle to an extension of the ceasefire. I will point out we got another headline from Axios earlier today saying that the U.S. has not agreed to that yet, but that progress is moving in the right direction, because at this point, it does appear that diplomacy is still a viable option, though it is an understatement to say there is still so much to tackle, as President Trump yesterday, for example, indicated in an interview that he was not happy with reports that the U.S. had floated to Iran a 20-year moratorium on uranium enrichment, instead saying that he does prefer a permanent ban. Plus, pair that with other headlines from this morning, which do remind us that escalation is still on the table, including from Iranian state media saying that if the U.S. blockade continues, that would be considered, in their view, a violation of the ceasefire, as Iran's military is now threatening to halt any shipments in the Persian Gulf, the Gulf of Oman, and the Red Sea. But Matt and Danny, we got this statement overnight from CENTCOM confirming that they have stopped all commercial traffic when it comes to those waterways. A senior U.S. official has outlined to Bloomberg News that they are dispersing vessels in the Gulf of Oman instead of directly near the Strait of Hormuz in a bid to give the U.S. some more flexibility.
Yeah, it's interesting because President Trump just last night told ABC News he did not see any reason to extend the ceasefire. So we're getting conflicting messages here from the president and AP, but that's not really a surprise. Tyler Kendall, thanks very much, reporting out of Washington. Quick check on what's going on in markets. We're looking at S&P futures and NASDAQ futures that are really little changed, but we closed again yesterday on the cash trade at 69.67, so 1 point away from an all-time closing high on stocks, and much higher than we were, or let's just say higher than we were on February 27th before we invaded Iran together with Israel. Let's get a look at some of the other movers on our radar this morning. Quantum stocks are surging after NVIDIA unveiled AI models meant for quantum computing. So these tiny meme stocks are running
little
hot.
Stocks. I feel like every day there's an IPO of some quantum stocks. So
I feel like Dan Curtis, our London producer, is obsessed with quantum stocks.
Is that why we're talking about them right now?
Well, no.
They're rallying.
Yeah, they're up.
Unfortunately, this is the one I have to discuss. American Eagle, they're climbing after announcing a new campaign with
Why be a hater?
No, I don't know. I don't know why I'm a hater. To be fair, it's worked out very well for American Eagle, so good for them. This time it's to promote jean shorts. It's called Sit for Short, and clearly it's very successful for them.
Some people wear jorts.
I wear jorts. I am not a jort hater.
But I hope you don't wear Allbirds. The shoe company is making a huge pivot to compute infrastructure. That is correct. The shoemaker, Allbirds, that did business casual, something dirty, is now transforming itself into a neo-cloud compute company called, what's it called again?
It's called
Newbirds?
Yes,
Newbird AI. Newbird AI.
And to be clear, Allbirds, they did just get sold to a company that owns a bunch of other apparel companies. So I'm all around confused by this.
It is massively rallying, almost 200% to $7.
Crazy. Coming up on the show, PIMCO buying all $400 million of bonds sold by a Blue Owl private credit fund. We're going to have the details for you next, right here on Open Interest.
9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food, I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with lemon juice. You never use soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make novel style.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Alim, only on Bloomberg.
Getting out of high interest, look what's making headlines around the world. Starbucks is turning ChatGPT into your personal barista. The coffee giant is testing a ChatGPT-powered feature that will let customers personalize their drinks inside the AI agent. Several major retail brands, including Walmart, Target, and Target, I should say, have partnered with OpenAI to integrate ChatGPT into their shopping experience. I don't understand what it could do to coffee, but we'll see, and I am old. S&P Global is warning that a small group of big banks funding hedge funds could pose a growing risk to financial stability. Revenues from this kind of financing at major investment banks, including Goldman Sachs and Morgan Stanley, jumped 25% to $24 billion, with trillions in lending and echoes of Archegos. Regulators are watching for cracks as risk is concentrated in fewer banks. And private credit may be turning a corner. PIMCO bought the entire $400 million Blue Owl bond deal at 6.5%, while Goldman Sachs raised $750 million in a second offering at 2.5%. It's the latest sign that demand is back after months of redemption pressure. It's marked a shift from just a few weeks ago when PIMCO CEO Christian Strack joined Open Interest, expressing his caution about those private credit assets.
A lot of the loans that are out for sale right now are pretty bad loans. So, you know, we've seen some blocks of those, and they're not clearing at a price where we would be interested in buying them.
Let's get more on PIMCO and Blue Owl with Bloomberg credit editor Bruce Douglas. Bruce, I just wonder, listening there to Christian saying they're not at a price yet where we jump in, is that a sign that there was a steep discount on some of these assets that made it attractive for PIMCO to jump in and buy all $400 million worth of them?
Well, essentially, they're buying an investment-grade rated product for a yield of about 6.5%. So that's pretty attractive pricing for something that is ultimately, even if it's at the bottom of the investment grade scale, is quite highly rated. So yeah, I mean, PIMCO has been a long-standing critic of private credit. So the fact that it's now buying in this big way is suggesting that maybe the private credit winter is starting to thaw.
So contrast that with the Goldman Sachs bond deal. It's larger, $750 million, but I see a 2.5% figure there rather than 6.5%.
Yeah, I mean, I think that it's 2.5% over treasuries there, so that's still a kind of decent spread. And I think that you know, the Goldman Sachs deal, again, that's a non-traded business development corporation. That's obviously the kind of thing that we've seen a lot of these redemption requests from in recent months. But what this really shows, both the PIMCO buy and the Goldman Sachs sale, is that institutional capital is kind of back in a significant way in private credit. The jitters we've seen in recent months have come from retail investors keen to get their money back and finding it's not quite that easy when you have invested in illiquid assets. But now institutional capital appears to see value in private credit. We've had BlackRock the other day talking about strong demand from institutions, and that's really what these two big debt sales in the last few days have shown us.
By the way, 2.5% over treasuries is then, I mean, it depends on obviously the duration, but 10-year treasuries are 4.25%, so that's more than 6.5%.
Yeah, so it's a 5-year tenure, I think. So yeah, it's a decent spread.
Bruce, just quickly, in terms of institutions, I mean, were there ever any concerns about them? Did they ever back out? That feels like a pillar that's held up well, but don't they need retail, some of these giants, if they really want to achieve the growth that they're targeting?
Well, it is obviously a very interesting point in private credit's development. It's coming at a time when, you know, the Trump administration is pushing for opening up 401ks to retail investors. And yes, clearly retail is seen as a potential source of growth, but there are other sources of potential growth, particularly from the insurance industry, that private credit may be looking to tap for the next stage of its development. So obviously the jitters in retail, we don't know whether they'll be passing or whether they're here to stay, but private credit does have other potential sources of growth as well.
All right, Bruce, thanks so much for joining us. Bruce Douglas there. Appreciate your reporting and clarification there on the spreads. A really interesting story. We'll continue to follow this. Coming up, Nimrit Kong says markets are underappreciating risks from the war as earnings kick off. She'll join us next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We have a
classic energy price shock unfolding across the world as we speak. That, of course, will create demand destruction. It will cause economies across the world to decelerate. The risk of a recession has increased, and central banks are making some really difficult decisions. This really is a very, very treacherous moment for the world economy.
Citadel CEO Ken Griffin speaking at the Semaphore World Economic Forum, the 2026 summit. Joining us now is North Star Asset Management Chief Investment Officer Nimrit Kang. Nimrit, great to see you. And is this a treacherous moment for the global economy? And if so, why are stocks less than 0.2% away from all-time highs?
Danny, it does feel like a treacherous moment, but we've been here so many times before. But this is a market that just wants to keep going up. You know, we've been conditioned over the last 18 years to buy the dip, and that's what the market is really responding to. But you're right. I mean, under the hood, there's a lot of violent rotation going on. It again points to we just want this market. This is a market that wants to keep going up, but not really sure how. So we keep bouncing from a sector to sector, hoping that something's going to actually work out.
So what has been working out? What does the rotation look like to you throughout this 6 weeks of war?
Yeah, I mean, you look at it, just take an example of consumer staples. You know, earlier, first 2 months of the year, we had a big defensive rotation. Also, small cap value, those were the sectors outperforming. Then we go into the war, everything sells off pretty much evenly, stagflation fears, and then bouncing out of the war, or bouncing, we're still in it, but bouncing in April, we've seen where, you know, consumer staples is kind of flat, and we've seen a resurgence again of your growth sectors, some of the others areas that were lagging behind. So this complete rotation going on.
All right, Nimrit, we're going to keep you with us through the opening bell. In terms of futures, we are seeing just a very slight gain. We'll be back with the NYSE and the NASDAQ. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're not seeing a lot of action in futures, although green arrows and they're moving higher to the upside right now. Over 7,000 on S&P futures, over 26,000 on NASDAQ futures. You hear the opening bell. We see down at the New York Stock Exchange a few people ringing the bell for Viking.
Not a very big showing.
Exploring the world in comfort.
Maybe everyone else is on a cruise.
And without kids.
Yeah, what a shame.
There's no kids on a Viking cruise.
I have bad news for you when you look over to the, oh no, there's one small child. No children at the NASDAQ.
No children here? Yeah, but some bros that are stoked at the Metals Royalty Company ringing the bell there at the NASDAQ. Yeah, there's the Viking ad, it sounds like, I don't know, they hate children?
No, but it's supposed to be like luxury cruises. They're
Yeah.
more expensive. They have
Yeah.
less people. I think they're like the anti-Disney cruise.
They're more like river cruises.
Yeah, exactly. So you don't want children on that. You know, it's adults, no one running around. You spent a lot of money. You want calm, you want peace. So yeah, they don't
Is
have
it just adults or is it like old people?
I have no idea. Can't say I've ever been on one, but I know they're
I'm
expensive.
guessing.
I know that they're very expensive cruises and they're doing well. I'm looking at Bank of America and Morgan Stanley shares here at the open. Both of them posting record equity trading revenue for the first quarter. And if I'm not mistaken, every single bank posted record equity trading. It's all about market volatility. Also had a healthy consumer. They've also all been breaking out their private credit exposure. Bank of America has one of the smallest, $20 billion in private credit. Just as a comparison, JP Morgan, they're bigger, so this makes sense, has $50 billion. Shares of Bank of America up 3.7%, Morgan Stanley 3.5%, Matt.
All right, in tech news, Snapchat is cutting about 1,000 jobs as it struggles to reach profitability because Snapchat is only for kids. 16% of the staff has to go. Meanwhile, Meta and Broadcom, back to, again, the old people, expanding their multi-billion-dollar partnership for custom AI chips that will help Meta reduce dependence on suppliers like NVIDIA and AMD.
Should really have Allbirds in the tech board now that they're a tech AI infrastructure company.
Do we stereotype the people that wear Allbirds?
What, that they're all tech bros? I think you can stereotype them.
Yeah, no, I know. I was just wanting to group them. You know, we need to put everything in a box.
Yes, I think
today.
I think that's probably right.
Still with us is Northstar Asset Management Chief Investment Officer Nimrit Kang. Nimrit, the AI, I mean, the story with Allbirds is pretty hilarious, but the AI story just has legs. I mean, every day we have multi-billion-dollar deal headlines. By the way, today is Deals Day. It's Wednesday, so Danny's show kicks off at noon. Do you continue to invest in this? Because a lot of these companies have really lost some steam. I mean, Microsoft is still down like a fifth year to date.
Yeah, I think the AI story is two different parts, right? So the market is pricing in the semiconductor stocks. That's where still the momentum is. That's where the price action has been. And the market is pricing those on the near-term cash flows. We have a pretty strong security that these companies are going to see revenue, profits, earnings, cash flows. Great. And that's what we're seeing on one side. The other side we are seeing is the, taking out of the companies on the software as a service spectrum, the SaaS eclipse that we've been talking about. And that's you have companies like Microsoft, but also CRM, Intuit, all of those companies lagging significantly because the market is saying we're not going to price their short-term cash flows. We're going to look out further, 20-year horizon, and maybe these companies don't exist in the same way that they do today. So two different bifurcations going on at the same time. We think that, yes, the AI is here, it's real, but now it's time for the rest of the economy to start to seeing the diffusion and the benefits from the AI penetration. Company after company we're seeing is implementing AI, and that's where we see the real momentum coming to bear for the AI. story.
Also, when it comes to AI, our team reporting this morning that Anthropic had another fundraising round at valuing it at $800 billion. OpenAI's latest fundraising round valuing it at even more than that. It could be an IPO of something that's like $1.2 trillion. When these things list, considering that they're listing at already punchy valuations, is that something you'd buy into?
Well, one of the things is that private markets have become the valuations. Usually you used to have to wait to come to the public markets to really get that uplift in valuations. I think the story's been turned upside down. There's been so much demand, so much liquidity, money chasing in the private markets that those valuations have already reflected a lot of good. The other part of the whole story, Danny, is that let's not forget the Microsofts of the world, the Alphabets, all these companies own significant stakes in these private companies, right? So if you do it the other way around, the public market is not fully valuing the valuation that's being reflected on the private market. So my answer would be, we'd wait for the public markets to give you the true valuation range for these companies.
What do you see as an opportunity in terms of things that have lost value during the war, during the first half of the year? I mean, with the kind of rotation that we saw, we've been talking about the fact that in the midst of this war rally, only 200 of S&P 500 companies have been up. The breadth, is to the downside. So is there anything that you like? Are there any bargains out there?
Yeah. Well, I think I'll start with the software stocks have become the value stocks, right? And that's very attractive. And here's why.
Not private credit?
I'm sorry?
Not private credit?
No. Well, private credit, I think there's time to go. We're going to let that play out for a little bit. But on the software side, these have become real value stocks. And yes, there is a major reconfiguration that's required of business models, but the business processes are same, Matt. I mean, take a look at CRM. Every business still needs to capture their customer information. Before, back in the day, it used to happen in file cabinets. Then we came with this different types of softwares like a CRM to capture that information. Now we have AI. So different tools in the toolbox, but the business process is exactly the same. And some of these companies are going to be able to introduce more tools to capture that. I mean, doing a plug here for Bloomberg and BAsk, I used to have to do these queries using BQL, BDP. Now I just do Ask B, right? And that gives me all that information right there. So that's your way that some of these companies are going to adapt to this challenge posed by AI.
It is pretty incredible to see some of these changes, Nimrit. But just taking a step back on this overall economy, I was having a conversation with someone yesterday who works for one of the biggest real estate asset managers who said that there actually is this level where the K-shape doesn't capture everything. This middle level, that it's not just AI, but it's the lack of visas for highly skilled workers coming into the United States that's being challenged. You're also getting less visitors coming into the U.S. because if they know they have to spend hours speaking to a Border Patrol agent before they're finally allowed in, maybe they're not going to travel as much in the U.S. We've talked a lot about consumer stocks being challenged by lower income consumers, now adding energy on top of that. I just wonder if there's something else happening underneath the surface, if it's the really, really high part of the economy, those really high net worth individuals that are supporting us, but like everything else below it is challenged, and what that means for your investment outlook.
Absolutely, Danny, and I can vouch for that. I was at the national parks a couple of weeks back, and it's $100 fee for if you're not a U.S. resident. So again, all these different pieces coming into play, and maybe a family of four traveling from outside of the U.S. is not going to be inclined to come and visit our national parks. But anyway, leaving that aside, I think that there's a real thing. There is the high end that's supporting. The lower end that's struggling. We have seen a lot of data points around that. But what's happening also is that there's, on the whole aggregate level, people are holding on to their jobs. It's a low hire, low fire environment. and they're barely making it, but they're still holding on to their jobs. And they are getting, Ed Giardini talks a lot about this, how we have this huge inflow from baby boomers who are using their wealth and their resources to support the next generation who might be just barely making it with their expenses and income. So there are all these places to be. For our investment, that does mean that we want to be diversified overall, because you just don't know what's happening on a day-to-day basis, but also looking for those companies that are going to continue to offer value to the consumer. That's going to remain a paramount framework for us as we navigate this very difficult market.
All right, Nimrat, we're going to have to end things there. Thank you so much for joining us, North Star Asset Management Chief Investment Officer Nimrat Kane. Let's get a check on your equity market right now, because at the price we are currently trading at 69.86, if we close at this level, it will be an all-time high, the previous high being 69.78. What is leading us there? Not huge gains, but again, it's enough after 10 days of a rally. That would be the best 10-day rally since 2020. So we bounced back even better than we did in Liberation Day. Microsoft, Broadcom, those both leading the pack. Broadcom signing a deal with Meta to use their chips. Meta also in the top of the pile. Oracle, so a lot of the AI names having a very good day. On the downside, Amazon's a little bit weaker. Chips are not doing well today for whatever reason. Lam Research, Micron, those are in the bottom of the pile, as is Caterpillar. SanDisk, again, another chip name. Looking at the individual sectors, you do have Infotech being one of the best performing, but financials doing well. We heard from Bank of America and Morgan Stanley rounding out the big bank earnings with a very strong trading revenue coming in. Materials, utilities, consumer staples, those are at the bottom of the pile. But again, Matt, at 69.87, well on our way right now to another all-time high.
69.87. Okay, that's 69.87. That's the number? 69.78.
Well, 78 was the prior record, and we're at 69.87 right now, yes.
Got it. We just need to get to around 7,000. Coming up, banks are reporting a stellar quarter as market volatility leads to trading revenue records. Just massive records, knocking the cover off the ball at Goldman Sachs, JP Morgan, and others. Herman Chan of Bloomberg Intelligence breaks down the earnings for us next. This is Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's
biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
15 minutes into your trading day, let's get some top calls, what all the analysts are upgrading and downgrade. First, we have an upgrade from Piper Sandler. This for Cloudflare, calling it an AI winner to own and pointing to the recent pullback as a rare entry opportunity. Shares up 3.4%. Next up, Jefferies cuts PSEG, I guess, saying that a data center deal for its nuclear plant looks unlikely as ratepayer rules could discourage hyperscalers. The firm sees weaker rate growth from New Jersey regulations and warns that new rules could add more pressure. Those shares down 9/10. Finally, Wall Street is weighing on Bank of America's solid quarter. Evercore calls the results broadly better, while noting that investors may be underweight and concerned about costs. Baird is highlighting steady buybacks and execution. Matt.
All right, market volatility has created a massive windfall for Wall Street banks, with Bank of America, Morgan Stanley, Goldman Sachs, and JP Morgan all reporting record trading revenue. Joining us now is Bloomberg Intelligence Senior Banks Analyst Herman Chan, and it has been, Herman, amazing to watch. The banks have made so much money. The energy companies have made so much money. This war has been very profitable for also the defense industry, I imagine.
That's right.
But what about the massive miss we saw at Goldman Sachs? I can't get over on FICC trading. Right. It was $800 million less than analysts had anticipated. I think a 10% drop compared to the same quarter last year.
Right.
Did that not show up at other banks?
It didn't show up. It seemed like that issue was more specific to Goldman. So having Goldman kick off the earnings season for the banks this time around, it sort of introduced some questions on FICC trading across the group. But I think resoundingly, with the results from Morgan Stanley today, from the results of JP Morgan yesterday and Citi yesterday, that FICC trading was solid. Bank of America did post about flattish FICC trading, so I would point to them as on the mixed side as well.
Most of these shares, I mean, Morgan Stanley shares higher by 4.5%. Why wasn't this priced in? I mean, there's a lot of volatility. We assumed trading would be strong. Right. And it's not exactly a thing that they can, I mean, they can repeat it as volatility is strong, but it's so markets dependent. Right. So what wasn't priced into these banking shares coming into this earnings season?
I would say there was a lot of optimism coming into the quarter. I mean, the industry and the analyst community was expecting about mid-teen earnings growth year over year. So really, you know, enthusiastic expectations coming in, and the banks have met that. And there's been some puts and takes, right, for the banks that I cover, some issues on net interest margin from Wells Fargo and some reduced expectations on NII from JP Morgan. But then on the other hand, Bank of America really offered some solid guidance on net interest income for the full year as well.
What have they told us about private credit? I mean, we've heard, what, $36 billion in exposure from Wells Fargo?
20 from Bank of America today, 22 from Citi.
Smaller number. Yeah. But what about the money that they make from lending private credit and private equity companies money to do these deals? I mean, what are the fees like for these big banks?
Yeah, the fees are great. You've seen it in the investment banking numbers, that those were still fairly solid quarter over quarter and year over year as well. So there's some really strong results on the fee side of investment banking, particularly on equities and fixed income. M&A might be a bit more choppier heading into the rest of the year, but the deal backlog seemed fairly stable, so we're enthusiastic despite all the volatility that we're seeing in the macro side of things, that things can be sustainable going forward.
We also had some of the regional banks, PNC, First Horizon, among them. I know it's a sector you also closely watch, Herman.
That's right.
Did we learn anything?
Yeah, PNC's numbers were great. They talked about some higher loan growth for the rest of the year. That's been working out really well for them. They just closed the first bank deal that adds to their presence in Denver, which is expected to work well. M&T also reported today a bit mixed trends there in terms of some softer guidance for net interest income for 2026, really related to some deposit growth and some softer consumer lending.
All right, Herman, thank you very much for joining us. Herman Chan of Bloomberg Intelligence, a very busy week for him. And in the next hour, we're going to hear from Morgan Stanley's CEO, Ted Pick, right here on Open Interest at 10:30.
I believe it's actually at 10:40. I don't know why we keep saying that. I'm pretty sure.
Are you sure?
Yes, at 10:30, we interview the CEO of WeWork.
Okay.
So it can't be 10:30.
That's a good point. Well, in the 10 a.m. hour, watch the whole thing, because this interview will happen. Coming up, Stellantis gets a boost from the U.S. with North American shipments jumping. Is the turnaround taking hold? That's next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks right now. We do see the S&P 500 up only 0.1%, but 69.74 the level here. NASDAQ up 0.2. If you take a look at oil, it continues to, well, it's only down 0.05 on Brent, but 94.72 is the level there. WTI also bouncing back and forth. We'll find it. We'll show you. NVIDIA right now up 1%, almost. That's helpful. Broadcom gaining 3.7% on its deal with Facebook. Snap doing well. Also, Allbirds. This is an astounding story. Well, it was.
Oh, no. It still is behind you if you look on the other side.
I'm happy about this, though. Okay. Who knows what's going on? Ted Pick is joining us at 10:40. The CEO of Morgan Stanley is coming on this network at 10:40. So mark your calendars. We don't want to waste your time.
Yes, 10:40. Okay, I see you have Stellantis there, Matt. Should we talk about Stellantis?
Yes, Stellantis shipments are rebounding, up 12% globally in the first quarter, led by a 17% jump in North American sales. Joining us now is Bloomberg Autos reporter Gabby Coppola. And Gabby, I want to say this is because of the Hemi, right? It's because they brought the V8s back that they're selling more vehicles.
Matt, I'm so happy to tell you that I think you're right. I think that is part of what's driving this. That was a kind of strategic blunder that they ever took it away in terms of, pleasing the customer. And the fact that Ram has basically, they had some manufacturing problems, some issues. They got those worked out. So they're coming off a low base, but yes, and they've brought back the Hemi, put it in the Ram 1500, and that is what consumers wanted. And if you just look at the Ram light-duty pickup truck deliveries in the U.S. in the first quarter, they were up 27%. Wow. So That helped a lot. Also, they have the new Jeep Cherokee hybrid that just started delivery. So they're finally getting that new product out the door, and that's helping them, recover shipments a bit.
Is it enough? I mean, they only just earlier this year, Gabby, took a $26 billion write-down in charges. I mean, that's pretty massive to deal with.
Yes, it is. And, they certainly weren't alone with that. A lot of automakers, a lot of that was, they ordered all this tooling and equipment and parts to make electric vehicles, and then they scrapped the plan. So they had to pay the suppliers for that. So is it enough to be profitable? I think CEO Antonio Filosa has said that North America business will be profitable this year. That's what they're hoping for. The rest of the entire company, TBD. And I think they're looking for solutions for other regions, but they've really, put most of their eggs in the basket of a rebound in North America, and particularly the U.S.
They were one of the first companies, Jeep was one of the first companies to pull its factories out of China as, things got a little bit heated. And now I read that they're thinking about going back to a partnership with Dongfeng to make vehicles there, to make vehicles for China, to make vehicles for Europe. What's the story with that?
It's very interesting. So you're right. Back under the previous CEO, Carlos Tavares, I think to his credit, he sensed that there was going to be sort of just the China car market was going to be a bloodbath in terms of profits. And so he got out of there, and they broke up with Dongfeng. But now, they want to get back. And the bigger issue is that Stellantis has a lot of excess capacity in Europe. And even though they had some rebounds, in shipments, like with the new hybrid Fiat 500 made in Italy and things like that, Maserati, Alfa, they need new markets, and they need someone to, help absorb some of that capacity. So the talks that my colleagues in Europe reported today is that they are talking about getting back together with their Chinese partner, Dongfeng, where Dongfeng could possibly maybe use some of the production or build and use up some of the capacity in the European plants, and in return they could make some of Stellantis's models in China and help them access the Chinese market again.
All right, hot story, Gabby. Really appreciate you joining us. Gabby Coppola there talking to us about Stellantis. I will say, if you listen to my podcast, Hot Pursuit with Hannah Elliott, you'll know that I love the V8s like every other American. I own a 392 Hemi in my Challenger. But I will say the Hurricane Inline 6, the high output motor with 510 horsepower, is still a fantastic motor, even for the truck. I drove it in the Ram 1500.
I'll take your word for it.
Yeah. All right, coming up in the next hour, Goldman Sachs' Catherine Bordelmay joins us, plus Bank of England policymaker Megan Green, and an exclusive interview with Morgan Stanley CEO Ted Pick at 10:40. This is Open Interest.
Estava sitiada.
Isso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision
of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Home for original reporting.
I'm Deborah Rodriguez. The Pentagon says the U.S. is sending thousands more troops to the Middle East, despite a new assessment from the president on how long the war will last. He told Fox Business this morning he thinks it's close to over.
I think we're doing very well, but it only matters what the end result is, and maybe it'll happen fairly soon. Who knows?
Iran's military is threatening to block the Red Sea if the U.S. doesn't end its blockade of the Strait of Hormuz. CBS's Elizabeth Palmer reports from Tel Aviv.
CENTCOM reported yesterday that in the first 24 hours of the blockade, 6 merchant vessels obeyed warnings from U.S. warships to turn around and return to port. 2 of them, says CENTCOM, had visited an oil loading facility on the Iranian coast, but not in that little narrow pinch point of the actual straits.
Gas prices in the U.S. are at an average of $4.11 a gallon today. Californians paying about $5.88. Chevron executive Andy Walls suggestion to CBS News.
Look, people should try to drive less. They should try to conserve energy. We should be doing that all the time.
President Trump told Fox Business today he will fire Fed Chair Jerome Powell if he doesn't resign when his term ends next month. They've been at odds over interest rates. Powell has the option to remain as a voting member on the Fed's board until 2028. More dangerous weather has hit the Midwest.
Severe storms, including confirmed tornadoes, caused widespread damage across eastern Iowa, Wisconsin, and northern Illinois. David Magno lives in hard-hit Sussex, Wisconsin.
Someone called me. I go upstairs, and you can see every tree is down in the backyard. One hit the neighbor's house. I got one of the garages right into the roof. Yeah, it was wicked.
Heavy rain has caused flooding issues across parts of Wisconsin, Illinois, and much of Michigan. More severe weather is possible today from North Texas, north and east to Pennsylvania. Jim Crisula, CBS News.
Honda is recalling 440,000 minivans. WWJ's Jeff Gilbert has details from Detroit.
25 people have been injured after the airbags in these 2018 through 22 Honda Odysseys deployed suddenly, not from crashes, but from things like striking potholes or speed bumps. The issue traced to an airbag module. Dealers will either reprogram or totally replace that module.
It's April 15th, and if you haven't filed your taxes yet, don't blame your accountant. William Bennett's a CPA in Warner Robins, Georgia.
They come in a couple days before the deadline, and they expect us to create a miracle and get their taxes done in a short amount of time.
The Dow is down 105 points in early trading. This is CBS News. World Cup fans may have to pay a small fortune just to get to the matches in New Jersey.
The Athletic reports New Jersey Transit may charge more than $100 for round-trip train tickets from New York Penn Station to MetLife for the 8 matches there. That trip usually costs just under $13.
I think it's a little crazy.
NJT says the prices have not been finalized. New Jersey Governor Mikey Sherrill says it'll cost $48 million to provide that NJT service.
We were not going to be paying for moving people who are viewing the World Cup on the backs of New Jersey taxpayers and New Jersey commuters.
Michael Wallace, CBS News, New York.
Social media looks Maxer Claviculars just shared an update after he was hospitalized in Miami for a suspected drug overdose.
You want an Audi?
20-year-old Braden Peter says he's home now. He says substances are, in his words, just a cope, trying to feel neurotypical while being in public. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well as streaming live on Bloomberg.com. This is the Bloomberg Intelligence Program. We got red and green out there on the tape here. We'll get to that today. Jennifer Welch, Chief Geoeconomics Analyst at Bloomberg Economics, will join us on the latest out of Iran and what the economic impacts might be going forward. Cheryl Pate, Senior Portfolio Manager at Angel Oak Capital Advisor, get her thoughts on these markets. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence, talk about all things tech. I'm waiting for some of these IPOs of these big AI companies like Anthropic and all that kind of stuff.
Remember when unicorns were $1 billion?
Yes.
And what happens when a startup is like $800 billion or $1 trillion?
Exactly. So we'll talk to them about that because I think we're going to get a lot of those deals this year. So we got a lot of stuff coming up. And around 10:40-ish, Ted Pick, Morgan Stanley CEO, is going to speak with Bloomberg Television anchor Lisa Abramowitz. It will be interesting. So we'll bring that to you when that happens. We got a lot coming up over the next couple of hours. Let's kick it off with Alexis Christopherson and a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. We have got a mixed market at the moment with the S&P 500 up 10 points, but the Dow Jones Industrial Average is giving back about 150. NASDAQ Composite, though, extending its longest winning streak since 2021. The NASDAQ now up about 120 points. Brent crude is lower after spending most of the morning higher, down now about 1/3% at $94.50 a barrel. West Texas Intermediate also reversing an earlier advance, now down about 1/3% at $91 the barrel. As for the Bloomberg Dollar Spot Index, little changed at 1193.46. We've got yields higher, the 2-year 3.76%, 10-year at 4.27%. Got some stock news we want to get to. Shares of Bank of America up now more than 1%. Morgan Stanley rallying 4.5%. Each of those big Wall Street banks posting blowout quarterly earnings on the backs of record stock trading revenue. We've also got shares of Snap, the parent company of the social media company Snapchat, up 6%. It's going to lay off about 1,000 workers, or 16% of its workforce, to reduce costs. And shares of GitLab rallying more than 4%. The maker of software development tools says it's expanding its collaboration with Alphabet's Google Cloud. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate it. We have Scarlett Fu here, Paul Sweeney. We're at Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. Red and green on the screen as Alexis was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christina Aquino. Christine, what are you looking at today?
All right, Paul, let's take a look at the green stock this morning. That is Bank of America, ticker BAC. We did, of course, get results from that bank, part of a week of big earnings for Wall Street banks that typically kicks off the earnings season. So Bank of America, again, reporting its highest quarterly revenue in more than a decade. That seems to be a theme for Wall Street banks reporting this week, particularly for the equity trading side of things. That climbed 30% in terms of revenue to $2.8 billion in the first quarter. Fixed income trading rose less than 1% to $3.5 billion, so a little bit more disappointment there. But overall, good numbers in terms of trading revenue for Bank of America. Deal making also making a comeback there. Their investment banking revenue of $1.89 billion beat analysts' estimates. And of course, no worries about private credit. Bank of America did disclose about $20 billion of private credit exposure, but they did say that the underlying collateral of those loans are showing, quote, strong earnings, and they're often in the senior credit stack. So all good. It's all fine, guys.
It's all fine. All right. So we're done with the big banks. Let's move on to something in the tech sector.
Absolutely, Scarlett. Let's take a look at Broadcom today. That is also in the green, ticker AVGO. Those shares are up more than 3.8% now at the moment, extending those opening gains. And so we're getting a little bit more detail of its partnership with Meta. We know that they are, of course, in a deal to make custom chips for Meta to deploy its AI infrastructure. So now we know that the partnership also includes a commitment to develop chips that will deploy more than a gigawatt of computing capacity. So for context, more than a gigawatt is equivalent to electricity that can power 750,000 U.S. households at any given time. So that's a lot. And the arrangement is also expected to be the first part of a sustained rollout that will be worth billions of dollars. Part of the deal is also Broadcom CEO Hock Tan will be transitioning off Meta's board into an advisor role.
Okay. All right. Well, back in the day when I did wear ties to work, I wore Hermes ties.
Hermes ties.
What's going on with those guys?
Well, not good, Paul. Their shares in Europe fell by a good bit, and we're seeing those declines reading across the ADR. So the ADR ticker is HESAY, and they are down nearly 8% at the moment. And, you know, in Europe earlier, the shares fell as much as 14%. That is the biggest on record. Disappointing earnings across the board. Missed estimates. They were dragged down by weak performance in Asia Pacific and France. And analysts already had low expectations because they were underperforming the broader luxury sector. So imagine undershooting even extra low expectations. And really the issue, it seems, is that they have a managed scarcity-driven model, right? So they make their products purposely scarce. If you've ever tried to buy a Birkin bag for somebody that you know or love, you probably know that it's nearly impossible, unless you're Kim Kardashian or something. But it seems like that strategy, it has carried it before in previous crises. It doesn't seem to be working now.
It works until it doesn't work.
Yep.
I don't know. Have you ever even tried to look into a Hermes bag? A Birkin bag?
No, not at all. I mean, the ties, they were a premium price product for me, but I liked them. And so, but I just downsized from like 8 bedrooms to 2. So I had to get rid of a lot of stuff, including my ties. So I
don't think I've seen you wear a tie in years.
No.
All right.
So I gave it away.
Christina Aquino, thank you so much. Christina Aquino is our Bloomberg managing editor for Markets Live. And for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, we are looking at a market that is tentatively in the green. If you look at the S&P 500 and the NASDAQ, oil prices are also, for a change, doing nothing.
Yes, they're kind of steady. They were a little bit higher this morning, which kind of surprised me. They're flat right now, but we did have, I guess, the latest social media post from our president suggests that maybe the talks are still potentially on the table in the very short term, and maybe something can still get done from a negotiating standpoint.
And that's all we have to really work with. That's what investors are dealing with right now. So let's bring in Jennifer Welsh. She is Chief Geoeconomics and Analyst at Bloomberg Economics to talk a little bit more about what you would look for in any kind of potential peace negotiations or settlement talks here, because we had some over the weekend and they didn't go well. And now the reporting is that perhaps the two sides will come together and give diplomacy another try. How do you think through what could actually be durable?
Well, I have areas of optimism and pessimism. On the optimistic side, I think it is very likely that the two parties will come back together for talks. We don't know exactly when that would happen. We don't know even where they would happen. But it does seem that both sides are preserving the option for negotiations, Tehran even taking some steps to avoid escalation in the current blockade. Where I'm pessimistic on is the odds of reaching a lasting and comprehensive deal that really brings normalcy back to the region, and in particular to the Strait of Hormuz. The two sides remain far apart on a number of key elements, including what happens to Hormuz after the war. But it's also important to note that these talks are just the U.S. and Iran. Israel, which is another party to the conflict, does not seem to still be a direct member of the talks. And its conflict in Lebanon is an important area of consideration for Tehran, which wants that to end before it agrees to any lasting ceasefire. So I think markets are betting on a deal that would be full and comprehensive, but that may not be what we get even if talks were to happen.
And Jen, I guess one of the big sticking issues is the Strait of Hormuz, as you mentioned, and some of the experts we've talked to said you only secure that thing if Iran agrees to secure it, because that genie's out of the bottle, that genie being, hey, everybody's used the strait for free and unfettered access and trade. That's no longer the case. How do you deal with that?
That's absolutely right, and I think that's one of the challenges the U.S. has faced over the last 7 weeks of this conflict is you cannot really militarily alone reopen the strait. You can do things like escorts, you can do things like the blockade to try and secure it, but there is going to be that perennial threat of Iranian attacks on ships, and that will always have a constraint on how much tankers are willing to take those risks and flow back through the strait. So going into these talks, it seems that the U.S. might be open to some sort of joint tolling venture with Iran that could lead to a reopening of the strait, but that's not a return to the pre-war norm. And I think it still leaves a lot of questions on the table for the global shipping industry and for other oil producers in the region.
And oil importers as well, Jen. I want to get your take on what this means for China, because the president delayed his summit with Xi Jinping of China until May because of the ongoing war in Iran. But now that you have the Strait of Hormuz not being accessible, that kind of throws a monkey wrench in the works there.
Yeah, absolutely. China to date has weathered the war better than a lot of other energy-dependent economies, in part because Iran was still exporting through the strait, even when everybody else wasn't, and China was willing to take those barrels in. If Iranian oil isn't getting out, that's going to be a hit to China's imports at the moment where it's already having to draw on its reserves. Beijing's been careful in the last few days, but it's clear that it's unhappy about the situation, and I think we are very likely to see the longer this blockade lasts, the greater the odds that there will be some sort of decision point where a Chinese-linked ship attempts to challenge the blockade, and the U.S. is going to have to make the decision on whether or not to turn it back. And if it does, there's real cards that Beijing could play here to try and push the United States to allow an exemption, including playing that critical minerals card we saw them play so well last year.
Jennifer Welch, thank you so much. We appreciate that. Jennifer Welch, she's a chief geoeconomics analyst for Bloomberg Economics based in Washington, D.C. You know, you talk to the logistics people, and all they say is, hey, all I know is 7 weeks ago, my ships could go back and forth there, no problem. And that's the way it's been forever. That's not the case. I'm not sure we get back to that point.
Not right now.
That would not be good.
I mean, right now, let's just work on the first thing, which is getting those ships through. Yep. And if they're going to be paying $2 million per ship through Bitcoin or some other cryptocurrency, that might be one way to do it, or paying per barrel of oil.
Yep, we'll have to see how this plays out. Hopefully they can get the two sides back together soon, get those discussions going. S&P up 18, the Dow minus 140, and the NASDAQ up 150 points at 0.7%. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. We've got stocks holding near record highs as traders eye confirmation of new talks between the U.S. and Iran. And, of course, a fresh batch of corporate earnings reports, including strong results this morning from both Bank of America and Morgan Stanley. Taking a look at stocks right now, S&P 500 up about 20 points. The Dow, though, is down 120. And the NASDAQ composite is rallying 151 points. We've got Brent crude basically unchanged at $94.71 the barrel. WTI crude down 0.25% at $91 the barrel, and the Bloomberg Dollar Spot Index little changed at 1193.08. We've got shares of Broadcom rallying today. The chip maker expanding its partnership with Meta Platforms to provide the Facebook parent with more custom AI chips. We've got shares of Broadcom now up more than 3.5%. Shares of Robinhood racing ahead nearly 8%. That's after the SEC lifted a restriction that required retail investors to have at least $25,000 in their accounts to make more than 4 day trades in a 5-day period. And shares of American Eagle Outfitters up more than 5.5% after announcing actress Sydney Sweeney will return in a new ad campaign after last year's controversial ads featuring her. This new campaign with actress Sydney Sweeney is going to focus on summer apparel and jean shorts. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Scarlett and Paul.
So they're going to continue to press that jean angle then.
You better believe it, because it really did wonders for not only the stock, but for business.
All right. See, advertising works.
There is no bad press, right?
Yeah,
Isn't there a saying like that? Yeah.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Banks reporting numbers over the past few days, generally really, really good numbers out of the capital markets businesses, and Morgan Stanley also highlighted their wealth management business shares. Let's break it down a little bit. We can do that with Cheryl Pape, Senior Portfolio Manager at Angel Oak Capital Advisors. She's also a fellow graduate from the Fuqua School of Business at Duke University, so we know she's smart. Cheryl, thanks so much for joining us here. What's your takeaway from some of the big investment banks that have been reporting numbers so far this week?
Yeah, I think it's been an incredibly strong earnings season thus far. I think we're seeing strong results clearly on the capital market side, trading, revenues, equities in particular, fixed income, mostly across the board. I think Goldman was a little soft there. And then I think, credit remains stable. We're getting good disclosure on private credit exposure that seems to be well contained. And net interest income holding the line as well. We're seeing Bank of America increase their guidance for the year there this morning. So really a lot to like across the board.
A lot to like, and a lot of it is driven by the volatility that we've seen across financial markets. It certainly gave a huge boost to trading revenues at almost every single one of these big banks. How durable is this? I mean, we talk about volatility being good for them, at least for the first quarter, but at any point, does this volatility turn into a negative?
Yeah, I think that is the question. Where do we go from here in terms of, market volatility certainly helped on the equity trading volumes this quarter. But I think when we look a little bit deeper, looking at the client relationships that are driving the investment banking fees, the pipelines are strong there. And then I think on the fixed income side, investment grade credit has been strong as well. So certainly benefiting equities. I think the rest of it is probably a little bit more resilient, and we could see maybe softer equities in the coming quarters as things normalize back down if we become a little bit less volatile in terms of the markets.
Cheryl, one of the industries that was thought to be a big beneficiary of a second term for President Trump was the financial services industry through less onerous regulation, maybe even allowing some consolidation to take place. Are we seeing signs of that? Oh, I think she froze. That whole Zoom thing's not working for us right now. That happens.
Technology failing once in a while.
Yeah, exactly. But, we'll have to see how it goes. All right, but looking at the banks here, I mean, I thought the results across the big banks were really, really good. What I'm going to be interested to see, and a lot of that was capital markets driven. Yes. The equity income from the desk was just across all the firms, which is amazing. A little bit of volatility in the fixed income side. I'll be interested to see the regional banks who rely less on the capital markets activity and much more
really
on loan origination, net interest income, those types of things.
Right, and we've heard from the big banks in terms of investment banking fees. They pretty much came in better than expected. A lot of that was because M&A advisory fees rose more than expected, while debt and equity underwriting kind of missed the mark there. So you wonder how that sets us up going forward, how comfortable companies are with moving forward and making deals in this very uncertain environment. Cheryl Pate is back with us. Cheryl, talk a little bit about how you are adjusting your positioning in these banks following this latest set of results.
Yeah, I think, one of the key things that we've been talking about this year is deregulation and excess capital deployment. I think we saw that at Bank of America this morning. It was double the buyback expectations. Morgan Stanley spoke to it benefiting the business in terms of lower capital requirements as well. I think where we can see benefits moving forward in terms of our positioning, we do think there is an M&A play that will be heating up and a lot of opportunities for let's say larger community banks, smaller regional banks to be acquired up as the asset scale moves higher. So that is probably one of the key things that we're looking at, who would be potentially good acquisition targets from the smaller end of the size spectrum.
So to that end, Cheryl, we're going to get, we're pretty much done the big banks here. When we get to the regional banks, what will you be looking for here? Because they'll be, obviously they have much smaller capital markets businesses.
Yeah, it will depend clearly much more on spread income, loan growth, and holding the line on credit. A couple out this morning, I think, results in line with expectations, not as much the blowout that we've seen because of capital markets on the large banks, and therein may create opportunities to look to build scale and drive growth from an inorganic perspective.
Cheryl, after the banks report earnings, what we usually see is that they start selling debt as well. Are you a buyer of any of these banks' debt?
Yeah, we think there's a lot of opportunity on the bank debt side. The market has been very strong. There really hasn't been an impact from market volatility and the broader macro backdrop. We're seeing still attractive spreads, but near tights in some pockets. So we are buyers here. We have dry powder to deploy, and we think there's good opportunities at the big banks down to the small banks in this kind of market.
Talk to us about private credit. What are the banks saying about their exposure? Is it a systemic problem? What are they saying?
Yeah, I think we got better disclosure this quarter. Clearly, everybody seems to have a new slide in the deck that talks about private credit exposure and within that subset, BDC exposure as well. From my perspective, it looks manageable in terms of size relative to the balance sheet and also in terms of loan to values and cushion above. So you can see some deterioration in marks. And the banks are in a very strong position in our view in terms of where they're positioned. So we don't think this will be a systemic issue. There could be clearly some idiosyncratic issues, but systemically, I think we feel pretty comfortable here.
Cheryl, do you look at the foreign banks? Do you look at European banks? And is there anything to apply from what we learned from the big U.S. banks to banks in Europe?
We tend to focus more on the domestic opportunities, but I do think probably what you will see is some carryover to the large European banks in terms of benefits to the capital market businesses across the board and the investment banking and trading results.
Cheryl, do the regional banks have private credit exposure, or are they not in that business?
Just given the size differential, it tends to be much more of a large bank issue in our perspective. We will look to see if we get further disclosure from some of the bigger regional players, but tends to be a less trafficked area for them relative to the big banks.
All right, Cheryl, thank you so much. Cheryl Pate is Senior Portfolio Manager at Angel Oak Capital Advisors, walking us through how she's thinking through these big bank results. This is always the first wave, and it kind of sets the tone for the rest of earnings season. And once again, the message from corporate America is however much uncertainty there is, they feel that the underlying economy is doing well enough that people are moving forward.
Absolutely. All right, let's switch gears to technology. Always a lot of technology news out there, and it's news with really big numbers too. I mean, and today's no different. Anthropic has received offers from investors for a new round of funding that could value the company at about $800 billion or higher. The numbers keep going.
And this is a private company.
Yes. And if I'm, putting my IPO banker hat back on from back in the day, I'd be knocking on these doors so hard saying, let's rip this thing in the public market, but we'll see. Mandeep Singh joins us, global tech research lead for Bloomberg Intelligence. He's over in London right now, cracking heads over there at Bloomberg Intelligence over there, whipping them into shape, as well as seeing a bunch of clients. I can look at his calendar. I see he's actually doing a lot of real business over there too, so we appreciate that, generating some revenue, hopefully. Mandeep, talk to us about Anthropic here. Any surprise here?
Well, I mean, we knew when they released that 30 billion ARR number that, the growth rate is phenomenal. It's been accelerating, driven by the use of their product as a coding agent. And they seem to have leapfrogged OpenAI and the other frontier LLMs when it comes to coding agents specifically. So right now, everyone is lining up to be part of their next funding round. And since OpenAI was valued at $850 billion, given, Anthropic has surpassed OpenAI's ARR, I'm not surprised that we are talking about $800 billion range for Anthropic in the next funding round.
So the big numbers that Paul was mentioning, where a new funding round that could value it at $800 billion, it sounds like Anthropic doesn't actually need the money right now. So are investors just throwing money at the company and the company is saying, no thanks, we're pretty good. We just raised $30 billion in February.
I would say these companies do need a lot of money simply because, they keep saying they are compute constrained. And look at, what OpenAI has been doing with regards to, all the deals that they have signed to get the compute. And look, in the case of hyperscalers, at least they have the free cash flow to pay for, the CapEx. In the case of Anthropic and OpenAI, they don't have any free cash flow like the hyperscalers, so they actually need the money to pay for all the compute and AI infrastructure. And that's where, it's great that OpenAI was able to raise $120 billion before Anthropic surpassed them in terms of ARR. I bet you they'll have a harder time now than they had a couple of months back. And right now, it's Anthropic's moment. So the more money they raise, the more compute they can lock in. And it is actually good that they have the compute to really, spend on acquiring all the users and make sure they become a sticky product.
All right, Mandeep, thanks so much for joining us. Appreciate getting a few minutes of your time. Mandeep Singh, Global Tech Research Head for Bloomberg Intelligence. He's over there in our London office. Mandeep, right around the corner from the Bloomberg office is the St. James Court Pub. Go in there, use my name. They'll take care of you. Trust me, they love me there. Mandeep Singh over there in London. Big numbers again. And here, another data point we didn't even get to. ASML raised its full-year sales forecast to between 36 and 40 billion euros due to a surge in global artificial intelligence spending. Folks, the money is
consistent theme there.
Yep, absolutely. We'll stay on top of it. Mandeep Singh and the tech research team at BI is all over it this year.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers Studio. Stocks are hovering near all-time highs on optimism for a potential peace deal in the Middle East. The S&P 500 is up 20 points now. We've got the Dow Jones Industrial Average down by 180, led lower by shares of Caterpillar, Merck, and Home Depot. Of the 11 S&P 500 sectors, only information technology is in the green at the moment. NASDAQ Composite up about 176 points, a gain there of 0.7%. The Russell 2000 inching up just about 3 points. Brent crude is now up 0.3% at 95.15 the barrel. WTI crude up 0.6% at 91.87 the barrel. The Bloomberg Dollar Spot Index is a little changed at 1193.07, and we have yields higher with the 2-year at 3.76%, 10-year at 4.27%. Bitcoin little changed at $74,071. We've got Dutch chip-making equipment company ASML lifting its guidance. That's thanks to strong demand for its AI chips. Shares of ASML now down 3.5% despite that good news. And luxury brands taking a hit because of the war. Hermes, the maker of those Birkin bags, reporting slower sales as the Iran war weighed on demand. And Gucci, the owner, Kering is the owner of Gucci, rather, also saw sales fall. This is a day after the owner of Louis Vuitton, an industry bellwether, LVMH, also flagging weakness, especially in the Middle East. We've got shares of Hermes and Kering each down more than 8%. And Robinhood leading the S&P 500 higher after the SEC lifted a key restriction for day trading for retail investors. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube and on Bloomberg.com. In just about 3 minutes' time, Ted Pick, Morgan Stanley CEO, is going to sit down with Bloomberg Television anchor Lisa Bromwitz and kind of go over the quarter, which was a very good quarter for Morgan Stanley, and talk about the outlook going forward. And just looking at the stock, Scarlett, great day today. Stock's up 5.4%. It's up about 9% year to date, hitting a 52-week high and an all-time high with a market cap of $305 billion. So things are pretty good at Morgan Stanley these days.
It's been a windfall for these Wall Street trading banks. All the market volatility has led to record amounts of trading, especially in equities, less so in fixed income, and we're seeing the results show up in the bottom line for these big banks. The question is whether it's durable, whether it's sustainable. I mean, when times are good, you definitely get a big boost to the trading revenue, but it could turn south just as quickly.
And the good thing about I think one of the really good things that the market likes about Morgan Stanley is their wealth management business.
Yeah.
You know, it's about 45% of net revenue, which is the biggest of the big investment banks. So they've got, and that's a little bit steadier stream of profitability and fees.
It smooths out everything else, the volatility from the capital markets business. And it's something that Goldman Sachs has been trying to pivot over to as well. But James Gorman, the former CEO of Morgan Stanley, is really the one that kind of saw this for what it is, especially in the wake of the financial crisis.
You know, and that's a big change for a firm like Morgan Stanley, because Morgan Stanley, we all know, there's just a dominant investment bank and has that dominant investment bank culture. And then they're also a dominant capital markets firm with their equity and fixed income trading prowess. And that's the culture, had been the culture of Morgan Stanley, like it is at Goldman Sachs. But they've pivoted that culture a little bit more towards the wealth management, you know.
Yeah, and really set themselves apart. And as a result, the price-to-book ratio has been higher than most of the other big banks. Another thing I wanted to point out here is this company called Allbirds. Do you remember them? They were making sneakers.
Allbirds. Oh, yes, that's right.
Those merino wool sneakers?
Yeah.
Okay, well, they have pivoted because we know that they sold off those assets to another company, and now they're becoming an AI company.
No.
Yes, AI compute infrastructure with a vision to become a, quote, fully integrated GPU as a service, an AI native cloud solutions provider. It's like all the buzzy words you could throw into one sentence.
It's kind of working. I mean, the stock's up big today. It's up 385% today to $12. That's up $9.50 to $12. So went from 3 to 12 today. So I don't know if it's a meme stock or it's actually catching the tailwind that is AI. I don't know.
I mean, this is now my favorite new acronym: GPU and then little a, S, capital S. Remember
GPU
SaaS?
as a service?
Yeah.
Is that what they're saying?
Yes, GPU as a service, like SaaS was software as a service. Now it's
Okay.
GPU as a service.
And it looks like the market's saying, okay, I get it.
Well, the market's into it today. We'll see
Okay.
how long it lasts, and we'll see what actually happens. Allbirds did reach an agreement for a $50 million convertible financial facility with an institutional investor. We don't know who the institutional investor is.
Okay.
And they're going to change their name to Newbird AI.
Newbird AI.
Yeah, from
All right.
Allbirds.
Based in San Francisco, 362 employees. So there you go. See, again, it's just another way to play the AI story, maybe, or not. I don't know how this will play out, but we'll keep an eye on this one. That's a fun story. Looking at the market here, kind of red and green on the screen here, not much. It all kind of, as we've seen over the last seven and a half weeks with this war, it's kind of everything's kind of priced off of a barrel of oil. And right now, oil's steady, right around $91.70 for WTI. Again, it had been as high as 120, and Brent is about $95. But remember, WTI crude oil was trading below 60 before this war started, so it's kind of right in the middle of that trading.
Yeah, and it's unlikely we're going to get back to that old normal again. This is now the new normal where oil prices are elevated.
It's interesting. If you talk to a fundamental oil person, that's what they'll say. If you talk to a commodity person, a trading person like Mike McGlone, he says, no, the supply and demand's taking this thing right back down to 40. You know, and it's interesting to see.
But no one knows when.
Yeah, that's true. You just don't know if there's been some type of risk premium put into the price of oil that's going to stay there for a while.
Right, and the longer you say, it'll get back there by, say, November, a lot can happen between now and November.
Yeah, absolutely. So we'll have to see. And it just the noise and the news today suggests that maybe negotiations are back on the front burner, and maybe they can get these sides back together. We don't know when, we don't know where.
And so far, this is just the U.S. and Iran working together to possibly schedule discussions, right? Peace talks. You also have Israel, and that's kind of a wild card here because whatever's happening going in Lebanon is another point of contention here between Iran and the U.S.
Right, and the expectation, I think the consensus is that Israel will follow the U.S. lead. If we say, all right, we're done, then that means you're done in Lebanon. So that's the expectation. So we'll see how that plays out. Again, we're waiting just moments away. We're going to go to Lisa Abramowitz, and she's talking with Ted Pick, Morgan Stanley CEO. Let's go to it.
Here at Morgan Stanley's headquarters in New York with Ted Pick, the one and only, the chair and the CEO of Morgan Stanley, after an earnings result that you led off with by just saying Morgan Stanley had a record quarter. Mic drop. What led that kind of strength?
We have a team that I'm so proud of. And we've been building our firm for all these years, and we got the strategy set now over the last couple of years, raise, manage, and allocate capital for clients. We've got a wealth and investment manager alongside investment bank, and the integrated firm are those divisions working together. So it begins and ends with the team. It's one quarter. We're on to the next quarter, but I'm really proud of Morgan Stanley Blue today.
There's a question about the trading and sales volumes and how they absolutely blew expectations out of the water, particularly at Morgan Stanley for both FICC and equities. How much does this stem for good volatility versus bad volatility? Because sometimes when things are kind of moving around, it hasn't led to those kinds of results, but this quarter seemed to have been a real boon for Wall Street.
I think you're right about that. The crisis in the Middle East began to bubble up. And folks were thinking going into 2026, this would be a year of investment banking, tailwinds, large cap, corporate health, momentum, upside trade. And then this exogenous event was creeping up, but it wasn't sort of like a bang COVID that became pretty quickly uninvestable. Correlation of assets, and the only thing you can do is put your pencil down. This was one where folks thought, well, we'll see how the conflict evolves, but I'd like to express a view. Perhaps I want to hedge some of my portfolio. Perhaps I want to diversify. So you start seeing dispersion activity. And our job at Morgan Stanley is to bring content like you, and then to get folks to act. And if they're in a mood to act, we're effectively moving inventory, market making, our best ideas. And then there are buyers and sellers for hedging, insurance, and the like. And so in that sense, some volatility is a good thing, because you can sort of measure. Where it becomes bad is if it's risk off and people say, wow, I can't do anything to put their pencils down. So yes, this was a good vol environment because we were close to clients, and those clients were listening to our content and evolving and trying to measure through scenarios, and that worked both in equities and in fixed income.
What's fascinating is it also worked in the banking side. Usually when you have that kind of volatility, it isn't good for capital markets on the primary side because people are concerned. They sit on their hands. They don't do some of the deals that were expected. That was not the case in the first quarter. How much do you see that pipeline, which you talked about on the earnings call, being resilient and solid, coming to fruition, given the fact that there has been an easing in some of the tensions in the Middle East?
Well, that's an interesting point you're making, that typically when you effectively have market making to sort of protect, you're not going to have the risk spirits of the new issue market or the M&A market functioning at the same time. And I think the M&A market and the new issue market worked in part because there was so much tailwind from the beginning of the year. And in certain sectors, the AI ecosystem, even with geopolitics, they were able to keep going. So the question that hopefully will become a hypothetical would have been, if the conflict had gone for a number of quarters and we started to see energy costs get effectively imported from Asia through Europe to the U.S., what would that do to the calendar, both the M&A calendar, the IPO calendar? And I hope that question will be for another day or maybe no day. Today's question is, if the conflict can be boxed at some level, would we expect the coming to the market of these great companies, but also smaller, very high-quality sponsor companies to either come via IPO or to engage in the M&A trade that has been sort of the logjam the last couple of years. And I think we're seeing in pipelines that both corporates and sponsors want to come. So I think what you could have is a period now where you'll still have some volatility, maybe not the very high levels of charged activity at the beginning of the year that was, generally speaking, good for trading desks. Maybe you'll see more of a normalization in those types of activities. Remember now, the volatility measure is already elevated, so the price of buying incremental insurance is high. But then importantly, the core corporate finance life cycle that we've been looking at over the last couple of years hopefully can resume against S&P 7,000 and 15% earnings growth, and we can keep going. But the only caveat I'd make here, Lisa, is there are going to be some companies that are just not, they're still not ready. They're locked in sponsor portfolios, and they're going to need even more time. 5 years not enough. They need 6-7 years because of the higher rate of interest and that to sort of carry the debt. But there are going to be other companies clearly that want to come. And we're beginning to see the lead sponsors and lead companies, not necessarily these mega caps, those are coming in any case, but the next tier of companies we see in bake-offs, sort of like M&A versus IPO type of bake-off. We're seeing those happening, and I think that augurs well.
What needs to happen for those deals to all come to market? Does it depend on rates coming in or volatility staying relatively muted or where it is? I mean, what are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again through the energy complex, and then eventually it works its way through the food and general living ecosystem, and that becomes challenging. That queers the cost of capital, and effectively then you start talking about the R word. The good news is we're not talking about the R word, and so that translates into, I think, sort of continued momentum and high quality companies, and the wealth piece of the spectrum is continuing to deploy, continuing to want to engage. So I think if there's some sort of, and again, I don't want to use the phrase, it's a serious and complex issue, but sort of a better understanding, maybe a narrowing the cone of uncertainty around what is happening in the Middle East. That, I think, is going to be enough for folks to say, okay, you know what, I can sort of manage through the imputed energy costs in the back end of 2026, and we're going to continue with sort of the game plan. The game plan is to get bigger, to defease the cost of AI. Remember that the regulatory backdrop, very favorable, and then the need to defease the cost of AI, real. You put those two together, I'm not saying bigger is better for everyone, but bigger is better might be hip again.
Well, and we heard about that from United speculating, or some speculation that United might buy American Airlines. If that gets through, what's next? Morgan Stanley buying Goldman Sachs? I mean, how big could it get should there be some sort of regulatory green light, potentially, to even some of the big players? Right.
Well, on mergers inside of our space, I'll make you gave me an opening to make a comment on that. I think one of the interesting phenomena of the last couple of years, and one of the things I've learned in this job, is that the quality of the management teams and the quality of the business models of our closest competitors is very high quality. This is so important for us to have vibrant competitors now in a period when the economy is hopefully going to really have another leg, and where we are able to conduct some of the businesses that we've been wishing to conduct and have been curtailed from conducting during this tough regulatory patch that we went through for the better part of 20 years. Now that we're able to compete in our traditional businesses, a lot of these firms have internal growth prospects, different models from each of the firms you know very well, where we'll be competing, but we don't actually need to go inorganic. I mean, there may be ways where you want to bolt on, for example, an incremental business, but in our case, we have the wealth and investment manager, we have the investment bank on a global basis, and the organic growth potential for those businesses, the tailwinds are enormous. And I think with some of our competitors, not that I want to make the pitch for our competitors, I think they have similar types of dynamics. And the reason that's so important is for investors, they want to know that there's embedded, durable growth inside of this group that still trades at a low teens multiple.
One big question, and frankly the most read story on the Bloomberg terminal today, is about Fed Chair independence, President Trump threatening to fire Fed Chair Jay Powell. How much does that register in any of what you talk about with people? Or do a lot of people view this kind of as noise, and the backdrop being really stable with respect to inflation expectations and even the institutional landscape?
Yeah, I think sort of the politics of the moment tend not to get too much into the focus of how you want to express a position, because the question becomes sort of the bigger landscape items. Do we have interest rate policy that feels like it's on a path? Well, I think the answer to that question is more so than it was 18 months ago, but for the war. So with the resolution of the war, do we feel again like we're on a path where there's sort of a equilibrium between price stability and employment? And if it's friendly enough or predictable enough that the CFO, that she can model what the next 5 years look like, well, then she's going to be more comfortable taking to her board the idea of buying company XYZ. And likewise, if there's a reasonable view of what the economy looks like, because there isn't going to be an inflation shock, the asset manager can then go about investing in a particular sector and trying to generate alpha.
On the call, you called private credit in its adolescence, and you talked about how your exposure is relatively small. Where is the fact and where is the fiction when it comes to private credit and some of the concerns?
Well, I think when I say adolescence, I mean it's a learning period. You know, it's grown like a weed. And that, as you know, is a function of an asset class that didn't exist 10, 15 years ago. Effectively, the street was replaced on that. It's around $1.7 trillion. High yields at about $1.7 trillion. Levered lending is at about $1.5 trillion, $1.7 trillion. So it's relevant, but the IG stack, as you know, is the investment grade stack is 10 to 15 trillion. It's all credit. It's all credit. So all things being equal, if the economy is growing, credit does fine. It does fine. When there's a recession, credit struggles. And then the question is then, which of the borrowers were really doing the work around what's in underlying portfolios? How quickly was the capital put to work? And I think what we're going to see is we're going to see dispersion of returns among great asset managers who really stuck to their knitting, thought about sector diversification, thought about how long it takes to put those investments to work, and managed to do less well. And over time, I think the alts will find their place as a growing asset class for all kinds of institutions and investors.
Ted Pick, we're out of time, which is such a shame. I could talk to you for an hour. Ted Pick, the CEO and chair of Morgan Stanley. I'm going to send it back to you as we look to an incredible earnings season for Wall Street. Morgan Stanley with a record trading at sales, looking to optimism ahead if there is some resolution in the Middle East. From New York, this is Bloomberg.
All right, that was Bloomberg Television's Lisa Abramowitz interviewing Ted Pick, Morgan Stanley CEO, who is very optimistic about his business, which is good to hear. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence starts right now.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the crew here at Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube. We're also available on our website, bloomberg.com/video. Paul Sweeney, Scarlett Fu, and Charlie Pellet here as we take you through the second hour of Bloomberg Intelligence. It is earnings season, and we've heard from the big banks. We're also going to zero in on a couple of other industries, including luxury. Hermes falling the most on record as the war in the Middle East hurts sales. We'll check in with Andrea Felstead, our Bloomberg opinion columnist, on that name. We're going to check in with Steve Mann. He's actually in New York today. He's our global autos and industrials research analyst, talking about Stellantis and its plans in Europe and in China, as well as Matthew Vagari, head of research at Clearwater Analytics, to give his take on the markets with equities moving higher, at least for the S&P 500 right now on this Tuesday. First, though, let's check in with Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett. Looking at a record right now on the S&P 69.91, where we stand up by about 0.3%. The Dow lower, though, down 205, drop there of 0.4%. Nasdaq Composite Index up 221 for Nasdaq. That is a gain now of just about 1%. All of this following a rally that's been powered by optimism around a potential peace deal in the Middle East. Traders now eyeing confirmation of new talks and a fresh round of corporate earnings. Right now, we have got the 10-year currently yielding 4.27%. The VIX just below 18, indeed with a 17 handle now. The 2-year 3.77%, and spot gold down 0.5%, 48.15 the ounce on gold. West Texas Intermediate crude up now to 92.15 a barrel, up by just about 1%. Bank earnings front and center. Morgan Stanley, Bank of America rounding out those big bank earnings this morning. Shares of Morgan Stanley, they are advancing after earnings. Morgan Stanley up by 5.3%. Bank of America up by 0.8%. Moments ago, we sat down talking about the quarter with Morgan Stanley CEO Ted Pick.
Some volatility is a good thing because you can sort of measure. Where it becomes bad is if it's risk off and people say, wow, I can't do anything to put their pencils down. So yes, this was a good vol environment because we were close to clients, and those clients were listening to our content and evolving.
Morgan Stanley CEO Ted Pick speaking moments ago with our Lisa Abramowitz. Again, Morgan Stanley shares ripping higher after earnings, up now by 5.3%. Bank of America after earnings up by just about 0.8%. So again, recapping, S&P 500 index trading at a record, now up by 0.4%. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube and Bloomberg.com as well. Red and green on the screen as Charlie was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. She joins us here in our studio. Avalon, what are you looking at today?
Well, we can go and start off with Morgan Stanley. That's ticker MS, jumping currently about 5.3% to hit a record intraday high. That's after the investment bank reported equity sales and trading revenue for the first quarter that beat expectations. Analysts were widely bullish after the results, with Evercore saying that Morgan Stanley continues to be in a category of one. And also worth noting that Morgan Stanley CEO said that private credit has created long-term growth potential. So kind of different from what we've been hearing from other banks.
Yeah, the banks have really put on a show talking about private credit and how those concerns are really contained. It's not something that affects them. Of course, it's going to be a different story when we hear from the asset managers later on in the earnings season. All right, let's check in on Robinhood.
Yes, ticker HOOD, gaining now about 7.9%. That's after the SEC approved a plan to remove the day trading limit for investors. Previously, rules banned traders from making more than 4-day trades in a 5-day period if their margin account had less than $25,000 in assets. Now those standards are going to require customers to have just enough equity in their account to cover the risk that they are running at that moment. Now, as you can imagine, the move is being very much cheered online by retail traders, and TD Cowen writing that the reduction may boost retail engagement.
All right, for another name that Scarlett just flagged for us earlier.
My favorite.
Allbirds, what's happening?
Oh, yeah.
Please
Ticker
explain.
Bird. It is surging now more than 400 and nearly 30%. Most intraday on record, as you may imagine. And that's after the former sneaker company said it plans to pivot to AI. Worth noting that Allbirds did agree to sell its brand and footwear assets to American Exchange Group recently. So this is not the same sneaker company that we already knew
Same
before.
management team, though?
I'm not quite clear.
Yeah, I think so. I think so.
But, I mean, it is planning to change its name to New Bird AI as part of this switch up into AI and computing. And, I mean, this isn't the first time that we've seen a company kind of make a complete 180. Several biotechs in my space have turned to cryptocurrencies after clinical trial failures. And earlier this year, we saw Algorithm Holdings, a karaoke turned AI company, spur a major sell-off in transportation stocks.
Love it. I mean, this is the story that just keeps giving. Avalon Purnell, thank you so much. She is, of course, one of our equities reporters here. And for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. You can find our movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's talk about the auto sector because there's certainly
No, I think we're going to go Hermes first.
Oh, yes.
Yes, let's
Even
do that.
better.
Stock's trading down. Oh,
Even
boy.
better. Okay,
Yep.
let's talk about Hermes because LVMH came out with the
Yes.
results yesterday and they
Yep.
seemed kind of encouraging. We thought, okay, the luxury consumer doing well overall. Hermes, maybe not so much. Andrea Felstead is our Bloomberg opinion columnist joining us from London. Andrea, what happened here with Hermes?
Well, there's been a few worries about Hermes for the last sort of few months because there's been this reset in the luxury sector where a lot of brands have got new creative directors. So there was a bit of worry that Hermes, which is very much sticking with its designers, we have got a new designer coming, but it's very much sticking with its creative, setup. Is going to get left behind, and what's really focused people's minds is Chanel. There's been this Chanel mania, and Chanel was one of the brands that was most criticized for raising prices. But they've got this new designer, Mathieu Blasi. Everyone loves his clothes. Everyone loves his bags. There have been frenzies at Chanel stores, and the worry is that some people who would have bought a Hermes bag will switch to Chanel instead. So you had that going on anyway. Then what's happened today is you've got that backdrop. And today, Hermes has shown that it's not the resilient story that everyone expected. Hermes has outperformed. There are long wait lists for its bags. So when times are tough, it can just work its way through the wait list. If someone said, I can't afford a Birkin right now, there'll be someone else on the list who can. Been really resilient. But what's happened is it's been really hurt by the Middle East, and not just the Middle East, by tourists. And the big revelation was that they said they got more than 50% of their sales in France from tourists. And that was a surprise because the market had always thought it was the local customers that were keeping them going, and that they have such a big tourist exposure. So all this is adding up to show that Hermes is not untouchable, and that's why the shares have re-rated. The shares have re-rated already. They're on about 33 times, 34 times the next 12 months earnings. That sounds like a lot, but its 5-year average is 48 times. So you can just see how much they've been pummeled. And I think there were probably some hopes that, it would reassure today and the shares were going up. That's not happened.
I think one of the harder jobs in global Wall Street is to be a luxury analyst, because not only do you have to have the numbers right and the multiples right and your earnings models, but you have to have a call on fashion, which is fickle to say the least here. Is it
exactly?
If you're Hermes, do you just bring in some new blood here? Is that in terms of
Well, they
creativity?
are doing that. They've got a lady called Grace Wales Bonner, who's a very well-respected menswear designer. Big surprise. She's going to be the creative director of menswear. She's been very influential. Her collaborations with Adidas helped to spark the big jump in demand for Adidas trainers, particularly those Sambas that were everywhere a couple of years ago. So she's very powerful. She's very well respected. She could, although it's menswear, she could bring a bit more of a bit more pizzazz back. They're also doing haute couture. But the question this morning on the analyst call was, are you going to reduce capacity? There are certain bags, the Kelly, the Birkin, and also the constants, which are quite hard to get. You have to put your name on a list. Hermes is gradually ramping up production. Now, Ferrari also had these problems, and it's kind of dialed back its production of like the bog standard model. If you can get a bog standard Ferrari, like a run-of-the-mill Ferrari, and it's doing these very special editions. So could Hermes do that? Could it, limit some of its bags and even go more up market and do like super rare Birkins, super rare Kellys, or even a new bag altogether that could compete with Chanel? So great news, potentially for resale values, which have been coming down. Very bad news if you've got your name down for one of these bags. It could be, if they change the model, it could be getting even harder to find one.
Andrea, thank you so much. Andrea Felstead is a Bloomberg opinion columnist covering consumer goods and in particular the luxury retail industry. Thank you so much for joining us from London. Let's stick with industries overall and talk about the auto sector. Clearly very much impacted by the rising oil prices. Stellantis, Ford, GM, they all have to keep a very close eye on how oil prices are trending, especially as they have transitioned away from EVs, at least in the United States, to focus on those big gas-guzzling vehicles. Let's bring in now Steve Mann. Steve runs our global autos team here and industrials research, and he's actually in New York today. Hi, Steve. Good to see you.
Hello.
So talk a little bit about what Stellantis is doing, because it's now looking into reviving a partnership with China's Dongfeng Motor that would involve joint car production in Europe and China?
Yeah, we actually wrote about the emerging trend of global automakers using China as a manufacturing base, and really take the competition to the Chinese, because the Chinese has done really well exporting vehicles out of China, not only in Europe, but in many parts of emerging markets. Southeast Asia, parts of Latin America. So, I think for global automakers like Stellantis, I think Volkswagen is considering doing the same thing. GM is definitely doing it, is really to build cars in China at a low cost base and then compete with the Chinese in these emerging markets.
What are the BYDs, the Chinese auto companies, saying about this?
Well, I think they feel they have an advantage. Because they are, local. They feel that their automobiles are more techy and resonates with especially the younger first-time car buyers, and many of them are in emerging markets. So, I think the Chinese will continue to export quite a bit of vehicles going forward.
What does this mean for these kinds of vehicles in the U.S.? I mean, we're still obsessed with the gas-guzzling vehicles. They've done away with all the tax credits for, greener vehicles. How does this position Stellantis and other car makers for how they offer lower-cost vehicles for Americans?
Yeah, interestingly, that's a good question, because a lot of the buyers in emerging markets are actually skipping the ICE, the gasoline vehicles, and going straight to electric. So that's also an advantage to some of the Chinese local automakers. But it actually helps the global automakers like Stellantis, because even though the U.S. have stepped back on EVs, the rest of the world are not, right? They're still pushing EVs, so they need to continue to build EVs. They still need to invest in EVs. So, having them produce in China and able to compete in the rest of the world with the Chinese, gives them a great option and a great revenue stream.
So if I'm Stellantis here, I don't know, one of their brands, Jeep or whatever, the vehicle would be manufactured in China at that cost.
Yes.
I'm going to stick my Jeep name on it and sell it in France or U.S.
Yes, it's possible. So it's a little bit difficult in the U.S. Because there are tariffs, and I think the administration actually frowns on that. They actually had some discussions with GM about that. But I think more in the rest of the world, like Europeans and the emerging markets.
We keep talking about how the lowest cost or the average price of a new car in the U.S. is north of $50,000, right?
Yes.
That's where we're standing at? In terms of actually coming to market with an affordable, low-cost vehicle, Tesla's supposed to come out with something, and I don't know if we have any kind of timeline on that.
Right.
Have GM and Ford kind of skipped making this a priority?
No, I think, first of all, there are kind of rumors in social media that Tesla is going to go back and think about reintroducing a smaller compact vehicle. But GM is still investing. They're still launching the Chevy Bolt. Look, GM does have a strong portfolio of EVs, not in the U.S. Well, they do have a strong portfolio in the U.S., but they also have a strong portfolio in China. And I think the U.S. automakers, even though they have dialed down their investments in EVs, they're not forgetting about it. They are still spending a lot of money. Ford is introducing something in 2027, 2028, a smaller, more affordable vehicles. Look, in the U.S., it's interesting to see, even though EV sales have been down, the infrastructure, the charging infrastructure actually is continuing to expand. So I think as consumer finds the convenience of having an EVs, I think there's still a place for EVs in the U.S., but not at the growth rate we saw in the past.
All right, Steve, thank you so much. Appreciate it, Steve Mann, Global Autos and Industrials Research Analyst of Bloomberg Intelligence. There. Coming up in just moments, a conversation between Bloomberg Television's anchor Francine Lacroix and Krista Liana Georgieva, the IMF Managing Director. So we'll get thoughts about how some of the European economies and the IMF is thinking about kind of some of the uncertainty in the Middle East and the war in Iran and how that's impacting economic outlook.
And not just economic outlook, but inflation in particular, especially for these European nations which are importing natural gas and other oil products through the Strait of Hormuz, or attempting to at this point, and how that affects their growth prospects and what it means in terms of costs. Let's go now to Francine Lacroix in Washington, D.C.
Of the whole show, where everyone from around the world shows up. Christina Georgieva, thank you so much for joining us. Look, the IMF and your World Economic Outlook, everyone here has read it 3 times just to understand exactly what the dynamic is. You've downgraded your forecast, but there's also a scenario where the world economy skims recession. How likely is that?
Depends on the longevity of the war in the Middle East and the scale of the infrastructure destruction that happens in the countries over there. And that is the big unknown. We now have ceasefire. I pray it turns into a durable peace, and in that case, we can see a somewhat faster recovery. But the uncertainty has been profound, and we all need to learn to operate in an environment of high and permanent uncertainty.
But even if there's a ceasefire that stays, okay, and there's some kind of diplomatic resolution, is the market discounting the real impact on the price of oil and therefore inflation?
Well, let me just say that even if the war ends tomorrow, it would take quite some time for the recovery to kick in. Not only because of the infrastructure destruction. Tankers are slow-moving vessels. A tanker that leaves today would take 40 days to reach the Pacific Islands. So we have to keep in mind that the impact is already baked in. Why are markets so optimistic? I think part of the reason is because there is a high concentration of financial assets in the United States. The U.S. economy is doing well. It is relatively not so impacted because the U.S. is an oil exporter, not importer. And that creates that picture of dynamism and vibrancy. But I can tell you that's not the story of the rest of the world. In the rest of the world, already there is a lot of pain.
So, I mean, does that mean that the market is mispricing, that all this market exuberance is actually misplaced?
What it means is that markets are geared by events in the largest economy that are really positive. The United States is the only large economy that has high productivity growth, and markets are seeing that. Technology optimism is here. Markets are rushing on it. But should there be more caution? I would argue yes, because what we are seeing in terms of supply chain disruptions is already quite significant. And with every day that passes, that tanker is not leaving for a destination, and that delays the rebounds of the world economy.
How much do you worry about governments trying to over-adjust if inflation expectations goes up? And actually, how much of a mess would this be? I mean,
it's such an important question. So look at what is happening. Short-term inflation expectations have moved up. Not by much, though. We have increased our inflation projection from 3.8% to 4.2%. It is up, but not dramatically. And very important, long-term inflation expectations don't budge. They're well anchored. May they stay this way. So it is very important that central banks act carefully. Those that are in a good position of credibility, they can take wait-and-see attitude. They also have to signal, we are prepared to act if it is necessary, but please don't rush. My worry is because of 22, now central banks may say, let's move faster, and that could be very dangerous because it would suffocate growth.
I mean, we're looking back at every IMF, World Bank meetings since 2020. There's been something. 2020 was COVID. 2022, of course, it was the Russian invasion of Ukraine. Then you had tariffs.
Inflation.
I mean, it's shock after shock.
So it looks like a layered cake. Shock upon shock upon shock. Except it is not at all tasty. I can tell you that everybody has to absorb reality, and reality is we are in a more shock-prone world. Shocks will continue to come. What does it mean? For fiscal authorities, build buffers. When you are in good time, don't waste your resources. For monetary policy, calibrate policy carefully. Be prepared to act if and when necessary. And everywhere, countries have to be much more alert to the high uncertainty within which we operate. Agility, adaptability, this is what we have to do.
MD, how worried are you about the UK? This was one of the countries that was downgraded the most.
I mean, they are downgraded, but also we see in the UK very mature approach to policy. The UK is very careful not to go into indiscriminate spending, and Bank of England is very clear around the approach they're going to take, the right approach to this situation. Actually, we see the UK in terms of fiscal response as a good example for others, because many other countries are rushing to throw money they don't have out of the good intention to help people. It has to be targeted, it has to be temporary, and it has to be done within the fiscal boundaries of countries, and UK is doing that. UK is also a country where there is a recognition that your best defense is growth. Pro-growth policies are gonna be your buffer for the future.
Yeah, not easy, but certainly
Absolutely
the government is
not,
aware of it.
Not easy, not easy.
I also wanted to ask you about, look, the U.S., there's, again, President Trump is going after Jay Powell, saying, look, he'll fire him, he doesn't step down from the Fed. I mean, we go back to this idea of central bank independence. How problematic is it, especially in a time where actually central banks have a very, very difficult job at hand?
We have decades of evidence that independent central banks are an economic asset. They serve well when they have the opportunity to make decisions and the space to make decisions responsibly. And I can tell you one very interesting fact. Central banks in emerging market economies outperform their advanced economy peers. They have built that independence and strength of data-dependent policy making.
Again, market seems to look through a lot of these concerns. Does that worry you, that the function of almost keeping things in check is working differently?
On one level, it is good that the economy functions, because getting into panic is not going to help. So good functioning of markets is helping. Having that, we have seen tightening of financial conditions by some, but not by much. We have seen currency depreciation of some emerging markets, again, not dramatically. As long as we have a trajectory for the war to end and for economic activity to restart, we are in a very good place. But if we have prolonged period of time, it will be hard. to keep optimistic.
MD, I also wanted to ask you a little bit about some, new countries or old countries that, are trying to access some of your programs. I wanted to start with Venezuela. So is the IMF ready to recognize the acting president to start negotiations?
At this point, Venezuela does not have recognition by majority of members. This being said, we are prepared to engage. Actually, at a junior technical level, we have been approached in good faith by the Venezuelan authorities. They desperately need help because, as you know, the economy shrank from this to 1/3. They have a risk of hyperinflation knocking on the door. 8 million people are outside of the country. So once our membership decides, even when they decide to recognize, we are ready to go.
Soon?
It is a matter of membership. I can tell you one thing, that there is an understanding among the region, the neighbors of Venezuela, Brazil, Colombia, Mexico, Chile. They don't want a failed state. They want Venezuela engaging with the fund.
MD, thank you so much for joining. I'll send it back to you, New York.
All right, that was Kristalina Georgieva, the managing director of the IMF, speaking with our own Francine Lacqua in Washington, D.C., talking a little bit about what's going on in the Middle East, as well as the impact on the global economy. Let's bring it over now to Charlie Prellett, who's got a check on markets for us. Hey, Charlie.
Hi, thank you very much, Scarlett and Paul. Here's what's going on. Dow Industrials, they're trading lower right now. Dow down 150, drop there of just about 0.3%. Looking at a record right now, 69.98 right now on the S&P, higher by 30 points, up by about 0.4%. We've got NASDAQ pushing higher, up 238 points now. That is an advance of 1%. All of this with a VIX just above 18 and a 10-year at 4.28%. The 2-year currently yielding 3.77%. Gold is down $38 the ounce, 48.03, drop there of just about 0.3%, while West Texas Intermediate crude up 1.4%, 92.60 a barrel. This Bloomberg Business Flash is brought to you by Gold and Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldandcrestmetals.com/guide. That's goldandcrestmetals.com/guide. Again, recapping, S&P pushes higher right now at 69.98, up 0.4%. The VIX at 18, at a 10-year 4.28%. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, Charlie Prellett, thank you very much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Over the last 6-7 weeks, as this war has raged on and has been, kind of whipsawing the markets, it seemed I would say the trading seems pretty reasonable. I didn't sense any panic buying, panic selling across
just a lot of activity, a lot of hedging, and we saw that with the big banks and their results when it comes to equity trading. And it felt like almost every big bank reported record revenue.
Absolutely. Our next guest has an insight into that. Into the trading out there. Matthew Vagari, head of research at Clearwater Analytics, joins us live here in our studio. Matthew, thanks so much for joining us here. Just briefly tell us what you guys do at Clearwater. What's your platform?
Great to see you again. We are an investment management platform that sees over 10 trillion in assets flowing through our system every single day. And that's across institutional investors like insurers, corporates, asset managers, hedge funds, you name it. And I can probably tell you something about it.
So what did you see on your platform over the last 6-7 weeks here?
What you just said is exactly right. We saw would you take private wealth investors, for example, we saw a pretty material uptick in transaction volume. So people are actively trading, but are they really readjusting their portfolios from, dumping equities and buying fixed income and vice versa? Not that much tactical shifts across assets, but a lot of movement within assets. Be it for equities, still continue to chase the AI trade, believe it or not, and, getting rid of consumer stocks, for example, that are particularly exposed to an energy shock.
Okay, so we're 7 weeks into this war in Iran. We don't know how much longer it's going to last, but we're all bracing for a lot of uncertainty. What is your confidence that this level of activity will continue in the next 7 weeks or the 7 weeks after that? I mean, if this kind of uncertainty prevails, will your clients continue to be this active?
I think so if you look over the last week or two, transaction volume has dipped a little bit relative to where it was for the first 2 weeks of the conflict. And if you look at oil, it's a little bit more subdued now, not trading as high as it was, let's say, even 2 weeks ago. I think as long as this conflict endures, those price pressures are going to start to build up. And right now, I think markets are really sanguine about recession risk in the U.S. economy. And we're absolutely going to see an uptick in volume and transaction activity on our platform, because right now, I think there's a little bit of a wait and see. And as we start to see a little bit more, investors are definitely going to act.
So from your perspective, I mean, are you forecasting a recession here? Because it seems like the economy's hanging in there, the consumer's hanging in there. We got some good numbers, results from the big banks over the last several days.
I think I liken the economy to a bit like a boxer that's been taking a lot of knocks over the last few years. You just heard the IMF managing director talk about a layer cake, if you will. I think of it more of a boxer that's been punching back well above his or her weight. But the problem is that the boxer's gotten tired. And if you look at the US, for example, we're not really producing any jobs. So what's been propelling the economy? It's been consumer spending driven by real income gains, wages that have been outpacing inflation. But wages pressures have been coming down because the labor market has gone softer. But you're telling me that we might be adding something like 1 point plus to inflation? That's going to put real wages underwater. We're not producing enough jobs. I just don't know what's going to be propelling the economy forward, call it 4 or 6 months from now, if this energy shock does persist.
And you don't see it as something from the Federal Reserve. There is no Fed put here that can give markets and give investors some new lease on life.
No, I like to tell our clients that the difference between a recession and no recession is not 100 basis points on the Fed funds rate, right? The Fed is going to be it knows that inflation is coming, but it doesn't know yet that the labor market will unravel. So it's going to have to wait to see what happens with the labor market and basically press the pause button as it knows inflation starts to enter into these CPI prints.
So what do you expect the Federal Reserve to do this year? Sit on its hands, or?
I think unless the labor market unravels really quickly, which is not my base case, I think this Federal Reserve is going to have to sit on its hands and probably not cut. And markets, I wouldn't be surprised if they start looking the way that the Bank of England and the ECB have been looking, which is the likelihood increasing for even raising rates by the end of the year if inflation does rear its head again.
How are you thinking about private credit? Because a lot of the family offices, it's reported that they might be behind some of those withdrawal requests from the private credit funds. And certainly there's a lot of nervousness, even as a lot of the private credit funds have largely held up. The loans haven't necessarily all gone bad. Of course, there's some sectors are more vulnerable than others. Is there a risk of this becoming something bigger, a contagion?
That's a really great question. I can tell you that I can see firsthand that we are seeing that with certain private wealth investors absolutely withdrawing from private credit funds. What I will also note is that we were able to look back at Q1 performance, kind of decomposing it week by week across asset classes. And because bonds got pummeled from the potential for increased inflation, because equities got pummeled initially, because of, again, this energy shock, what actually served as a ballast was private credit. Those who stayed in the game had those strong 9, 10, 11% income gains convert to their portfolios. And actually, when I talk to clients, I say this is the feature, not the bug of private credit. It is a diversifier, and for those who are using it for its intended use, they're seeing the gains from it. Will that result in continued bank runs, going forward if these headlines continue to dominate? That seems likely, but for those who have stuck this out, it's definitely benefited them.
So real quick, alternatives in general, what are you seeing on your platform?
We are seeing, I think, a pause, a wait and see with private credit. There has been certainly a desire to reduce exposure for some clients and institutional investors. But for a lot of alternatives, we have to remember that these are long-term, long time horizon investors. Take insurers, for example. They're not thinking 1 quarter from now, 2 quarters from now. They're thinking 5, 10 years from now. And so they're not likely to pivot away from alternatives anytime soon.
Yeah, they need it as that diversifier.
Absolutely, and that's what it's there for. Matthew Vigari, thank you so much for joining us. Matthew Vigari, he's head of research for Clearwater Analytics, joining us live here in our Bloomberg Interactive Broker Studio. Red and green on the screen here today, kind of keeping with that theme. The S&P's up 25 points. The Dow's down 204 points. About 150 of those declining points is because Caterpillar stock is trading down here today.
Worth noting that the S&P 500, if it closes at these levels, would be at a record high.
Woohoo! There you go. What more? And NASDAQ, that's moving higher. Boy, up 220 points. That's 0.9%. We got WTI crude oil up $1.50 here. They're trading all over the place within tight range here today, but a little bit on the upside, a little bit on the downside. We'll stay on top of it. This is good.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ both advancing. We have got the S&P 500 index right now at 69.95, close to the best level of the day, up 28 points. That is a gain now of 0.4%. The Dow, however, heading in the opposite direction, down 0.4%. Dow Industrials down almost 200 points. NASDAQ pushing higher, up 228 now, up by just about 1%. The VIX right around 18 with a 10-year 4.28%, the 2-year 3.77%. Spot gold down 0.7%, 48.05 the ounce. And right now, looking at West Texas Intermediate crude, 92.45 a barrel on WTI, up by 1.3%. Brent, the global benchmark, 95.70 now, up by about 0.9%. Morgan Stanley shares after earnings up 4.4%. Bank of America after earnings up 1.7%. So what about the broader earnings backdrop? Cheryl Pate is Senior Portfolio Manager at Angel Oak Capital Advisors, and she was a guest right here on Bloomberg Intelligence.
I think it's been an incredibly strong earnings season thus far. I think we're seeing strong results clearly on the capital market side, trading, revenues, equities in particular, fixed income, mostly across the board.
And we'll have more on banks coming up with our Herman Chan in just a moment right here on a Bloomberg Intelligence. Snap laying off roughly 1,000 full-time employees, 16% of its global workforce, all a part of an effort by CEO Evan Spiegel to reduce costs and achieve profitability. Again, recapping, S&P pushing higher, looking at a record, up 31 right now, up by 0.4%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, for that Bloomberg Business Flash. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, and we're looking at stocks on the rise. The S&P 500 on track for a record close, currently up by 0.4%. And a big reason why is the blockbuster earnings from the big banks. All 6 big banks have now reported their results, and clearly the war, the uncertainty that the war has created has not really damped stock trading because their equity trading desks did incredible business in the first quarter. Herman Chan is our senior analyst for U.S. banks here at Bloomberg Intelligence, and he joins us now. Herman, which bank came out ahead overall? Because they all did really well when it comes to equity trading, less well on fixed income trading. But when you look at the results as a whole, which bank comes out the winner?
Yeah, I would say Morgan Stanley probably outshined the most across the trading front, both on equities and fixed income. But overall, everything was great on the trading front. We were talking about 25% growth in equities, 11% growth in fixed income across the 6 banks. Really strong results. Fixed income, as you mentioned before, was a bit more mixed with Goldman weaker, Bank of America a touch weaker, but everybody else was really strong on the fixed side.
What are they saying about the pipeline here for business? Because it seems like this is going to be a year where we could potentially get some mega IPOs. I'm thinking SpaceX and all the Anthropics and all that kind of stuff.
Yeah. I think the IPO calendar looks a bit spottier. We have the big blockbuster names, like you mentioned, with SpaceX, potentially OpenAI, Anthropic, Databricks. Those are going to be the headline ones. But on the other hand, maybe some less activity from the private equity-backed businesses that may be finding it tougher sledding in terms of getting into the markets, given the volatility in the environment today. But nonetheless, there's going to be these blockbuster deals that are going to happen this year in our view.
And it doesn't appear that companies have held off or held back from deal making either, even with all the uncertainty caused by the war.
Yeah, that's right. M&A, at least for the first quarter, was solid, strong all the way around. On a year-over-year basis, it was gangbusters, up 68% year-over-year. So we'll see how that continues, given some of the, you mentioned the volatility is great for the trading front, less so for M&A activity and equities issuance. So it'll be a bit potentially slowing down over the course of the year.
So we heard Ted Pick on earlier today with Lisa Abramowitz in talking about the Morgan Stanley results. Man, they look pretty solid there. Is that and the returns they're generating. Talk about to us about the returns these big banks are generating now before versus several years ago.
Yeah, I mean, returns are improving across the board. JP Morgan leads a 23% return on tangible equity. And then even some of the laggards like Citigroup at 13% ROTCE. That's relative to their expectations of 10 to 11% for the year. So everybody's actually increasing their returns. It's been helped by the trading results that we saw in the first quarter. It's also been helped by stable expenses. I think AI will be a big driver of that going forward as well, with less headcount growth for the industry. But positive operating leverage, all of the top line strength is falling to the bottom line, which is good to see.
I'm glad you bring up expense growth because there's a Bloomberg News story indicating that the Wall Street banks cut 5,000 jobs in the most profitable quarter ever. How much is this an indication of what we're going to see quarter after quarter from here on out? I mean, is this the kind of pace of job cuts that we might anticipate?
Yeah, it's an interesting question. It was a question that was asked by the analysts on the earnings calls across a number of the banks that reported. I think the management teams were a bit shy to really give out concrete numbers, but AI has been a game changer, especially on the consumer side, where Bank of America gave some numbers on the headcount on the consumer side. It's come down drastically. And a lot of that has to do with areas that are more manually intensive, and also areas like the call center where you just don't need the same amount of people doing that, given the fact that Bank of America has bolstered their AI chatbot, which they named Erica. That's been driving a lot of the decline in headcount needs.
So we'll start hearing from the regional banks soon. They have a much lower exposure to the capital markets business. So what are you going to be looking for from the regional banks here?
Yeah, regional banks kicked off earnings today with PNC, M&T, and First Horizon reporting. I'd say it was a mixed bag. PNC probably outshined on the lending front with strong loan growth, particularly in commercial lending. And that was echoed across the big banks as well, where they saw broader growth in commercial lending, increasing line utilization, which has been in the doldrums for several quarters given the uncertainty with tariffs last year. And then some pickup in production from areas like small businesses and the like. So that's great to see for banks like PNC. For M&T, it was a bit weaker. They did guide down on their net interest income because of less growth in consumer lending.
When it comes to the big banks, there are a lot of questions about private credit and how exposed these big banks are to potentially bad loans made directly to some of these companies. Is this a problem for regional banks?
It's also been a growth driver for regional. So it's a area that's been one of the outstanding areas for loan growth. That being said, there is virtually no concern across the management teams. I can point to PNC's CEO, Bill Demchak, that just spoke earlier this morning. He said there was a question on like where on the loss curve could private credit be in a recessionary environment, and basically said it's not on the curve. He's saying that they don't expect any losses, and he contrasts that comment with what happened a few years back on the office commercial real estate front, where they were very open about their exposures and potential loss rates there. They virtually see no losses from their private credit. So that's great to hear that, and they were very adamant about that.
All right, that's the message we're hearing from the banks pretty much across the board there. Herman Chan, thanks so much for joining us. Herman Chan is a senior analyst covering the U.S. banks for Bloomberg Intelligence, joining us live here on our Bloomberg Interactive.
It's just like his Super Bowl this week.
Yes,
He's been
absolutely.
like up at 3 a.m. every day, right?
Exactly, and that's what they do here 4 times a year when companies report earnings, and the banks tend to compress it all into a couple of days.
Yeah.
So you got to focus it. You got to focus on that stuff. So anyway, looking at the markets here again, we got a little bit of a mixed screen out there. We got the S&P up about 0.4%. The Dow's down about 0.4%. But the Nasdaq's up about 1% here, so we'll keep an eye on that.
And the Nasdaq is up for an 11th straight day, by the way. This is the longest winning streak since November of 2021, so about 5 years.
Yep, and that's that rotation trade kind of unwinding a little bit. Late last year, earlier this year, people getting out of some of the tech names, getting into some of the more value names. It seems to be reversing a little bit here with the NASDAQ outperforming solidly. WTI crude oil, it's up about 90 cents, $92.24.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. We're also streaming live at Bloomberg.com/video, and that's where you'll find us here. Let's talk a little healthcare here, because there's always deals happening. There's always new medicines being developed, new applications, and it's always changing, always lots of M&A, a lot going on in this space. For that, return to Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst at Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. He was here last week, jetted back home to Europe, now back here this week. The life of a star analyst, I guess. First of all, talk to us about Revolution Medicines. Big things going on there.
Yeah, company that started off trying to solve a particular problem. There are some things in biology that are very hard nuts to crack. In this particular case, it was trying to get a key driver of, in this case, pancreatic cancer and a whole bunch of other cancers called RAS, to make a drug against it. For years, decades, chemists and pharma companies have been trying to do it. It recently started happening. I'm talking about for 4 or 5 years. And this time they've got this drug that they just reported phase 3 data for that was stunning. You look at the share price chart.
Yep, I'm looking at it. It's the first thing I went to.
Right? Up 40, now 50% almost, right? Yep. And this is up from a level that was already pretty good.
Yep.
So we got a drug here that in phase 3 for relatively end stage pancreatic cancer, where the only choice is chemo, both of these gave you a doubling of overall supply from 6.7 months, thereabout to 13 something months, right? So you double overall survival. And this is, as I said, a patient group that are normally looking to do the best that they can with the few months that they've got left. Imagine if you took this a little bit earlier into the same patient population. First diagnosed with pancreatic cancer. You're not second line. This is your first drug that you're going to get. I think you're going to get some phenomenal results here. And the company is up where it is now, nearly $40 billion market cap. What's more interesting, did you see the fundraising they did yesterday? Paul, they went out looking for $750 million. For example, still a chunk of change, right? They worked over $2 billion, right? $1.5 billion cash, well, both all cash, $1.5 billion equity, $500 million convertible. This is because this is going to make a difference to a lot of lives.
RVMD is the ticker. The stock's up at 1% today. It's up 87% year to date, all-time high. 310% over the trailing 12 months. And this is how a lot of the stocks in your world, Sam, like the biotech world, it's almost binary. If it works, you get performance like you see today. If it doesn't, you get the other side.
Hence portfolios.
Exactly, hence portfolios. Great point. So when a company like Revolution has a great trial win, and let's just fast forward, it gets approved tomorrow, just for example. What do they do? How do they price it? How does that all happen? How does it get out to patients?
Yeah, so you go by precedent to a degree, by the benefit you're delivering, right? So this is a pill you take at home. It's got side effects. Nothing in pharma is side effect free. Maybe some vaccines are pretty light on side effects, but we're not allowed to say that, are we? What is interesting here is the amount of money they've raised, Paul. You run the numbers, they probably don't need to come back to market. They probably will, but need and will to come back to market to launch this product. And now the question is, are they going to be left alone, or is there going to be somebody coming after them for a deal? Are they going to be able to go and do this completely on their own, or could they go and do a licensing deal with somebody, do 50-50 profit share to get their first base into the market?
So if you're a company like Revolution, you got a market cap of $30 billion, but in your world, that's nothing. So, I mean, in the sense of J&J, Merck, Lilly, those guys, they see this. Are they doing the work right now thinking, do I buy these? Do I buy this company?
So the company did have some interactions with, I was going to say flirting, that's bad, interactions with Merck, and Merck apparently, if the rumors are right, stepped away because of the valuation at the time. I think the company wanted about 40 billion. What's the market cap now?
30.
Right. So is it now with this certainty in hand?
Yeah.
Is Merck going to be more incentivized to pay up? That's a big number, right?
And this is pancreatic cancer?
Pancreatic cancer.
Which is brutal.
Man, this is it. There's only 2 or 3 let me be careful here. 2 or 3 bigger, well-known cancers, glioblastoma, glioma, brain cancer, that's out there still to be done. Some particular types of lymphoma, T-cell lymphomas, are very bad, and there's work being done there. We're cracking away. Nothing to do with this. This industry is doing a phenomenal job of chipping away at those types of diseases. Would somebody buy this company? It's hard to tell. There's obviously been some interest before. Now with this certainty in hand, maybe that changes. But reality is, this is a company that could do it by themselves now. As I said, they have enough cash to do it. And we do have biotechs that get that escape velocity and get out of the orbit of pharma companies and become a pharma company of their own.
Yep. All right. Very good. All right. 30 seconds, you're going to a conference this weekend. It's not like the conferences I go where it's usually spent on the golf course or at a bar talking to clients. What are you doing?
Well, it's San Diego, so that's a good thing, right?
But you're going to sit and listen to a bunch of scientists talk about cancers.
That's right. This is American Academy for Cancer Research. It's a lot earlier. It's like discovery and scientific stuff.
Good stuff. Sam Fazeli, thanks so much for joining us. Sam Fazeli does all the biotech and healthcare stuff for Bloomberg Intelligence, one of the best out there here, and we got him here in New York. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned. with the latest market news and industry research. Your top stories and global business headlines are coming up in just moments, with the S&P up 28 points, the Dow down 215, the NASDAQ up 240 points. That's 1% rotation back into tech. WTI crude oil up about $1, $92 per barrel. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting.
Steve Kathan. President Trump says Iran still wants a deal to end the war very badly, and Pakistan says there are moves to extend the ceasefire and restart negotiations. CBS's Natalie Brand is at the White House.
The U.S. official confirming to CBS News that U.S. diplomats suggested a 20-year suspension of Iranian nuclear enrichment at a minimum with other restrictions. But, already some Republican allies of the president have pushed back against that idea of a moratorium instead of an outright ban. And the president, when asked about that, told the New York Post, he said he doesn't like the 20 years, that he's always said Iran cannot have nuclear weapons.
Trump also indicates on social media that China has assured him it won't help Iran's military. CBS's Elizabeth Palmer.
The Financial Times got documents that show that the Iranian Revolutionary Guard purchased a satellite that had been launched by a Chinese company, and also purchased access to ground receiving stations, and specifically asked for satellite pictures of U.S. bases.
The U.S. military said today it stopped 9 vessels from sailing out of ports in Iran during the first 48 hours of a naval blockade. Tornado damage and floodwaters hitting parts of Iowa and Michigan. This woman in Sun Prairie, Wisconsin, says the hail was large.
We've heard hail before, and it just kind of pops, but this was banging. This was like somebody throwing rocks at the house.
CBS's Usher Qureshi.
The big concern now is what's next. Forecasters warn another round of severe weather could develop later today with the same threats: damaging winds, large hail, and the possibility of more tornadoes. Now, people here are preparing. They're clearing their yards. They're charging devices and making sure they have a safe place to go if warnings are issued.
It's April 15th, a scramble for some people to get their taxes filed by the deadline tonight. CBS's Jill Schlesinger.
If you file electronically and you've got all of your documentation, then you may be able to make it. Now, conversely, if you don't think you can do it, you can file for an extension. That is a 6-month extra period of time so that you can prepare your returns. But under the IRS rules, you still have to make sure you've paid what you think you owe. Otherwise, you could be subject to penalties, and who wants that?
Now to Boston. A ceremony today to mark 13 years since the Boston Marathon bombing. Wall Street, the Dow is down 240. This is CBS News. A funny man has found the humor in a tragedy that hit close to home.
lost everything in last year's wildfires in Los Angeles. This smoldering ruin is all that's left of Billy Crystal's home of 46 years. Now the comedian will bring the story of his loss to Broadway in October.
It's all the funny stories and touching stories that have happened to us in that time.
Crystal tells CBS's Stephen Colbert his solo show will be called 860, his address in the Pacific Palisades.
We're starting plans to rebuild. I have to say the ballroom is going to be fantastic.
He says he began writing the show the morning of the fires. Deborah Rodriguez, CBS News, New York.
Amazon blames a hardware failure in a production truck for the disruption of the Prime broadcast of an NBA game while it was in overtime last night. It lasted more than a minute. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Markets aim for new highs on reports of an agreement in principle. That's all it takes these days. Welcome to the Wednesday edition as the U.S. and Iran continue talking about extending the two-week ceasefire. As we will hear in a moment from Bloomberg's Tyler Kendall. She's at the White House. And, of course, we'll get an update on the markets in just a second from Charlie Pellet with S&P 7,000 back in our focus. President Trump once again threatening to fire Fed Chair Jay Powell as the DOJ makes a surprise visit at Fed headquarters. We're going to talk this out with Bloomberg's Michael McKee, who's in Washington for the IMF meetings. And it may be back to the drawing board on FISA. House Republicans canceling a procedural vote to renew the spy powers. We'll discuss it with our political panel. First, Wall Street, as I mentioned, Charlie Pellet has his S&P 7,000 hat. You think you get to use it today, Charlie?
Yeah, I would suspect yes, but here's what's going on. We got the S&P. We did get as high as 69.99. I hate going decimal, but it is relevant. 69.99.84, where we were on the S&P 500 index at the high of the session. Right now, we got the S&P trading at 69.95, backing off just a little bit. Still very close to getting to back above 7,000. S&P right now up 0.4%. Dow Industrials down 227, drop there of 0.5%. While NASDAQ up another 251 points, up there by just about 1.1%. All of this with a VIX just under 18, a 10-year at 4.28% with a 2-year currently yielding 3.77%, while gold is down $34 the ounce to $48.07. The precious metal down by 0.7%. West Texas Intermediate crude up 1% at 92.17 a barrel. Brent, the global benchmark, 95.76, up now by 1%. So bottom line here, we've got the S&P pushing higher, 69.95, up now by 0.4%. Brent Schutte is Chief Investment Officer at Northwestern Mutual, and on surveillance this morning, he told us no question investors still facing lots of uncertainty.
Beyond the conflict, you still have the questions over what happens with Kevin Warsh when if he does become Fed president, and what happens with the president's wishes versus what the market is pricing in right now. You have the midterm elections coming up, and you have tariffs, which quietly have come down the past few months as the IEEPA came off, but they're, I think, going to go back up in the future. And so I think there are still plenty of things to worry about.
Northwestern's Brent Schutte, and yes, topics we cover right here on Balance of Power. Bank earnings, Morgan Stanley and Bank of America both higher after this morning's reports. Morgan Stanley surging by 4.3%, Bank of America up now by 1.8%. Recapping, S&P higher by 29, that is a gain of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, that's Joe Matthew. This is a Bloomberg Business Flash.
All right, my friend. Thank you, Charlie. Happy tax day, Charlie Pellet. He'll be back with more on the markets in about 15 minutes as we follow the Wednesday trade that could be an all-time. Pay no attention to what's happening in the Middle East. Or maybe it's because of what's happening in the Middle East. We have big questions about whether the market's moved on or is in fact being egged on by the reports of a agreement in principle. White House obviously has a good story to tell when it comes to potential talks, and it believes that it does on tax day as well. You know, they're going to have Scott Bessent in the briefing room a little bit later on with Caroline Levitt as the IRS tells us that you're getting more money back this year. And remember, that was the point of, well, one of the points of the One Big Beautiful Bill. The average refund, this is real now. Did you get your refund yet? Producer James already booked a vacation with his. The average refund for the almost 100 million households that have already filed returns as of April 3rd was $3,462. Did you get that much money? Maybe more. That's 10% above last year's average for similarly early filers. Okay. You know, the bill didn't pass till halfway through last year, so people are getting more money back because companies withheld too much of your money. So it's party time, everybody, right? Unless you look at the other side of the coin on this Iran story, and that, of course, is, well, high gas prices. You start paying more than $4 a gallon, and you do the math here, and, well, we have a problem. The Associated Press took a swing at this. Gas price trajectories suggest the average household will pay $740 more for gas this year, nearly equal to the increase in refunds. A separate analysis by Oxford Economics predicting higher gas prices will cost you, in total, all consumers, $70 billion. That is more than the $60 billion in increased tax returns. So insert sad trombone sound here. I don't have that anymore. I don't have all my old fun radio toys here in the fancy TV studio. But the fact of the matter is, there are multiple reports who say that we are closing in on a deal here to extend the 2-week ceasefire, and the markets love that. Bloomberg News says the U.S. and Iran considering extending the ceasefire that ends Tuesday by another 2 weeks. AP, mediators moving closer to extending the ceasefire. Regional officials said Wednesday they were making progress. And this is the line, telling the Associated Press the U.S. and Iran had given an in-principle agreement to extend the ceasefire. And then there's Axios, always part of the game. U.S. and Iranian negotiators making progress on talks closer to a framework agreement to end the war. The president, of course, talking about this. He had an interview this morning. I think it was scheduled to talk about, well, tax day. But, of course, all the questions are about Iran. And he sees the end of this thing coming pretty soon. Here's the president this morning.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. But we'll see what happens. I think they want to make a deal very badly.
Taking to Truth Social. I think this is after, because they pre-taped that interview, right? China, he says, is very happy that I am permanently opening the Strait of Hormuz. I am doing it for them. Also, and the world, the situation will never happen again, he says. They've agreed not to send weapons to Iran. China, he's talking about. President Xi will give me a big fat hug when I get there in a few weeks. We're working together smartly and very well. Doesn't that beat fighting? I'm waiting for the, does anyone remember laughter post? And I'll give you one more before we bring in Tyler, who's patiently waiting for me to go through all of this. The Pentagon, according to the Washington Post, is sending a lot more troops to the region. Okay, think about this. The ceasefire ends in 1 week. They want to add 2 weeks. Well, what if it doesn't happen? This is the other possibility. Thousands of additional troops in the coming days. Forces moving into the region include 6,000 troops aboard the aircraft carrier USS George H.W. Bush and several warships escorting it. About 4,200 others with the Boxer Amphibious Ready Group and its embarked Marine Corps Task Force, the 11th Marine Expeditionary Unit, are expected to arrive near the end of the month. So if we're going to go for it, they're going to be joining 50,000 others the Pentagon has already put into the theater. We got some decisions to make. And Bloomberg's Tyler Kendall is standing by on the north lawn of the White House on this beautiful spring day. It's tax day, Tyler. Great to see you. Are we going to hear about the war, or is all the messaging today about April 15th?
Well, at this point, Joe, we've already heard from President Trump about the war, right? Though it's clear that the White House would like to change that narrative and focus in on domestic policies, because as we talk a lot about on this program, we are just careening closer and closer to the midterm elections. And as you laid out perfectly, Americans right now are contending with higher gas prices, which goes against this White House's bid to help lower prices for consumers as we get closer to the election. All eyes are going to be on this 1 p.m. Eastern briefing of course, with the White House Press Secretary Caroline Leavitt, but we're also expecting the U.S. Treasury Secretary Scott Bessent, as well as the SBA Administrator Kelly Loeffler to be in there as well. And they are probably there to help outline those domestic pushes when it comes to getting back more tax returns and those provisions in the One Big Beautiful Bill. But, Joe, I think we would all be surprised if they did not get questions when it comes to Iran, considering that has been front and center these past few weeks.
And gas prices, of course. The AAA's got the average today, Tyler, $4.10. It's almost $4.11. If you're in the D.C. area where you and I live, you're paying $4, maybe a little bit under. If you're out in California, you're paying almost $6. This is part of the story today, is that you can't enjoy the benefits of tax returns when you're putting it all in your gas tank. Is this something that Scott Bessent might talk about?
I would expect likely, Joe, particularly as the Treasury Department yesterday moved to say that they were not going to renew this 30-day waiver on Iranian crude purchases that are already at sea. It was a waiver for the sanctions and a bid to get some more supply on the market to try to tamp down on global energy prices, and that's not going to happen. In fact, the Treasury went further and also said that they are now threatening secondary sanctions against any financial institutions that support Iran. So it is clear that the administration is trying to ramp up the pressure, at least in the short term here, in order to get more leverage, as we are expecting diplomacy to still be a viable option ahead. Of course, this dovetails perfectly into the U.S. blockade that has been dominating the news cycle and does serve as that leverage, both as a financial lifeline against Iran in these talks.
You do wonder how quickly the vice president, if it is going to be J.D. Vance leading another round of talks, might be on an airplane this weekend. Big fat hug. Tyler, is the president a hugger? What's he talking about in this post?
Well, I'm not going to draw any sort of conclusions. Maybe the White House press secretary would be able to confirm that. But yeah. President Trump here is talking about the U.S.'s relationship with China, because we have seen China come into the picture in such a major way when it comes to the U.S.'s thinking in the war in Iran. We know that the majority of oil flows that go through the Strait of Hormuz go to Asia, but go primarily to Beijing. And President Trump had threatened last week that we could see an additional secondary tariff on countries that supply Iran with weapons, appearing to be a message to China. Now, there were questions. We heard the NEC director say maybe that this could be done under the IEEPA authority, which was struck down by the Supreme Court. But it did appear evident that the White House wanted to ramp up the pressure the same day that President Trump had said that he felt that China was influential in getting Iran actually to the negotiating table. In this same interview, Joe, President Trump did say that he faced no pushback from Beijing when it comes to the closure in the Strait of Hormuz, but we should probably point out that in the last 24 hours, we heard the first and most forceful comments from Chinese President Xi Jinping, saying that the world order is in disarray, in his words, and vowing that China will be a good partner to the Middle East. We can confirm that Chinese and Iranian officials did hold a phone call today. According to the Chinese readout of that conversation, they're supportive of Iran's push in the negotiations.
Yeah. We can't start the show without Tyler on the North Lawn, right? I'm sorry. It's just part of the... It's like 90 degrees out there. They're probably sunbathing on Pebble Beach. Tyler, thank you very much. Let me know if the president's still going to the Correspondents' Dinner. That's the weekend following this one. That'll be a doozy. I'm Joe Matthew in Washington. This is Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, trading above 7,001 right now. That is a gain of 33 points, up by about 0.5%. The Dow, however, stuck in the red, down 218 points now on the Dow, a drop of just about 0.4%. We've got NASDAQ up 292. That is an advance for the NASDAQ Composite Index of 1.2%. The VIX below 18 right now, with a 10-year at 4.28%, the 2-year 3.77%. Spot gold down $32 the ounce to $48.09, down 0.7%. And West Texas Intermediate crude higher today, $92.15 a barrel, up by 1%. Bottom line here, stocks are moving higher on ceasefire hopes, the easing tensions in the Middle East, also robust corporate earnings. Speaking of which, we heard from Morgan Stanley this morning, up now by 4.2%. Bank of America up by 1.4%. We're also keeping an eye on shares of Allbirds, BIRD, on the ticker, up now by 642%. Yes, that is a correct quote, up 640%. This after the former shoemaker, only days away from ceasing operations, says it will pivot its business to compete in AI infrastructure. Again, right now we have got shares of Allbirds surging by 650%. All of this with the S&P above 7,000 and a VIX below 18. Joe Matthew, that is a Bloomberg Business Flash.
Charlie, thank you so much. What a story. 640%. Let's see where that is by 4 o'clock. Thanks for joining us on Balance of Power. We're live from Washington. It's the Wednesday edition, and you can't get around town. The IMF World Bank spring meetings have us ensconced. There are a lot of important people walking through the Bureau, including Michael McKee, who we're going to talk to in just a moment here, with questions about what's next for the Fed. The big story last night was that they actually scheduled a confirmation hearing for Mr. Warsh, but there are big questions about whether a vote will follow that meeting as long as Tom Tillis continues his opposition to the Department of Justice investigating the criminal investigation that is underway into Jay Powell. You remember this, it's all about the building renovations. And lo and behold, 3 officials from the Department of Justice, 3 prosecutors showed up at the Eccles building yesterday. I don't know if they had hard hats on. I guess they didn't have a camera crew in tow like the president did, but they tried to enter the construction site for some reason. This did not go over well. The outside counsel acting on behalf of the Fed, Robert Hurst, sent a note to the DOJ strongly objecting to the visit, requesting that they limit their interactions to existing channels. I love the language here. He writes, as you know, Chief Judge Boasberg has concluded your interest in the Fed's renovation project was pretextual. Should you wish to challenge that finding, the courts provide an avenue for you. It is not appropriate for you to try to circumvent it. This was a letter reviewed by Bloomberg News. I ask that you commit not to seek to communicate with my client outside the presence of counsel. Did they think Jay Powell was in the building? Is he swinging a hammer over there? Or what were they looking for? All questions we have for Michael McKee, who I'm glad to say is still in town because of the aforementioned IMF World Bank spring meetings. Do you know what they were looking for? Did they show up just knocking on the door?
I got to tell you, Washington, D.C. has scooters so that you can rent. So you can get around town, but just not in a car.
Is that what you're using?
That's what I'm using.
Are you cool enough to do a scooter?
It's the only way you can get around.
I would never trust myself.
I have no idea what, well, I do have an idea of what they're looking for. They're trying to find some dirt on Powell. The judge said that there didn't seem to be anything in the initial complaint, which was in theory about him lying to Congress about the renovations at the Fed. And of course, all the members of the banking committee said he did not lie to Congress. And the judge said this was just an attempt to intimidate Powell. Now it seems, and from the president's remarks the last couple of days, and then he said again this morning on Fox Business, that they're investigating the cost overruns, which are, according to the Fed Inspector General, about $1.5 billion is the total cost here, and so there's an overrun of about 600 or 700 million, which the president now says is $4 billion.
Yes,
and we know how he likes to add numbers up.
Were they going to take pictures? They're looking for the fish tanks and the
we don't know exactly, but they do seem to be trying to find something, because as the president explained this morning, there has to be something either incompetent or criminal about why it's costing so much. You have to go back to when the Senate first asked the questions. The Fed sent a very long letter from the Inspector General outlining all of the reasons why there are cost overruns, and it doesn't appear that there's anything either incompetent or criminal about it, but the DOJ seems to be looking for that.
Yeah, I mean, it's not like a safe place to walk around, right? It's a construction site.
You get yelled at. Those prosecutors will get yelled at by OSHA.
Well, right. So Jay Powell's not working in there, correct?
Yeah.
He's not in the building, presumably, unless he's got his hard hat on. So you mentioned the Fox Biz interview this morning, and the president reiterated his threats to fire Jay Powell if he didn't leave. Listen to the language. Leave the post in time. Here's how he put it to Maria Bartiromo.
Whether it's incompetence, corruption, or both, I think you have to find out. I really do. I think you have to find out.
So you're not going to drop the probe?
No, I'm not playing. I have to find out.
And he said he's not leaving if, you know.
Well, then I'll have to fire him, okay? If he's not leaving on time, I've held back firing him. I've wanted to fire him, but I hate to be controversial.
Okay. I'm not sure. I believe that last part.
I think we can take that one with a grain of salt.
Yes. But, okay, so he just made news on a couple of fronts. They're not pulling back on this investigation, which means Tom Tillis won't vote to clear Mr. Warsh, yet the president still thinks he can fire Jay Powell. Is any of this?
There are some analysts who think that this may lead to the Senate Banking Committee putting off the Warsh hearing next week if they're not going to get anywhere.
That commentary this morning?
It's just very odd that the president would wade into this now, and nobody can quite understand, other than the idea that maybe vengeance is more important to him than getting Kevin Warsh in, because he probably knows Kevin Warsh can't immediately cut interest rates, and he wants to get Jay Powell, because if you want Warsh in there, all you're doing now is postponing that, and it could be a while if this investigation goes on. Now, there's an investigation, but there's no charges. It's important to remember that this is just kind of out there, that we're looking at you.
Yes.
And Powell is not going to leave until he says that's over with, because he doesn't want to put himself in legal jeopardy.
Yeah, right.
So it's kind of a weird situation all around, but it could mean, if the president's going to be sticking to this view, that Warsh doesn't get confirmed for a while, which leaves Jay Powell in office. Now, there's a legal question about whether he can remain as the chairman of the Board of Governors.
Yes, correct.
And that might be fought out in court.
Wow.
But the Open Market Committee, which makes interest rate decisions, gets to choose its own chairman, who doesn't even have to work at the Fed. But they have already said, we're going to choose Jay Powell. We chose Jay Powell, so we don't have to do anything. So if the president doesn't get Warsh in there, then Powell remains in charge of interest rate policy, which is sort of what the president says he doesn't want.
Point of, wow.
And of course, we don't know about the firing part, because the Supreme Court has yet to rule on Lisa Cook.
Lisa Cook, we still wait. What a brain twister. Thank you for the help, as always. Professor McKee with us live in Washington. Michael McKee on Bloomberg Radio. Something important just happened on Wall Street. Did we put up a red head for that, James? S&P 7,000. Charlie Pellet said a half hour ago that was likely, and here we are. We're just below that level right now. But with a story like this, we have to bring in Eric Weiner, Bloomberg News senior editor for America's Equities. He's with us live from World Headquarters. Did the building shake, Eric, when we hit 7,000?
No, I mean, it was quite the move in that we did not really see this coming over the last couple of days, but
well, tell me what's going on here. If you look at the S&P chart, this recovery has been wild since we bottomed out a couple of weeks ago over fears, of course, well, when crude oil was $120 a barrel. We're down in the low 90s, and by the way, slightly higher right now. WTI is at 91.63. Is Wall Street just convinced that this war is over, or that it does not matter?
I think Wall Street's convinced that the president is going to find a way out of the war. Whether that risk continues is a much larger question. For example, we can leave, but the Strait of Hormuz can still be, in jeopardy. And if that happens, then oil can go back up and, supply chains can be disrupted. But right now, there's just this enthusiasm that we're going to get back to the state of play. We're going to get back to talking about our economy and the economic conditions. And that's really bullish for Wall Street.
Well, boy, amazing. It's pretty broad-based here. as well. What do you make of the action that we're seeing? Energy obviously has not been in favor, but where's all the money going as people cash out the gains in Exxon and Chevron?
There's a real interesting rotation going on into technology. Right now, if you look at today, the number of
Microsoft is up.
Oh yeah, and well, basically the Mag 7 has gone from lagging to leading over the last couple of weeks. But it's not just them. Profitless technology firms, which we can break out in different indexes, are doing great. Small caps aren't doing well, but like these are the tip of the risk missile where you start seeing people taking a kind of flyer on things. And what's interesting is that today, the number of stocks that are up, there aren't that many stocks that are up. There are about 200 out of the 500 in the S&P, but the 200 are the big tech guys, and they will drive the market higher.
The tip of the risk missile is going to be the name of Eric's book when that comes. That's fantastic. So remember the SaaS apocalypse? Is it over? People are pouring money into Salesforce today, Eric. We've seen it all, I guess.
Yeah, I mean, we are seeing software catch a bid. The thing about like companies like Salesforce and ServiceNow and like some of those big providers, they are so cheap. Like, I think Salesforce's PE is like 9, which you just never see. So there's a real opportunity to just make money in the short term buying something that's just incredibly cheap right now.
Is Wall Street buoyed by this idea of bigger tax returns? Eric, that's what the administration wants us to talk about today. They are, in fact, bigger as we look at the average returns announced by the IRS, up about 10% from last year, but a lot of that's being gobbled up at the gas station. How do we rationalize it?
Well, where you can see it showing up, yes, obviously, like where gas is up and, you know, some of the costs that are going to go into the summer season are going to be real, but you're starting to see consumer discretionary, which also had been lagging, doing really well. And these are companies, you know, like Louis Vuitton the other day warned about, you know, sales slowdowns. So like there were reasons to be concerned about these companies, but they're really rising. And that's because in a very simple way, the assumption is that Americans are going to have more cash in their pocket, and that's where the money is going to go.
Got 1 minute left. Will earnings reporting season make good on expectations or beat them?
The earnings expectations are going to probably be beaten. Earnings look good. The fundamentals look good. Where this all comes out is like the compendium of responses from CEOs about the risks that lie ahead. Everything is going to be about the outlook. If they see that there is still demand for their products, that they have pricing power, then everybody is going to feel good about things. If they are starting to still talking about, you know, in the second half, we really don't know where things stand, it gets a little dicey.
Got it. Great to spend time with you, Eric. It's always a pleasure. Eric Weiner live from New York. I'm Joe Matthew in Washington with our eyes on the markets. Charlie Pellet will update things in just a couple of moments. We're just a couple of points south of 7,000 on the S&P 500, and our political panel is waiting in the wings. Rick Davis and Jeannie Shanzano are up next right here on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P, NASDAQ both advancing. Did see a print above 7,000 moments ago on the S&P, pulling back slightly right now, but holding close to session highs, 69.93 where we stand on the S&P 500 index. A gain right now of 25 points, up by about 0.4%. Stocks extending their gains as investors pile into equities on optimism over the ceasefire between the U.S. and Iran, along with robust corporate earnings. Specifically, the banks this morning, we heard from Morgan Stanley and Bank of America. Shares of both of those names are higher. The Dow right now is down 224 points. That is a drop of just about 0.5%. Caterpillar, JP Morgan Chase, and Sherwin-Williams all weighing on the Dow. The S&P up 24, up 0.3. NASDAQ up by 0.9%. All of this with the VIX just above 18 right now. The 10-year, 4.28%, with the 2-year, 3.76%. Spot gold is down $32 the ounce to $48.08, down 0.7%. And West Texas Intermediate crude, 91.77 a barrel. WTI up by about 0.6%. Well, certainly higher energy prices are playing into inflation concerns. Pooja Sriram is senior U.S. economist at Barclays Capital, and she was a guest this morning on Bloomberg Surveillance.
So far, there seems to be a belief that this energy price shock is going to be, to use that word, transitory, and then, hopefully things pass over. But I think the longer this continues is when consumers, the average consumer, starts getting worried.
Pooja Sriram, a senior U.S. economist at Barclays Capital, and you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Among oil majors, right now looking at ExxonMobil up by about 0.1%. Chevron trading lower by 1% right now. ConocoPhillips up by 0.5%. I mentioned the oil names because Bank of America saw its customer spending on gasoline soar 16% in March as the war in Iran led to a jump in oil prices. Recapping, S&P 500 index now at 69.88. We're off session highs, up 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you so much. He'll be back in about 20 minutes. More from Charlie Pellet on the markets coming up at 1 p.m. Eastern Time as we roll into hour 2 on Balance of Power and welcome our global television audience to the conversation. Watching Palantir since the president put his buy rating on it on Friday, not bad so far. It's up about $12 or 9%. We're up about $140 here. Really interesting when he puts out a buy rating. It actually has got a pretty good track record. If we could get into Tesla as well while we're at it. It is snowing pollen in Washington right now. If you're with us on 92.9, 99.1, you know exactly what we're talking about. If you are on 92.9 in Boston, it through, and you'll have people calling in sick before you know it. No excuse when it comes to what happened today with FISA. That has nothing to do with the weather, but in fact, politics in the House of Representatives. This is pretty interesting here, and it's going to become a much bigger story in the next couple of days as the renewal of FISA 702 always does. This is, of course, warrantless wiretapping, spy powers that are always controversial, and Republican leaders have just postponed the initial vote, the procedural vote on authorizing FISA here to renew this with the White House and Republican leadership, namely Speaker Mike Johnson, pushing hard for a clean extension that would last 18 months of the surveillance authority. It lapses on April 20th. So they need to figure this out right now, and it's where we start our conversation with our great political panel. They're back today, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And there's Rick Davis, Republican strategist and partner at Stone Court Capital. Rick, it's pretty predictable, and you know that the Freedom Caucus is going to have trouble renewing FISA whenever it happens, but the president came in pretty strong behind this yesterday. What seems to be the holdup?
Well, I think that the constant kicking the can in Congress about not dealing with some of these more divisive issues, has led to now backs up against the wall. If they don't pass it, it expires on the 20th, as you pointed out, Joe. And that would be a disaster for the intelligence, national security parts of government. They lose one of their key aspects of being able to keep America safe in our own country. And so the pressure's on. This is really the shot that the House has to take in order to be able to process it through the Senate and get it to the president's desk. So it's really of their own making. They could have easily done this 6 months ago, and nobody would have paid much attention to it. But now, as a critical timing issue is upon us, the pressure's on for Speaker Johnson to really plow through his own caucus and get this done.
Where are Democrats on this, Jeannie, that conservatives, in many cases in the Freedom Caucus, are looking for an amendment vote? They're demanding an amendment vote on warrant requirements. A lot of heads exploded in the Rules Committee last night over this whole idea. Where will Democrats fall on this?
Well, I think this is the fourth reauthorization we've seen of FISA, and every time it has gotten more difficult. And I think you can almost trace the difficulty to the less trust people have in the federal government, the less likely Congress is, or as many Congress people are, to jump to reauthorize this program. I don't think there's any question that most members of Congress and most members of National Security Administration see this as a critical authority. This is how we protect ourselves in the homeland. The problem here is you're running up against two things. Number one, from the conservative side, these amendments you're talking about, particularly as it pertains to warrants, a lot of that goes back to the whole Carter page of it all. And then you've got on the Democratic side, as Democrats, particularly in the base, are increasingly concerned about an executive branch which just keeps taking power. They are not comfortable with handing this power over once again to people like Todd Blanche and Kash Patel, because let's not forget, to get these certifications over to these FICA courts, it is a certification from the Attorney General, from the FBI Director. And of course, we have Article 3 judges who consistently over the last year have said they have been lied to or they have been given information that is misrepresented by these folks. So Democrats are not incentivized to support this as well. So you see Mike Johnson getting squeezed sort of in the middle of this. And I think it gets done because it's almost unthinkable that at a time of war, we wouldn't have this authority, but it's going to become increasingly harder.
Well, that's the message that many are sending here. Jeannie, you walked us through that very well. And as we learned, Rick, the president hosted lawmakers who are skeptical, Republicans who are skeptical about this at the White House last night. The news that came out of that meeting was a number of holdouts did not actually even show up. And the biggest of them, Andy Biggs, atop the Freedom Caucus and a major advocate on warrant requirements, he told Axios he wasn't even invited. He said, I need to be talking to somebody at the White House, and they don't really want me there. I guess I know too much about how this works. Does Donald Trump need to take a different approach?
You know, I think that Donald Trump did the right thing by lobbying his caucus. He's very hands-on, as you know, in the House, Joe. I mean, some people call him the Speaker in the White House, and frankly, the whip too. And so it doesn't surprise me at all that he's working on behalf of Johnson to get this done. And look, I mean, I think it's really important to point out that the vast majority of the Democratic and the Republican caucus are going to support this, right? Republicans are in a jam because they don't want anything to do with the Democratic vote. So can they get all their caucus to support this and not rely on Democratic votes? And they shouldn't care about that, especially anything relates to national security should be a bipartisan effort. And if they let this thing hit the floor in the original version of that Rules Committee that was putting it forth, it'd be overwhelmingly supported. So we're dancing around on the lunatic fringe of both parties right now, and it just makes the Congress look ineffective.
Well, that's really interesting. We haven't even gotten on a reconciliation yet. I will also mention that there are some lawmakers in this case who are allied with the president, including Anna Paulina Luna, who say they will vote no unless the Save America Act is attached. Jeannie, would this pass now if it got to the floor?
I don't think so with the Save America Act. And this is the problem.
No, just a clean extension, I'm saying.
Oh,
to Rick's
clean
point.
extension.
Yeah.
I think it is possible, but I do think it's going to be a hard-fought battle. And I have to disagree on the White House. They waited until mid-March to even signal to Congress that they supported this passing in a clean way. And of course, for the president not to invite Andy Biggs, none of this is a surprise. In 2024, we went through the exact same battle, the exact same amendment by the conservatives lost. So they should have been more prepared for this. And now with 5 days to go, they're pushing the conservatives to get this done. And again, we are now in 2026 when you also have the problem coming from the left. So again, they are being squeezed on both fronts. I think one good sign for Johnson is that you had Roy Norman and you had Griffith skip the rules vote last night. So that may be a sign that they can get this through, but this is going to be tough for him.
Boy, it's been a great spring already for Mike Johnson. You know what else the administration is pushing for, and we've talked about this, guys, quite a bit, is a lot more money for defense. And I'm wondering your thoughts on this, because this is the opportunity for Russ Vought to make the case. He's testifying today before the House Budget Committee, telling lawmakers, Rick, that the 40% increase in the defense budget is, quote, meant for significant paradigm-shifting investments. For the industrial base, he says, to double and triple capabilities and build more factories, not just add shifts to them. It requires multi-year agreements to purchase into the future, and that cost has to be booked in the first year. Does he have a case to make here?
You know, I think he actually is making his case. You articulated it very well, Joe. You know, we have a critical supply shortage because of the use of our weapons around the world. On behalf of the Ukrainians, on behalf of the American people in Venezuela, in Iran, and other theaters all around the world. And we have not done a good job of using taxpayer dollars to sustain those supplies. And so now, you know, we're looking at the future. And of course, you know, the question ultimately a lot of these members are going to have is, so how did we get into this position? And why do we need the buildup that you're describing? Are we preparing to go to war with China, with Russia? I mean, like, how are we going to use this equipment if we're going to spend $500 billion more on the defense budget? And are we going to be reassured that it's going to be done properly? So there, a lot of members I've talked to in the Senate are really scratching their head trying to figure out how this is supposed to work in an era of ballooning deficits. And I think unless there are offsets, this is going to be a hard sell.
Well, I'd love to hear from you on this, Jeannie, because the chair of House Armed Services, Mike Rogers, says they're going to carve this up a little bit. It's going to be $1.15 trillion in the budget, and then the administration will ask for another $350 billion throughout budget reconciliation. And the whole point of this, he says, is to make it more palatable for Democrats. Will that work?
I don't think so. And if we just take a step back, Rick just mentioned the deficit, of course, the huge loser here. You also have the issue of the headwinds for the deficit because we have the tariff refunds coming. And then, of course, you bundle that with these offsets. Where is that going to come from? Well, there was I think it was an Easter luncheon when the president told his supporters, well, that'll come because you're going to have states increase taxes that'll help pay for daycare, Medicare, Medicaid, because the federal government, according to the president, simply cannot do anything except fund defense. This is a stark choice then before the American public. Of course, when that video went up and there was an outcry about it, the White House took it down. Politically smart, but the message is still out there. And this is what we're seeing, a White House that is committed to a $1.5 trillion budget. And then, of course, all of this spending in these reconciliations for a war that even when the vice president goes down and talks to Turning Point USA yesterday, gets booed by young, extremely conservative people who don't support him doing exactly what he said he wasn't going to do on the campaign trail. So I don't think this is going to be an automatic push through for the Congress here as it comes to these reconciliation bills. And there are big losers here in the American public.
Well, even Mike Rogers says the reconciliation, you're going to have offsets, and we'll just see what the offsets are. And we certainly will. When we find out, we'll play them to our great panel. Jeannie Shanzano and Rick Davis stay with us. They'll be back in our second hour here on Balance of Power as Kaylee Lines joins the conversation. And, of course, we welcome our global television audience. We're going to have a lot more to talk about. We'll bring you to the White House, get an update from Tyler Kendall on the latest on Iran. An agreement in principle, we're told, to extend a ceasefire. Depending on the report, we'll get into that. And our conversation ahead on this tax day with Danny Werfel, the former IRS commissioner, with the refunds going out and all being spent, it seems, at the gas station. We'll have a lot more on this straight ahead on Balance of Power, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
S&P 7,000 becomes reality again, if only briefly, on reports of an agreement in principle when it comes to Iran. Thanks for joining us on the Wednesday edition of Balance of Power as the U.S. and Iran continue talking about extending a 2-week ceasefire, potentially by an additional 2 weeks. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, this news hits even as the U.S. reportedly sends thousands more troops to the region.
Well, it's incredible to see our force position just strengthening, even as the president continually says that he sees an end to this war soon, as he suggested in an interview on Fox Business, of course, done in honor of the fact that today is tax day, something that Republicans across the board are going to try to call attention to today. What they want to be talking about is higher tax refunds, though in large part, of course, those higher tax refunds are getting offset by higher gasoline prices, hence perhaps the political impetus to find an end to this war. And of course, as we know, actually reaching a lasting agreement, something that many people have told us on this program, you might not be able to accomplish in just a 2-week period, which is why this extension may be necessary.
Well, that's true. CENTCOM telling us today they turned away another 9 ships at the Strait of Hormuz. The strait's still closed. Oil prices barely moving. We're still hovering around low to mid 90s, depending on the contract that you're looking at here, Kaylee. But we are going to probably be hearing from officials this hour at the White House. Scott Bessent making a rare appearance in the briefing room today to talk up the benefits, as Kaylee mentioned, of tax returns and the tax policies that were in the president's big, beautiful bill. The analysis that we have seen, though, to your point, is that these refunds, while higher than last year, are in some cases being more than offset, completely gobbled up at the gas station.
Yeah, take a look at the example the president tried to highlight at the White House earlier this week when he received a DoorDash delivery of McDonald's to the Oval Office. Yeah, a DoorDash driver may no longer be getting taxed on tips, but they still have to fill their tank with gas.
Yes.
So you win some, you lose some.
Of all the gig workers to seize
net.
on.
Yeah, it's incredible to consider. But as Joe said, we will be hearing from the Treasury Secretary this hour at the podium alongside the Press Secretary. The Small Business Administrator, Kelly Loeffler, will be there as well. And we'll, of course, bring you any important headlines that they make. But first, let's check on what's happening in financial markets on this tax day and turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Got to begin with crude. Everybody's talking about it. Here's what's going on. West Texas Intermediate crude right now, 91.83 a barrel, up 0.6%. Barrel of Brent, 95.67, up by just about 0.9%. All of this is we're learning that the Commodity Futures Trading Commission, which is the top U.S. derivatives regulator, is said to be investigating suspiciously well-timed trades in the oil futures market. This ahead of policy pivots by President Trump relating to the war in Iran. Dow Industrials trading lower by 195 points, now down 0.4%. So not all stocks advancing, but as Joe mentioned, the S&P 500 index did briefly top 7,000 once again, 69.89 where we stand right now, up by about 0.3%, and Nasdaq higher by 189, up by about 0.8%. So the big question: will we hit 7,000 and close above that level at the close? Right now, we have got the VIX trading right above 18, 10-year 4.28%, the 2-year 3.76%. Spot gold down $37 the ounce, 48.04 right now, down 0.8%. And again, West Texas Intermediate crude up 0.6%, 91.82 a barrel. Earnings news briefly. Morgan Stanley after earnings this morning up now by 4.3%. Bank of America after earnings up by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much running us through the market action as the S&P 500 is in and around record highs, despite the fact that there is not yet a resolution to the ongoing war between the U.S., Israel, and Iran in the Middle East, but perhaps signaling in the direction of travel that could lead to a peace agreement is what equity investors are clinging to here, in addition to optimism around earnings, as we have gotten repeated signals that not only may there be another round of talks happening in the coming days, but we could see an extension of the ceasefire that, of course, was set to expire next week for another 2 weeks. That's what Bloomberg is reporting today, as President Trump is saying that he sees this conflict coming to an end soon. He told Fox Business this earlier.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. But we'll see what happens. I think they want to make a deal very badly.
Bloomberg News Now reporting the U.S. and Iran are considering extending their ceasefire that ends Tuesday by another 2 weeks. And it's not just Bloomberg. The AP says regional officials say they're making progress, telling the Associated Press the U.S. and Iran had given a, quote, in-principle agreement to extend it to allow for more diplomacy. Bloomberg's Tyler Kendall, as you can see, is live on the North Lawn of the White House. And trying to read between the lines in some cases on this, Tyler, I know it's tax day, and that's the primary message coming from the White House, which we'd like to hear about from you, because it's competing, of course, with the messaging that's coming from the Middle East. Although so far today, this appears to be, at least the way the market's interpreting it, a good news story. What are you hearing there?
Well, Joe, at this point, the White House does maintain that diplomacy is a viable option ahead. As you're outlining, we've gotten this flurry of reporting about the potential for an extension. The White House hasn't confirmed that that's actually in place yet, but Bloomberg News putting a finer point on it, saying that perhaps a 2-week extension could soon be coming, and are reporting details that right now mediators are trying to work with the U.S. and Iran on the technical level, trying to iron out the details on some of the largest sticking points that are, of course, pretty large, including the future of Iran's nuclear program and reopening the Strait of Hormuz. But the idea being here that perhaps there could be an extension of a ceasefire so that the technical discussions can happen before we see another round of face-to-face negotiations between the more senior officials. Thing is, we know that there is a lot that does need to be bridged, including President Trump just yesterday indicating that he is in favor of a permanent ban on Iran's nuclear program, something that we've heard before, but something that counters reporting that the U.S. had proposed to Iran in those discussions in Pakistan last weekend, that perhaps they would accept a 20-year moratorium on uranium enrichment. And Joe and Kaylee, even as it does appear that diplomacy is what the sides are pushing for, escalation, of course, also remains on the table as well. For example, we heard from Iranian state media earlier today, the Iranian military saying that if the U.S. blockade continues, they will take that as a violation of the ceasefire.
Well, and speaking of escalation, Tyler, if we're trying to signal progress toward peace, why are thousands more American service members being deployed to the region?
That's a good point, Kaylee. This reporting coming on the heels of the Washington Post saying that perhaps 6,000 additional personnel could be heading there, in addition to the 50,000 that are already estimated to be in the region by the Pentagon. And it does appear that the U.S. would be bolstering up forces, and their calculations are that this new wave would actually be there right in time for next Tuesday's ceasefire deadline. It comes on the heels of some other potential moves of leverage beyond more troops going and the blockade. Of course, we saw the U.S. Treasury yesterday announce that they would be considering some secondary sanctions on any financial institutions that support Iran, and the U.S. Energy Secretary speaking earlier as well, saying that the U.S. has some other levers of economic pressure that they could pull in order to get Iran to the table. So at this point, we're reading the tea leaves on exactly where these negotiations would be going, but at least publicly from the administration, they are saying that a diplomatic path is still on the table.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And when we're thinking about what the administration is saying publicly, of course, one of the leaders in the administration on this issue now is the Vice President, J.D. Vance, who was dispatched to Islamabad for the first round of talks, clearly in the aftermath of those unsuccessful 21 hours of negotiations, signaled he was very frustrated with the lack of progress in Iranian negotiators specifically not wanting to budge on the nuclear issue. We heard from him once again about this yesterday as he was at a Turning Point USA event at the University of Georgia, and this is how he characterized the state of things.
What the president wants to make, he doesn't want to make like a small deal. He wants to make the grand bargain. The president set a policy, Iran cannot have a nuclear weapon, and right now we are negotiating to make sure that very thing happens. He said, if you guys commit to not having a nuclear weapon, we are going to make Iran thrive, and we're going to invite the Iranian people into the world economy.
So for more on this, let's turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Republican strategist and Stone Court Capital partner. Jeannie, Democratic analyst and Democracy visiting fellow at the Harvard Kennedy School's Ash Center. Welcome to you both. Rick, when we consider the messaging from both the vice president and the president around the nuclear program, specifically the signaling we are getting toward potential extension of the ceasefire here so that an agreement can be made, even if we were to see another 2 weeks of a truce, is 4 weeks enough time to hammer out a deal as complicated as Iran's nuclear program?
Well, that assumes that you have two negotiators, countries who actually see a pathway to get a deal done. I mean, even the president pointed out that the last negotiating position that the U.S. was putting forth the idea of a ban for 20 years is not even acceptable to the president. I mean, why would you undermine your own negotiating position if you didn't think that it was going to meet the demands that you have? So my guess is that our negotiators are now looking at, okay, now we've got to go and sit down with these guys from Tehran and say, no, absolutely, there will be no acceptable nuclear program that you can have. And of course, now we have no idea what the reaction to that is, other than we've had decades of commitment by the part of the same Iranian government to not negotiate on that issue. Look, at the end of the day, I think you need a new Iranian government. I mean, I don't know why one of our negotiating positions isn't that we would have free and fair elections at the earliest possible moment once the ceasefire becomes, a end of the war. And we know that the people of Iran want a government that represents their interests, which, by the way, meets the U.S.'s hope that we can actually bring Iran into the world community as espoused by J.D. Vance. So you don't get one without the other. And so when are we going to address this issue of the fact that we're dealing with an illegitimate regime in this negotiation?
Jeannie, Tyler referenced the Washington Post reporting that thousands more troops are headed to the Middle East, which is quite remarkable considering we have 50,000 already there now, 6,000 aboard the aircraft carrier strike group led by the George H.W. Bush, and then more than 4,000 others with the Boxer Amphibious Ready Group, embarked Marine Corps Task Force, the 11th Marine Expeditionary Unit, set to arrive at the end of the month. So it looks like we've got our choices here, either an extension of the ceasefire, or you tell us, what are these troops there for?
It's hard to circle that square. The president is on TV this morning saying that this thing is pretty much wrapped up. We can turn around and go home. And yet we hear reports that you were talking about, that we are sending more troops, which leads one to believe that potentially the president is on Fox News and the Business Channel to speak to the market and to try to get that message out to them, even though that is not where we are heading in this thing. And it's hard to imagine that this thing is over, as the president keeps saying. The president also keeps saying that this is a new regime. I mean, Rick was just talking about regime change. According to the president, it's a new regime. And yet you look at the Wall Street Journal had a really interesting story today about this new regime. You've got the current Ayatollah, the son of the former, more radical than his father, on the heels of his father, his wife, his children, and him being killed and himself wounded. You've got a new national security chief who was a guerrilla, who killed an American petroleum engineer, assassinated policemen. You've got a new head of the IRGC accused of participating in the Buenos Aires bombing of a Jewish community center that killed almost 85 people in the 1990s. This is the new regime that our president keeps telling us is new and improved and easier to negotiate with, like so much else he says, is hard to square with reports coming out of Islamabad, which say, wait a minute, the people who were negotiating there weren't even in a position to be making decisions. And so that leads you to believe that we are going to send these people, the new military folks, in because we are going to be escalating, because the president doesn't believe that this thing is almost over.
Well, Rick, I want to pick up on the point Jeannie was just making about perhaps the president appearing on Fox Business this morning to try to signal to markets. I'm pretty sure that interview was based around the idea that today is tax day, as is the appearance we're about to see from the Treasury Secretary Scott Bessent alongside Caroline Leavitt in the White House press briefing. This is what they wanted today to be about, the idea that bigger refunds are going out to the American people. And I would imagine instead, like President Trump was dealing with in that interview, they're going to face a lot of questions instead about the fate of the conflict in the Middle East and its economic impact. To what extent is the fact that this is still a live issue overshadowing a day that the administration was hoping to herald as highlighting one of their biggest accomplishments?
Yeah, this is the most difficult part of elected office, is dealing with the political realities of building a coalition of people who support your administration, in this case, selling the tax cuts. They've been working on this thing for months. The DoorDash visit yesterday. I mean, like, the whole week was supposed to be nothing but talking about this. But then the reality of being president, and that is that you don't get to set the agenda all the time. And Iran looms large both in the voters' minds and around the world. And so you can easily get derailed, even in a friendly interview with Maria Bartoloma, about talking about something, frankly, everybody has questions about. And so Iran can eclipse the finest strategy around talking about tax cuts and the benefit to the American public. Look, it's just the cards you're dealt with. And frankly, I'm surprised they've gotten as much out today as they have on the tax cuts, because it's really a point in time where there's a lot of concern, both on the Hill, with the American public, and with people all around the world about whatever is Donald Trump's strategy in Iran.
Well, this creates a real math problem on this tax day here. Jeannie, you're going to be seeing the press secretary, the Treasury secretary in the briefing room presumably soon. They're going to be talking up the benefits of the One Big Beautiful Bill and the larger tax refunds that we are told, according to the IRS, about 10% higher this year than last. But as we heard from the Tax Foundation, the average household would pay $740 more in gas this year because of the war in Iran, nearly equal to the $748 increase in refunds. Oxford Economics takes it further. Higher gas prices will cost consumers $70 billion in total, more than the $60 billion in increased tax refunds. What did Democrats do with this messaging?
Joe, if we could only go back to before this war started. I mean, imagine this day, how great it, quite frankly, would have been for the administration to be able to celebrate those refunds prior to the rise in gas, the rise in fertilizer, the rise in groceries. People were not exactly thrilled at the beginning of the year with the economy, but things are far worse, and worse in a way that people are living it on a day-by-day basis, which makes sort of this a wash for the administration. So I think what Democrats are going to do is going to say that we have an administration that has cost you an enormous amount of money. It is chaos, it is confusion, it is corruption, and it is cost. And we're living it on a day-to-day basis. I mean, once again, I don't know if it's day 4 or 5, we woke up this morning to the president again attacking the Pope. So for all the good news the administration could be talking about, the president seems to have found a way to get into it and not allow them to stay on message. And of course, his actions at home and abroad have made everything more muddled and worse as it pertains to their efforts at talking about what they have done. And I don't see how they make much of this today.
Bloomberg Politics contributors Jeannie Shanzano and Rick Davis on this tax day. We're going to talk to former IRS Commissioner Danny Werfel in just a moment as well. Thank you both. Kaylee, we have breaking news and a redhead on the terminal. Mark Mobius, who put emerging markets on many investors' radars, has died, according to a post on his LinkedIn page. He was 89 years old.
He was indeed, of course, having spent 3 decades at Franklin Templeton before going on to found Mobius Capital Partners, pursuing the very same investment opportunities in emerging markets he had long heralded. Again, he was 89 years old, well known to our audience here on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index on pace for a record close as the ceasefire rally continues. S&P right now at 69.96, up 28 points. That is a gain of 0.4%. Not all stocks advancing. We've got the Dow lower, down 168 now, down by about 0.3%. But the NASDAQ Composite Index, techs are rallying. Right now we've got NASDAQ up 215. That is a gain of 0.9%. The NASDAQ 100 Index up by 0.6%. All of this with the VIX just above 18 and a 10-year at 4.27%. Spot gold at 48.02 the ounce. The precious metal down 0.8%. Crude is advancing. West Texas Intermediate crude 91.60 for a barrel of WTI, up now by about 0.4%. Saudi Arabia's sovereign wealth fund is on the verge of cutting its support for Live Golf. That according to the FT. Keeping an eye on Allbirds shares, they are surging 625%. This is the former shoemaker, which was just days away from ceasing operations, says it will pivot its business to AI compute infrastructure. Also plans to change its name to Newbird AI. Again, the stock up now by 640%. Emerging markets investing pioneer Mark Mobius has died at age 89. He spent more than 30 years with Franklin Templeton Investments and founded Mobius Capital Partners in 2018. Recapping, S&P up 28 now, up by 0.4%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. I wish we had more time to dig into Allbirds now being an
Best story
AI
of the day.
company.
Yeah.
It's just incredible. And I want to know
ticker bird.
who's buying the stock today, believing that this transition to an AI compute company is going to be everything that I guess investors are betting it is today. But we have other things to talk about here in Washington, as it is tax day, after all. And that is what is the focus at the podium in the briefing room at the White House right now, as the Treasury Secretary, Scott Bessent, is speaking following the press secretary, Caroline Levitt, about what he describes as the record refunds Americans are getting this tax year and season, which he says has gone smoothly for the IRS. Of course, this is what the administration is trying to do today, is call attention to all of the various tax benefits that were embedded in the One Big Beautiful Bill, which President Trump signed into law July 4th of last year.
This is the most popular bill ever signed. And it includes the largest tax cut in American history. And after this kicks in, our country is going to be a rocket ship economically. And we've delivered no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors. It makes the child tax credit permanent for 40 million American families. We're eliminating the estate tax or the death tax. So if you want to leave your farm or your small business, but farms are really, they have been devastated, to your children, if you love your children. By the way, if you don't love your children, don't even listen to what I'm saying. It doesn't matter.
We'll just leave that there. Danny Werfel used to run the IRS, former IRS commissioner from 23 to 2025, and he joins us from World Headquarters in New York. Danny, it's great to have you with us here now that you're with the Strategic Advisory Board at Alliant and a columnist with Bloomberg Tax. We're in the same family now. We can talk like we never had a chance to. I'm just curious how you're rationalizing the storyline that's coming out of the IRS today. Bigger refunds that are unfortunately being gobbled up in many cases at the gas station.
Yeah, I mean, the IRS is, first of all, happy tax day for those who celebrate. And this is an important day for America and for taxpayers. And yeah, this is the first tax day where we're really seeing the outcomes of the One Big Beautiful Bill in terms of new deductions taxpayers can take. In terms of, as the president you had just say, overtime, no tax on tips. And it's resulting in a 10% increase in refunds. But to put that in perspective, the average refund last year was about $3,700. So that's about $300 per person, which is nothing to sneeze at. That is an important amount of money for a lot of people. But as you mentioned, there are other things going on in the economy that may make that 300 and change feel smaller today.
Well, and when we consider all of these new tax breaks, just the differences in law this tax season compared to the tax season prior, knowing the Treasury Secretary Scott Bessent just said that this season has gone smoothly for the IRS, just how complicated was this tax season to execute inside the Internal Revenue Service? Danny, you obviously have a more insightful view into this than most. How difficult it is to make these kind of adjustments when there were so many in the bill?
Yeah, well, first of all, it's a perfect day, April 15th, to talk about the impact that the Trump budget and all the staff cuts that the IRS have had. And that is because if you file your taxes today and everything is done correctly, you get the right Social Security number in there, you have all the right forms, and you don't have a math error or some type of mistake, you are going to have a smooth filing season. And if you file electronically and you include direct deposit, most likely everything will go smoothly and you'll get your refund if it's owed within 21 days. But if you do something that is wrong, you make a mistake, you don't include a form, you trust AI in a way that you shouldn't, and we should talk about that because that's a big story right now.
Yeah.
Then there's a higher likelihood that your taxes will be set aside. And if your taxes are set aside and you don't go through that system in the fast track, well, because of the lower staffing levels at the IRS, you have a much longer road to hoe in terms of getting everything reconciled. It's going to be harder to get through to the IRS. The correspondences are taking longer. So yes, if things go smoothly, and that's why it's really important today not to panic, and if you're not ready, file an extension. And if you file an extension, don't forget, you can extend the filing deadline, but not your deadline to pay. But make sure everything gets done right, because if it's not right, and AI can contribute it to it not being right or being right, we should talk about that, then you may be in for a long wait on the phone or a long wait for a correspondence.
Well, we've certainly come a long way from the agenda at the Biden administration to add billions of dollars in resources and personnel at the IRS. Do fewer resources guarantee more tax cheaters getting away with it?
It can. I mean, look, there are different reasons why people play by the rules. They follow their civic responsibility. They're patriotic. There are other risks, for example, CEOs and corporations face with other types of audits if there's non-compliance in the system. But yes, if you signal to America that you're taking cops off the beat, you're removing the traffic, the speed traps on the highway, more people will tend to speed. And that's why it's important to signal to America today that it's not like all the speed traps are gone. And Mr. Bessent and others have announced that they are going to use AI behind the scenes to make up for the funding and staff cuts. And how that emerges and what tools that provides to the IRS to find you as a tax evader if you decide to not play by the rules, that we'll have to see and play out. But I wouldn't take the chance.
Well, so let's talk more about this AI issue, Danny, as you've raised it a few times. Do you see it as something that could actually be on net beneficial, especially to those filing, trying to figure out what can be a very complicated tax system, especially with the rules changing over the last year? Or is it actually something that could potentially be a major liability if you're trusting AI to do this kind of thing?
Yeah, I think the number one question I've gotten this tax season is it safe to use a ChatGPT, a Claude, a Gemini for tax advice or to do your taxes? And my answer is an emphatic no, it's not. If you're going to use an AI tool for your taxes, I have a couple of do's and a couple of don'ts. Do use a tool that is tax domain specific, a tool that has hired accountants and engineers to really study the tax laws, that is peer reviewing and testing the outputs against benchmarks to make sure that it is accurate. A company that is very clear about how they're going to use your information if you submit it. And if you have simple taxes, like you have one W-2, you're a wage earner, you're a working class American, is more likely that AI is ready today to deal with your complexity. But for example, if you're a business and you're seeking to claim the research and development credit or something complex like that, then AI is not ready for that. And in that situation, you should not be relying on an AI tool. So you really have to look at it as a spectrum from simple to complex. And the more simple you are, the more the AI is ready today. And then look at it as a spectrum from general AI to more specific AI. And I say it jokingly, but I mean it. If you're on an AI tool where in one chat you're making your vacation plans, and the other chat you opened up, you're planning a bathroom remodel, and in the third chat you're doing your taxes, you're on the wrong platform. Get off that platform, because that is not, this is high stakes. You know, getting tax advice and paying, it's just like medical. If you said, would you trust a general AI tool versus an AI tool that's been validated by doctors and peer-reviewed and is, you know, endorsed by the American Medical Association? Where am I going to get my medical advice? I'm going to go to the medical one. And it's not different in taxes in terms of there's an expertise that's required. And again, the more complex, the less likely that expertise is ready today with the AI.
I want to ask you about the impact, if you can qualify it in any way, Danny, of the president's immigration policy on tax returns.
Yeah.
There have been a lot of questions about what this might mean. When you served as commissioner, how willing were undocumented workers? Were they, as we hear reported, willing to file taxes? And are you worried about the potential chilling effect that ICE raids have had in this tax season?
Yeah, the issue, Joe, is how the IRS shares information with other federal agencies. And there's a part of the tax code that is very strict and telling the IRS when they can share information and when they can't. And what the Trump administration has said and announced and done is they said, we're going to share your taxpayer information with ICE for the purposes of immigration enforcement. Even though the law doesn't specify that, the Trump administration is pointing to a broader exception and other language that gives them the legal authority to do that. And here's where that becomes a problem. Because we have previously operated in a world in which we were telling undocumented immigrants that there's a safe harbor if you file your taxes. That if you're here without the right paperwork, but you're doing work, if you come to the IRS and pay your taxes, we will not share that information with ICE for the purposes of immigration enforcement. That was the trade-off to make sure that we weren't losing $1 billion in potential tax revenue by capturing these taxes. But by announcing that safe harbor is over, now if you come to the IRS to pay your taxes, you risk us sharing your information with ICE. Suddenly, you are very disincentivized to come pay your taxes. So it's a policy trade-off. My big thing is if you're going to do something big like this and share information with ICE, it should really be explicit in statute, and you should go through Congress to get that type of authority.
All right, we appreciate you joining us. Danny Werfel, the former IRS commissioner in the Biden administration, now strategic advisory board member at Alliant and columnist for Bloomberg Tax, with us on this tax day. Thank you so much. And this is, of course, the subject of discussion at the White House right now as the Treasury Secretary Scott Bessent answers questions at the podium alongside the press secretary Caroline Leavitt. Bessent says the IRS has done more with less amid the staffing cuts that we were just discussing with Danny, and of course touting higher refunds this season. We'll have more ahead here on Balance of Power on Bloomberg.
9:40 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index right around 7,000 once again. The Dow lower, S&P pushing higher. S&P up 32 right now, up by about 0.5%. 69.99 and a decimal on the S&P 500 index. Nasdaq up 239 now, up by 1%. Dow Industrials down 157 for the Dow, a decline there of 0.3%. The VIX just above 18, the 10-year 4.28%, with the 2-year 3.76%. Spot gold down $44 the ounce to $47.97, drop there of just about 0.9%. West Texas Intermediate crude 91.98 a barrel, up 0.8%. Brent, the global benchmark, 95.49 now, barrel of Brent up by 0.7%. American Eagle Outfitters shares higher by 8% after saying announcing its new ad campaign with actress Sydney Sweeney. That campaign will focus on jean shorts. Emerging markets investing pioneer Mark Mobius has died at age 89. He spent more than 30 years with Franklin Templeton. He founded Mobius Capital Partners in 2018. Recapping, S&P 500 index just below 7,000, up 30 right now, up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We did it, at least for a moment, hitting a fresh record high on the S&P 500 for the first time since January. War? What war? Says this equity market, clearly clinging to optimism that the conflict between the U.S., Israel, and Iran is going to come to an end in the near term. So let's get more on this now as we turn to Nora Melinda, markets correspondent for us here on Bloomberg TV and radio. Nora, when we look at a fresh record high on the S&P, knowing the trading day obviously is not over, do we attribute that mostly to geopolitical optimism, or is this because we're now in the thick of earnings season and fundamentals are looking pretty good?
Well, it's a little bit of both, Kaylee. There's so many things to keep your eye on. You mentioned the geopolitical story that still remains at the forefront for a lot of investors. Also, earnings season, we've been hearing from a lot of banks reporting, and it's been a pretty decent quarter in terms of the results that we're seeing. Of course, really underscoring this idea that the economy is holding up. Still some cracks under the surface that investors are keeping their eye on, but generally good. And so what I'm hearing from sources is that a lot of investors here on Wall Street, they just don't want FOMO, the fear of missing out. They really want to jump in on this trade, especially as we're continuing to see stocks buoying higher, just hitting that intraday record high that you just called out just a touch ago. So S&P 500 on pace to close the session at a record high, first time since January.
Amazing. Look, the mentality on Wall Street is its own story, and I know you can't get inside traders' heads. You just wonder what happens if the ceasefire does not emerge, or if oil prices, for instance, go back above $100. Nora, what are the technical implications of striking a new high on the S&P 500? Does that in itself bring more gains?
Well, I mean, of course, you are going to see widespread optimism. If you take a look under the hood, what we're really seeing right now is tech driving that rally. We know that this has been a really nuanced story. Of course, a lot of people really focus on the tech industry, and then we were seeing some people scared, this AI scare period, and a lot of people pulling out. But what you're seeing right now is a risk-on rally. Information technology, the best performing group in the S&P 500. We know for a lot of people, they kind of associate that with risk. So it does show you that investors are out here, they're playing ball, and they're trying to figure out where they can see the most gains.
Really interesting. They're even buying Salesforce today. They're buying software. So much for the SaaSpocalypse. Nora, thank you so much. Nora Melinda live in New York as we watch the markets carve a new high, at least the S&P 500, albeit briefly, but S&P 7,000 is back on our radar screens following that sell-off that followed the initial strikes against Iran. There are, of course, still big questions, and we're going to get into some of them in a moment with Christopher Smart about whether the market is getting way ahead of itself or ahead of the news in this case, because supply disruptions are really just beginning, as we've discussed repeatedly on this program. Actual physical shortages cascading through Asia, threatening Europe, and of course, eventually landing on our shores. Something that we heard about earlier today, this being IMF World Bank spring meetings underway here in Washington. Kristalina Georgieva had this to say about the possibility of continued disruptions in the economy.
We need to be prepared that the impact of the supply disruptions in the weeks ahead is going to deepen. So what do we tell countries? use measures that can economize energy.
Economize energy, the theme of our conversation as we welcome Christopher Smart back to the program. Founder, managing partner, Arbroath Group, former special assistant of the president, the National Economic Council in the Obama administration. Christopher, it's great to see you in town.
Good to be with you, Rose.
And I hope the IMF and World Bank meetings are going well. How do we rationalize all-time highs in the midst of a war with Iran?
Well, I think investors, as you know, focus a lot more on earnings and the next quarter, and pricing in global geopolitical change and readjusting balance of power and the prospect of how long this war will continue is much harder for them to do. So once the momentum picks up, it's hard to not jump right in.
So you just pretend it's not there, or are investors about to learn a very difficult lesson? The bottom feeding, the buying the dip has been very profitable.
Well, I think that's the key issue, that the buying the dip has been very profitable up until now. I think the other thing is that there is a signal from the Trump administration that they want to do a deal, not to make this better rather than make it worse. I think they also have been listening to your programs and your guests talk about how things are going to get much worse very quickly if this goes on. And so the time isn't on the president's side to draw this out any longer. So I think they're betting on the fact that he knows that and that he will come to terms.
Well, when we consider the kind of economic picture overall heading into this, it seems, at least the picture that the big banks are painting as they reported earnings over the course of the last several days, is actually the consumers holding in there pretty well, that this decline in consumption due to the higher prices being faced, and even the ones that they're facing now at the gas pump, is maybe a bit overdone, Christopher. And I wonder if you agree with that, or if we could see at some point a rapid deterioration if this is to persist.
Well, we could certainly see a rapid deterioration again if this continues, and I think people are really looking at a 2 to 3 week time frame, that if this is not fully resolved, or at least significantly resolved, the reserves that other countries have been drawing down, the difficulty it's going to be to restart production again is going to be much, much worse. And so that's going to be a big hit. But I think for right now, as you say, the macro indicators look pretty good. The corporate earnings look pretty good. The meetings I've been having around town this week with the IMF and the World Bank, there are a lot of exciting companies doing some extraordinary things. And if you just don't listen to the political headlines, there's a pretty good picture out there.
But you should listen to the political headlines. That's what we bring you here on Balance.
You have to do some of both, right? But there is a good story that goes along with the much more worrying one.
We have a repeated analysis on the program that even if the war ended today, that it could take months for the energy market to rationalize itself, to get cargo going through, get shipping going through the strait again, to get prices back down to where they ought to be. We talked about the potential for physical shortages hitting Asia, hitting Europe. What's your read on things right now? If that's the case, even if this ended today, we could still be in for a lot of pain.
I think we could be, and I think that's why the next 2 weeks are going to be crucial to all of this. From my perspective, it's how much is the market? Not even the market; it's the guy who owns the ship with the oil on it. Going to trust whatever deal takes shape. And it's not so much the ships that are trying to leave the Gulf, but it's that empty tanker trying to go into the Gulf. How many of them are going to start lining up and trust whatever regime takes shape? Are they going to have to pay a toll or not? Is the U.S. Navy going to be there, or some European convoy to enforce the agreement that takes shape? How much is Iran, the Iranian government, going to be able to deliver on anything that it signs off on? And how much uncertainty remains in the price of oil? So I think it's certainly not going to go back to a pre-war level.
You don't.
But we're going to be looking at how quickly that kind of confidence is restored. And it's probably not going to be as quickly as people expect today.
Well, it's one thing to consider the picture here in the U.S. as the president is consistently maintaining we are less reliant on Middle Eastern energy products as a whole. We don't need the Strait of Hormuz. It's everybody else that does. There is some truth to that. For Asia and Europe, it's a much bigger problem. And I wonder if you see this whole thing as reinforcing that the U.S. is the best place to be, as there was a narrative of a rotation out of the United States.
Well,
are we seeing the rotation back?
As an American, I would always say that the U.S. is the best place to be. I would also say, as you have been to a gas station recently, that even if we have all of the oil that we need, it is a as you know, this being Bloomberg, a global market. If prices are high in Asia, they're going to be high here. And as we go into the driving season, I think that's going to erode some of that consumer confidence. You've seen, it's this great dichotomy that we haven't fully understood. I don't think that as consumers continue to spend, their sentiment and their outlook continues to deteriorate. We had an all-time low, I think, on sentiment last week. Yeah, so that's something I think we're all going to be watching.
Well, so bring us into some of these meetings that you've been having here on this IMF week. Are you hearing an optimistic tone when you meet with people from other capitals? They're here in the United States against the backdrop of a war and enormous confusion in international markets.
Well, I have to tell you, I don't think I'm letting you in on a secret, but there's never an optimistic tone at the IMF.
Okay.
There's always...
Compare it to other years.
First of all, they seem to be timed with previous crises, Ukraine.
Well, that warning we heard from the IMF yesterday was stark. Yes. Slowest growth since COVID.
It was. And I think that's a bell that they've been ringing for a long time now, that growth is slowing down. The new piece of the message is that inflationary pressures are not going down. In fact, it's quite the opposite. We heard that from Secretary Bessent. Chris Wright, the Energy Secretary, I think said earlier this week that anybody projecting lower gasoline prices by this summer is probably making an optimistic forecast. So I think the assembled investors and central bank and finance ministers are much more worried about these macro indicators than the financial markets would lead you to believe.
Well, the World Bank IMF meetings may happen during crises, at least in recent years. It also happens that this is taking place the week of Tax Day, which is today. We just had the Treasury Secretary, Scott Bessent. In fact, he's still at the podium at the White House, in part heralding the benefit of the One Big Beautiful Bill and the higher refunds Americans are getting. But given the entire conversation we're having about higher gasoline prices, other inflationary pressures, to what extent is a higher refund even stimulative at this point, Christopher? Is it entirely offset because the cost of things are higher?
Well, I think it depends on whether you actually get a refund or you are paying a lower amount of tax that you don't notice getting taken out of your paycheck. I think it's a balance. I think the good news, the tailwind for the economy is the One Big Beautiful Bill, the tax cuts, no tax on tips, the depreciation allowances. Those are all very, very positive tailwinds for the economy. Also, tariffs, there's uncertainty around tariffs, but they're not going to be nearly as high as we thought they might be last April. So that helps. But I think the oil price and the continued uncertainty is clearly something that's going to put a brake and a damper on business investment, business confidence, and that's going to be a headwind that the two are going to be, we're all going to be balancing.
Are you allowing for $120 a barrel again or higher if this ceasefire is not extended?
Oh, I think 120 is going to be optimistic if the ceasefire is not extended. I think, when you're in the physical market, when you're in a financial market, supply meets demand, you make a deal, you sell the paper. When you're waiting for tankers to be unloaded of a physical good, $200 might be cheap if you're desperate for the oil. That's when you start getting the demand destruction in the U.S. economy and the global economy. So that's why the next 2 to 4 weeks are really crucial.
Well, I also wonder how this factors in as we consider the uncertainty around the next 2 to 4 weeks and beyond that into monetary policy, Christopher. You have the president today renewing his attacks on Chairman Powell, suggesting he's going to fire him if he tries to stay in the job, knowing right now his pick to be the next Fed chair, Kevin Warsh, while he has a confirmation hearing scheduled, is not on track to be confirmed because the Fed is still being investigated over the renovation. Therefore, Tom Tillis will not cast a vote to confirm Kevin Warsh. We're in the midst of all of this uncertainty around leadership at the Fed and around the actual macroeconomic environment. Is there any feeling from you that they're going to do anything other than stay put for the foreseeable future?
I think most investors look at today's news, the recent week's news, and throw up their hands and say, I don't know what to make of it all. But in any situation, it's hard for even Kevin Warsh to come into the room and look at the macro environment and say, we got to cut aggressively today. And I think more and more investors are pricing out or pushing back their expectations of rate cuts this year. And there's even talk of maybe the next move is going to be up next year. Depending on how this all plays out.
Boy, really interesting. It's great to spend some time with you, Christopher.
Good to be with you both.
Good luck with your meetings, and thank you for your view. After 2 or 3 weeks go by, let's have you back and see where we are.
Happy to.
I hope it's better news than not next time we do that, of course. Our Broth Group, former special assistant to the President, National Economic Council, that's in the Obama administration. We've got a redhead, Kaylee, on the terminal.
Indeed. This is coming from the White House press briefing where the Treasury Secretary Scott Bessent and Caroline Leavitt have been speaking with reporters. confirming that the U.S. will not be renewing the waivers for Iranian and Russian oil. This is according to Treasury Secretary Scott Bessent. Of course, the waivers were set to expire. There was a question as to whether or not they would renew them, given the oil price pressures that we've been talking about here, but confirming that is not indeed the case.
Important development. We've got Brent right now. Brent crude at 95.5, up almost 1%. WTI up a little more than 1% to just over $92 a barrel. We'll reconvene here 5 p.m. Eastern, the late edition of Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. We are awaiting some headlines crossing the Bloomberg terminal. It has to do with the Fed's latest beige book. As you know, this is a report. It's published 8 times a year. It provides, ground level snapshots from each of the different 12 Federal Reserve regional districts. So it gives you some color on where the U.S. economy is in real time. So as we await their crossing, in the meantime, we've got a market. We've actually hit a record here today.
We have a new record in the S&P 500. The first one going back to January 27th. The S&P 500, 69.96, up 0.4%. The NASDAQ in the green to the tune of 0.9%. The Dow down 0.3%. We're going to have more from Charlie in just a minute, but investors looking past this war.
Yeah, it's really interesting.
Or short covering, I don't know.
Yeah. Or continually, right?
That's what we learned yesterday. Or a little bit about.
Exactly. Well, and that's why we've been leaning on earnings. We did get a fresh spate of corporate earnings, including several in the big bank community. So we're going to talk about that in just a moment. We're also getting lots of comments out of Washington, D.C. We've had those IMF annual spring meetings going on. One leader, including the New Zealand Minister of Finance, Nicola Willis, is going to be back with us. We've talked with her, was it last summer?
Back in August, yeah.
Yeah. So I'm curious what she has to say.
Looking forward to that conversation. Plus another batch of big bank earnings. You mentioned it, Carol. The latest from D.C. on the U.S. war in Iran. And the last bear standing, Michael Ha over at Baird, talks United Health Group. It's down 50% from its 2024 highs. He says still not time to buy.
Yeah, interesting. So he's going to join us on set. And the passing of an investing legend. You know that we've been reporting this out on Bloomberg. We're going to talk about Mark Mobius. Really, when it comes to emerging markets, this was the guy who made us really look to so many different markets around the world. So we'll talk about him a little bit later on. Many of us have been privileged to talk to him over the years. Let's get, though, to the trading session on this Wednesday. For that, let's turn things over to Charlie Bell.
All right, thank you very much. Do you want to begin with a headline involving oil that we brought you moments ago? Treasury Secretary Scott Bessent says the U.S. will not be renewing Iranian and Russian oil waivers. Right now, we do have West Texas Intermediate crude advancing 1.5%, 92.55 a barrel. Brent, the global benchmark, at 95.48 now, up by about 0.8%. All of this as the S&P 500 index hovers right around 7,000. Big question, will we close above or below that number? Will we see a record at the close today? The S&P now at 7,001, up by 0.5%. Not all stocks advancing. We have got the Dow lower by 133 points, down now by about 0.3%, while the NASDAQ Composite Index, NASDAQ right now up 250 points, up by just about 1.1%. So the S&P 500 on pace for a record close as the ceasefire rally continues. The VIX right around 18 right now, with a 10-year at 4.28%, the 2-year 3.76%. Gold is down $45 the ounce to $47.95. That is a drop of 0.9%. West Texas Intermediate crude 91.99 a barrel now, up by about 0.8%. Earnings news: Morgan Stanley, Bank of America rounding out big bank earnings. Shares of both banks are advancing. Morgan Stanley right now up by about 4.6%. Shares of Bank of America, they are advancing by just about 2.2%. As we have been reporting, emerging markets investing pioneer Mark Mobius has died at age 89. He spent more than 30 years with Franklin Templeton Investments and founded Mobius Capital Partners in 2018. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic, and never a dull moment, that's for sure. And we do have the Fed Beige Book over. It is out.
Yeah, this is the anecdotal information from the Federal Reserve districts, the 12 of them. In terms of overall economic activity, the Beige Book says that overall economic activity increased at a slight to modest pace in 8 of the 12 Federal Reserve districts, while 2 districts reported little change and 2 districts reported slight to modest declines. The conflict in the Middle East, Carol, was cited as a major source of uncertainty that complicated decision-making around hiring, pricing, and capital investment, with many firms adopting a wait-and-see posture.
Which is why earnings season is so important to see what we hear from the C-suite about this. As we said, never a dull moment. We're going to dig into the Beige Book in just a moment. We also got this earlier today from President Donald Trump, who said he would fire Jerome Powell as chair of the Federal Reserve if he does not leave that post in time. That's in quotation marks, and insisted that the Justice Department investigation into the central bank leader would continue. This was him earlier, actually last night, talking on Fox.
Whether it's incompetence, corruption, or both, I think you have to find out. I really do. I think you have to find out.
So you're not going to drop the probe?
Oh, I'm not playing. I have to find out.
And he said he's not leaving if, you know.
Well, then I'll have to fire him, okay? If he's not leaving on time, I've held back firing him. I've wanted to fire him, but I hate to be controversial.
I have no intention of leaving the board until the investigation is well and truly over with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that.
All right, of course, that last voice was Fed Chair Jay Powell. That was from the last FOMC meeting back on March 19th, addressing whether or not he would leave. Then, of course, you had President Trump on Fox News just last night addressing it. And once again, you know, we've seen the president come back and forth about kind of saying that it's time for Fed Chair Jay Powell to go. We've got a lot to get into.
All right, let's get to it. Bloomberg, Washington, D.C. Bureau, to Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Mike, we're going to talk about the president talking about firing Jay Powell in just a minute. But first, I do want to go to the Beige Book headlines that we are just getting. I did mention that a couple of the districts did see the effect of the war with Iran, businesses adopting this wait-and-see mode when it comes to making investment decisions, CapEx, hiring, and the like. What else stuck out to you?
Well, in terms of hiring, they said there's more people who are taking part-time jobs because the companies don't want to hire on a full-time basis. Also, they noted that prices were not rising dramatically except for fuel and gasoline, but that is the leading tip of the spear of inflation when you have a situation like we're in now. It is the first Beige Book since the war started, and on an anecdotal basis, it does suggest that the economy is starting to bear the scars of the war economically, even if it hasn't shown up in some of the data yet.
So, okay. And then you think about the impact of the war. So, Mike, like, how are you starting to assess the economy? I feel like we've had so many guests come on, you know, certainly on the investment side saying, U.S. market, it's supreme. That's where investors are going to be going. That economy is doing well. What's your view on kind of where the U.S. economy might be headed?
It's really impossible to say at this point because we don't know how long this is going to last. But of course, this is IMF week here in Washington. I've been listening to a lot of experts from around the world over the last couple of days, and they're almost unanimous in saying that the markets are acting prematurely, that the damage from this is going to be worse than people expect because it's going to take a lot longer to get the oil flowing again and to get prices back down again, even if the war were to end today. And a number of people this morning at the Institute for International Finance were suggesting that they thought that oil prices were going to stay up longer because a ceasefire isn't going to bring them down. It's going to take an absolute end to the war plus traffic moving through the Strait of Hormuz before we really see some price relief. So this could be an issue for the economy, and they get to a point where people don't have money to spend on other things, demand gets destroyed, the economy slows down.
Hey, Mike, I promised that we'd get to the president once again mentioning that he would threaten to fire Jerome Powell. We did get some news from the Treasury Secretary that he does expect Kevin Warsh to be confirmed in the near future. So there's a lot at play here. Can the president just fire Jay Powell if he doesn't step down, if Warsh doesn't move through the confirmation process in time?
Well, as far as we know, he cannot. This is still an unanswered question in terms of the Lisa Cook case, in terms of whether the president can fire somebody without cause. And then the question becomes, well, what would be the cause if the president tried to fire him? The idea that there's something wrong with the building construction, the Fed has provided extensive answers to that. Doesn't seem to have satisfied the administration. And even if there was something wrong, there have been no charges brought. These are just allegations at this point by the president in very general terms that, well, gosh, there must be something. So it would seem very hard for him to actually fire him. The question would come up if Kevin Warsh is not confirmed by May 15th, when Powell's term as chair ends, then there might be a legal fight over who gets to be chair of the Board of Governors, whether the president gets to appoint somebody or whether Powell stays on as president pro tem. But Powell would stay on as head of the Open Market Committee. They've already chosen their chairman for the year. So if Warsh is not confirmed, nothing changes. And if this investigation doesn't go away, then the president is stuck with Jay Powell making interest rate policy.
Yeah, just, you know, how many times can we say we are living in interesting times? I guess we can't say it enough, and that includes with what's going on in the Fed. Mike, so is there, though, also a scenario that we are possibly headed towards where Warsh is confirmed as Fed chair, but Jay Powell is still on the board, and it just makes for some interesting dynamics? Or has that?
I like the word interesting.
It covers so much.
Well, there's only two ways that could happen. One is they drop the probe, but Powell decides to stay on anyway, maybe because he doesn't like the looks of what would happen at the Fed when he's not there. Or if Tom Tillis changes his mind and agrees to vote for Kevin Warsh and Warsh is confirmed, but the probe continues, then Powell says he's going to stay on. So it's still possible, but it's more likely that we're not going to see Kevin confirmed in time, or that he's confirmed and Powell steps down as chair and probably steps down as a governor.
All right, we're going to leave it there. Hey, Mike, always appreciate it. Thanks for jumping in here. I know you've had a busy week. Michael McKee, he's Bloomberg TV and Radio International Economics Policy Correspondent, joining us from our D.C. Bureau. Yes?
He's been gone a long time. He's been in D.C. He's been doing
Is he
it for
even
Wall
real
Street
anymore?
Week piece.
Is that AI?
Usually he sits right near me.
Is that a Mike AI?
Usually he sits near me. I want him back here in New York, guys.
He does. He sits right behind Tim.
Get Mike back here,
Tim
please.
is constantly like, hey, Mike.
Yeah, no.
Like, what do you think about this?
I need my Mike McKee.
All right, so that is certainly something that we're looking at. I mean, we're also looking at a market, folks, that we're kind of off our best levels of the session, but we've seen an intraday record on the S&P 500. We're still up about 36 points, up 0.5%. NASDAQ 100 continues, now? It's 11 days in a row that we've seen the NASDAQ 100 higher, up 0.8%, up about 219 points.
Yeah, Bank of America, Morgan Stanley, we're going to talk about those in a few minutes. Those stocks rose. Equity traders posted strong revenue beats. The question about, I think a lot of investors have is what is going to happen to the consumer. And so far, even though the consumer doesn't have the cushion that it had the last time we were in an environment with higher energy prices post-COVID, the consensus, at least that we've seen thus far, Carol, is the consumer has been resilient. And the big banks have essentially said, yeah, we're not too concerned.
Hey, record profits, although, we're going to talk about the big banks a little bit later on in terms of job cuts and, there's use of AI and so on and so forth. So here they have record quarters. So I wonder about the messaging. We do want to stay, though, in the nation's capital. Those annual spring meetings of the IMF and World Bank have been underway. Leaders have been gathering, talking about the global outlook, of course, talking about wars around the globe, inflationary concerns, supply chain constraints, and geopolitical shifts. And this is where we find, and welcome back to Bloomberg Business Week Daily, Nicola Willis. She is Minister of Finance for New Zealand. She joins us from the Bloomberg IMF set in D.C. Minister Willis, it is so great to have you here once again with Tim and myself. I hope you're doing well. We know the world is going through a lot right now. I do want to start on the war. Per your own government, around 80% of New Zealand's refined oil flows in its unrefined state through the Strait of Hormuz. How radically has that affected your economy at this moment in time?
Well, look, it's a very significant challenge for our economy, which has been recovering strongly after a challenged period. We've seen a doubling in the price of diesel, one of the refined fuels that we rely on significantly, and about a 35% increase in the price of petrol. So consumers are already feeling that price pressure at the pump, and we expect it will have an inflationary impulse throughout the economy, with a downside for the growth potential of the economy this year. We are also having to anticipate some worst-case scenarios in which there could be genuine supply disruption of the fuel that we import into New Zealand. So we're preparing for those worst-case scenarios through options to potentially build up our own national reserves of fuel, and also to have a fuel response plan in which we may need to call for voluntary demand restraint in the future. So it's a very significant set of circumstances for us to be navigating our way through.
Yeah, you're certainly not the only country that's affected by this, but I mean, you do put in stark relief just the fact that, you know, with the strait closed, how challenging it can be for an entire economy. You mentioned stockpiles. You do have stockpiles in petrol, diesel, jet fuel. We know that. How are the stockpiles faring right now? Are they close to exhaustion? What's the status of them?
Yeah, look, our stockpiles are in very good shape. We have minimum stock holding obligations for every fuel importing company who imports fuel into New Zealand, and we are diversified across a range of fuel importing companies, including multinationals. And so those reserves are in great shape. There's no risk of them going below the obligation. We have around between 50 and 60 days of each of the respective fuel types, either in the country or safely in tankers on the water on its way to New Zealand. We monitor those fuel supplies closely. We're doing twice weekly reporting to New Zealanders about those fuel levels, and we've had no disruption so far to supply. However, we are being proactive, and we're anticipating scenarios in the future in which fuel importing companies who rely on those refineries in Singapore and South Korea that are experiencing less crude stock than usual may not be able to fulfill all of their usual orders. Now, were that to occur, we'd expect in the first instance fuel importing companies would access fuel elsewhere on the spot market or from refineries elsewhere. But even so, there could be disruption or delay. And so as an economy, we need to prepare for that potentiality.
Minister Willis, one of the things that we've been talking about a lot here at Bloomberg is kind of longer term, the impact, whether it's on the energy markets or raw materials, crucial minerals. It does look like every nation is looking to make itself secure because of national security concerns to protect their economy. Let's just start with oil, long-term strategies, if at all, to lessen the dependency. It sounds like you guys are on foreign oil or on the United States, which must be, I think it's safe to say, the U.S. is a turbulent partner at this moment.
Well, look, New Zealand is somewhat ahead of some countries in that our electricity system is largely independent of oil. We have a largely renewable electricity generation in New Zealand from hydro, solar and wind. But as I've outlined, we depend on fuel for our transportation system in particular. And so we are taking steps as a country to build our own resilience. We've seen a doubling in the registration of electric vehicles this year off the back of these heightened prices. And we do expect as a government to continue to take steps such as rolling out an electric vehicle charging network to support that transition. But ultimately, it is the case that when conflicts like that that's playing out in the Middle East occur and they disrupt global supply chains and the global economy, New Zealand is not immune from the impacts. We are also unable to influence the decision-making of the major actors in this conflict, but the economic ramifications are significant for us, even though we are so many miles away from the conflict itself.
I want to dig into those.
Global economic impact to inflation and growth is massive.
So let's go there, Minister Willis, and to what exactly you're penciling out in a worst-case scenario here. Moments ago, you did say that this is inflationary, and it could be inflationary, and it could also lead to lower growth for the economy this year. What are you penciling out here? What are your predictions?
Well, like every forecaster in the world right now, including the IMF, who put their forecasts out yesterday, there is such a broad range of scenarios that could still play out depending on the trajectory of the conflict and how long it takes for supply chains to resume to normal. Our Reserve Bank have published their views on where inflation could go, and they're forecasting that in the third quarter of the year that inflation could hit 4.2% in New Zealand, which is outside our target band. We target inflation to remain between 1 and 3%. And they're forecasting that potential growth will be lower than would have otherwise been the case. We were looking at annualised growth of about 3% this year. It's very unlikely we will hit those levels now. But as to how bad the worst case scenario could be, how high inflation could go, how low growth could go, it all depends on how quickly the conflict ends. So we're calling for the ceasefire to be enduring, for negotiations to resume, for de-escalation to be chosen at every point, because the sooner that happens, the better our economic prospects are for the year ahead.
Well, let's go there. How do you feel like what information, whether it's being there in D.C., talking to other leaders, I don't know if you're planning to have any meetings with the administration. Have you met with anybody in the administration while you're there? And whether you feel like we're getting anything definitive about when this war ends?
I will in the coming days meet with members of the President's economic team and get the views of the administration that way. So far I've met with a number of finance ministers from around the world, and I'd say a theme that's coming through is uncertainty, a lack of clarity about what the next steps will be in the Middle East, and therefore what it is that we as nations need to be prepared for. There's a common theme that we all wish to see that Strait of Hormuz reopened fully as soon as possible so that that supply chain keeps functioning well. And really a shared concern across nations that when the global oil market is disrupted in this way, it has inflationary impacts for our consumers, growth impacts for our countries, and frankly, has made the whole world poorer than it would otherwise be. So a shared concern.
You mentioned the Strait of Hormuz, and that's where I want to go back to right now, because all the challenges when it comes to energy are emanating from there and from the region. New Zealand, one of 35 countries led by the UK in seeking to reopen the strait. The US not included in that group. They're in their own negotiations. We're in our own negotiations. Is there progress in this group of 35?
Well, of course, we're continuing to seek as a group of 35 diplomatic and political solutions to ensure that the strait can reopen and remain open. We're conscious, though, that until there is an enduring ceasefire in which hostilities has ceased, it will be very challenging to keep that strait open. So there's an order of events here. I think it's for the main actors in this conflict, for Iran, for the United States, for Israel, to come to an enduring ceasefire, at which point our other nations can support efforts to keep maritime passage going and support the Strait of Hormuz once again being a critical channel for global supply.
Hey, one thing we've got to ask you, we were just talking about with our Michael McKee about, first of all, the state of global monetary flows, something that we like to watch a lot. President Trump here continues to attack Fed Chair Jay Powell. If there's turbulence in the U.S. financial system, what's the net impact on New Zealand and Oceania?
Well, look, I would hesitate to comment on the domestic affairs of the United States.
But it's not great, right? Because everybody,
bank.
Yeah, but it's not great because everybody watches the U.S. central bank. But go ahead, please.
Yeah, certainly for New Zealand, we have gained considerably from the independence of our Reserve Bank. We very strongly support that independence in monetary policy. We believe that independent monetary policy has led to stable inflation and effective inflation targeting. And in the case of New Zealand, we have been able to have largely stable inflation as well as interest rate trajectories that have been predictable with good information for markets. So we stand strongly on the side of independence in central banks, and certainly that's been the case for our Reserve Bank in New Zealand.
Okay, we got one more question because both of us are just sitting here dying to go to New Zealand.
I want to go diving
I feel like we could do an exchange with
Yes.
you. You've been here
Please
twice
come.
now. Yeah.
You're very welcome.
Carol wants to do some diving and some sailing there. I have some friends whose parents just got back from a month there, and they absolutely loved it, Minister. I'm just wondering about tourism, though, in an age of higher energy prices and whether the higher energy costs are crimping tourism and what that outlook looks like for the year, because this is so crucial to the country's economy.
Yeah, look, tourism's a very important industry for us, and of course we are braced for the potential impact of higher jet fuel prices impacting travel to New Zealand. So far, we're not seeing strong evidence of that. It seems there's a very resilient travel market, actually particularly out of North America, where people are continuing to choose New Zealand as their next destination. And I think actually we've got something particular to offer in a world that is more unstable than it has been, that we are very safe, we are very peaceful, we are very predictable as a country. So those choosing a destination in the future can pick New Zealand on their itinerary and know our airports will still be functioning, there'll be no missiles flying over your head, and we'll have a very beautiful offering for you as well, with very friendly people, a gorgeous environment, and a lot to do. So we'll be continuing to market New Zealand as a wonderful premium destination.
Lovely way to wrap up. And we're going to connect your people with our people. Maybe we could do a remote there, because we would definitely be on it. Minister Willis, thank you so much for giving us time once again.
We would love to host you.
We love talking with you as well, and we look forward to doing that. She's, of course, the Minister of Finance for New Zealand, Nicola Willis, joining us from the Bloomberg IMF set in Washington, D.C.
Okay, a little closer to home, but he loves to jump on a plane and travel, is Charlie Pellet, is standing by in the Bloomberg Business Week studio for a business flash. Hey, Charlie.
Hi, thank you very much indeed. New Zealand, one of those many countries I've been to. We've got the Dow lower, the S&P, NASDAQ, both advancing right now. Not just advancing on the S&P, record 7,008 where we stand right now. That is a gain of 41 points, up by about 0.6%. Keep it locked into Bloomberg Television and Radio. Will we close above or below 7,000? Will we see a record at the close? Up 40 right now. Bears repeating 7,008 on the S&P, up by about 0.6%. The Dow, though, lower by 0.2%. NASDAQ Composite Index up 272, up now by about 1.1%. Your 10-year 4.28% against the backdrop of the VIX, just above 18. The 2-year 3.76%. Spot gold down $47 the ounce to $47.94, down by 1%. And West Texas Intermediate crude 91.50 a barrel, up now by 0.2%. The White House saying this afternoon it has no position on a possible United American merger. Shares of United, they're trading lower by 1.7%. American keeps on going up by another 2.1%. Allbirds, BIRD on the ticker. That stock soaring after the former shoemaker, only days after away from ceasing operations, said it will pivot its business to AI compute infrastructure, also changing its name to Newbird AI, and the stock right now up by 634%. Emerging markets investing pioneer Mark Mobius has died at age 89. He spent more than 30 years with Franklin Templeton Investments. He founded Mobius Capital Partners in 2018. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, a lot still coming out when it comes to the U.S. war in Iran. The two sides said to be considering extending their ceasefire that ends on Tuesday by another 2 weeks to allow more time to negotiate a peace agreement, according to a person familiar with the matter. We also mentioned we're watching that. We're watching stuff coming out of the White House. We mentioned that President Trump, once again, talking about firing Fed Chair Jay Powell. We talked about with the New Zealand finance minister, but also our own Mike McKee earlier.
So let's head back to the D.C. Bureau and to Bloomberg News senior White House correspondent Josh Wingrove. Josh, just bring us up to speed on exactly where the U.S. has said it is, where the U.S. is, what you're hearing from sources when it comes to ending this war in Iran, because we're getting some different signals, reports earlier today of more troops being actually sent to the region, but also the president saying this war is almost over.
We are. The administration is not really embracing the notion that they are on the cusp of some sort of 2-week extension. That is our reporting. So, read into that what you will. White House officials saying that talks are ongoing, but they haven't finalized any extension or agreed to. Of course, all those things can be true. You can be on the cusp of something without having signed on the dotted line. And so right now, it's just a little bit murky on where they are and where they would plan to be, or sort of set, or where they're setting expectations on it. Of course, they're trying to talk about something else today in tax day, and had Secretary Bessent and others up at the podium to send a different message and predicting that this, too will pass. Secretary Bessent talking about $3 gasoline maybe this summer. We'll see. He said it could start with a 3. A lot of gas prices start with a 3. You know, you don't really know what that means necessarily.
301.
Right? Yeah. So we'll see where that goes on that one. But right now it is mixed messages. But the White House is not confirming that they're on the cusp of an extension. So we're continuing to watch that very closely.
What are we supposed to make sense to? Let me just throw this in. President Trump's his tariffs may be restored by July to the levels in place before the Supreme Court struck down many of his levies. This was coming from Treasury Secretary Scott Bessent at a Wall Street Journal event in Washington. So wait, it's not done, is it? Tariffs?
Yeah, I think that is the base case.
Okay.
Well, I think that's what's expected, to be honest. You know, look, Humpty Dumpty fell off the wall with that Supreme Court ruling. They've taped them together with Section 122 tariffs. Those expire in about 150 days or in July. They have said they expect to wrap up those 301 investigations. That is, to absolutely torture the analogy, forgive me, sort of the glue for Humpty Dumpty, where the 122s are going to expire. They're going to replace them with 301s and hope that holds it. And of course, we could see potential legal challenges as well on that. We haven't seen those finalized 301s. It's possible it couldn't come together, and it's not clear whether they'll be able to replicate things apples for apples. Remember, he was sort of going country by country with the tariffs that the Supreme Court struck down, and now it's just a little trickier with those. So, you know, I think basically they're saying they're on track with that statement.
I just
is it
want
okay
to say
that my brain hurts
when
it comes to tariffs?
I'm just glad Josh is in the nursery rhyme era at home right now, because we know exactly.
Dad, you got to meet me where I am.
Yeah,
you know?
we appreciate that.
Appreciate
that's actually really helpful. Hey, just push us one forward very briefly to the midterms in this environment of tariffs, tax day, and then of course this ongoing war and higher energy costs. What is this administration doing right now to try to tell members of Congress, you guys will be fine as Republicans when constituents head to the polls, because affordability is the message, and we're going to be able to pull this off?
Yeah, they're basically hoping things will level off. President Trump talking about the notion of the markets accelerating again once there's some certainty here. Of course, the question is whether that's the case. Remember, this isn't 2018. The electoral map looks a lot different than it did back then. So people that might think we are in for sort of big swings like Trump saw in his first term, the map seems to be a lot narrower this term. So I think that is important expectation setting. But remember, historically, of course, presidents lose the House in particular. In their midterms, Trump is hoping to buck tradition with that. We'll just, see where it goes. But obviously, if you're an incumbent aligned with the president, you probably don't want to be going to the polls if gas is, not with a 3 in front of it, for instance, and is still floating higher. So the electoral backdrop here is significant. The president hoping to buck it. Remember, one thing that maybe flew under the radar is his deputy chief of staff, James Blair, left his role to sort of take the helm of President Trump's political operation and see if they can't sort of buck the trend of history here. We'll see. But President Trump's poll numbers since this war in Iran have been going in the opposite direction of where he wants them to go. So this is a very real political landscape problem for them.
Can't wait for Hickory Dickory Dock. So we're going to hold you to it.
Right.
So appreciate it. Josh Wingrove, thank you so much. Bloomberg News senior White House correspondent with the latest from the White House. From Washington, back to Wall Street we go.
And another drop of bank earnings. Bank of America's stock trading desk set a record. Morgan Stanley stock traders set a record-breaking first quarter. And Morgan Stanley CEO Ted Pick spoke with Bloomberg's Lisa Abramowitz from Morgan Stanley's HQ here in Manhattan.
The biggest risk continues to be that inflation gets imported around the world again through the energy complex, and then eventually it works its way through the food and general living ecosystem, and that becomes challenging. That queers the cost of capital, and effectively then you start talking about the R word. The good news is we're not talking about the R word.
Yeah, that R word. Recession, I assume. Morgan Stanley Chairman and CEO Ted Pick earlier with our own Lisa Abramowitz. Let's get more on the banks. Bloomberg Intelligence Senior Analyst for U.S. Banks, Herman Chan, in our studio. So another drop. Morgan Stanley's up about 4.5%. Bank of America's up about 2.3%. We got some regionals, which are often in their own category. Forgive, because we're squeezed, but we've only got a couple minutes. Sure. But this looks... Investors like this. Is it different from what we got from the other ones, or all the same?
A lot of it was the same, given the really strong trading results from Morgan Stanley across both fixed income and equities. And Bank of America was strong also, more so on the equity side than fixed income. But on the other hand, Bank of America gave really solid guidance in terms of net interest income, with growth up to 6 to 8% for the year. So I think the market's really enthused about that.
Did Brian Moynihan at Bank of America have anything to say about the consumer?
Yeah, the consumer is something that they said was resilient. So nothing untoward versus what everybody else is saying. They're holding in there. Nothing. The credit quality for the consumer side is still very pristine. So nothing to make on that front.
How do you explain that, given that these energy prices have gone up so much and that consumers don't have that same buffer that they had back in 2022?
Yeah, that's right. We do have lower savings rates, so you can point to that as a potential risk. Wells Fargo mentioned yesterday that their spending patterns for the consumer, gasoline prices are up like 1% versus 4. It's now 5% versus 4% prior to the issues in the Middle East. So it's it's muted so far. If we get a prolonged higher gas prices and a prolonged Middle East turmoil, then that's when we sort of tend to worry. But at this point, the consumers are sort of absorbing the issues.
Net, 20 seconds. These big banks are important. They tell us a lot about the economy, the health of the U.S. We're doing okay?
Yeah, we're doing great. We're seeing strong loan growth across the board, specifically in commercial lending. And a lot of the banks have talked about increasing line usage, which means that your core commercial customers are being more aggressive, which bodes well for the overall economy.
All right, healthy financial system, at least certainly on the big banks. Herman Chan, you rock, Bloomberg Intelligence Senior Analyst for U.S. Banks. Hey, folks, quick headline. We're seeing the NASDAQ 100 extend its advance to 1%. Alphabet, meantime, poised for a $100 billion windfall on its investment in SpaceX. Not too shabby.
Yeah, we'll see what happens with that IPO and when it is. More next on Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index at a record 7,013 on the index, up 45 right now. That is a gain of 0.7%. The Dow, though, in the red, down 114, drop there of 0.2%. NASDAQ up 308 for NASDAQ, a gain of 1.3%. The S&P 500 on track for a record close as a ceasefire rally continues. The VIX now below 18 with a 10-year 4.28% and the 2-year 3.76%. Gold at $47.95 the ounce. Spot gold down by 1%. And West Texas Intermediate crude now trading lower, down under 0.1%. WTI 91.21 a barrel. Brent crude will call that unchanged at 94.81. Just getting word that a new filing shows an early investment in SpaceX has positioned Alphabet for a 12-figure windfall, underscoring the vast wealth that's likely to be created by the rocket company's market debut. Jane Street has taken an additional $1 billion stake in CoreWeave and plans to spend about $6 billion on the company's technology offerings. Shares of CoreWeave up right now by 1.3%. And Snap Inc. laying off roughly 1,000 full-time employees, 16% of its global workforce, all part of an effort by CEO Evan Spiegel to reduce costs and achieve profitability. Shares of Snap Inc., they're surging now by 8.9%. An emerging markets investing pioneer, Mark Mobius, has died at age 89. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, just last week, United Health Group stock had its best week in 7 months after a surprise hike in Medicare rates, and yet, the company's last remaining bear, Tim, standing by his call.
Baird analyst Michael Ha maintained his underperformed call on the stock, saying the rate hike is a temporary bomb, masking other issues. Bloomberg News equities reporter Avalon Purnell Carol wrote all about it and brought it to our attention. She's here in the studio, and she also brought Michael.
Yeah, you did. Thank you. Welcome. Michael, good to have you here. Avalon, good to have you here. Tell us about this call, because I'm looking at the stock. I think you went underperform. Was it back in July of last year?
July of last year.
And right. I think the stock's up about 20% there. So tell us about your call and why you didn't maybe change the rating on this Medicare news, especially when the stocks just took off like a rocket.
Right, great question. So maybe taking a step back, we believe United Health is facing structural issues within its crown jewel, Optum. So just for quick context, United Health is two parts: health insurance, which we're all pretty familiar with, but then the second part is something called Optum, high margin, high growth. It's basically, think of it as they own providers, PBM, health tech, and it's meant to really usher in this new future of multiple expansion, margin expansion, growth. But within this segment, we see structural issues versus the other companies in our coverage. We think there are more cyclical pressures, and it's that distinction that's core to our underperform rating, and we think other people are appreciating this dynamic.
So let's dig into that a little bit, Michael. What are those structural issues that you see in Optimum?
Yeah, great question. So within Optum, they've slowly amassed over the last 15 years the largest provider asset. So everyone thinks of them as a health insurer. They're also the largest provider. They have 100,000 providers employed or affiliated out of 1 million in the country. And we believe...
What's that distinction? Go there again. Explain that distinction. So you say healthcare provider, but they also are...
the largest health insurer in the country.
Okay.
So they have both.
Okay.
Right? And a lot of people don't realize that. And within that Optum Health piece, that provider arm, there's a dynamic called risk adjustment. It's very, very important to how these plans get paid per member. And we're saying that based on our analysis, these 100,000 doctors are not only great at risk adjustment, which is a multiplier in revenue, they're very aggressive. And what's happening over the past few years, regulatory pressures, clamping down on risk adjustment. And if you're on the wrong side of that, which United Health is and Optum Health, when we first downgraded Optum Health, they were at 6% margins. Now, as of recent fourth quarter, minus 0.8% margins. And there's more pressure. And this is just Optum Health. I can go on for an hour, but Optum Insight as well, we see structural issues.
Yeah, Michael, I'd also love to jump in here. I know that it's not just those risk adjustment issues. There's also other issues like broadly looking at healthcare insurers with like Medicare, Affordable Care Act. I would love for you to kind of expand on that in terms of how you kind of view the wider space.
Yeah, that's a great question. So maybe even taking a step back. I'm sorry, I keep taking steps back, but in this environment,
Healthcare is complicated. I don't know if you know that, but it is.
and historically, you could close your eyes, throw a dart at the board, and anything you land on, it'll trade up with the group. That game is over. The easy trade is done. It's a selection market, and we don't select United Health. And to your point on issues, it's broad-based. It's everywhere, and they're all converging at once across Medicare Advantage, Medicaid, exchange, marketplace, PBM, value-based care. These are literally all the elements of United Health. And we think the rebound will be uneven. United, it's more structural. Other companies, it's more cyclical. So then they can actually rebound over the next, call it couple or a few years. But United and Optum Health, we think it's not going away anytime soon.
I guess one other piece that I'm really curious about is, yes, you are like very bearish on United Health, but you are kind of bullish about other names within the sector like CVS, Cigna. Kind of what are you seeing there that you're not seeing at United Health?
Yeah, great question. And our top pick, Alignment Health, which we think is the best Medicare Advantage plan in the country. Well, these companies, the issues are more cyclical. So for CVS, for example, they do have a value-based care company comparable to Optum, the providers, but it's small. It's called Oak Street. So even if it's impacted, it's minimal impact to enterprise earnings. So what you have left is a health insurance business, aka Aetna, is now part of CVS, and the earnings power unlock in that business is very attractive. So we're going to see that play out over the next few years. We think they can possibly get to $10 EPS from $7 roughly today.
Do you think they shed assets on the way to doing that?
CVS?
Yeah.
They may with Oak Street and their value-based care business, but the rest of their assets seem fairly in decent standing. For Optum Health, though, I think that's their only option. They have to shed provider assets, divest.
What percentage of United Healthcare's top and bottom line is Optum?
Great question. So before this whole downturn, it was about 25% of earnings. Today, 11% of earnings. So that's Optum Health, by the way, the provider arm. The entire Optum piece, which is the provider, PBM, and technology, it's over half of their earnings overall. And that mix is shifting. Optum Insight is now 25%. So you put two businesses that are struggling together, that's about a third of the enterprise earnings that are under structural pressures that I think investors are not appreciating.
Also kind of curious, like United Health has been touting some investments in AI. Like, what's your read on that? I know we discussed this last week, but how are you kind of reading that as well? Since I have definitely heard some positive sentiment among investors, but do you feel differently?
Right. And it's funny. I'm connected with Mark Cuban on LinkedIn. He was just talking about AI and the inability.
He noticed this story big time. Can I share? Oh, sorry, it's too late. But he did, right?
Right.
And he reached out.
So AI, I mean, think about it. United Health, 2,700 subsidiaries, all loosely connected, right? The data architecture is not there to implement AI or build a unified data. It's already tough enough in a clean system. So with the United Health, with a large legacy insurer, it's going to be very difficult. So if you're betting on an AI play to help drive, lower G&A, I think there are other sectors to do that.
What about from the other side of this and the patient side of this? I mean, I've talked to some folks who've looked at this and they think within our lifetime, doctors will be replaced as a result of AI. They say that radiologists are the ones who are ripe for this disruption. Is that something that you see?
I think we're far away from that right now. I think right now the near-term application of AI is more of a tool to help aid providers. Like point of care tools, you pop open your computer, it pops up in the records, it will suggest.
Yeah. I think we've all been to the doctor and seen those AI tools of late. Yeah.
I think right now that's the application. Longer term, perhaps, but I wouldn't see that as a near-term disruptor.
Michael, really quickly, 25 seconds. All right, so you're the lone bear on the street on this name. What would make you become more positive? Is it that they get rid of this business or what? And just quickly.
Yes, if they get rid of this business and they shed these assets, yes. But also what will come with it? Multiple contraction, because that business is no longer viable. So then if the multiple comes down, United historically call it as a 20 times multiple. If it comes down to 13 to 15, the amount of earnings growth you have to get from shedding those assets has to be so large for it to be attractive to own today, which we don't think is very likely. But that would be the one thing.
Interesting stuff. So great to have you come in here and expand on Avalon's story. Great reporting, Avalon. So stay in touch.
Thank you so much.
Yeah, I'd love to follow. Bloomberg News equities reporter Avalon Purnell. She wrote this story. Check it out. It's on the Bloomberg and at Bloomberg.com. And of course, Michael Haas. He's Baird, senior research analyst covering United Health. Michael, thanks so much.
Coming up next, we're taking a look at markets and also remembering somebody who was very big and very important in emerging markets. That's next.